Over the past decade, China has gone from a Silicon Valley copycat to a top contender in technology on the world stage.
Its ascent is peaking at a time when geopolitical tensions with the US and Europe are intensifying, and the rise of artificial intelligence has sparked a new arms race.
The US is rushing to curb China's influence in AI while balancing the need to regulate the powerful technology within its own borders.
How America manages these competing priorities will have implications for where the balance of power in tech will shift to next.
On this episode of AI IRL, we'll explore how China's playbook went from imitation to innovation and discuss what's at stake in the competition between these two superpowers.
Mustafa Suleiman, thanks so much for coming in. Now, you are the co-founder and CEO of Inflection AI and a venture partner at Greylock. Some people will know you as one of the co-founders of DeepMind, now owned by Google. Tell us, what made you want to start fresh with Inflection?
Well, now is really the moment. I mean, it was very clear to me during 2020, 2021 at Google when I was working on Lambda, the conversational AI that now powers Bard, that these large language models were truly going to be the future. And I wanted to start a company to build personal AIs, an intelligence that is completely aligned to your interests on your team and really functions as a personal assistant or a chief of staff.
हेलो एवरीवन, गुड मॉर्निंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का सेशन। फिलहाल देखोगे क्रूड ऑयल कल की क्लोजिंग पर ही ओपन हुआ है। कल याद होगा परसों भी रेजिस्टेंस पे था, कल भी रेजिस्टेंस पे आया सेलिंग के लिए। एक सेलिंग आई थोड़ा बहुत, वो पॉइंट ऑफ इंटरेस्ट से सपोर्ट लिया वापस, फिर ऊपर गया, सेलिंग आई, फिर सपोर्ट लेके क्लोज हो गया। नीचे क्लोजिंग नहीं आ रही है। जब तक इस पॉइंट ऑफ इंटरेस्ट के नीचे क्लोजिंग नहीं आएगी, ये रेंज बना दी है। अब जब तक किसी एक साइड पर प्रॉपर ब्रेकआउट नहीं होता, कुछ कर नहीं सकते। नीचे अगर ये पॉइंट ऑफ इंटरेस्ट ब्रेक होता है, जो कि मुझे लग रहा है हो जाना चाहिए अब, तो फिर हम एक्सपेक्ट करेंगे फाइनल टारगेट दिस वन। ऊपर मैं एक्सपेक्ट नहीं कर रहा हूँ जब तक ये प्रॉपरली ब्रेकआउट नहीं करता इस लेवल के ऊपर। चांसेस आर वेरी लेस इट विल गो अप फ्रॉम हियर। नेचुरल गैस फ्लैट ओपन, निफ्टी भी देखोगे फ्लैट ही ओपन दिख रहा है। कल हमारा जहाँ पर मार्केट क्लोज हुआ था वहाँ से थोड़ा सा गैप डाउन ओपन हुआ था गिफ्ट निफ्टी, एंड देन रिकवर्ड अराउंड हाई। देखोगे तो लगभग 140 पॉइंट की रिकवरी आई थी, वापस सेलिंग में ही आ गया है। तो फ्लैट ओपनिंग है, ना बहुत बड़ा गैप अप है ना गैप डाउन है, फ्लैट ओपनिंग ही दिख रही है इन निफ्टी 50। सेंसेक्स की एक्सपायरी है, याद रखना मैंने कल ही बताया था। सेंसेक्स में जो लोग ऑप्शन ट्रेड करते हैं, ऑप्शन सेल करते हो स्पेसिफिकली, तो न्यू रेगुलेशन के अकॉर्डिंग आई थिंक 10% या 15% एक्स्ट्रा मार्जिन देना पड़ रहा है अगर आप ऑप्शन सेल कर रहे हो एक्सपायरी वाले दिन। नई चीज़ आई है न्यू रेगुलेशन के अकॉर्डिंग, तो ध्यान रखना। फिलहाल फ्लैट ओपनिंग होती हुई ठीक है। सेंसेक्स भी लग रहा है फ्लैट ही ओपन होगा। बाकी गिफ्ट निफ्टी को देखोगे, कल का जो रेजिस्टेंस एरिया था वहीं से गिर रहा है नीचे वापस, विच इज़ गुड। तो ये ब्रेक करता है इसके नीचे क्रूड ऑयल, तो एक्सपेक्ट करेंगे और डाउन जाएगा। नेचुरल गैस में मुझे कुछ खास एक्सपेक्टेड है नहीं। क्रूड ऑयल स्टिल होल्डिंग द सपोर्ट, नीड टू सी ब्रेकडाउन मिलेगा आज या फिर नहीं। अदरवाइज ऊपर भी रेजिस्टेंस है, तो ऊपर भी बाइंग करके यहाँ पर फ़ायदा नहीं है क्योंकि इसी रेंज में मार्केट अटक जाएगा। हाँ, यहाँ पर एक थोड़ा सा मुझे ये लग रहा है कि यहाँ पर एक पॉसिबिलिटी है कुछ ये बनाने की, हो सकती है इस तरह से। ऊपर जाना है तो एक प्रॉपर ब्रेकआउट चाहिएगा तभी ऊपर जाएगा, ब्रेकआउट करेगा तो फिर नेक्स्ट रेजिस्टेंस काफ़ी दूर है। बट जैसा मैं कल भी कह रहा था, नीचे यहाँ पर एक सपोर्ट जोन है, मार्केट को टेस्ट करने आना चाहिए वापस। इस पॉइंट ऑफ इंटरेस्ट के नीचे निकले तो बेटर ही है मेरे अकॉर्डिंग। लेट्स सी, फर्स्ट कैंडल है। बाकी अभी 12:30 लंदन सेशन ओपन हो जाएगा। सेंसेक्स के अलावा एमसीएक्स क्रूड ऑयल ऑप्शन की एक्सपायरी भी है आज, तो ध्यान रखना। देन इवनिंग पे 5:30 न्यूयॉर्क सेशन, 6 पीएम पे रिटेल सेल्स, कोर रिटेल सेल्स और अनएम्प्लॉयमेंट क्लेम्स का डेटा है। कल पीपीआई का डेटा काफ़ी बेकार आया था, बट स्टिल टेक स्टॉक यूएस में कुछ ज़्यादा ही भाग गए थे। नैस्डैक 1% अप, S&P 500 भी ठीक ठाक ही था, डाउ थोड़ा सा डाउन चल रहा था। अदरवाइज आईटी सॉरी पर टेक स्टॉक्स आर completely bullish yesterday. Nvidia almost 2% अप। बाकी 7 बजे यूएस मार्केट ओपन होगा और फिर 8 पीएम पे नेचुरल गैस की इन्वेंट्री है। तो ये कुछ है आज का इवेंट डे। क्रूड ऑयल में देखते हैं ब्रेकडाउन हो तो बेटर है फाइनल टारगेट के लिए, अदरवाइज वेट करेंगे, ऊपर ब्रेकआउट होगा तभी कहीं बाइंग के लिए जाएंगे। रेंज है बहुत छोटी सी, तो कुछ खास कर नहीं सकते रेंज के बाहर। नेचुरल गैस में मुझे कुछ खास करने के लिए मिल नहीं रहा है, इसमें कोई प्रॉपर सपोर्ट रेजिस्टेंस बने नहीं है, तो थोड़ा सा कम ही क्वांटिटी से ट्रेड करेंगे, अगर नेचुरल गैस में कोई अपॉर्चुनिटी मिलती भी है तो भी। सेंसेक्स 250 पॉइंट 250 पॉइंट के अप्रोक्सीमेटली गैप अप दिख रहा है, छोटा सा गैप अप है, ज़्यादा नहीं। नाउ 300 पॉइंट 335 335 पॉइंट का एक छोटा सा गैप अप। सेंसेक्स में निफ्टी भी देखोगे तो 120 पॉइंट का गैप दिखा रहा है, तो सेंसेक्स 335 पॉइंट का गैप अप तो बहुत ज़्यादा नहीं है, हाफ एन परसेंट, 0.50%। एक्सपायरी है तो देखेंगे किस तरह से रिएक्शन देता है। ओके, 5 मिनट लेफ्ट मार्केट ओपनिंग। सेंसेक्स की एक्सपायरी है, देखते हैं क्या पॉसिबिलिटी, क्या बनेगा ट्रेड कुछ। एक बार अगर ब्रेक हो गया ना ये नीचे तो कॉल सॉर्ट करना शुरू कर देंगे ऊपर से। आज एक्सपायरी भी है, मुझे नहीं लगता वापस रिटर्न करेगा उस केस में। इसके नीचे अगर एक बार मार्केट ब्रेक डाउन कर दे प्रॉपर्ली, अदरवाइज इसी रेंज में है, किसी भी साइड पे जा सकता है, रिस्क नहीं उठा सकते उस केस में। देखते हैं एक बार, थोड़ा सा वेट करते हैं, इंडियन मार्केट जस्ट ओपन।
internet platforms, with a lot of the cryptocurrencies, with a lot of the AI businesses that Silicon Valley specializes. He's also a little bit less enamored of Wall Street and financialization and hedge funds. And if I had to think about what his broad views are, it would be much closer to being something like capitalism with German characteristics, which is much more about building cars, building hydraulic pumps, building heavy machinery, the heavier the better, about all sorts of these major industrial projects. And I think China is very much a leader in things that include electric vehicle batteries now, solar photovoltaics. It is making a lot of electronics products, and it is innovating on a huge sort of a lot of the automotive supply chain. But I think they have a little bit less of a focus on AI, and therefore there is not so much political direction anymore to really push forward these consumer applications.
I think it's fair, though, some of those areas, the US is also innovating very, very strongly. So are there any areas where China is innovating significantly better than the US?
Well, I would say something like electric vehicle batteries, where China has something like the 70% of all global expansion, all global capacity of electric vehicle batteries is now mostly in China. When it comes to the clean technology supply chain, again, these very industrial projects, these pieces of heavy machinery, that is a little bit more the focus. I think the US is really strong in things that include semiconductors, artificial intelligence, biotechnology. These are things, the smaller things, where China is not so good, but there are big areas in which China is way outbuilding the US.
I mean, the semiconductors is getting significantly better in China. I mean, partly maybe as a result of the Huawei issue. Helen, what's your view on the semiconductor side of this?
So China's definitely been investing for decades in trying to have their own independent semiconductor supply chain, and they've been making some progress. The thing to know about semiconductors is there's a huge range of sophistication, from the really basic semiconductors, computer chips that go in basic devices, your smart fridge, your car, up to the kind of more advanced chips that might go in a brand new iPhone, up to very advanced chips that go in kind of the data centers, gigantic warehouses full of computing, which is what you're training advanced AI systems on. So China has made a lot of progress on the more basic end of the semiconductor sort of scale. and is still really struggling to hit the most advanced end. And that's where, I mean, it's not even, you can't even say the US is, alone able to create those advanced semiconductors. But what you have is an incredibly advanced global supply chain.
Many describe artificial intelligence and its development across these two superpowers as an arms race. Is that framework misguided, do you think?
I think it's a bit misguided. I think you really want to look at what kind of AI are we talking about and in what way might it be a race. I think the place where it's clearest that it makes sense to think in a competitive framework is in kind of military domains. So, it's just true that the US military really wants to make sure that it is keeping pace with, and ideally a little ahead of, the Chinese, or a lot ahead of the Chinese military in terms of what technology they have.
Dan, Washington has taken some steps to curtail some of China's ability to get their hands on the cutting edge chips that really power these AI platforms. What's your take on that? Is that an effective strategy, or will China just find a way to build their own?
I think that China is going to try to figure out a lot of the way to build their own. A lot of the chip makers now have been under very significant stress from US sanctions dating back to about a year ago now, released by the Biden administration, that is really stopping their ability to access not just the high-end chips, but also the semiconductor production equipment as well.
And I think in general, it's really difficult to distinguish between what kinds of technologies should the US really not want China to be able to develop, and where is it fine. So, you mentioned, clean technologies before, where China, if you're looking at, manufacturing solar panels, as you mentioned, EV batteries, a lot of other areas, China is doing amazingly at that. And what you're starting to hear in some, US policymaking circles is that maybe that's a bad thing, that China is making a lot of kind of clean technology stuff. And I find that a little sort of tricky to reckon with, is at what point do we want to really shut them out or prevent them from being, able to manufacture anything if it's something good, useful that we can use. Of course, if it's technologies that we think have really significant military value, I understand, but then it starts, the lines between those categories start to get very, very blurred.
It seems like these tensions are just ratcheting it up even higher as time goes on. With each administration, they're intensifying. So to your point, if we do need these other technologies, solar technology for this transition into a greener future, I mean, what kind of happens next? How much do we place on kind of the AI arms race that could then potentially work against us in climate change? Is that a concern, or is that too far in the future still?
Well, a few months ago, Beijing did announce some export controls on certain solar technologies involved in making production wafers.
So it's already happening.
It is already happening, that there are some threats out there that, relatively speaking, Beijing has been pretty restrained against retaliating against American companies of the likes of Intel, of the likes of Tesla so far, but these things could escalate more.
how does the relationship between, the ruling party in China play out against the kind of the development of companies?
I think the Chinese system is definitely more top-down when it comes to AI development. You see less kind of individual tech companies like OpenAI or Google taking the lead, and more these kind of multi-institution partnerships, or maybe you have a university and a tech company and a government, department all collaborating on big AI projects. That's much more common in China. At the same time, China is a huge country, so there's a limit to how much the government can achieve from the top. So a lot of what you see is sort of Beijing providing direction, providing ideas, providing sort of signaling of this is what we and the central government would be excited about.
Dan, how would you compare how the Chinese government is handling AI with its people versus how they handled social media?
Well, I think President Xi Jinping doesn't necessarily view AI right now, a lot of these ChatGPT-like applications, as some of the most economically productive things that are coming into our society. So I think that President Xi looks much more at AI like he would at Facebook or Twitter, now known as X or whatever it is. These are platforms like TikTok that, if you're asking me, is something like TikTok or Facebook really increasing my personal productivity? Well, I would say actually it is really horribly detracting from my productivity. And so I think that a lot of these AI platforms right now create speech issues. When an ordinary Chinese person sitting in Beijing or Shanghai asks AI, well, what happened in 1989? Well, what do you think of socialism? What do you think of President Xi's performance? These AI tools are having a lot of challenges actually answering socialist correct values that are in line with the government's ideas. And so these are major speech platforms, first and foremost, and perhaps not really the economically miraculous thing that raises our productivity growth at the very moment. Now, it might happen later on. Right now, I think the party views it as somewhere between economically not that useful and potentially very socially destabilizing.
So from a consumer standpoint, AI is almost, it can potentially create more problems for the Chinese Communist Party. But then if you look at it from like a surveillance standpoint or military type of AI applications, that's kind of in a different camp. Is that right?
Yeah, that's right. And I think they're definitely, one area where China is, I would say, leading in AI is on surveillance. They really have leaned hard into facial recognition, voice recognition, even gait recognition. So how you walk in a crowd, can they pick you out by that? I think in the West, there's been some development of these technologies, but with a lot of criticism from civil society, a lot of hesitation, sort of, I would say, like very yellow light. And in China, it's been blaring green light.
On the topic of WeChat, when we spoke ahead of this, I think we touched on the fact that there are some generalized misunderstandings about China's approach to social media and data and AI. AI relying on huge amounts of data, and the perception is that because of things like WeChat and similar things in China, that there's this huge pool of data that the population in China is very happy giving over and is used to giving over, and therefore is just sitting around waiting to be exploited by AI. And I remember that you made a pretty significant point. It's like, that's probably not really the case. And people think that's the case, but it isn't. So I wonder if you could touch on that.
Yeah, I think people have this perception that because the Chinese government is very controlling and has a lot of access to what's going on in Chinese citizens' private lives, that means that there's these beautifully curated, extremely complete, large databases of information that can be used to train AI systems or to do other things. But for anyone who's ever worked with data, you know that cleaning data, structuring data, making sure that the right information is flowing in the right places is incredibly challenging. So it's both true that the Chinese government can get very detailed information on the private lives of its citizens if it chooses to, and also true that it's incredibly messy the way that works, and incredibly difficult for any given actor to get access to something. So, for instance, a company trying to train some AI model using data is actually subject to a pretty significant data governance setup in China, data governance regulations that make it really challenging to use customers' data for things it wasn't already designed for, or that you didn't already get consent for.
Which we learned from Cambridge Analytica scandal just as one case, and there are many others. That is not the case in the US. It's That's not right. the case in Europe. There's a lot going on. The EU's AI Act is pretty widely praised by some people, not everybody, but it's quite broad and far-reaching. But that's not the case in China. in terms of what you're saying?
So China's setup is now more similar to the GDPR that exists in Europe. So around kind of protecting consumer data and giving people the right to, opt in to different uses. Of course, in China, there's always the exception, unless the security services, think that you might be a dissident, and then they're going to get whatever they want on you. But in terms of kind of companies, they're certainly relatively restricted in what they can do.
Switching gears a little bit, Dan, I'm curious about how China's sluggish economic growth recently weighs into the government's calculus and how they're thinking about AI's potential to spark social unrest.
I think that the Communist Party is very much involved in trying to think about, how to control possible social unrest. I was in Shanghai in November 2022 when there were protests in the streets denouncing zero COVID, denouncing the Communist Party by name, that these were things that were erupting. And so I very much sign on to Helen's description of AI, that China is leading in the AI of censorship. It is leading in the AI of facial recognition. That right now it looks very much like the US is a place where ordinary consumers can tinker with and play around on a lot of these AI tools, whereas in China is mostly reserving these very powerful tools for its own use, potentially to control society. That right now China is in a moment of economic weakness. This might deteriorate further, this might get a little bit better, but there is always this presence hovering over there that the state security might ramp up its technology, really to make sure that there are no socially destabilizing incidents.
Well, Helen, Dan, thank you so much for being here. It's been great to learn from the both of you.
Thanks so much.
Thank you very much.
When there were difficulties, we worked it out. I would call you and you would call me, and whenever we had a problem, people don't know, whenever we had a problem, we worked it out very quickly. We're going to have a fantastic future together.
Presidents Donald Trump and Xi Jinping signal a relationship reset as the two leaders set a positive tone for the first visit by sitting U.S. President to Beijing in nearly a decade. But beyond the handshake lies a long list of disagreements. Traveling with the U.S. president is a massive delegation that includes top U.S. CEOs to navigate trade and security tensions between the world's two largest economies. Well, this is Horizons Middle East and Africa. It's just gone 8 a.m. across the Emirates. I'm Joanna Versace in Dubai. Well, if you were watching Bloomberg a couple of hours ago, you would have seen the arrival of President Trump, the very highly anticipated meeting between the two presidents, the warm reception that he received alongside the slew of members of the cabinet and those high-level industry CEOs too. So talks have now begun. We are waiting to see whether there are going to be any breakthroughs. And of course, markets are on tenterhooks to see whether indeed we do get any commercial deals over the line. So that's going to be the focus for the next, I would say, at least the 36 hours while these talks are going on. As for markets, you're not seeing a huge impact with the handover from Asia Pacific this morning. We are leaning slightly lower, though at one point, a lot of focus still on that Kospi index, given the hype around AI and tech trades. And of course, that only just accelerated with the announcement yesterday that Jensen Huang was also going to be accompanying President Trump on the trip. So high expectations there that maybe this could also lead to a breakthrough in terms of NVIDIA chip access to China. So something to watch out for there on the tech front. S&P futures trading flat, though, building on all-time highs once again yesterday, record highs for Wall Street. And then 10-year yield, 4.46. Remember, we had inflation numbers yesterday, those wholesale figures, the PPI numbers, showing the biggest jump since 2022. And that is on back of the stronger than expected CPI figures that came through yesterday, or the day before, I should say, the strongest figures since 2023. And there you really are beginning to see the reverberations of the regional war, the impact that has had on inflation and energy costs. And that's beginning to show up not just in CPI, but in wholesale figures as well. So very notable, and one of the reasons why these yields keep pushing up. And then speaking of energy costs, take a look at Brent this morning, $106. We are up 0.3%. Not a lot to report in terms of geopolitical developments over here. But again, as it pertains to the Iran file, perhaps there is a little bit of hope that maybe the U.S. can bring in China to help mediate or push forward on the diplomacy front. So something to watch out for there. Now, in terms of the chart of the day, I thought this was interesting in that the yuan has been steadily climbing versus the USD, so strengthening versus the USD, I should say, over the course of the last 10, 11 weeks. And it could be construed as somewhat of an olive branch that China are putting forward to the U.S. ahead of that meeting. And remember, Trump has many times commented on the fact that China have been manipulating their currency and keeping the level at a weak, or keeping the yuan at a weak level in order to benefit exports. So what we've seen in the run-up to this summit is a strengthening of the renminbi. All right, let's talk more broadly about how markets in Asia are faring. Avril Hong is in Singapore for us. Avril.
Yeah, Joanna, coming into today, expectations running high. There was a lot of optimism for Asia stocks. You're looking at them pairing some of the earlier gains of about 0.8% on the region's benchmark, though. As the summit gets underway, maybe investors choosing to take some profit off the table. You are looking at the Kospi that was 1.8% higher at one point, looking quite flat now. The CSI 300 entered the lunch break in the red, despite some gains earlier. That being said, this is an index that has clocked 5 weeks of gains. Now, we are, of course, watching out for whether this trade truce is extended, and certainly that's the market expectation. And so far, it doesn't look like, based on the headlines, there's anything to really derail this. We are also highlighting here what you're seeing in the Hang Seng, because the outperformance relatively is coming through from Alibaba and Tencent. So these Chinese mega caps that had their revenues missing, but they're showing very bullish sentiment on AI profit growth in the future. So that seems to be lifting some of these tech names on the Hang Seng as well. Jumana?
Avril, thank you so much. Avril Hong in Singapore. Well, President Donald Trump is the first sitting U.S. president to visit Beijing in nearly a decade. Chinese President Xi Jinping says the relationship with the U.S. can be dangerous if not handled well. Let's bring in our chief North Asia correspondent, Stephen Engel. So, Stephen, I was watching, and actually it was pretty riveting TV, just watching the arrival of President Trump. And, of course, that initial greeting with President Xi, the opening remarks, very warm, I would say, remarks coming from both of them. And President Trump even saying this could be the greatest summit ever. And he's known for his hyperbole, of course. But maybe beneath all of that, there are a huge number of issues still that need to be resolved between the two sides. How optimistic are we that we're going to see breakthroughs?
Well, based on the tone, you'd think this is going to be the greatest thing that's ever happened to the two countries, obviously. And you just summed up some of the words that came from Donald Trump and also Xi Jinping. They both said the right thing. And that's what these state pageantry is all about in China. It's highly scripted, but I have to say, it looked as though Donald Trump was speaking off the cuff. He did not add a lot of spontaneity to his comments. He essentially said, we got along when there were differences. And believe me, last year with the trade tariff issues and the retaliation by China, there were a lot of differences between the two sides. Then they struck that truce, a temporary truce, a year-long truce in Busan at the end of October, thereabouts. So the goal here was to say the right thing and perhaps extend that truce to a more lasting peace. But also they need to talk about their differences. Xi Jinping, for his part, he said, we should be partners, not rivals. And you just saw those headlines about Taiwan. That is potentially an area of contention, no doubt. Xi Jinping clearly will like to get an idea from Donald Trump where he stands on the latest arms package that's been sort of waiting in Congress for Donald Trump to sign off on. And we'll have to see whether he does go back to D.C. and approve that, whether he scales it back or what. But essentially, Xi Jinping saying Taiwan is the most important issue in U.S.-China ties. Yeah. Ties can be stable if Taiwan issue is handled well. If not, ties will be pushed to dangerous territory.
Yeah. Okay. So those are perhaps some of the more challenging issues on the geopolitical front, Stephen. And we haven't even spoken about Iran, which, again, you know, is a massive one to tackle, too. But doesn't the fact that President Trump is accompanied by this huge delegation of American executives and CEOs also indicate that perhaps the focus is going to be more on the commercial side than getting these major achievements on the geopolitical front?
Sure. I think the deliverables are easier on the commercial side, especially when you have the top executives from NVIDIA, from Apple, from Cargill, from Boeing, from Goldman Sachs, from Citibank. They're all here, not to mention Steve Schwartzman and others, you know, who have long history of doing business in China. I think a lot of these business leaders would probably agree that, you know, the trade relations sort of got off track because of the geopolitical stresses between the two nations, not to mention the tariff barrage that was launched by Donald Trump almost a year, or a little more than a year ago, obviously in the beginning part of April of last year. Now, that's why they're looking at possibly on the geopolitical front or on the diplomatic front. Jameson Greer, the U.S. Trade Representative, has talked at length about this so-called Board of Trade and Board of Investment, where it sort of sets the parameters and gives guidelines for areas that the two nations on the commercial side can do business that will not fall under national security. That's what happened in business and commercial relations last year. Everything kind of got lumped into that overhanging pressure of, does this constitute national security? That's why it's most interesting that Jensen Huang is here. We've already gotten Trump administration approval for the H200 chip, which is an advancement of the H20, to be sold on a licensed basis to China. But it's China that has said, we're not ready to buy that. We are going to build out our own indigenous innovation and our own self-reliance. But there could be, because Jensen Huang jumped onto the plane in Anchorage and join this trip. So that's why the markets have been kind of wagging their tongues about the possibility that there could be some clarity for NVIDIA and chips are some of their most advanced accelerators to China.
Yeah, well, Huang himself describing the meetings going excellent. So let's see what comes out of that.
Yeah.
Stephen Engel, Bloomberg's chief North Asia correspondent, thank you so much. Well, let's go to Washington now and speak to Ali Wine, senior research and advocacy advisor for U.S.-China relations at the International Crisis Group. You know, I want to just spend a moment talking about the run-up to this summit, because it was supposed to happen a couple of weeks ago, and the reason it didn't was because of the Iran war. I think, you know, probably the President Trump, thought he would have wrapped up the war by then. Clearly, that's not the case. He is under a lot of public pressure in the U.S. right now. Public support for the war is dropping. We've been speaking about inflation costs creeping higher and higher. What would constitute a win for President Trump to take home to the U.S. out of this summit?
Well, I think that we should have modest expectations, despite the hyperbole on President Trump's part, to which you alluded or that you referenced. In terms of what we can realistically expect, and what I hope that the two leaders will commit to, is to coordinate intentionally, regularly, and in good faith to bring about a swift, sustained de-escalation of the crisis in the Middle East, because it's a crisis that disadvantages both countries. It has destabilized energy markets, it has destabilized food markets, it's exacerbating inflationary pressures. And I think that a short-term energy shock, both countries, I think, are reasonably well equipped to deal with. A more protracted energy shock becomes problematic for both countries. So it is a shared interest for both countries to de-escalate. Whether or not China will use the leverage that it has, whether or not China will use the leverage that it thinks it has from this crisis. Because keep in mind, I think even prior to the U.S. war in Iran, I think that President Trump was already entering this meeting with a weaker hand. But the war in Iran has furnished President Xi with many of leverage that he didn't think that he would have.
Yeah, well, you just said that President Trump is coming into this summit with a weaker hand. And indeed, the last time President Trump was in Beijing was in 2017. That was the last time a U.S. president paid a visit to China. China as well today is a different China from what it was a decade ago. And in many ways, you could argue more assertive, more aware of some of the leverage that they have on the global economy. And at the same time, perhaps looking to take advantage of the fact that the U.S. are preoccupied with what is happening in the Middle East right now.
Well, sure. And keep in mind, so in 2017, think about when President Trump made his first official state visit to China. Think about how much diplomatic capital the Chinese delegation invested trying to impress upon President Trump that President Xi was a geopolitical equal, that China had arrived as America's most capable and confident competitor. What's striking this time around is that the Chinese delegation doesn't need to make that effort, because it is the United States, in the run-up to this meeting between the two presidents, that has acknowledged China's centrality in the international system. And in fact, beginning with the president himself, on the sidelines, or not on the sidelines, when they met in South Korea this past October, it was President Trump who said prior to their meeting, the G2, referring to an informal condominium between the United States and China, President Trump said the G2 is set to convene. So the United States this time around is acknowledging China's centrality in the international system and just China's overall power.
गाइस निफ्टी 50 को देखोगे फ्यूचर, कल मैंने आप लोगों को बताया था फ्यूचर में 23,600 टू 650 रेजिस्टेंस है। मार्केट एग्जैक्टली ओपन हुआ 23,548 के आसपास, वापस हिट किया 23,610, वहां से वापस सेलिंग चल रही है। देखते हैं अगर यहाँ से सेलिंग कंटिन्यू आती है निफ्टी में तो प्राइस वापस कल के लो तक जा सकता है 23,300। साइड गया तो 23,670 680 तक जा सकता है, उसके ऊपर जाना मुश्किल लग रहा है अनटिल अनलेस कोई न्यूज़ नहीं आती। यहाँ पर बहुत ज़्यादा कंसोलिडेशन हुआ तब एक ब्रेकआउट के चांसेस बनेंगे। नेचुरल गैस में देखोगे कुछ खास नहीं है। क्रूड ऑयल स्टिल होल्डिंग, कुछ खास हो नहीं रहा है क्रूड ऑयल में। पहली कैंडल वहीं पर रुकी है, दूसरी कैंडल भी है। देखो ब्रेकडाउन जरूरी है अगर नीचे जाना है प्राइस को, जब तक ब्रेकडाउन नहीं होगा कुछ कर नहीं सकते। कैंडल ओपन इक्वल टू लो बनी है क्रूड में प्रीवियसली 15 मिनट की, एंड अगर निफ्टी में देखोगे ओपन इक्वल टू हाई है लास्ट कैंडल। लग रहा है कोई न्यूज़ आई थी, उसका एक इम्पैक्ट देखने के लिए मिला है। देखते हैं कंसोलिडेशन अगर करता है ना निफ्टी यहाँ पर तो ही ब्रेकआउट के लिए जाएगा, अदरवाइज आज हो सकता है यहीं पर क्लोज कर दे। सेंसेक्स भी कुछ खास नहीं कर रहा, गैप अप जरूर हुआ था बट वापस कल के लेवल के आसपास ही आ गया 74,860। लगता तो नहीं कुछ बहुत बड़ा मूव आज होगा मार्केट में। कल का हाई और लो इंपॉर्टेंट है, ध्यान रखना डेली टाइम फ्रेम पे जिस तरह की कैंडल बन रही है, एक रिवर्सल कैंडल भी हो सकती है या फिर हो सकता है प्राइस कंटिन्यूएशन में और गिरता रहे। तो कल का लो और कल का हाई इज वेरी इंपॉर्टेंट। आज अगर कल के हाई या लो के नीचे क्लोज करती है सेंसेक्स में डेली टाइम फ्रेम पे तो एक डायरेक्शन मिल सकती है वापस से। एक्सपायरी है देखोगे एट दी मनी का स्ट्रेडल 74,900, तो लगभग 450 पॉइंट की रेंज लग रही है आज के दिन मार्केट दे सकता है। ये क्रूड ऑयल देखो तैयारी तो कर रहा है, मुझे लग रहा है ब्रेकडाउन की, एक बार ब्रेकडाउन कर दे तो ऊपर की कॉल सॉर्ट कर सकते हैं, ठीक है। बाकी मुझे कुछ खास लग नहीं रहा है। निफ्टी ऑल्सो फॉलिंग डाउन फ्रॉम दैट रेजिस्टेंस एरिया 23,600 टू 650 रेजिस्टेंस था, फॉल कर रहा है। देखते हैं नीचे आता है क्या या फिर कंसोलिडेशन करता है थोड़ा बहुत। यहाँ पर नीचे आया तो कल का लो टारगेट रहेगा 23,300 टू 350। अगर ऊपर जाना है तो इसी एरिया के आसपास कंसोलिडेशन होना चाहिए। कल का क्लोजिंग जो कैंडल है वो ब्रेक नहीं होना चाहिए। ठीक है, निफ्टी गिरता ही जा रहा है। निफ्टी फ्यूचर 23,486 रेजिस्टेंस से देखोगे ऑलमोस्ट कल से थोड़ा जल्दी फास्ट फॉल कर रहा है, ऑलमोस्ट 123 पॉइंट डाउन फ्रॉम द रेजिस्टेंस। सेंसेक्स ऑल्सो डाउन, ओपनिंग 300 पॉइंट अप जरूर हुई थी बट वापस कल की ओपनिंग प्राइस पे आ गया है, क्लोजिंग प्राइस पे आ गया है। ऑलमोस्ट 250 पॉइंट ये भी डाउन हो गया है। क्रूड कुछ खास कर नहीं रहा, इवन तो लास्ट कैंडल ओपनिंग को लो बनाई थी। ब्रेकडाउन मुझे लग रहा है बहुत चांसेस हैं हैवी की नीचे जाएगा। लेट्स सी क्या एक बार पहले एक अपसाइड और देगा उसके बाद गिरेगा या फिर डायरेक्टली फॉल करता है। थोड़ा बहुत निफ्टी again open equal to high, future Nifty again open equal to high 15-minute candle. Nifty continuously going down from the resistance area. लग रहा है थोड़ा पुल बैक आना चाहिए, अब डायरेक्टली इतना तो नहीं गिरेगा.
Nobody covers geopolitics like Bloomberg.
Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Presidents Donald Trump and Xi Jinping signal a relationship reset as the two leaders set a positive tone at the beginning of their historic summit in Beijing. They pledge for ties between the two nations to be better than ever. But beyond the handshake lies a long list of disagreements. Traveling with the U.S. president is a massive delegation that includes top U.S. CEOs to navigate trade and security tensions between the world's two largest economies. And the UK is edging closer to a bitter fight over the country's top political job. The Labour Party seems to be heading for a divisive battle as a leading cabinet member prepares to challenge the Prime Minister, Keir Starmer. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai, and all eyes on that Xi-Trump summit. Abir Abu Amar is with us to break down the market reaction this morning. Abir.
Good morning, Jumana. Look, it's green across the screen this morning. U.S. futures are ticking up slightly now. They're pairing some of the earlier gains. And we've been talking about the return to the AI trade and the tech euphoria that we've been seeing that led to yet another record close in the S&P 500 yesterday. That is still the case. It manifested itself in Cisco earnings that came yesterday. Now, the stock went up as much as 19% in the post-trade, and that is because of higher than anticipated sales forecast that led to positive sentiment across the board. Return to Asian equities, and again pairing some gains, but still in the green, 0.2% higher, fueled by a rally in South Korea's Kospi, the best equity gauge this year in the world. It was 1.7% higher earlier. It is pairing some gains, perhaps some profit taking as President Trump meets with his Chinese counterpart Xi Jinping. So we've seen that happening. Our MLife team put out an interesting note this morning about the Kospi, saying if we take out its two biggest constituents, that is Samsung and SK Hynix, its PE ratios are actually relatively in line with other indices in Asia. We turn to oil prices, not doing much this morning, 0.4% higher. Now, the Iran war has taken a back seat today, and this is because of the meeting that you mentioned between Trump and Xi Jinping today. Perhaps something they will talk about. It will be front and center, along with those wider deals that should be discussed in Beijing today, and that was discussed yesterday. And then when it comes to the yields on the 10-year notes in the U.S., ticking up slightly. We saw the CPI print that came out a couple of days ago in the United States, hotter than expected. That is having an impact, not doing much today. It led to a higher impact a couple of days ago, but 10-year yield standing at 4.7% as of now, Jumana.
Yeah, one of the big market stories, that rise in global yields. Abir Abu Amar, thank you so much. Now, as the summit between Presidents Donald Trump and Xi Jinping gets underway in Beijing, China's dominance in rare earth mineral mining and processing will be a key topic of discussion. Washington wants to avoid another shock similar to the one in April 2025, when Beijing restricted exports while reducing its dependence on the Asian nation. But for China, this has become one of the most potent geopolitical levers when negotiating on the global stage, and particularly with the U.S. For more, we are joined by Bloomberg's Heidi Stroud-Watts. Heidi, we'll talk about rare earths in a moment, but more broadly speaking, you are in China now. What is China looking to get out of this summit?
It's quite interesting. There's almost two tracks in terms of what each side wants to get out of it, right? I think we've spent quite a lot of time talking about what President Trump and the US side wants, and it's almost a trade mission. They are very much focused on those short-term deliverables that they can take home to their sort of key stakeholders, right? Whether it be agriculture, the soybean industry and the farmers, Boeing with the aerospace and the aircraft deliveries that are expected, and so on and so forth. So those are kind of the deals for President Trump as the deal maker. America. When it comes to China, though, we know that the government in China, the administration, if you will, President Xi Jinping, takes a longer-term view. One of the guests we had on previously, who was with the U.S. Embassy in Beijing in previous administrations, saying that they really take that long-term view in terms of wanting stability, wanting that time to breathe, as well as they continue to consolidate their growing influence and power within what President Xi Jinping this morning in his opening remarks referred to a more and more contested world that is at a crossroads, right? He also spoke about the Thucydides trap, which is a theme that he goes to back and back again in many of these conversations. He raised that concept with President Biden as well, this idea that it's not a historical inevitability for great powers like China and the US to come to a point of conflict. So that was mentioned again. So that's a much sort of a bigger worldview, if you will, and indicates that perhaps Beijing has a bit more patience when it comes to what it wants out of this. Short term, though, in terms of those deliverables, they will be looking for some of those trade deals, but they'll also be looking for a substantiation of that draft truce, the sort of contours of a draft truce that was agreed in Busan in South Korea in October last year when it comes to the pausing of the tariffs. They'll want sort of some more meat and a longer-term agreement on that, because keep in mind, I think Beijing's also quite wary and cautious of the fact that this is a US administration in its strategy and style, and in President Trump's style tends to be quite sporadic and spontaneous, right? So they'll be wanting to get some longer-term commitments there.
Yeah, and extra points for bringing in the Thucydides trap there. You know, China, I spoke about this in the introduction, but China demonstrated last year around the time of the trade war that it actually does have strategic leverage through those export controls on rare earth minerals and magnets. Should we be expecting a deal there of some sort, perhaps a loosening of some of those export controls in exchange for the U.S. easing of tariffs?
I have no doubt that there can always be a deal that's made, and I think you know that, Jemana, as well. But the question is, what else is going to be on the table, and can the US sweeten the deal for China to be able to give further access when it comes to its enormous, as you say, dominance over the rare earths mining and processing and production globally? And what are those bargaining chips? No doubt Beijing, as we heard from the most recent remarks from President Xi, will be wanting clarity and perhaps some concessions when it comes to Taiwan. They've not been happy when it comes to the latest weapons package that was approved last year. They've not been happy with, obviously the discourse around Taiwan independence as well, and what's been happening in Iran has certainly put that in quite a different light in terms of how perhaps they're looking at an opportunity, if not for a US policy change, but perhaps some sort of off-the-cuff comment that could have impact from President Trump on this trip. You mentioned just the sheer potency, or I guess a formidable dominance that Beijing has when it comes to rare earths. And let me remind viewers, these are ingredients, sort of limited in quantities as they are required. They are really dominant in terms of being needed for aerospace, for defense, for medical tech. In fact, according to our Bloomberg intelligence analysis, around 4% of US GDP, $1.2 trillion, depending on access to these critical minerals. There has been a pause when it comes to those export controls, but Jemana, President Trump, Marco Rubio has already said they'll be wanting that to be firmed up, perhaps, to get more access as well.
Bloomberg's Heidi Stradwatz joining us live from China. Thank you so much for the overview there. Well, let's talk more about the tech angle of these discussions. The sale of U.S. semiconductors to China is believed to be a key agenda item for the summit. The talks come as both sides navigate ongoing tensions over chip export controls and access to advanced technology. For more, we're now joined by Robert Lee, Bloomberg Intelligence Senior Analyst. Good to have you with us, Robert. I mean, what do you think both sides are looking for from these talks from a pure tech perspective?
Okay, sure. I think your discussion then with Heidi touched on some of the aspects from a US perspective, because rare earths, as you discussed, are at the center of so many manufacturing and technology-related processes, from aerospace and semiconductors in particular. Also, rare earths find their way into motors, so particularly high-end motors, but motors these days are in everything from your coffee grinder to your electric toothbrush. So China has a huge amount of leverage on that front, and clearly the US is want to get some sort of agreement and certainty. But I think overall, from a Chinese perspective, they want to try to stabilize. I'm not sure you could necessarily call it a reset in relations, but they want some stability in their outlook. And again, as you touched on your outlook, on your discussion a moment ago, China takes a very long-term perspective tied into its 5-year plan and long-term strategy. So for China, access to high-end semiconductors is certainly something they want to get some certainty and agreement on. But I think the key focus from a Chinese perspective, and if you look at some of the less liquid AI-related names in the Hong Kong market, there's a stock called Jupu AI, which was up 35% yesterday in anticipation of a potential agreement on Huawei 200 chips.
Let's talk about NVIDIA. Earlier on in the show, we were talking about the fact that Jensen Huang is very notably present at these meetings. Is there an expectation that perhaps China, on their part, are going to loosen some of the restrictions to use those H200 chips?
Okay, I think to cut to the quick, is there scope for a headline agreement on H200? Will the Chinese allow the importation of this China-specific chip? Quite possibly, but it remains very difficult to forecast and predict with any degree of certainty, because the whole issue is tied up with geopolitics. And obviously, if you look in the US, for example, clearly Jensen Huang is a major supporter. Why wouldn't he be? He's the CEO of the company. But equally within the Congress, there are dissenting voices. So I don't think there's a particularly clear view from America. It's quite politicized and split camp on that front. And equally from the Chinese perspective, again, going back to what I mentioned on the 5-year plan, China is pursuing self-sufficiency in technology with semiconductors at the forefront of that. So we've seen a number of AI-focused chip firms come to market in Hong Kong. I think the Chinese firms will continue to purchase local chips. That is the direction of travel on that, regardless of any headline agreement.
Rob, you're saying that they're looking for self-sufficiency in tech, and then you look at two of the big heavyweights, Tencent, Alibaba. Of note, Alibaba recording its first operating loss since 2021. Huge AI spending going on there. Some real valid questions about the monetization of all of this AI spend.
Yeah, for Alibaba, monetization is coming through, but don't forget the core of this business is e-commerce. And that's a business that remains under significant pressure, hence the very weak headline numbers they reported last night. But you have to admire the ongoing optimism of the retail investor crowd in Hong Kong. I mean, the stock in the US was up overnight because the view is amongst some sell-side analysts that the results marked a low point and things will improve from here. I think, taking a more realistic view, the jury remains out on that, because again, there is ongoing heavy pricing pressure and competition in e-commerce. At the same time, Alibaba is rapidly increasing its AI investment. And just to quote you one number, I think in the prior financial year, they recorded a net free cash inflow of around $10 billion US. That swung substantially negative in the year they've just recorded. So this is putting huge pressure on their margins, this investment spend, massive pressure on their free cash flow generation. While some revenue generation is coming in, the overall return or return on investment is still considerably low. So I think taking a more balanced view or whatever, it still is down for these companies to demonstrate a sustainable and more meaningful return on their investment. We are yet to see that. I think that remains some way in the future.
Okay, Robert Lee, Bloomberg Intelligence Senior Analyst, thank you so much. And also, just of note, while Robert was speaking, CCTV, a Chinese state television, reporting that the meeting has now ended, that bilateral between President Trump and President Xi, also reporting that Xi will go on to meet U.S. business leaders and executives. And so we know now that the bilateral summit has come to an end, waiting for more commentary and a readout from what went down there. Now, coming up, UK Prime Minister Keir Starmer looks set to face a leadership challenge from Health Secretary Wes Streeting. The latest details next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. The UK's Labour Party is heading towards a divisive battle over the country's top political office. Bloomberg's been told that UK Health Secretary Wes Streeting is planning to challenge Prime Minister Keir Starmer as party leader. Streeting's backers say he's likely to quit his cabinet post this week to launch his leadership bid, while Starmer's supporters say he will fight any attempt to replace him. A leadership contest could drag on for months at a time when the UK faces weak growth, soft employment and rising inflation. For more, we are joined by Bloomberg's Rosalind Matheson. Well, yesterday, Ros, we were talking about the number of, or the handful of people that could be up for a leadership contest, and it seems as though Wes Streeting is front and center right now. How could the events over the next few days unfold?
Well, as you were just saying, we're expecting that Wes Streeting is gearing up to launch a leadership challenge against Keir Starmer. So the first thing is he'd probably step aside from his ministerial post. But there's a whole lot of steps that have to go through here and quite a protracted process in terms of the Labour Party leadership. So first of all, Wes Streeting needs to get enough nominations from his fellow MPs, 81, to launch the leadership challenge. Then after a period, there has to be a vote within the Labour MP group themselves. And after that, it has to go out to the paid-up members of the Labour Party in the UK. So there's a lot of campaigning that goes on in between all of that for a final decision. And of course, Keir Starmer has made it clear he's not going to just step aside if a leadership challenge is announced against him. He's going to contest that leadership and he's going to stand his ground. So that's going to make it very messy and very protracted, as you were just saying. It could, in fact, go on for some months. And of course, the big question is, do you get other contenders who come out of the woodwork and make this a very big field indeed?
Yeah, I mean, the other thing that's not completely out of the realm of possibilities is there is a leadership contest and the Prime Minister actually manages to stay in his post. I mean, with all of this going on in the background, what does it actually mean for UK markets, this uncertainty about leadership prospects?
Well, that's right. And of course, it's not without precedent because there was a former Labour Prime Minister, Jeremy Corbyn, who went through a very brutal leadership challenge and yet hung on for a few years after that, arguably, of course, weakened through that process. And the question is, even if he does survive a leadership challenge, as you say, an election is 3 years away, but this gives the opposition just that ammunition to keep coming back and saying the government is distracted, using that word a lot already, distracted, at a time when they can't afford to be, at a time when markets are clearly concerned about the economic outlook for the UK. You've got employment an issue, you've got inflation rising because of the conflict in the Middle East. You know, fundamental questions about the place of the UK in the world. We've got two big conflicts still going on, Russia in Ukraine, the conflict in the Middle East, an energy crisis, and big questions around the UK's place and all of that and how they're going to develop AI, business of AI. So a lot of things on the plate. And Keir Starmer was hoping to clear the decks and get his legislative agenda back on track, the focus on what he's trying to do. All of this will derail that. So even if he does survive that leadership challenge that we're expecting to come, the question is he going to be weaker in the future and, you know, leading the Labour Party into the next election?
Ros, thank you so much for the overview. Again, let's see what happens today throughout the course of the day and never a dull day in UK politics. Rosalind Matheson. Now, for a look at some of the other stories we're following. The UAE has denied Israeli Prime Minister Benjamin Netanyahu had visited the country. Abu Dhabi says its relations with Israel are public and conducted within the framework of the Abraham Accords. The UAE also denied receiving any Israeli military delegation. Lebanon and Israel are set to hold new peace talks in Washington starting today as their latest ceasefire nears its end. The two countries last met last month at the White House, where President Trump announced a 3-week ceasefire extension. But Israel has vowed to keep pursuing attacks against Hezbollah despite the truce. Coming up, the fallout from the Iran conflict is now hitting some of the world's most vulnerable farmers in Africa. That story next. This is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Well, just getting some headlines now from that Trump-Xi summit, and CCTV reporting that President Xi has said that he welcomes U.S. Desire to enhance cooperation with China. U.S. firms will have a better future in China, and also adds China's doors will open more. So this is specifically some of the comments that are coming through, and we know that he is meeting with U.S. business executives as well, just coming on the heels of that bilateral summit with Trump alongside key members of the cabinet. But essentially, Xi is welcoming U.S. industries right now and saying that China's doors will open more. Now, the fallout from the Iran conflict is hitting some of the world's most vulnerable farmers in Africa. In countries like Malawi, rising fuel costs and fertilizer shortages are threatening food security and raising fears over future harvests. Bloomberg Africa reporter Anthony Squazin joins us now. So, Anthony, talk to us about how severe the impact is on farmers in countries like Malawi right now.
Thanks. Yes. It depends on which country it is and where the planting season is. Malawi is an extreme example because it's landlocked, it's quite impoverished, and it's right at the end of supply lines. And it gets 3/5 of its nitrogen-bearing fertilizer from the Gulf. So there are big concerns there that there won't be enough fertilizer for the upcoming planting season, and that could spur food inflation and food insecurity, and possibly, leaving a lot of people, millions of people hungry later this year, early next year.
Yeah, is there anything that farmers are doing to cope? Are they cutting back on planting? Are they switching inputs?
Well, it's a variety of different strategies. I think commercial farmers are are cutting back on planting. In South Africa, we're now expecting the smallest wheat harvest in 12 years because planting is going on as we speak. And that's due to rising diesel prices and higher fertilizer prices. So they have to, basically work within their budgets. Elsewhere on the continent, what we're seeing is good quality fertilizer being blended with poor quality fertilizer, and that's being applied to crops instead, which is very harmful because it means the yields will be lower. So that will also decrease harvests in a few months' time. And what we will see is more food insecurity. It's not just Malawi, it's across the entire continent. And it's a whole range of different crops.
What does this mean for food security across Africa in the coming months?
Well, it depends where you look at it. In West Africa, we're planting at the moment. So food insecurity could come to bear quite soon, 3 or 4 months' time. In places like Malawi and Southern Africa and Eastern Africa, we're more likely to see food insecurity early next year when the harvest starts coming in. There was a good harvest in the season just passed. So that should tide people through for a few months. But we're expecting fertilizer shortages, higher diesel prices, and there's also talk of an El Nino drought. So it's likely to be a very difficult 12 months ahead for farmers across the southern and eastern regions of the continent.
Anthony Esquazian, thank you so much, Bloomberg's Africa reporter. All right, I just want to bring you a couple of lines that are coming through once again from President Xi, and he's saying that China's doors will open more. He's saying U.S. firms will have a better future in China and welcomes the U.S.'s desire to enhance cooperation with China. So this is just some of the commentary that's coming through from this very high-level summit that's taking place as we speak right now in China. That is it for our show, Horizons Middle East and Africa. Stay with the channel. Daybreak Europe is coming up next. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The meeting between Presidents Trump and Xi ends with the Chinese leader opening the door to more cooperation with the United States. However, Xi Jinping also warned of, quote, collision or even clashes if the issue of Taiwan is mishandled. By the smallest margin on record, Kevin Warsh is confirmed as Fed chair, setting up the most controversial leadership transition at the US Central Bank in decades. And waiting for Wes. Allies of the UK Health Secretary Wes Streeting say he's likely to quit his post and trigger a divisive battle to replace Keir Starmer as Prime Minister. Well, with this first meeting of the China summit done, here's the picture in markets this Thursday morning. Tech set to power stocks higher, already doing so in Asia, as we await more clues on the trajectory for trade ties between Washington and Beijing. The MSCI Asia Pacific Index, as you can see, near an all-time high on the left. And we have futures pointing higher on the Nasdaq too, up 0.3% after that strong outlook from Cisco. Now, the optimism on tech masking worries about inflation. Flip the board over. Of course, we got that US PPI print yesterday driving bets that the Fed will hike next year. You can see Treasuries have pared some of yesterday's losses. The 30-year yield now at 5.03%. We have Brent there at $106 a barrel, steady ahead of more details out of the Trump-Xi meeting, and the Japanese 30-year yield here at 3.89%. Its highest since its 1999 debut. On the elevated oil prices, with prospects for an end to the Iran conflict still in limbo. Now, let's turn to the risk events on the docket for today. At the top of the hour, we'll get the first quarter GDP figure for the UK. Could this give Keir Starmer a bit of respite? We are expecting to see expansion in the economy on the quarter, an improvement on the stagnation of the second half of last year, maybe though it might not last given higher energy costs. At the top of the hour, we also get earnings from Burberry, the last big luxury name to report, so capping a particularly weak performance in the consumer discretionary sector this quarter, but maybe Burberry's reinvention will mean it outperforms its peers. And then the US economic data keeps coming. At 1:30 p.m. London time, that will be in the form of April retail sales, expected to slow sharply after March's outsized gain. Plenty on the agenda for today. Let's set you up for the day ahead. We begin with the Trump-Xi summit and President Xi Jinping saying that China's doors will be open to more cooperation with the United States. This as the Chinese president meets with American companies after talks with the US president have concluded.
A stable bilateral relationship is good for the world. China and the United States both stand to gain from cooperation and lose from confrontation. We should be partners, not rivals.
Now, earlier, Trump got a full ceremonial welcome at the Great Hall of the People as he arrived accompanied by his top cabinet officials and some of the most powerful CEOs of US companies. Bloomberg's China correspondent Min Min Lo joins us now from Beijing. Min Min, good morning to you. So what's the latest on the ground? What's been the readout so far?
Hey Lizzie, is it a bright, sunny day, clear skies, and that seems to be the mood that is between President Trump and Xi as well. The two men were sequestered in a room at the Great Hall of the People for at least a couple of hours, and just about 5 minutes ago, we know President Trump has left the White House for the next phase of his itinerary. We know that this afternoon he will be going to the Temple of Heaven for a stroll, a little bit of sightseeing there. But this morning we had this display of the bromance between the two leaders, right? President Trump was effusive in his praise of President Xi, saying that they would often call each other, that the future of their relationship is fantastic. And we did get a couple of readouts from Chinese state media Xinhua, and one of the most notable ones was on Taiwan. That was highlighted by Xinhua as the first and foremost most important red line for China, warning once again the US to exercise utmost caution when it comes comes to the arms deal, and it came with an explicit warning that if the Taiwan issue is mishandled, it could push ties to dangerous territory. So a very explicit warning there. Now, it's not unusual for President Trump to delay this announcement of a record $14 billion arms sale to Taiwan. But the main question is what happens when President Trump leaves China and returns to the White House? Will he be announcing the approval of that arms deal? I think that is what China is really concerned about here.
So good vibes so far, Min Min, but what else is on the agenda for today? Anything thornier expected to come up?
Well, we will be waiting for the headlines coming through, but a lot of that is discussed behind closed doors. And so far, the public rhetoric from Chinese state media and the way they have framed the meeting has been very, very positive. President Xi saying that this could be a landmark historic year for the two sides. Chinese state media also highlighting how there is very broad scope and enormous potential for cooperation. And once again, you look at the delegation of CEOs that accompanied Trump, right? You have about $20 trillion in market cap when it comes to the companies represented, the CEOs standing there on the steps of the Great Hall of the People and coming from many different sectors, the financial services sector. You have Cargill there as well. So possibly commodities, agricultural commodity deals could be on the table. We'll be waiting to see any specifics that would come out of that, whether Boeing would get that mega 500 jet deal as well. So a lot still to come. Of course, NVIDIA's Jensen Huang has been that latest addition to the delegation. And if you look at how market had responded yesterday, huge rally when it comes to some of these AI tech stocks. Today, we're seeing that take a little bit of a pause, a bit of profit taking, but that was after some close to 40% gain in stocks like Zhipu, for example. So a lot of anticipation about whether or not China would approve its Chinese companies to buy the H200 chips from NVIDIA.
Min Min, thank you very much for that on-the-ground reporting out of Beijing, Bloomberg's Min Min Lo. Well, as we have been seeing the latest pictures in Beijing, Trump arriving at the Temple of Heaven, as Min Min was just previewing just now. So let's see how Asian markets are reacting to the visit as it stands so far with Avril Hong in Singapore. Avril, what are you watching?
Yeah, Lizzie, markets are watching this meeting as it unfolds. I think the market consensus is an extension of a trade truce, as Min Min was alluding to, which was brokered in South Korea late last year. So far, nothing to suggest otherwise. Maybe you see some chips breakthrough, which would also help to lift market sentiment. That being said, I think investors are choosing to take some profit. The Kospi was 1.8% higher earlier. You're pairing now. I would say, though, as that retail mania continues in the country, investors are looking for the next big thing in tech, and they seem to be zeroing on robotics as a theme. One of the biggest boosts to the Kospi today is LG Electronics. Other than that, take a look at the mainland gauge, CSI 300, pulling back from the highs of yesterday, which was the highest since 2021. So again, that caution maybe among Chinese mainland investors. That being said, we did go through a bit of a mini AI rally in China. Flip the board and take a look at the other stock that has been a big boost for the region's benchmark today, Alibaba. Yes, its revenue missed, and this is a stock that has been coming under a lot of pressure this year, along with Tencent, the other Chinese mega cap. But there is a lot of optimism, AI bullishness of how it's going to contribute to its revenues. It has to deliver fast, though, given how we're seeing the stock coming under pressure. I would also just highlight that among the bottlenecks for some of these Chinese tech firms on delivering AI is the access to advanced semiconductors. And given how this arena is seen as a national security concern of sorts, even amid the speculation on a breakthrough on H200s, they might still choose to prioritize homegrown AI accelerators. Now flip the board again, because at the top of the hour thereabouts, we did get some red heads on the Japanese JGB yields for the 30-year, hitting the highest since its debut. A couple of things have happened. We got a 30-year auction out of Japan, and bid to cover ratio was okay, showing solid demand, but the tail widened to the highest since November. Also got some hawkish comments from somebody who is seen as a dove on the BOJ, and there you have it, what you're seeing on those yields. Lizzie?
Okay. Avril Hong, thank you very much for that update. And we can now bring you pictures of President Trump arriving at the Temple of Heaven in Beijing alongside China's President Xi. This is a complex of religious Confucian buildings. It's in the southeastern part of central Beijing. You can see the two of them side by side there. This is a place known for ceremonies of prayer for a good harvest. Is that going to provide a good omen for better trade ties between the two, I wonder? Of course, trade very much at the heart of discussions between the two leaders in this 36-hour summit. Reuters reporting that the two sides are weighing a potential framework whereby each country identifies about $30 billion in goods on which tariffs could be eased without threatening national security interests. So Trump flanked on this trip by major CEOs, including now NVIDIA's Jensen Huang. But let's get back to the markets and the Federal Reserve. New leadership, Kevin Warsh having been confirmed as Fed chair in a 54-45 Senate vote, the narrowest ever margin in a confirmation vote for the role. We can bring in Ben Ramblinberg, MLive strategist, now for more. So, Ben, that confirmation vote coming on the same day that we saw the first 5% yield in a 30-year Treasuries auction since 2007, and yet another upside inflation surprise. Is this really a sign that the only way is up for long-end yields?
Morning, Lizzie. That certainly seems like the sign of times. I think if he got through with the slimmest of margins, I think he's got the more tough times coming up because, the White House expects him to cut rates, but is he going to be able to cut rates? I mean, we have seen the inflation prints this week. They're pretty ominous. I mean, you've got headline inflation nudging 4%. You've got core producer prices are running upward of 5%. Think about what that implies for the Fed funds rate. We are now at 3.625, the mid rate. And that mid-rate is loose. The financial conditions, the financial backdrop is pretty loose at the moment. You see the melt-up in equities. You see credit spreads tightening. And, that's not... And inflation is accelerating, as I mentioned, of course. So this is not a backdrop to be cutting rates. And he's going to have a tough time trying even to broach that suggestion among the rest of the FOMC members when inflation is rampaging like this.
Ben Ramblinberg, MLive strategist, thank you very much for that. And coming up on the programme, Presidents Trump and Xi are both at the Temple of Heaven in Beijing. We'll analyse the outlook for US-China relations later on in the show. But first, a Labour Party showdown brewing in the UK. Could Health Secretary Wes Streeting move against Prime Minister Keir Starmer? The party bracing for a bruising power struggle. We'll talk about that next. This is Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:15 a.m. here in London. Well, we now turn to turmoil at the top of British politics. A potential challenge to Prime Minister Keir Starmer's threatening to ignite a Labour civil war, with allies of Health Secretary Wes Streeting signalling that he could quit the cabinet as soon as today and launch a leadership bid. For more, let's bring in Bloomberg's Alex Morgan. So, Alex, is this the start of a full-scale leadership battle, and do we think Starmer can survive it?
Well, Lizzie, some people are saying that the battle's already begun. You've got the briefings, and we had those during the King's speech yesterday, which is when the government was trying to set out its legislative agenda. Just as the King is delivering that, reports first in the Times and then elsewhere that Wes Streeting, the Health Secretary, was planning to pull the trigger on Keir Starmer by pushing forward with this leadership challenge, putting himself forward for the top job. So where we are this morning, the very latest we have is as yet no official confirmation that Streeting is going to make that move or the timings, but it's been briefed heavily that he is preparing to challenge Starmer for the top job. The Prime Minister and his allies briefing MPs saying, look, don't go there. That is chaos. Let's not open the door. Let's keep going with what we're doing. We've got a legislative plan. Let's move forward with it. So the standoff there. We've also had some developments this morning from the left of the party. The former Deputy Prime Minister, Angela Rayner, according to her spokesperson, has been cleared in relation to her tax affairs. Why does that matter? Well, she has also been mooted as a potential leadership candidate if a contest is triggered. So zooming out, let's zoom out. Broadly speaking, you've got three camps within the Labour Party. You have Keir Starmer's camp. They are currently obviously running the administration. You've got Wes Streeting and those around him who are seen, again, more to the right of the party, the most likely challenger to kick off a process. Then you have the left of the party. We know their favourite candidate is Andy Burnham. He's the Mayor of Greater Manchester, currently not in Westminster. But could they put up somebody else? Maybe an Angela Rayner, maybe an Ed Miliband. Ed Miliband, currently the Energy Secretary, to take on the Prime Minister. Either way, does Starmer survive? The other part of your question. That is the key question that his allies are going to be wanting to answer in the coming days.
So briefly, if it is a Streeting leadership, what would that mean for the gilt market?
Well, that is more or less continuity. It's seen more or less as continuity. Streeting coming from the Tony Blair-aligned side of the party. Previous comments he's made, he's been concerned about the levels of taxation. He wants, as well, he's commented on welfare spending. So he's seen more or less as a continuation of the fiscal rules under Starmer and Reeves. We know that that is something that is friendly to gilt investors. On the other hand, a move to the left, a loosening of those fiscal rules, maybe a Starmer-Reeves reversal, if you like, a pledge to spend more that could come under Andy Burnham. Well, that could be troubling. We've already seen, though, the 30-year yields reaching its highest since 1998 around the ongoing uncertainty about Starmer. So we've already seen this playing out. The question really is, for investors at the time of the Middle East conflict and the UK already dealing with the difficult economic backdrop, do they have the stomach and how strong is their stomach for continued political uncertainty at the very top of UK politics?
And of course, we'll have months of uncertainty if we have a leadership battle. Bloomberg's Alex Morgan, thank you very much for setting the scene for us. Now, new polling from Ipsos says that a majority of Britons think Starmer shouldn't lead Labour into the next general election, but are divided on when he should go. Let's get more now with Kieran Pedley, UK Politics Director at Ipsos. Kieran, good to see you this morning. So this is the polling.
Morning.
Who'd be more likely to beat Nigel Farage's Reform UK at a general election then?
So, of course, we should stress that that is a hypothetical question at this stage. We don't know how individual candidates might do in office, and fundamentally how someone operates as Prime Minister would be what decides their fate in a general election rather than their polling now. However, when we put hypothetical head-to-heads versus Nigel Farage, Andy Burnham leads Nigel Farage's Reform Party by 16 points, 46 to 30, when you force the public to make a choice. And so that compares to an 11-point lead for Keir Starmer, but a slightly smaller lead for Wes Streeting of 7 points and Angela Rayner for 6. So on face value at the moment, what we see, and we've seen this in the polling with Ipsos for some time, Andy Burnham is the most popular alternative candidate to Keir Starmer. The problem for Andy Burnham and his supporters is, of course, he's not in Parliament.
Well, let's say that you did have a Prime Minister Burnham. If you had a Chancellor Rachel Reeves, would that hurt his popularity too much?
Well, Rachel Reeves is one of the most unpopular politicians in the Labour Party at the moment. That's not surprising for chancellors. They do tend to be, as a rule, unpopular apart from times of crisis. Rishi Sunak was reasonably popular during the COVID pandemic, it's fair to say. But as a rule, chancellors are the people that say no and are the ones that have to make tough decisions on tax and spending. So it's not unusual for chancellors to be popular. I would be very surprised if Rachel Reeves was chancellor under Andy Burnham, to be quite honest. But there's a long way to go until Andy Burnham is Prime Minister, and that is the key, really. There isn't an obvious standout candidate in Parliament other than Keir Starmer, aside to Keir Starmer, in terms of who would do better than him. But, I mean, these are the types of conversations that are going to happen within the Labour Party at the moment.
Well, yeah, bottom line for bond markets, could Labour realistically change leader without reopening questions of fiscal credibility, Kieran?
Well, I mean, that's a question for the bond markets, but certainly within the Labour Party and the wider left, there's a frustration at the pace of change and at the scale of change that Keir Starmer's government has offered. And that is part of the diagnosis for why the local elections went so badly for Labour last week. And so that's a discussion going on within the Labour Party. I suppose it's eye of a needle stuff. How do you create more radical change or change that's more palatable to the left and to the Labour Party without spooking the financial markets? And that's obviously an intense discussion that's going to be had within the Labour Party. What we see at the moment is that the public are the most pessimistic they've been about the economy for 48 years. And it's that sense of public pessimism that is really upending our politics at the moment, which is leading us to where we are today.
Well, yeah, when the government's so fiscally squeezed, from your polling, what's the one thing that it would be worth spending money on to get the electorate on side?
Well, I think there's two things that stand out. The NHS is always something that is top of voters' minds. It's a strong concern. That's not strictly just about money, of course. I mean, the things that people care about are seeing their GP as quickly as possible and waiting times in the NHS. That's what they mean. Obviously, money is a factor in that. But I think the big question, not just for the Labour Party, but for British politics in general, is around the cost of living. As I've stressed, economic optimism is the lowest it's been with Ipsos for 48 years, and the cost of living itself specifically, so prices in the shops and things of that, and inflation has been surging in recent months on the list of voter priorities. In fact, the economy is now ahead of immigration as the #1 issue. So what the public are looking for, and what we saw in the local elections, is that the cost of living was the #1 issue for voters going to the polls in England. What they're looking for is an answer to those questions, and that's something that Labour has to grapple with, but Reform UK and the Conservatives and other political parties too.
But the cost of living is only going to go up if we see yields going up at the long end, if we have even more instability around a Labour leadership contest, Kieran. Do you think that that's going to be damaging to Labour in the polls until there is a new leader?
Well, the saying goes that divided parties lose elections, and of course there isn't a general election anytime soon, but there is the risk, I suppose, that if there is an intense, drawn-out, vitriolic leadership contest, that could damage Labour's reputation in the public pretty strongly. I mean, that will be the argument that the Prime Minister, Keir Starmer, is making to his colleagues, is that we shouldn't have a leadership contest now because it will create division that will paralyse government and lead to Labour's poll ratings falling further. But his opponents, of course, will say that things need to change and that's what the public wants to see, and that was reflected in a terrible set of election results last May. That is fundamentally the debate the Labour Party is having this morning, and we'll see in the coming sort of 28 to 48 hours which direction that goes in.
Kieran, very quick last question. Farage facing this inquiry into the £5 million gift he received from a Thailand-based crypto investor. Do voters care where Reform gets its money from and what influence that money buys?
Well, one thing we see with Reform UK voters is that they are intensely committed to Nigel Farage and Reform UK. They are often the most likely to have definitely decided how they're going to vote and the more firmly committed to that party. So, I don't want to dismiss any of these questions, but it takes a lot to peel people away from Nigel Farage and his policy agenda. But of course, these are questions that he has to answer, and with politicians that look indestructible, they are until they aren't. So, I mean, this is probably not the most pressing thing that people are looking at the moment because of what's going on with Labour, but it doesn't mean it's not important. It doesn't mean it can't be damaging to Nigel Farage.
OK. Kieran Pedley, really helpful to get your insights this morning. UK Politics Director at Ipsos. Kieran Pedley, thank you. Well, coming up on the programme, Chinese firms are reportedly planning secret arms sales to Iran. We'll get you the details next. This is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersecci. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Chinese firms are reportedly planning secret arms sales to Iran. The New York Times citing unnamed US officials saying that the plan involves sending weapons through other countries to hide the origins of the shipment. The report also says it's not clear at this stage how many, if any, arms have been shipped or to what degree Chinese officials have approved the sales. Well, checking in on these markets, and we have seen a flip in sentiment in Asia. The MSCI Asia Pacific Index now down 0.1%. Stocks wavering as Trump meets with Xi. More next on that meeting. This is Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The meeting between Presidents Trump and Xi ends with the Chinese leader opening the door to more cooperation with the United States. However, Xi Jinping also warned of, quote, collision or even clashes if the issue of Taiwan is mishandled. By the smallest margin on record, Kevin Warsh is confirmed as Fed chair, setting up the most controversial leadership transition at the US Central Bank in decades. And waiting for Wes. Allies of the UK Health Secretary Wes Streeting say he's likely to quit his post and trigger a divisive battle to replace Keir Starmer as Prime Minister. Well, a very good morning. If you are just joining us, it's 6:30 a.m. here in London. This is the picture in markets. We've seen Asian stocks flipping between small gains and losses as the US and China hold their summit. We're waiting for more clues on what's next for trade ties between Washington and Beijing. Futures, though, pointing higher on both sides of the Atlantic this morning, up 0.7% for Euro Stoxx 50 futures, up 0.3% on the Nasdaq futures, encouraged there by a strong outlook from Cisco, so tech looking for gains. But if we flip the board over to the cross-asset picture, of course, we got that US PPI print yesterday, that driving bets that the Fed is going to hike rates next year. So the 30-year still above 5% at the moment. We also are looking on the right side of the screen at the 30-year yield out of Japan. It's highest since its 1999 debut on elevated oil prices and prospects of the Iran conflict still in limbo. And in the middle there, oil at $106.33 the barrel for Brent, up 0.7%. Again, as we await more details out of the Trump-Xi summit, will they be discussing Iran, but the conflict continuing, as we say. Now, let's turn to our front pages this morning, starting with the Wall Street Journal. They lead on President Trump meeting his Chinese counterpart in Beijing for this crucial summit. Likewise, as you might expect, the Financial Times splashing on Xi, telling Trump that the US and China are partners, not rivals. And finally, the French newspaper Les Echos leads with the gap widening between Paris and the City of London. In 2025, the number of millionaire bankers continued to rise at most major French banks. The paper saying in London, however, the lifting of the cap on bonuses set in motion a completely different dynamic. But you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which terminal subscribers can find by going to DAYB Go. Now, let's head back to Beijing. President Trump saying that his meeting with Xi Jinping was great after bilateral talks between the two leaders conclude. Bloomberg's China correspondent Min Min Lo joins us now on the ground for us from Beijing. Min Min, just talk to us about the reception that Trump's received so far.
Well, the two men are at the Temple of Heaven, and that is one of the most iconic landmarks in Beijing. It was built in the 1400s. It was where Chinese emperors used to go to pray for good weather and bountiful harvests, and this is where they also would try to secure the legitimate right to rule. And President Trump getting treated to, that iconic sort of landmark, a sightseeing trip, if you will. And it really reminds me of President Trump's first trip to China China, where he became the first U.S. president to dine inside the Forbidden City behind me. And, you know, China and the U.S. has been touting this personal relationship between the two men, the personal touches that are not really afforded to other leaders. And that really is sort of the main theme that has been highlighted by Chinese state media so far, and how that relationship has helped them weather the ups and downs of the U.S.-China relations. But there's also a little bit of wariness, right? If you think back to the first Trump visit, when there was this very positive reception, just as we saw today and last night when President Trump arrived, you know, with hundreds of these youths waving the Chinese and American flags, just cheering him on. We did see soon after that, in his first trip, after the honeymoon phase was over, I think China was taken a little bit aback by the swiftness and aggressiveness of President Trump's first trade war. And it really begs the question of whether we would see the same thing again today, after all that chumminess and all that, you know, after the summit is done and dusted, whether President Trump, when he leaves China and goes back to the White House, would he then bow to legislative pressure to start to unleash more unfriendly policies on China, whether it's the approval of that arms sale to Taiwan or the re-escalation of tariffs on Chinese goods.
Well, what would you say, Min, would count as a win out of this summit? And is it fair to say that China goes into it with the upper hand?
Well, I think expectations are very low that there would be any grand bargain. I think this, a measure of success would be whether the two men can really maintain the sort of equilibrium, right? And going into this summit, there has been this idea that maybe the U.S. is a little bit weakened because of the Iran war happening in the background. And as one analyst had said, the U.S. is fighting a war without winning, and China is winning without fighting, because you have the Iran war in the background. You know, Marco Rubio saying that they're hoping that they would be able to convince China to play a bigger role in getting Iran to back off. And meanwhile, you're seeing favorability ratings, according to the Pew survey, towards China increasing over the past few years, as we see, you know, American leadership and that credibility being eroded after the U.S. took actions on Iran, on Venezuela, and China is sort of sitting back and just enjoying the side benefit of the U.S. eroding its own credibility there. So there is this sense that China is sort of coming in with the upper hand here. They have also cut their teeth from the first trade war and understood that they were able to get the U.S. to back down on those tariffs, right, from 145% to where it is today. So they understand that they do have true control, especially over rare earth and supply chain. So there's this sense when you talk to officials here in China that they're a little bit more confident that they will be able to stand their ground against the U.S. this time around.
Bloomberg's Min Lo in Beijing. Thank you so much for your coverage this morning. I'm sure we'll get more of it over the next couple of days. Well, coming up, an AI chip player delivers the biggest IPO of the year so far. We'll bring you all the details next. This is Bloomberg.
Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is, like, very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. This week, leaders from the world's 2 largest economies will come together in Beijing. With geopolitical stability and the future of global trade on the line. Trust Bloomberg to go beyond the headlines with on-the-ground reporting, expert analysis, and real-time market reaction. The Trump-Xi Summit. Special coverage all week right here on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe, 6:40 a.m. here in London. Let's get more now on the Trump-Xi Summit. We can get analysis from Xiaoli Chen, Head of International at Crane Shares. Good morning. Thank you so much for making time for us. We had a late addition to the delegation on the US side, didn't we, in the form of NVIDIA's Jensen Huang. I wonder how optimistic that makes you for substantive progress when it comes to AI and chips. Good morning.
Good morning, Liz. Thank you for having me on your program. It is one of the most important summits, I'd say, happening right now, matters the most to the market, judging by the delegation.
OK, so the connection appears to have broken down, but we'll try to get back to Xiaolin later on in the programme. I'm sure it would have been a fantastic conversation. But let's get to some corporate news in the meantime. A top OpenAI executive says that the company would support the creation of a global governance body for artificial intelligence led by the United States and including China as a member. Vice President of Global Affairs Chris Lehane says that Washington could use its AI lead to build a system for safer, more resilient development. He says the technology transcends traditional trade tensions. Elsewhere, Bloomberg understands that Mistral AI is in talks with European banks about deploying a cybersecurity-focused AI model. We're told the French startup's developing a system that can detect vulnerabilities at scale, similar to tools from rivals like Anthropic. Europe's lenders are under pressure to strengthen their defences as access to some advanced models remains limited. And Ford shares surged to a 6-year high after Morgan Stanley issued a bullish call, citing potential deals between its energy storage business and hyperscalers. The bank estimates Ford Energy could be worth $10 billion and sees opportunity for its valuation to approach that of Tesla's energy business. Ford signed a licensing deal in 2023 with Chinese battery giant CATL. Well, turning back to UK politics now, and we did have the news earlier that Angela Rayner had been cleared when it came to wrongdoing in her tax probe. Now we have the news that she is prepared to run in a leadership contest. So this, according to a source, and of course we are watching the latest in number 10. It's a person familiar with Angela Rayner's thinking. It's reported by Bloomberg. And she, of course, is the former Deputy Prime Minister of the United Kingdom. A leadership contest shaping up between her, the Health Secretary Wes Streeting, who, of course, went to visit the Prime Minister yesterday, and potentially the Mayor of Greater Manchester, Andy Burnham, who, of course, doesn't have a seat in Parliament just yet. But are we going to see a by-election open up a space, a route back to Parliament for him? We also have news breaking out of China on the latest on the Trump-Xi summit. And this is that President Xi is saying that the US and China are going to step up their military and political communications. They're going to use, they're going to improve their relationship in that way, and they're committed to stable development of ties between them. So the president of China giving that warm note out of the summit so far, but of course we're expecting them to talk about thornier issues as well. At the moment, they already have discussed the Middle East and Ukraine. This is according to Xinhua news outlet and CCTV reporting that they have discussed these issues as well. So we'll continue to monitor the latest in Beijing. But turning back to the corporate, Cerebras has raised more than $5.5 billion in its US IPO, in the year's biggest offering so far. The AI chip maker priced its shares at $185 each, giving it a market value of about $40 billion. Let's get more now with our Bloomberg senior strategist, Neil Campling. So, Neil, potentially the first of many big tech IPOs this year. What does this listing really tell us?
I think if we look at the starting price range we had for this stock, it was about $115. So we've ended up pricing this deal 60% above initial expectations. We also learned that the deal was 20 times oversubscribed. So and of course we also had an exclusive last night that SoftBank and Arm tried to buy the company just a few weeks ago. There is huge pent-up demand for any stocks, private stocks that are coming to the market that have those AI ambitions, those high growth rates, and this is just, I think cementing the demand and the appetite that's out there from investors for these kind of offerings.
And we're also seeing Cisco's better than expected outlook boosting Nasdaq futures this morning. Nasdaq futures now up 0.3%, Neil. Is this another AI pivot that's paying off?
It does seem so, Lizzie. Yeah, I mean, it's quite incredible for an old school tech company like the likes of Intel has had a fantastic year as well. Pivoting to AI to see the stock rise 20% after hours. Now, the key thing within the guidance is the hyperscale related revenues. They increased their guidance for hyperscaler revenues to grow by 80% this year from where it was before. So it's an incredible raise to the guidance for hyperscalers that's helping sort of accelerating growth for the overall business. So a business that has struggled in recent years is certainly coming back from the dead and really is pivoting to AI under new leadership.
And Neil, yesterday you previewed those Alibaba earnings for us. I've got shares in front of me jumping this morning in the Asian session, despite the operating loss in the first quarter that they reported. What are the positives that investors are jumping on, taking out of these results?
Yeah, again, it's within the detail. So within the detail, analysts were actually talking this morning about seeing signs of an inflection in the business model. In other words, that the payoff of investments in AI are beginning to come through. So there's a product that they do within their cloud offering they call it MAS. Tech companies love an acronym. It is basically called Model as a Service, and this business is expected to grow threefold next year. So a 300% type jump compared to where it was is kind of a justification for the capex. And whilst you may see profits hit on the bottom line, you're seeing the acceleration on the top line coming through. So that's what's got analysts and investors excited this morning on the Barber offering, I think.
OK, Bloomberg senior strategist Neil Campling, thank you very much for taking us through all of that. Well, let's head back to the Trump-Xi summit, shall we? We have had the latest lines from President Xi saying that the US must handle Taiwan very carefully. Of course, we know that the arms sale issue is one that Trump has been looking to bring up at this meeting. Xi saying be careful when you do that, but lots of other issues on the table as well. Xi saying that the two sides are going to expand cooperation in trade, agriculture and tourism. We can get back now to Xiaoli Chen, head of international at Crane Shares. So I'm sorry we lost you earlier, Xiaolin, but let me ask you whether this is really going to be a genuine reset in ties between the US and China, or is it just a chance to extend the temporary truce before the next round of talks and tensions?
Liz, thank you for having me on your program again, and I appreciate his, rejoining your program this morning. I think this summit is probably watched by the most by the world today, and also by the market. Two sides has a very, sincere delegations, trillions of dollars worth of business personnel and industries are presenting in China right now, this second, and they are discussing and negotiating the business trades and deals right behind doors. I think at this moment, judging from all the messages, statement come out of the meeting so far, I remain very optimistic on this summit on very simple reason. One, both sides are very sincere talking on the table right now. Second, the representation from both sides also matters a lot to the world economy, also matters a lot to China. A lot of issues will be on table, but I think given they're still talking, both sides are still working hard on the trade deal. The fact the day before the two leaders meet, you can almost feel that a lot of work being put in place in preparing for this summit. We should expect at least a base case for progress to made on the trade.
And you've said that when it comes to trade and particularly tech, any real progress is going to be in the technical annexes. The substance will be found there. What particular phrases will you be looking for? If we were to press Control F on the keyboard, what are you homing in on?
Definitely on more relaxing on access to the high end of the chip from Chinese business to to the American chips. That's one. Second is more opening or more free on both sides to do business. Clearly, agriculture is on the table, but more airplanes not a problem, and also open up China financial market for all these financial leaders that's in China today. Vice versa, for China to access more freely to U.S. capital market, including doing business, even access to the capital market. I think a lot of those taxes, you got to watch technology front and center. It's a matter of national security. I think China going to focus on technology, innovation, access to high technology, also freeing to do business in U.S. in technology field, also on top of the agenda. Any line along those, you're going to see a fast move on semiconductor and AI and internet sectors in Chinese companies.
Well, as we mentioned earlier, NVIDIA's Jensen Huang was a last-minute addition to this trip, Xiaolin, and we have had the line reported by Reuters that the US has cleared H200 NVIDIA chip sales to 10 Chinese firms. Alibaba, Tencent, ByteDance are among some of those firms approved by the United States. Just also turning over to the Middle East, because it's been reported already that that is an issue that's come up in the talks between Xi and Trump so far. Given that China buys most of Iran's oil exports, do you think that that issue of the Middle East could overshadow other talks that are on the table?
China can step in to help Middle East situation. I disagree with a lot of Shi's comments. China can step in to help. Is China going to choose to, in the middle of reboosting or boosting its domestic economy as one? Second, President Xi has 1.4 billion people to look after. Additionally, every year he needs to create 20 million new jobs for this market. I think Xi has a lot of busy agenda on his agenda. He will probably on economic front to step in a little. He definitely will raise the issue, but will China willing to step in a very messy geopolitical risk today in this moment with his heavy agenda to help domestic economy? I think he will balance it well to focus more on domestic economy, on growing China's GDP, on creating jobs for people, on continued innovation on technology, become self-sufficiency. That will be his agenda.
Xiaolin, really glad we got to talk to you in the end. That's Xiaolin Chen, Head of International Crane Shares. Thank you very much. Well, coming up on Daybreak Europe, plenty more charts to set you up for the day ahead. This is Bloomberg.
up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back. Now, we have been discussing the US-China summit that's going on in Beijing right now. Just take a look at one of the impacts that we've already seen in the markets. The Chinese yuan strengthening in anticipation of better trade ties out of this, clearing the 6.8 per dollar level on Monday for the first time, as you can see, since 2023. And Beijing appearing to support this controlled currency strength, as they tend to do around bilateral summits of this nature, mind you. But let's also take a look at the inflation data that we've seen out of the US, because the Chinese inflation and trade data has supported the currency. The US inflation data notable as well, because yes, we've seen, as you would expect, a boost in inflation from the Middle East war, higher energy prices. But what this chart shows is that the gap between PPI and CPI is widening. The pressure on producers, not yet as much on consumers. So that putting a strain on companies. You might expect that to be hitting stocks, but really not yet. Where we are seeing the pain, though, flip the board one more time, is on treasuries. And we did have that 30-year auction earlier yesterday, so that proving that investors had to pay above 5%, getting paid 5% for 30-year paper for the first time since 2007. Of course, it was going to be a tough auction, you might say, after that inflation print. Now, let's take a look at what is happening elsewhere this morning. Just wrapping up what's been happening in terms of the US-China visit. Oh, let's look at the 30-year yield out of Japan as well. Notable that it's the highest since 1999, but I do just want to wrap up what's been happening in Beijing. Notable lines so far: the US clearing H200 NVIDIA chip sales to 10 Chinese firms. This reported by Reuters, and they will include Alibaba, Tencent and ByteDance. President Xi saying that China is committed to stable development of ties between the two countries, and the US must handle Taiwan very carefully. Don't miss our
cidade estava sitiada.
Isso ao começo eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne
num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. It is Thursday, May the 14th. Here's what's on the agenda. Xi warns Trump on Taiwan as the US president's visit to Beijing continues. Starmer steals for a leadership challenge as soon as today. And mega-cap tech debt binge for the ages.
Tom, let's have a look at how that positivity around the tech story, certainly with giant listings in the US tech space, lots of debt being raised in that area, and also decent sales numbers and pivots coming through from companies like Cisco. All of that meaning that the Nasdaq was pretty strong yesterday, and some of that news flow following that strength in the Nasdaq. But we are looking at some positivity for European stocks. Futures are pointing higher. Not since 1999 have we seen levels this high in terms of the 30-year Japanese yield. And so we're certainly watching that with inflation in mind. The pound, pretty unmoved by the politics. Looks as if that is going to kick into gear later on today, so we keep watching. And it seems the data not moving the pound all that much as well. We just got GDP dropping in the last minute or so, 135.20. The countdown to the opening trade starts right now.
It's an honor to be with you. It's an honor to be your friend. And the relationship between China and the USA is going to be better than ever before.
President Trump speaking in Beijing. His trip is ongoing. The talks apparently were, quote, great, according to President Trump with Xi Jinping. We think he's still in the Temple of Heaven right now. We may hear from him later. Let's get the latest now, though. Let's go to Beijing. Bloomberg's China correspondent Mimin Lo is there. Mimin, bring us the latest.
Yeah, the two men were sequestered in the Great Hall of the People for a couple of hours this morning, and we got some updates from the Chinese state media, Xinhua, in terms of the messaging that China has sent to the U.S. First and foremost is Taiwan. It's not even trade, and Iran didn't even get a mention on the Chinese readout. We know the two men did discuss the Middle East and Ukraine, but it seems like both sides are downplaying the Iran issue here. But Taiwan, that was the main focus of the Chinese state media readout, and really warning the U.S. to exercise utmost caution when it comes to this arms deal with Taiwan, and warning that if it is mishandled, it could push U.S.-China relations to dangerous territory. And it's interesting when you look at President Trump and his reaction when reporters were asking him how the talks went. He said it was great. Reporters asked what his comments were on Taiwan. He sidestepped that question, possibly really trying to avoid anything that could embarrass President Xi here on this landmark trip to Beijing. And in the opening remarks, we really saw President Xi, with a tiny smile on his face throughout. And President Xi always has a very stern face. That is a very sort of rare display of this effusiveness between the two men, right? President Trump effusive in his praise of President Xi, saying that they both used to call each other very often and that the future is fantastic. So a lot of positivity and constructive tone from both sides this morning.
Mimin, thank you very much indeed. We look forward to the continuing coverage throughout the day. Mimin Lo in Beijing. So smiles. So we've had some smiles. We've had great talks, apparently. But anything else really here that we can take as being concrete? Is there progress? Is there anything that the market can look at and go, here's a breakthrough, here's a concern?
There have been a few lines in terms of where they hope to have cooperation in terms of agricultural products. We're seeing that. We're waiting for the details. There will be announcements around deals. Then the question is, how material are those deals? We'll see the headlines, and then we'll have to do the number crunching in terms of when those actually come through, whether it's aircraft or beef or soybeans or oil and gas, where where there are tariffs on. China's put tariffs of 15% on LNG, 10% on oil. Given what's happening in Strait of Hormuz, is that an area where it comes out? The comments on Taiwan are important. That's the sharpest lines that I've heard from President Xi when he's been in the room or close to the US president. He's made these kind of comments to the domestic audience before, but these are pretty strongly worded comments around Taiwan. This is a legacy issue for the Chinese president. And that underpins solving the Taiwan question, as they put it. That is a legacy question for President Xi Jinping, and that is the overarching risk for this relationship longer term.
There was Greek philosophy in the mix as well, the Thucydides trap, which Xi has talked about for the past 10 years. And it is interesting that he is invoking this and sitting there in front of President Trump, talking in terms of these powers being matched in some ways, and therefore it is important. The world is watching. How do we navigate this? And so that sense that these two are, I mean, people have different views on the size of the economies are not equal, but the sense that he is trying to present himself as a worthy rival, friend even.
Is there anything here that takes you out of the kind of expected what we expected from this meeting? Because it doesn't feel... The Taiwan comments are as close as I think we got this morning in terms of something that was a surprise. But so far...
We haven't heard from the US much.
No surprise, precisely.
There have been lots of Xinhua news, lines dropping from the Chinese side.
Yeah, again, so far President Trump has been very disciplined on this visit, as expected. It's tightly choreographed. Where the surprise could come from, and there's been a bit of movement in the futures on this, is any developments around Nvidia and chips. So if we get the Chinese saying we will now sign off on our companies buying the H200s, that would be a significant development. If there's anything more concrete on rare earths versus chips, and the two sides coming closer on those two issues, that would move the dial beyond what the basic expectations are.
The expectations are on rare earths, that we're going to get some sort of progress there. It still feels like, even if the Chinese said they would buy it, would the US sell it? And there's that kind of I never quite know where we sit in terms of kind of who's saying what and whether or not it actually delivers progress. The fact that Jensen Huang went was maybe a significant tell on the fact that maybe there would be progress on this front. But is it enough really to move the ball forward out of market kind of expectations and where we are? Will Nvidia move on that?
Well, we've heard before from the US that they're happy to sell them. We need news from the Chinese that they're happy for Chinese companies to buy them. And that seems to be the piece that we haven't quite got yet. But I note that NASDAQ futures are edging a little higher. So we'll see if it's that makes the difference. Let's talk about UK politics, because we have had some movement in the early hours this morning. So we already knew that there was likely to be a leadership challenge from Wes Streeting, the Health Secretary, today. That had been in the works, it seems. And then this morning we got these lines coming through, first from a couple of other UK news sources, and then our team also finding news on this. But Angela Rayner is prepared to run, according to people familiar with her team and the thinking of the team. She is prepared to run, and crucially, we got news this morning that she's managed to solve her outstanding issues with HMRC, the tax office. And so that is something that the market will be thinking, because a Wes Streeting match-up with Keir Starmer, the market seemed to not like the uncertainty of that yesterday, but actually in the end, yields ended lower because he's someone from the right of the party. Angela Rayner is not from the right of the party.
No. Again, I come back to this issue. Gilts have rallied. The gilt yields have come up a lot this year. They've come up a lot this year, mainly on the idea that actually we have an inflation problem and we basically have a petrol problem. We have a diesel problem. We have a heating fuel problem. We have an inflation problem. They've moved a little bit. It's like, there's the chart for the year. They moved a little bit on this. Again, does the market care about kind of the internal machinations of the Labour Party to the degree that it's going to it's not already priced?
Not more than the opening of the Straits of Hormuz, it would seem. But we keep coming back to this. It's not gone away. It's not opened up yet. There's a few more ships coming through. So we have had that, but drip feed.
Is it UK politics or is it energy that's more important for the gilt markets? But right now we do have some clarity on the right and on the left, the market-friendly versus the market-unfriendly. That is the framing, at least for some in the markets.
Yeah.
Guys shaking his head.
The danger is that we don't get clarity because very quickly others will throw their hat into the ring. And
well, the
it'll be
length of time that this will take, if and when a leadership contest is called, and there's that additional volatility, are there opportunities to get involved in the gilt markets during those moments of volatility?
What would take us out? What would take it? So what is the market? What is not? What would be a surprise here? Would it be Burnham? Maybe that would actually be a surprise. The fact that he would actually be able to get to make all the dots line up and get himself into the House and into power.
Yeah, we're looking at live shots of number 10, Downing Street, which is, of course, what they're all after, or perhaps they're all after. We'll wait for confirmation of who exactly will stand. My favourite bit of the proceedings yesterday, actually, was when Blackrod went to the House of Commons, knocked on the door, as is procedural, as has happened for hundreds of years, to start the King's speech and the monarch's speech and the state opening and all of the, setting out the agenda. And somebody said, "Not now, Andy," because, in reference to Andy Burnham, who, of course, was not at the door, but might very well be one day. Let's have a look at where we are on the GDP story, just briefly casting my eye down to see if that has moved the dial at all. The quarter-on-quarter number looks to be as expected. This is for the quarter, I should say, so that is up by 0.6% for the quarter. In terms of the... Anyway, we'll dive into the details. It didn't move the pound much, is all I could say, as the market focuses on other things.
Other things like tech. And
yes.
Look, let's just point out, fresh record highs in the US. 17 record highs so far this year. The Nasdaq 100 with its own record, the S&P 500 as well. Tech stocks, chip stocks were back yesterday. There was a big IPO, biggest IPO so far of the year, which is Cerebras, which I think I take two things from this. Number one, so they raised 5.5 billion, valuation of 40 billion. Or thereabouts. Two key takeaways. One, there is still massive optimism and enthusiasm for getting exposure to these tech names. Number two, the competition to NVIDIA is increasing. It's a very different chip platform than this company offers. It's essentially one large chip, which means you don't have to connect lots of different GPUs together, which in certain areas of inference is useful and more efficient. But the top line is there is more competition now. And you're seeing it from the TPUs at Google, Amazon's accelerators, or Cerebras, and what they're producing. That competition versus NVIDIA is ramping up.
Demand massive. And as you say, everybody wants to get access to this. Apparently ARM tried to buy the business
that was interesting
a few weeks ago, which I thought was fascinating too. But again, the debate is as these lines go vertical, as everything seems to go vertical right now, as we chase higher and higher, You've got a lot of people talking about kind of, is this a dot-com bubble? Kind of what is happening in terms of the hedging around this, what's happening with the gamma squeeze, all kinds of other things are going on around this. It almost feels like we've lost sight of what a chip does. Kind of, does the technology really matter anymore, or is this just a markets story now that is getting out of hand?
Well, and there are lots of companies that are pivoting in the direction of AI, and if you want to go back to the dot-com bubble, we'll mention Cisco up by 19% after hours on the back of their sales numbers. But it is a story of trying to pivot towards the AI economy. They are a supplier to data centres. But John Authers has a nice piece out talking about the instability of the rally, and he points to the fact that the VIX is actually rallying with stocks now, which is not something that you see too often. He points out that some in the market are saying that these profits are not sacred. There's a lot of circular financing going on, and he draws parallels actually with the 70s, so not even the dot-com, saying the Nifty50, this is a narrower rally than the Nifty50 in the 70s, and that fell apart.
Talks about Polaroids.
He also talks about Polaroids, yes.
Polaroid cameras.
And I was also drawn to the line about South Korea today, that people are buying stocks for their kids. I'm not sure what that tells us about where we've got to. There's been a tenfold increase in people opening accounts.
This is what makes Guy Johnson sweat, as is the superlative around Alphabet and the amazing hyperscaler debt binge. We've got an amazing breakdown on the Bloomberg about this, and Alphabet is just one example. So they've raised 60 billion in about 4 months. They will have by the end of today in yen, in Swissy, and in dollars. That is quadruple the amount they've raised in their 26-year history of operating. This makes Guy Johnson nervous.
Asset light to asset heavy. And the fact that they've got to do it outside of the United States tells you about maybe overwhelming the US credit market. Richard Windsor's going to be here soon. We'll talk about all of this with him from Radio Free Mobile. He'll be joining us very shortly. Paul Jackson, Invesco Head of Asset Allocation, will be joining us, as will Adana Choi-Lever, Inodo Economics Chief Economist, Specialist in Chinatown.
Let's look ahead at what else we are watching throughout the day. President Trump, of course, will attend a state banquet with China's Xi Jinping at 11 a.m. UK time. Markets in Denmark, Sweden and other European countries are closed today for Ascension Day, and US jobless claims and retail sales will be dropping at 1:30 p.m. UK time. And we're going to get Fed speak as well from John Williams, Beth Hammack, Laurie Logan after that much hotter than expected producer price number yesterday. US earnings, Applied Materials, that is after market guy.
What else do you need to know this Thursday morning? A gauge of UK housing market sentiment has dropped to its lowest level since 2023. A survey by the Royal Institution of Chartered Surveyors, RICS, has found significantly more estate agents reporting falling house prices than seeing growth. The fall in sentiment comes as the Iran war and sharply higher mortgage rates hit confidence amongst buyers. The ECB President, Christine Lagarde, says European leaders must show courage in strengthening the bloc's foundations. Lagarde urged leaders to push ahead with her predecessor Mario Draghi's recommendations and, quote, break complacency. The US Senate has confirmed Kevin Warsh as the chair of the Federal Reserve in a 54-45 vote, the narrowest margin on record. The confirmation sets up a test of the Fed's independence, with Democrats fearing Warsh will bend to President Trump's demands to rapidly lower interest rates. Warsh has pledged to keep policy free from political influence when he takes over from Jerome Powell, whose term ends on Friday. So Warsh facing something of an inflation dilemma, it seems.
Yeah, the PPI number yesterday sent the 10-year yield higher, didn't it? We got over 4.49%, which seems to be a mark in the. That was on the 10-year, and the 30-year went over is over 5%,
yep.
So 5.03. So we're
certainly
focused on the higher yield story there and over in Japan as well.
The bond auction of US Treasuries, and it was middling in terms of the demand for that. Producer prices, middling. Producer prices, PPI 6%. Core, strip out. Just strip out energy and food. Yep. Why don't you? And leave it at 5.2% in terms of wholesale prices. 5.2%, 6% on the headline basis. And then you've got Kevin Warsh coming in with President Trump saying he wants him to cut on his first meeting.
So is that offsetting? So normally you would expect, obviously, the Fed Fund futures to react to all of this. They're not. Is it because there's an expectation that Trump will put such pressure on Warsh that it offset? Are the two things offsetting each other?
Do we fully understand the Fed's reaction function right now, given the unknown quantity that is a new Fed chair? And it's only one voice, and we hear often it's a group activity, but there's these political dynamics at play as well. Let us tell you what is coming up on the programme then. We'll have plenty of time to talk about Kevin Warsh and his plans for the Fed. Coming up, Donald Trump and Xi Jinping are set to dine together at the banquet in Beijing. We will discuss what to expect and who's on the guest list. I wonder if we know what they're eating. That's usually one of the areas of focus. Plus, we will look at the stocks to watch at the open, including Burberry, the British fashion house, reporting better than expected sales in the fourth quarter. Up next, we'll be joined by Tom Becker, portfolio manager at BlackRock. If you have any questions, if you want to get involved in these conversations, IB plus BBTV Go is the function. We are live from London. We're watching the UK politics story as well. Rachel Reeves this morning, the Chancellor, saying now is not the time to put our economic stability at risk as the March GDP figure comes in better than expected. More on that from London in the programme. This is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
The world has come to a new crossroads. Can China and the United States overcome the Thucydides trap and create a new paradigm of major country relations? Can we meet global challenges together and provide more stability for the world?
President Xi Jinping speaking there as he has talks with the US President Donald Trump, who is in Beijing. We'll continue to keep you updated by what is happening there. Tom Becker, portfolio manager at BlackRock, joins us now. Is there anything that happens there that is likely to kind of shake up markets? It feels like this is a well-orchestrated, well-choreographed event that largely kind of keeps us in kind of expectation zone. Is that the right way of assessing what I'm
I think that's right. It seems like it's similar to the one 3 years ago in San Francisco where they met, and it was really about the business. The ties between the two countries are extensive. The dynamics about kind of how those trade relations evolve will shift, but I think overall, no big expectation from us, at least.
So this is trade talks, basically. Yeah. Okay. Let's turn to what else is happening in the United States right now, and that is an inflation problem that appears to be growing. Does it keep growing? What does the Fed do about it? How big a problem do we have here?
Those are big questions.
Yes.
It has been growing. It's been festering. I think the Strait of Hormuz exacerbates it. The PPI data is another example of upstream inflation that we've seen year after year has flown down into consumer prices.
Yep.
And that's because consumers are pretty strong and companies feel like they can kind of pass the prices on and keep margins high. And so earlier this year, coming into the year, we thought inflation was a problem because of the chips, kind of the hyperscalers. If you wanted to get a Switch 2 for your kids, it's $50 more expensive. That's because of RAM. And so RAM prices have gone up because that's a necessary input to kind of the data centers. So Hormuz is another example of that, where you're going to have kind of upstream inputs into plastics, the diesel to transport things around. And so 3 was definitely the new 2 for kind of U.S. Well, right, yeah. Let's see how 4 feels. I think we're gonna test the limits of 4 later this year.
Okay, so those being chipflation, we've got oil prices. They had been on the rise. They're still elevated above $100 a barrel. All of that should weigh on Europe, I suppose, a little bit, or certainly the oil dynamics should weigh on Europe. But you've added to your Eurozone stocks, I think, recently, because you see the fiscal boost coming and maybe some regulatory change. Tell us what underpins positivity around European stocks.
Yeah, I think you were it was on the program a little bit, Lagarde kind of pushing for the adoption of the Draghi report. 2022, you had kind of the Ukraine crisis as kind of a wake-up call. 4 years on now, you've had a little bit of time to maybe come up with some plans and ideas for how to address those more strategic challenges for Europe. Strait of Hormuz exacerbates kind of the energy shortages in Europe. Energy security in Europe is a big problem, but so is kind of defense security. And I think it all stems around multiple decades of underinvestment in kind of core kind of productivity enhancing investment. I think just in terms of where the puck is going, I think you've got to play for the response being one where policymakers actually use the crisis to kind of make some of those long-standing changes. And they're doing it from a position of strength in terms of the U.S. The European consumer has been okay coming into this. The unemployment rate is pretty low, and so the terms of trade shock, kind of, all these input costs going up, that's going to necessitate kind of fiscal.
Are we getting to a point where AI strength in the US and AI strength in Asia, and there's bits of it in Europe, just lifts other things? Could that be a story for Europe, as underperforming as that sounds?
I mean, I think Europe is a consumer of AI and technology. That's actually been a big challenge for Europe over the last 10 years, is you just haven't participated as much in terms of developing a homegrown tech industry. And so these tech services get imported, and so, cars used to get sent to the U.S., and now tech services get sent to Europe, and fewer cars are getting sent kind of outward from Europe, and so kind of the trade balance is shifting for Europe. It does seem with the high cost of electricity in the UK, I mean, it's like 2-3x cost. You're not going to build a data center in Europe. It's just that the economics don't work. And so I think that's just a challenge for Europe to kind of play in that space. But globally, you've got kind of most of the cylinders firing for above average end GDP this year.
How comfortable are you with the chip rally?
In terms of the price of DRAM, or in terms of the price of the stocks?
What's happening on the stocks, or what's happening in South Korea? Yeah. Do you want to lean into that? Do you want to take profits? Yeah. Does it feel too toppy to you? Does it feel frothy? What's your level of comfort with the run-up in the semiconductor stocks?
We've been overweight North Asia for a year and a half, and a lot of it is around kind of the earnings outlook and the terms of trade improvements to those economies. So Taiwan, Korea, Japan have been overweights in our portfolios. We have been taking it down because of the kind of pricing and positioning has shifted pretty materially over the last kind of 3-4 months. And so it just feels a little bit less kind of balance in a risk-reward sense. And we're stepping into more distressed markets where, Europe is kind of flat year to date. The rest of the world is up, almost double digits. And so we can maybe, look for a market that's a little bit less well held.
That's really interesting. So you're taking a bit of profit from that trade, particularly in North Asia, and recycling it into Europe.
Eurozone, yeah.
Into Eurozone. Where I mean, you talked about this with Anne, you touched on this. Where specifically is that going into the Eurozone?
We've been buying French equities. So if you look at kind of the underperformance of the CAC over the last 1-3 years, it's pretty material. It's a pretty cyclically exposed index. It's got some big energy producers. And so we think there's kind of a bottom there. So darkest before the dawn.
And it could bounce, I suppose, if you reopen the Strait on the consumer products, luxury. Is that part of the argument?
No, I mean, we're top-down macro, so looking less at kind of the bottom-up constituents, but it's just, it looks kind of attractively priced here.
How dark is it in the UK right now?
It's cooler than it is in San Francisco. It was hailing yesterday.
I'm aware.
But in terms of the UK, you just had the data come out. It looks pretty good. UK consumers have been fine. We've been playing gilts from the short side for the last 6 months, but it's because the economy looks okay. NGDP looks high. Inflation is 3 headed to 4 again. And so when you had the BOE price to kind of ease as much as it was, it didn't look balanced in terms of risk reward. And so I think it's much more about the economy being pretty fine and the concerns about the labor market maybe being overblown.
Tom, thank you very much indeed. Tom Becker, portfolio manager at BlackRock. Coming up, chips and AI. Again, high on the agenda, of course. Trump-Xi summit. We'll get more details. Stay with us. This is Bloomberg.
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Morning, how you doing? Thursday morning, 29 minutes to go until the start of equity trading here in Europe. There's a bunch of markets closed today. It is Ascension Day, just be aware of that. There's also a lot of ex-dividends. It's a Thursday. Let's take a look at the futures picture. As you can see, we are broadly positive. Euro Stoxx 50 futures up by a full 1%. The FTSE's lagging. The CAC is doing okay, up 0.5% today. So, yeah, not bad performance from Europe so far. How are the bonds doing?
The bonds, well, there is appetite for the bonds, it seems, because some of these yields are dropping this morning, which sort of flies in the face of our worries about inflation. They've generally, since the start of March, been a concern for markets, and that does seem to be where the Asian market session has focused, as we've got higher yields coming through there. The US session was dominated by a higher yield story, at least yesterday, because we were talking about that PPI number and the heat in that PPI number. Let's talk a bit more about inflation then. Let's talk about these markets in 3 minutes on the opening trade with Markets Live Executive Editor Mark Cudmore, who is with us this morning. Mark, good morning. So we've got European bond markets not playing ball with the global theme that bond markets are worried about inflation. Not this morning, at least, although, of course, the longer-term story is different. But yields dropping here in Europe just a touch this morning. But Japanese yields are higher. US yields have been higher. How concerned are you about the strength of the yields that we're seeing, the weakness in bonds?
I think we've seen a lot of weakness already, but I think there's a lot more to come over the coming months. I think that the inflation data out of the US, both the CPI and PPI prints this week, kind of hammer home a point that's kind of been clear for some time, that the Strait of Hormuz is causing severe supply chain disruption. I think the energy impact has maybe been less than some people expected. We're seeing an extremely rapid releases from the Strategic Petroleum Reserve in the US, which is easing the physical situation, but that can't go on forever. And we are seeing much more kind of entrenched impacts on the kind of plastic side, the petrochemical side, farther kind of down the chain of those fossil fuels. So again, the Strait of Hormuz disruption is very much a supply chain issue, not just energy, and it's going into a hot market. It's because of the wealth effect from what's happening in stock markets, and generally growth is okay. We're in the part of the AI cycle where people are still getting more efficiency. It's increasing demand. We're getting a massive capex boost. We're getting fiscal expenditure. So we are getting a real big supply side shock into inflation in an economy that's already got very strong demand-led inflation. And I think that people are not fully registering how bad this could be later on this year.
But later on this year. In the meantime, just get ready to buy the dip, right?
I think, sadly, yeah, for the moment with stocks, I think so. I think what's really important is that you got to change the different time spans. The AI bubble will end in tears, but not until the earnings rug pull that happens at some point when they realize they're all competing for the same space and they're all claiming to project just immense.
Okay, guys, crude oil almost on breakdown. Crude oil just breakdown पर ही है. मुझे लग रहा है breakdown करने वाला है. Point of interest का breakdown करता है तो expect करेगा. Price will fall towards this area 9,200 9,300. देखना पड़ेगा, अभी हुआ नहीं है breakdown, but अगर ये candle भी properly close होती है below, पुल बैक नहीं आता है कुछ खास 9,696 के ऊपर, 85 के ऊपर, तो ब्रेकडाउन ही हो गया. बाकी निफ्टी ने कल का जो रेजिस्टेंस था उसके ऊपर ब्रेकआउट तो कर दिया है. तो जो ऊपर रेजिस्टेंस था 23,600 650, इट इज़ ब्रोकन नाउ. फ्यूचर में 23,600 650 का जो रेजिस्टेंस था अब हो चुका है ब्रेक. तो अब ये रेजिस्टेंस नहीं है, ध्यान रखना, ब्रेकआउट हो चुका है. कल का जो लो था 23,300 350 वो अभी भी सपोर्ट है. मॉर्निंग पे रेजिस्टेंस पे ओपन हुआ निफ्टी फ्यूचर, वहाँ से सेलिंग आई. सडनली लास्ट 3 कैंडल देखोगे ओपन इक्वल टू लो बनी है, ब्रेकआउट हो चुका है इसमें भी. नाउ नीड टू सी क्या ये रीटेस्ट करता है या फिर ऊपर ही जाता है. अब यहाँ सेल तो नहीं करेंगे, खैर मोस्ट प्रॉब्ली रीटेस्ट तो नहीं करता है, खैर लेवल रीटेस्ट के तौर पे कंसिडर नहीं होता है. ऊपर ही जाना चाहिए लॉजिकली. कैंडल क्लोज होने का वेट करेंगे. क्रूड ऑयल में देखते हैं ये ब्रेकडाउन करती है फिर नहीं.
Way, shape or form, no. In fact, I've actually run some analysis based on Huawei's data that implies that if you were to build an equivalent data center using Huawei and compare it to NVIDIA's Blackwell, which is the last generation, not the current generation, you would to buy 11 times more cabinets and spend 3 times the amount of money, and it would consume 9 times the amount of power to produce the same amount of compute. So the way I think China gets out of this problem is that they're going to rely increasingly more on importing compute from overseas, which is effectively, you know, Alibaba or Tencent, they lease a data center in Thailand or Malaysia and just bring all the compute onshore from there.
Richard, good morning. So just picking up on that. So yes, picking up on the questions that Tom's been asking there. So we've seen for some time the US talking more favourably about the idea of sending these H200s to China. But you said you don't think they'll go. Is that because the Chinese companies won't buy them? They won't be allowed to buy them? What will be the block?
Oh no, it's definitely the Chinese regulator. Certainly, as far as I can see, the Chinese companies are all champing at the bit to buy them. The problem is that the way China sees it is that China is pedal to the metal on technology independence. You saw it in the last 5-year plan. And so consequently, it feels, the state feels that if they were to allow the H200 into China, it would stymie and slow down indigenous development of AI silicon chip manufacturing, which is what they believe they need at all costs.
Richard, just a quick take on a few other things that are going on right now. Alphabet is raising a lot of money in the United States. It's now raising a lot of money outside of the United States. What is the significance of the latter story? Are we starting to run up against the limits of what the credit markets in the US can provide for this data center build out?
Frankly, I'm a little bit surprised that Alphabet is raising that amount of money. If you look at the company's cash flow statement, it could afford all of the 190 billion, I think it is, correct me if I'm wrong, I think it's around about that number, from operating cash flow. And this is what concerns me greatly. Obviously, you could argue it from a financial engineering point of view, is that, you know, debt interest is deductible against corporation tax and so on and so forth. The problem is that this is exactly what happened in 2000. With the internet bubble is that the telecom equipment companies geared up massively, lent that money to the operators to buy their equipment, and then when the demand softened suddenly, everyone was left holding a ton of debt, and there was an awful lot of restructuring and a lot of pain. Up until this point, I've been unconcerned with the capex spend because people have been able to do it out of operating cash flow. But when you start gearing up and putting debt into the equation, it makes the whole thing a lot more risky, which makes me nervous.
What is the difference, do you think, for US tech as it enters the asset-heavy rather than asset-light story? How do we view these? How do you view these stocks as different?
Well, the one thing that's different, if you're trying to sort of like cast back to 2000 and say, are we in a similar type of bubble? When you look at the environment, when you look at the hype, you would say exactly, yes, we are. It looks exactly the same, with one big exception, which is the major players are not on completely crazy valuations. You know, you can put Nvidia, Google, Microsoft, they're all in the sort of 20 to 30 times PE, whereas in the internet bubble, all these companies were on 100 plus. So that is the one thing that makes it look a little bit different, and the one thing that makes me a little more comfortable that the AI bubble is not going to have such a severe correction as the internet did.
It assumes you believe the E. But we'll maybe park that for another day. Richard, great to catch up. Thank you very much indeed. Richard Windsor, founder and owner of Radio Free Mobile. Let's talk about what is happening out in Beijing. Xi Jinping calling for closer ties between Beijing and Washington.
A stable bilateral relationship is good for the world. China and the United States both stand to gain from cooperation and lose from confrontation. We should be partners, not rivals.
The Chinese president speaking as he, of course, hosts Donald Trump. We will have more on this crucial summit. That is next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail.
ठीक है, ब्रेकडाउन मुझे लग रहा है होने वाला है. ये कैंडल क्लोज होने वाली है. ब्रेकडाउन इज कंफर्म्ड इन क्रूड ऑयल एज एक्सपेक्टेड बड़ी देर बाद आया है, कल भी वेट किया, ये पॉइंट ऑफ इंटरेस्ट ने रोक दिया है। ये कैंडल क्लोज होती है तो इसमें एक और ट्रेड प्लान करेंगे ऑन पुल बैक। ये ब्रेकडाउन हो चुका है, दो पॉसिबिलिटी है, हो सकता है प्राइस डायरेक्टली गिरता जाए, डायरेक्टली गिरेगा तो यहाँ से बाइंग का प्लान करेंगे वापस, अदरवाइज ये हल्का सा पुल बैक देगा ऐसे तो यहाँ से एक वापस सेलिंग का प्लान हो जाएगा सेम ट्रेड में। ठीक है, ये कैंडल क्लोज होने दो, फिर देखते हैं क्या पॉसिबिलिटी। अगर डायरेक्टली गया तो मत सेल करना, ऐसा काफ़ी बड़ा हो जाएगा नहीं तो अननेसेसरी। ये ब्रेकआउट कर दिया, अगर ये रिटेस्ट करने आता है नीचे 23,600 के नीचे कहीं तो इसमें एक वापस बाइंग बनेगी। हो सकता है यहीं से रिटेस्ट करते अलग बात है, बट 23,600 will be best area for retest. Nifty 50 future breakout already happen in there as well. क्रूड डाउन जा रहा है, इक्विटी ऊपर ही जाएगा। बाकी नेचुरल गैस में कुछ नहीं है, क्रूड ऑयल में एक सेलिंग का ट्रेड और बनेगा शायद। आज एक्सपायरी भी है क्रूड ऑयल की। ब्रेकडाउन हो गया है क्रूड ऑयल में नाउ। नीचे डायरेक्टली कंटिन्यूसली फॉल करता है तो जाने देंगे, कुछ मत करना। पुल बैक आता है तो एक सेलिंग का प्लान वापस रखेंगे 9,750 के अप्रोक्सीमेटली। दोबारा नया वाला जो ट्रेड है तभी लेना जब पुल बैक आएगा, अगर नहीं आता है तो बीच में एंट्री मत करना, कल वाली ट्रेड में बने रहो। बाकी इस पॉइंट ऑफ इंटरेस्ट का ब्रेकडाउन हो गया तो अब ये काम का नहीं है, ध्यान रखना, काम का नहीं है इन द सेंस ऑफ अब ये एज अ सपोर्ट काम नहीं करने वाला। कल काफ़ी परेशान कर दिया इस पॉइंट ऑफ इंटरेस्ट ने। फाइनली पेशेंट पेड ऑफ। बाकी नीचे का सपोर्ट काफ़ी स्ट्रांग है, मैं एक्सपेक्ट बिल्कुल नहीं करूंगा इसके नीचे आज एक्सपायरी होगी अनटिल अनलेस कोई बहुत बड़ी न्यूज़ नहीं आ जाती, अदरवाइज चांसेस आर वेरी लेस। तो यहाँ से मैं एक्सपेक्ट करूंगा वापस प्राइस अपसाइड ही जाए। $9,200 के नीचे आज क्लोजिंग आएगी, चांसेस कम है बहुत। बाकी याद रखना इस एरिया से जब बाई करेंगे तो हाई लेवल से ये पूरा ही जोन सपोर्ट का है। हाई लेवल से कम क्वांटिटी में लेंगे, डीप आया है तो बढ़िया है, डीप लेवल से बाइंग अगर हो जाए। होने वाला है, लंदन सेशन इज गोइंग टू ओपन। बाकी क्रूड अगर 9200 के नीचे कहीं चला गया सस्टेन करता हुआ 15 मिनट में, तब थोड़ा बहुत ज़्यादा बेरिश हो सकता है। अदरवाइज 9200 के ऊपर ही रहना चाहिए प्राइस। सेंसेक्स को भी देखोगे, मॉर्निंग पे मैंने बताया था आपको लगभग 450 पॉइंट की रेंज हो सकती है आज ओपनिंग के बाद। एटीएम का स्ट्रगल तो ये बता रहा था। ओपनिंग के बाद लगभग 430 पॉइंट नीचे गया स्पॉट, अभी ऑलरेडी 470 500 पॉइंट ऊपर जा चुका है, तो मैक्सिमम डबल हो सकता है यहाँ से 800, बट क्लोजिंग मुझे लग रहा है 400 पॉइंट के नीचे आनी चाहिए, तो 75,500 के नीचे 400 के नीचे कहीं क्लोजिंग होनी चाहिए मोस्ट प्रॉब्ली। डेटा कैन चेंज एनी टाइम, बट जो स्ट्रगल था मॉर्निंग पे उसके अकॉर्डिंग तो यही बनता है। नेचुरल गैस में कुछ करने लायक है नहीं अभी इस लेवल पे। मैं सोच रहा हूँ नेचुरल गैस का लेवल चार्ट रिमूव करके गोल्ड का चार्ट लगा दूं क्या, गोल्ड या फिर कोई और कमोडिटी, बिकॉज नेचुरल गैस में कुछ हो नहीं रहा है। लाइक इतना, एक तो बहुत ही 250 300 के जब से नीचे गया है, इतना मोमेंटम होता नहीं, पूरा दिन साइडवेज रहता है, फिर एक बड़ा मोमेंटम, फिर साइडवेज। 300 350 के ऊपर अगर होता तो फिर भी मोमेंटम सही रहता है। लेट मी नो इन द कमेंट बॉक्स अगर कोई दूसरा चार्ट चाहते हो। मुझे कुछ खास ट्रेड करने के लिए मिल नहीं रहा है नेचुरल गैस में, कल भी कुछ नहीं मिला। ये क्रिप्टो भी नहीं लगाना चाहता क्योंकि क्रिप्टो में मैं खुद ट्रेड नहीं करता हूँ. आई डोंट नो कितने लोग आप ट्रेड करते होगे.
Taiwan, we're going to go to break. We'll be right back.
And finally tonight from Taiwan, as President Trump and China prepare to meet, you will hear a lot about American decline and the rise of a powerful new China. The Chinese certainly, is he okay? We're going to take a quick break. We have a medical emergency here. We're calling a doctor.
15 मिनट एनालिसिस बिटकॉइन ये 15 मिनट में लेवल ही नहीं दिखे थे परसों भी किया था 15 मिनट में हम कुछ लेवल मिले नहीं, इसलिए 1 आवर टाइम फ्रेम का चार्ट मैंने बताया था आपको। सेम ही चल रहा है, कुछ खास चेंज हुआ नहीं है। ठीक है, ऑलमोस्ट टारगेट मिल गया कल ये सेलिंग का। ग्रेट ट्रेड, सेल किया होगा आई होप सो। ठीक है, परसों ही बताया था सेलिंग के लिए, उस दिन टारगेट हिट नहीं हुआ था, वापस उसी रेजिस्टेंस पे आया, कल ऑलमोस्ट टारगेट हिट हो गया इसका। थोड़ा बहुत बफर तो छोड़ना ही है। अब देखो दो पॉसिबिलिटी हो सकती है यहाँ पर 1 आवर टाइम फ्रेम पे। प्राइस में कैन क्रिएट लोअर लो फॉर्मेशन कंटिन्यूएशन में। ठीक है, अगर यहाँ से कुछ बड़ा रिवर्सल आया और ये लास्ट स्विंग निकल गया 81,200, तब फिर ये 82,500 पे नहीं रुकेगा। नेक्स्ट रेजिस्टेंस फिर हमारा सीधा 86 87 पे जा सकता है। तो जब तक अब ये होल्ड करा है या फिर लेवल के नीचे है बिलो 81,400, मुझे नहीं लग रहा और ऊपर जाएगा। 15 मिनट के लेवल देख लेता हूँ फिर भी एक बार, वैसे मुझे लगता तो नहीं इसमें कुछ बनाएगा मेरे से, क्योंकि मैंने उस दिन चेक किया था 15 मिनट में कुछ खास करने लायक था नहीं। सो लेट्स सी। मिनट में तो और रेजिस्टेंस होनी हो रहे हैं जी भाई। If you look at the 15-minute chart in Bitcoin, no resistance actually. सपोर्ट देख लेता हूँ, रेजिस्टेंस तो मुझे कुछ शो नहीं हो रहा है ऊपर। 1 आवर टाइम फ्रेम का ये 15 मिनट में लास्ट स्विंग तक यहाँ तक कोई रेजिस्टेंस शो नहीं हो रहा है, इसके ऊपर का चार्ट शो नहीं कर रहा है 15 मिनट में, क्योंकि वो काफ़ी ऑलरेडी ऊपर जा चुका है। लो लेवल पे देख लेते हैं सपोर्ट, कोई नया सपोर्ट रेजिस्टेंस बन जाए तो अलग बात है। अभी नेक्स्ट 2 15 मिनट की और कैंडल है, इनको क्लोज होने तो फिर पॉसिबिलिटी है कि एक रेजिस्टेंस शायद बन जाए, अभी कंफर्म नहीं कह सकता। करंट कैंडल बन रही है 15 मिनट की, ये अगर 79,810 या 800 के नीचे, 820 के नीचे अगर क्लोज करती है और इसके नीचे फिर एक कैंडल और क्लोज कर दे, तो फिर ये जो लास्ट स्विंग एरिया बना है दैट में एक्ट लाइक एज अ रेजिस्टेंस दिस एरिया। सपोर्ट की बात कर लें 15 मिनट टाइम फ्रेम पे ही, अगर ठीक है, लास्ट स्विंग जो बना है ये सपोर्ट ही बना है 15 मिनट में। दिस अ सपोर्ट काइंड ऑफ, ये ऑलरेडी यहाँ पर देखोगे एक बार सपोर्ट लेके चला गया ऊपर, तो 15 मिनट टाइम फ्रेम के अकॉर्डिंग ये एक सपोर्ट जोन है 79,000। इसके नीचे अगर प्रॉपरली ब्रेकडाउन हो गया तब पॉसिबिलिटी और डाउन जाएगा, बट स्टिल टिल देन इट इज ऑन सपोर्ट। बाकी जहाँ तक बात है क्या ऊपर रेजिस्टेंस बन सकता है नहीं बन सकता 15 मिनट में, कैंडल और नेक्स्ट एक और कैंडल का क्लोजिंग का वेट करना पड़ेगा। ऊपर मुझे कोई रेजिस्टेंस शो नहीं हो रहा है 15 मिनट में, ये एक सपोर्ट जरूर बना है। अगर बाई किया था, दोबारा बाई करना है तो कम क्वांटिटी में ही करना, एक बार डीप लेवल से सपोर्ट लेके चला गया है 79,090 के नीचे, अगर प्रॉपरली ब्रेकडाउन करता हुआ एक एफईजी टाइप बन गया तो फिर चांसेस कम है रिकवरी करेगा। इट इज़ अ सपोर्ट ऑन 15 मिनट। रेजिस्टेंस कुछ नहीं दिख रहा है मुझे फिलहाल ऊपर, लेट्स होप ये रेजिस्टेंस बन जाए तो बढ़िया है। अगर यहाँ पर एक रेजिस्टेंस क्रिएट हो जाता है वापस फ्रेश, तब फिर फाइट में अगर ये नीचे निकला तो 1 आवर टाइम फ्रेम के सपोर्ट तक पहुँच जाएगा। ठीक है, 15 मिनट का सपोर्ट ध्यान रखना, येलो कलर की जोन बना हुआ है। 12:30 हो चुका है, लंदन सेशन इज ऑलरेडी ओपन. लेट्स सी कितना और मूव करता है.
The earnings, but today JP Morgan analysts raised the price target on the stock to a new street high, saying that automation and data center demand would really contribute to very strong momentum for that company, which means that there will be a very strong growth runway for Siemens. And so we're up about 2% on the back of that. We're also in the green for Telefonica. The telecom company had better than expected results. That was due to an easing competitive environment in Spain and also very strong performance in Brazil. And so we're up almost 5% for that company. It's also in the green for the chip stock. So the chip sector is reacting to a few things this morning. First of all, we had the ongoing supply crunch in memory chips, which is something that drove this sector higher yesterday, and that's continuing today. And there's also the read across from Cisco results over in the US, which had better than expected guidance. And finally, 3i is down massively this morning. This is a private equity firm whose largest investment is a discount retailer called Action, and there the sales were slowing, and so this maybe is a sign that even really low-cost retailers are struggling in this muted consumer environment.
Chloe, thank you very much indeed. Chloe Millet with some of the stocks on the move. President Trump may dismiss and pour cold water on the UK Navy, but the UK Navy is very good at alerting us as to what's happening in the Straits of Hormuz. We have an update right now. This is a redhead across the terminal. The UK Navy says that a vessel off Fujairah has been taken, bound for Iran waters. Apparently, the vessel was heading towards Iranian, or could be, or is heading towards Iranian territorial waters. It was taken, quote, by unauthorised personnel while at anchor. That is an update from the UK Navy.
And the oil price goes a little higher, back over 106 on the back of that headline.
Do you wonder what's going on? This was a vessel that was at anchor off Fujairah, off the UAE,
yeah,
and is being now taken towards Iran. Was it an empty tank? What kind of vessel is it? I'm just trying to go on the UK MTO just to have a look and see what's going on, and there's not much further information there. So what kind of a vessel is it? What are they going to use it for? Why have they taken it? Are they sending a signal maybe to Beijing as well? Maybe that's part of the narrative here too. Do they need storage capacity? I don't know. There's all kinds of questions around this. Why would they do this now? I think it's an interesting question.
38 nautical miles northeast of Fujairah, the UAE. That doesn't sound very far, 38 nautical miles.
Well,
it's not very wide.
It's not very, I was about to say, it's not a very wide piece of water.
Yes.
So, yeah, it's all kind of a blur.
Key point, is this an escalation, I think, and does the US respond, and will they be constrained given that Trump is on the ground in Beijing? Coming up, Burberry shares lower, even after delivering a sales beat. We're going to discuss the company's ongoing turnaround plans. That's next. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The Middle Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome back. Let's take a look at what the numbers look like this morning. By and large, we are positive, but not as much as the futures earlier indicated that we would be. Where you are certainly seeing some strength is in the DAX this morning. And it's interesting to see that in the light of some of the stories that we're watching at the moment, because you do have Siemens strongly to the upside. Rheinmetall is up strongly. Siemens Energy, Infineon. In terms of the points being added, all in the top 10. So Germany is having a fairly good day today. In terms of the mix on the downside, some of the oil stocks are a little soft. There's a lot of XD in the market too. Fair few closures as well.
Yes, some of the markets in Northern Europe in particular are closed. London is open though, and Burberry shares are slumping this morning despite sales rising more than expected at the end of the fiscal year. Let's get some analysis. Deborah Aitken joins us, senior analyst in luxury goods for Bloomberg Intelligence. Deborah, good morning.
Morning.
So the Burberry share price is down by 4.5% this morning, and it's sometimes difficult to work out exactly why. So what do you think is driving things here?
So there's a small beat on sales, but when we look behind the numbers and start out, it's about Europe being hit by the Middle East, and that's outshining or dulling what's happened positively. If we think about Americas and Greater China, which are both up by plus 10% in the 4Q. And then through the up line, we've got beat on the op margin. Down to the bottom end, we've got no dividend reinstated, even though the balance sheet is really back into order. Chairman change, lots going on. And overall, though, no 27 guidance, because of what's happening in the market. And already consensus is a little bit bullish into 27. Miss on earnings, so it's quite a mixed picture, but they're moving in the right direction.
So you've already explained what's happening in the Middle East. The Middle East is having an impact because of inbound tourism. What's happening in America? What's happening in Asia? Just give us a bit more detail there.
Yeah, so for the last 3 quarters, for China in particular, we've been looking at, across the board in luxury, a gradual improvement, and we are seeing mid to high single-digit growth, and here we have 10% Greater China, including Hong Kong, Macau, Hainan. Very solid in terms of where they were historically to really recovering their brand and being visible. And I've actually seen Asian tourists in Florence 2 weeks ago carrying Burberry bags. So that's also a breakthrough there. And then they're doing very well in outerwear and in things like their accessories, their scarf bars and others, so pushing that a lot with social media, so that's going well. And similarly for Americas, but Americas overall has been strong everywhere for all brands, doing very well in jewellery and hard luxury across certain brands which are recovering, and Burberry is one of them.
Just for guys shopping this, what are the accessories? There's the scarf. What are the other accessories?
The scarf, and then
they're posting on social, because Sky is big on social.
Umbrellas. You've got the socks. You've got shoes. Some of the men's bags, women's bags.
Tom's asking for a friend. I'm not sure I'm the friend.
We like watches. And
they're selling in the States.
Watches of Switzerland. Is this a US story? I mean, that stock is up 13% today.
Yeah, so it's definitely a US story. So the 2 areas where they operate are the US and the UK. They did, over the last couple of years, some big acquisitions by pushing some acquisitions on distribution and then of Roberto Coin on the jewellery side as well, so starting to mix. They're the number one on pre-owned with Rolex on
so
certification.
They have that deal with Rolex, don't they?
Yeah, they do. And actually, America's across the board, the US in particular, this quarter and the last 2 quarters of 2025 have held up much better than expected.
Guy pointed out this may be an inflation hedge as well.
Yes, on gold. We actually have a nice a deep dive now out from Bloomberg Intelligence, actually out of China, looking at how Chinese consumer are still purchasing gold, Lao Pao and others. And what we're seeing also for the US, you're inherently holding a very good product. If you get into a wait cycle for a product, by the time you're receiving it, price has gone up. Second hand is holding up very well. You're paying premium for lots of the pre-owned as well. So
just the stock market needs to hold up to keep that narrow,
keep that momentum going.
There we are.
What is interesting about the kind of the store of wealth, though, is that India is now heavily restricting imports of
they put tariffs on
metals.
Tariffs on gold and silver to protect the rupee.
Yes, but the rupee's been really sold off. Yeah, absolutely.
Because of the energy
and they're thinking of there was a red headline just earlier this morning about loosening the investment rules around debt to try and numb the pain that way. Deborah, thank you very much. Thanks for joining us. Deborah Aitken from Bloomberg Intelligence. Tom, let us move.
Let's check back in on gilts, and then we'll bring in Adam Linton from a broader view on these markets. So gilts. You know, Anna mentioned this. There's a little bit of move into gilts today, so yields are down a little bit less than we had seen at the open of the session. But you're down between 1 to 2 basis points across the curve. The 10-year is currently still yielding 5.04, 4.46 on the 2-year, with, of course, the political uncertainty in focus. So Keir Starmer's efforts to hold back a potential leadership challenge showing new cracks as allies of leading Labour Party rivals signalled they were ready to challenge him for the Prime Minister's job. For more on the market impact, then let's bring in Adam Linton. Adam, what do you make of the gilt market seemed relatively sanguine today? Maybe they've already priced these kind of moves in.
Yeah, I think to some extent. I mean, obviously, it's a very fluid picture. I mean, yesterday we saw Wes Streeting enter the fray, who would potentially, if there is to be someone who replaces Starmer, probably the most market-friendly. But I think if you think about, you know, the choreography of how this leadership race will play out, he's probably relatively unlikely to be the actual victor. And you're seeing that priced in betting markets now. His odds have definitely fallen off since Rayner's entered the fray. She's now the slight favourite if you look at, you know, the Betfair exchange. And so, yeah, obviously, you know, her policy campaign would be very much towards the left of Keir Starmer and to Wes Streeting, and that would definitely be a concern for the market. I think the market's actually just not really pricing it at the moment, because I think it kind of wants greater clarity on what, you know, what the policy platforms will be, you know, when we kind of get this leadership race. So I still think that we have more room to the upside to go for back-end UK yields. And I think from a UK perspective, you know, for cable, I'm surprised we're still holding above 135 with all this going on. I mean, in a week where we've seen hot US CPI, we've seen hot US PPI, cable still hold above 135. It's quite a surprise to me.
Yeah, and euro against the pound doesn't do... against the pound as well, doesn't do very much. What explains that, do we think, Adam? Or what are you thinking of more broadly, away from the gilt markets? What kind of impact, what kind of assets should we be watching? Of course, the pound, where we see little movement. I mean, stocks, they're just going to take their read off gilts and the pound, I guess.
For UK stocks, yeah, I mean, obviously, you know, the FTSE 100 is a lot, you know, less domestically orientated. That kind of has this inverse relationship with the pound. The 250, that's obviously a lot more domestically focused. So if there is to be a wobble in UK assets, then it would definitely be more pronounced in the smaller benchmark. I think in terms of, you know, assets beyond the UK, I think the big thing that the desk, you know, Markets Live are really focusing on at the moment is the dollar. You know, like I said, you know, cable hasn't really moved. We've seen this hot US CPI report, this hot US PPI report. You know, do we get the US 10-year yields moving above 4%, the 10-year above 4.5, and the 30-year staying above 5%? Well, I think it's definitely plausible. I think the market is definitely pricing this kind of inflation duration risk in the US. You know, I mean, the whole narrative for the US is, oh, it's an energy producer. You know, it's relatively insulated from a lot of this. But the data that we've seen thus far this week is definitely playing, you know, at odds with that. And I think it's definitely the asset to watch in the FX space if, you know, we potentially get a return of FX vol, which, you know...
Isn't Walsh just going to cut rates?
He's just one vote, and it doesn't really appear to be the rest of the border with him on that.
OK, nice to see you. Thanks for stopping by. Adam Linton joining us from our M Live team. Coming up, we're going to pivot back to what is happening in Beijing, the summit between President Xi and President Trump. Diana Shoileva from Innodo Economics is going to be joining us. We'll get her take on what this is all about. Is it just about trade? Is there something wider going on here? We'll find out. That's next. This is Bloomberg.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Happy Thursday. This is the opening trade. We're 30 minutes into the Thursday session. Then you're seeing gains of 0.3% across the European benchmark. So building on the upside of yesterday, European stocks ended in positive territory. Then you had fresh record highs for US markets. The FTSE 100, though, is underperforming, as you can see, up just 0.1%. Burberry is a bit of a drag there. That stock is down on the back of earnings. The DAX is performing very strongly, up 1%. You're seeing gains on the CAC current as well. 39 points, up 0.4%, Guy.
OK, let's talk about what we're seeing on the internals on this market. There's a lot of markets closed today, so ignore the volume number today. It's down sharply, but you can park that. It's nothing to do with this market feeling like it doesn't need to trade. It does. Again, in terms of some of the kind of the allocation today, where there's a few stocks out, that's why the numbers don't quite add up to where they normally do this morning. So we'll park that again. But I think you can get the gist. The market is on the front foot this morning. You've got a legacy that comes out of the United States yesterday that is positive. Today we're getting a bunch of German stocks in particular on the front foot. Some of the tech narrative is also still well represented. Siemens is trading to the upside by 2.5%. Chip stocks are also moving up as well. You saw what happened with Cisco yesterday. Huge move to the upside on the back of that. Haven't seen that for a while, have we? Anyway, we're up by 6/10 there. Defence stocks are also back in front as well. Rheinmetall up by nearly 4%. I actually think the downside narrative this morning is maybe one of the more interesting ones, despite the fact that actually the market is up. 3i down heavily, pointing to one of its portfolio companies under pressure at the bottom end of the retail space. That is interesting. ITV is down by 1.35% after producing numbers this morning. Burberry is also off. Deborah Aiken just running us through some of the details as to why we're seeing weakness in that stock this morning. It's off its lows, but it's still down by 2.75%. Bit of weakness maybe in Europe. America still looks okay. So interesting kind of macro stories are always worth taking away from some of these big luxury names. But Burberry down by nearly 3% this morning, Anna.
From the individual stock moves, let's get to some of the other bigger themes that we're covering this morning. The US Senate has confirmed Kevin Warsh as chair of the Federal Reserve in a 54 to 45 vote. That's the narrowest margin on record. The confirmation sets up a test of the Fed's independence, with Democrats fearing Warsh will bend to President Trump's demands to rapidly lower interest rates. Warsh has pledged to keep policy free from political influence when he takes over from Jerome Powell, whose term ends on Friday. Turmoil at the top of British politics. A potential challenge to Prime Minister Keir Starmer is threatening to reignite a Labour civil war, with allies of Health Secretary Wes Streeting signalling he could quit the cabinet as soon as today and launch a leadership bid. Meanwhile, Angela Rayner, the UK's former Deputy Prime Minister, has been cleared of deliberate wrongdoing in an investigation into her tax affairs, potentially paving the way for another leadership bid against Starmer. And Cerebras has raised more than $5.5 billion in its US IPO in the year's biggest offering so far. The AI chipmaker priced its shares at $185 each, giving it a market value of about $40 billion. Tom.
President Xi Jinping, meanwhile, has signalled China is moving towards greater openness, with the state broadcaster reporting he told US business leaders the nation's doors to the outside world would open wider. We've heard that before. He struck an upbeat tone in his meeting with President Trump earlier.
Success in one is an opportunity for the other, and a stable bilateral relationship is good for the world. China and the United States both stand to gain from cooperation and lose from confrontation. We should be partners, not rivals. We should help each other succeed and prosper together and find the right way for major countries to get along well with each other in the new era.
Meanwhile, we have a redhead crossing the terminal right now. China is reopening the door to US beef plants as Xi and Trump meet. So they're renewing import licenses for hundreds of US beef plants, reviving trade in the meat as the leaders continue to meet. So the permits were renewed on Thursday and are usually valid for 5 years. Just an update there as we wait for more details, of course, of this meeting. Let's bring Brendan Murray right now, who leads Bloomberg's global trade coverage. You can tail that in as well into how you're thinking about your assessment, Brendan. But I guess the key question is what do you make so far of how this summit has gone, what it means on the trade front, what kind of details we've had, and what you were expecting that could come through?
Right. So we're still in day one, but already, as you said, we're seeing the deliverables for the Trump side, at least, starting to roll out. I think what we've seen so far is pretty standard diplomatic speed dating. You've got lots of handshakes and smiles and photos that set the tone. But there were two other striking things from today that I thought were noteworthy, and they mainly came from President Xi. The one was the tone that he struck on Taiwan. He came right out of the gate and said, this is essentially a red line. If you want anything in return, you better not cross that. He also, as your intro noted, said we're open for American businesses, and that seemed to be a direct response to President Trump's social media tweet the other day saying, hey, I'm bringing all these tech executives. They really want part of the Chinese marketplace. Could you please work with them? And so there seemed to be some give and take on a number of the fronts that both sides wanted to address.
What's China going to give on that front? What deals are we going to see?
From who?
China. What are they going to offer up in terms of deals to keep the businessmen that have come with Trump happy?
I think the most important thing for the U.S. side is some assurances, if not some specific commitments on the critical minerals. They showed the world last year that they really can leverage that and cause some economic pain. So we'll find out if the top aides of the President Trump behind closed doors can work out something other than just vague assurances that will remain stable. So the main thing for the U.S. side is stability and, of course, to maintain the flow of those critical minerals.
So do you think this is this a just reaffirming things we already knew about the relationship, Brendan, from a trade perspective, or will there be newness to the? Will there be more depth to the relationship? Because it's easy to have lots of words about a deeper relationship, and in fact we heard that from Xi earlier on, didn't we? That U.S. businesses will have more access.
Right, exactly. I don't think we're going to get a big detailed announcement with specific numbers in them, the way that we saw with the Phase 1 trade deal that President Trump and the Chinese side negotiated in his first term. That was, 50 pages long. It had all sorts of commitments laid out in it. What we're doing, the U.S. and China, it looks like in this meeting, is to try to reset things on a more stable tone. And to set in motion some sort of process to make sure that each side can revisit the commitments that they've made and to make sure they're living up to those. That's why this Board of Trade idea is being floated as a sort of a way to make sure that the economic relationship stays on track.
Brendan, thank you very much indeed. Bloomberg's trade czar, Brendan Murray. Let's get another view on this and some more insight and bring in Diana Choileva, Chief Economist at Enodo Economics. Diana, thank you for coming in. Always great to get your insights on the China-US relationship. Anything that surprised you so far in this visit?
Nothing surprised me, actually. Not only is this visit quite clear to me, but also what awaits us. And rarely you get into these positions of sort of relative certainty in my role as a forecaster. And the reason is that, what markets are missing is that now the two sides are coming from an equal position of strength, which wasn't the case since China started using the critical minerals card. And so the likelihood of them reaching a more stable framework for how the industrial supply chain would sort of work and still flow is much higher. And while this is the first meeting, we have potentially another 3 now between the two leaders over the course of this year. So that gives enough time to iron out details. But what I mean by what I just said is that now America has the oil card. It's all about choke points. China surprised Washington last year and said, OK, we control the critical minerals and are prepared to use this card. And that could almost instantaneously stop quite a lot of U.S. manufacturing. The U.S. didn't have a commensurate card to play. If it had played the dollar card, it would escalate. And obviously, tech restrictions, China's managed to go around them. The oil card is different. And however much I would say the media has not necessarily presented the Iran war as a win for America, it hasn't been the best possible case for America, but it certainly has shown China two things. It has shown that America still controls the security architecture in the Gulf, and that they were prepared, because none of the Chinese commentators expected America to follow up and go to war with Iran. Whereas I woke up in January 3rd, saw the Venezuela action, and instantaneously thought Iran is next.
OK. There's a lot to unpack there. I wonder if Iran holds the oil card instead of the US, but maybe we can get onto that. But I think the top point that you made in the first part of your answer was these are two countries on an equal footing right now. But actually, that's good news in terms of industrial supply chains, and maybe the markets are underappreciating that.
Yes, that's my main point.
Where do we? How does that play out then? How is that market benefit? How does that benefit the markets in the long run? You start to see an easing of supply chain constraints. Is that what you're looking for, and if so, where?
So I would look for really more of a framework emerging on how is this going to work? How will the U.S. get a secure supply of rare earths over the next 3 to 5 years? Because irrespective of how much money they throw at building this up, it's going to take a while. And simultaneously, on the other side, China does want the stability of its supply of oil. And this is even more important for the Chinese right now than it is for the Americans in terms of political implications. Because for the Americans, it means midterms inflation, not drastic. For the Chinese, it's fertilizer, food, feeding your people, social unrest. So China is much more in a much more vulnerable position from that perspective, but feeling much stronger because it saw that rare earths worked and also its economy has stabilized. And
if China told Iran to open the Straits of Hormuz, would the Straits of Hormuz be open?
So it's very difficult to know the answer to this question. But what we have seen is a fairly successful military operation for both Israel and America. Strategically, that's a different conversation. But those two sides have managed to significantly degrade Iran's industrial and military capability. I'm not an expert on Iran, but obviously
You're an expert on China, though.
I'm an expert on China and the world, let's put it this way. China is the framework within which I understand the world, but I also run a geopolitical team with very heavy hitters on Iran, too. So I do have a team underneath me that does understand this side of things. And really what's clear is that, I mean, it's very difficult to know what is the situation of the intelligence services who run Iran right now, how much of a control they have. I'd say Israelis probably have the best intel there of what's really happening. The Chinese don't. They've shown that they're not particularly good at that side of things. So how much leverage they'll be able to apply, we don't know, because we don't know who's actually in charge in Iran and how does the leadership really work. But if anyone can, that's China, because obviously that's... so I would think that on balance, I would expect that the Chinese would be able to have that leverage.
Is Jensen Huang going to be selling more chips into China?
No, not in that way. So basically the technology and security, the technology, advanced chip infrastructure as very much part of the kind of security infrastructure the U.S. In the U.S. So it's not just up to Jensen Huang, and we have seen all the memes of him trying to be Ethan from, Tom Cruise, getting on the plane. So that was interesting. But on the other side, it's not just Trump here. It's the whole American political system, and across it, in particular through the national security complex, it's crystal clear that advanced chips are not something that China will have its hands on. They are trying to do this in roundabout ways, but it won't be part of the agreement, no.
Okay, so if we're looking for agreement here and areas of new coming together, if we get nothing on rare earths, does that make this a disappointment? Is that the secret to some sort of industrial détente between these two, Diana? And does that come at this meeting?
Yes, if we don't get a framework, some sort of framework of how this is going to work, that is, and the Chinese are looking for frameworks, that's very important. So they're willing to give that. And of course, they're willing to give, a bunch of headline deals.
What does that mean on rare earths, though, if they're looking for a framework on rare earths?
It means how are the two sides going to communicate? What is going to be the sequence? How will they, what is the quid pro quo? Now, what I just told you, we won't see this in Iran will not feature like this in any of the communication. But that is the underlying mechanism. And so I don't expect to see, we'll help you on Iran. That's not going to be in what we see. But so far the optics have been very good. They don't signal friendship, they don't signal trust, but they signal two sides that understand mutual interdependence, that have fairly equal cards, and are willing to work out a framework for sort of keeping the global economy and industrial supply chain moving. They're neither of them giving up on fighting over AI and the future of the world.
On that note, we will leave it, but we'll get some stability out of it. That'll be nice. Diana, thank you very much indeed. Diana Sholeva, Chief Economist for NATO Economics. Coming up, still more ahead on the Trump-Xi summit, details on the state banquet, which is set to start in a few hours' time. Anna's interested in what's on the menu. We will find out, I'm sure. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
When there were difficulties, we worked it out. I would call you and you would call me, and whenever we had a problem, people don't know, whenever we had a problem, we worked that out very quickly. We're going to have a fantastic future together.
So Presidents Donald Trump and Xi Jinping striking a mostly optimistic tone in their meetings. Our China correspondent Min Min Lo is on the ground for us in Beijing covering this event for us. Min Min, the next bigger item on the agenda then is the state dinner. What can we expect? Is that pomp and ceremony? Is it going to be a place for further conversation? What's going to be on the dinner menu? What should we expect?
Certainly there's going to be that pomp and pageantry that we have seen throughout this state visit, right? From the moment Trump landed, the red carpet rollout, the full security escort when he arrived this morning at the Great Hall of the People. There was the 21-gun salute, and you have the Chinese military band playing the U.S. national anthem. It's not every day that you hear that on the Great Hall of the People, the square there in the heart of Beijing. So we'll be looking out for the ceremony, the the symbolism of that dinner as well. What's on the menu? That's certainly going to be of interest, because back in 2017, I remember President Trump had the Kung Pao chicken that was on the menu, and it was a meal that was described as a middle ground between East and West. And I wonder if there's going to be some sort of beef dish on the menu as well, in a nod to China renewing those licenses, import licenses for these beef plants in the US after allowing those licenses to lapse last year after the bruising trade war. So that was one of the key positive headline we got out of this, one of the substantive deal that has come through so far. Although the actual quantity of import, that still remains to be seen, because it's coming at a time where these beef producers in China are already suffering from overcapacity and sluggish demand. We have, of course, news out of Reuters as well that NVIDIA appeared to have gotten a clearance to sell H200 chips to some 10 Chinese firms, and we had seen the market reaction with some of these NVIDIA suppliers in China, their stocks rallying, even though at the index level, you look at the Chinex, you look at the Shanghai Comp, some of these indexes have already given up gains that we saw yesterday, perhaps a bit of that phenomenon of the buying the rumor and sell the news here.
Min Min, thank you. Yes, really interesting. We thought we knew a little about what the US were intending around those H200 chips already, and we're waiting for some news about what China will allow into the country and who can buy them. But we continue to watch that story, and the market does as well. Let's talk about something else that lies ahead of us, and that is a busy day in UK politics. The UK's Labour Party looks set to be heading towards a divisive battle over the country's top political office. Several ministers are said to be considering a leadership challenge, but the Chancellor, Rachel Reeves, has warned a contest could plunge the country into chaos. Let's bring in Bloomberg's Lizzie Burden, who is in Downing Street for us. Any comings and goings already this morning then, Lizzie, or is that still all to come?
Well, we've seen the Chief Secretary to the Prime Minister, Darren Jones, entering that black door behind me, Anna. It's fair to say, with the King's speech behind us, the gloves are off. It feels like, for all of Keir Starmer's defiance, a leadership battle is nonetheless coming. We've had the former Deputy Prime Minister, Angela Rayner, saying that she's been cleared of a tax probe, clearing the way for her to mount a leadership challenge. We had the Health Secretary, Wes Streeting, in there meeting Prime Minister Keir Starmer yesterday for less than 20 minutes. His allies say that he is going to resign from Cabinet and mount his own leadership challenge, although there are questions about whether he's got that magic number of 81 MPs to back a challenge. And then there's the Greater Manchester Mayor, Andy Burnham. Now, of course, he doesn't have a seat in Parliament. He'd have to find and win one. That could take weeks or even months. I do wonder whether Labour MPs have got the patience for that. Notably, Angela Rayner says she doesn't have a pact with Burnham to challenge Starmer. And interestingly, overnight, Polymarket odds have doubled that Rayner is going to be the one that takes over from Starmer. So she's now neck and neck with Andy Burnham.
Lizzie, is it in the price? Is this leadership challenge in the price? Is it all in the price? Is Burnham in the price?
Well, anyone who takes over from Starmer, the gilt market is going to think would be more fiscally lax. Of all the candidates, Wes Streeting is seen to be the most continuity candidate. But we heard from Rachel Reeves, as you were mentioning earlier, the Chancellor, saying that a leadership contest in itself will plunge the country into chaos. Of course, a prolonged leadership battle is going to put pressure on gilt. She's not wrong there. The last one took 3 months. It'll add to the cost of living for ordinary Britons. And of course, a reminder of the psychodrama that we saw under the Conservatives that Keir Starmer said he would end would surely weigh on Labour in the polls as well. Now, of course, in this morning's data for UK GDP, we saw that rebound in economic growth in the first quarter, 0.6%, most of it coming notably before the Middle East war. That could come down. It doesn't give much of a respite for Starmer, and indeed, it only means that investors will probably be treating the UK with caution.
Lizzie, great stuff. Thank you very much indeed. Lizzie Burden joining us from outside 10 Downing Street. Is Burnham in the price? I don't know. It feels like Rayner's in the price. We're not seeing much movement this morning, so you've got to assume that some sort of challenge from her was always kind of anticipated. How far does that go?
Yes, I mean, and then if we get some news that a Labour MP who is sitting in a seat that is safe enough, and that's an interesting thought, would be able to give that, offer that over to Andy Burnham, then that would be something that the market might move on. Interesting that Wes Streeting himself has a very, very thin majority in his seat, which I wonder how that's weighing into his thinking as to when is the right time for him to launch this.
How many of the current leadership would retain their seats if there was a general election tomorrow?
Which it also takes us back to the question about how far away from the manifesto they really want to go.
And the irony is that the growth picture is looking a little brighter. The Chancellor coming out and warning of
2 months
of market chaos.
There's
all sorts of question marks over this. But headline basis, growth picture looking a little brighter, particularly when you compare it to the likes of France. Unemployment at 8%. We've got unemployment around 5% here. We've got growth here. France is flatlining.
But you look at the polling and you look at the consumer confidence data, you look at the housing market, there are so many things which are sort of dragging down sentiment at the moment in this country. But it's interesting it's not being reflected maybe in the GDP figures.
We should mention that the Federal Reserve Governor Stephen Myron will be on Bloomberg TV at 1 o'clock London time. So that's interesting to add into the mix around the Fed. What is the confirmation of the new boss at the Fed?
How does he make the case for further cuts?
Well, he's not going to be there, is he? I thought he was about to.
But I'm sure he'll still be making the case.
Cutting pretty rapidly.
Sure. I guess with PPI at 6%, that's an easy argument to make.
Well, we'll see what he has to say. AI might get a mention. That's certainly something that Kevin Walsh has talked about, isn't it? 8:56 here in London. That is it for the opening trade. UK politics in focus. Globally, of course, US-Chinese politics certainly in focus. The Pulse is next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The Chinese president tells U.S. business leaders his country will open up more as Presidents Trump and Xi say they hope for a more stable relationship. The UK Prime Minister Keir Starmer's rivals get ready to challenge his leadership as the Chancellor warns of chaos. Plus, Burberry sales beat, but shares fall as strong demand for scarves and trench coats fail to satisfy investors. So we cover all news. We look at the markets. If you look at NASDAQ, they're gaining a touch. Now, there's a little bit of optimism, or at least a relentless rally in technology stocks seem to be showing little sign of cooling. Again, we had a blockbuster share sale. Cisco Systems earnings also highlighting that momentum around artificial intelligence. Technology stocks, chip makers in particular, seem to have been leading this unprecedented rebound in U.S. stocks. And then we have a little bit of concern, though, in the UK. Sterling 135.08, and you can see the UK 10-year above 5. Brent 106.66. Look, if you look at the European markets map, so a lot of the countries that have quite a lot of exposure to technology stocks are doing okay. The FTSE is pretty much flatlining just because of this possible leadership, well, not possible, this leadership challenge towards Keir Starmer. We'll see if the Prime Minister goes or stays. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President Xi Jinping warns Donald Trump of a potential conflict over Taiwan if the issue is mismanaged. The U.S. president described their bilateral talks as great after the two leaders concluded their meeting.
When there were difficulties, we worked it out. I would call you and you would call me, and whenever we had a problem, people don't know, whenever we had a problem, we worked that out very quickly. We're going to have a fantastic future together.
A stable bilateral relationship is good for the world. China and the United States both stand to gain from cooperation and lose from confrontation. We should be partners, not rivals.
Now we're waiting for the state banquet to kick off at the Great Hall of the People. Bloomberg's China correspondent Min Min Lo joins us from Beijing. Min Min, thank you for being here. It's a pretty exciting day where you are. What kind of reception has Trump received?
Well, it was a very warm reception from the moment he landed in China last night, right? We have the red carpet rollout this morning when he went to the Great Hall of the People. There was the 21-gun salute. There was a full security escort with him as well. And you saw President Xi with that smile on his face as he walked President Trump into the Great Hall. He kept the smile on throughout the opening remarks as well. And really a strong show of this bromance between the two men, right? Especially from President Trump, the effusive praise we heard from him, talking about how the future of the relationship is going to be fantastic. And that was all sort of the positive tone that we saw in front of the cameras. And then after that, they went into that room behind the cameras for about at least 2 hours. That's when we started to get some of the more stern messages from China, from Chinese state media, right? The warning from President Xi about Taiwan, warning that, you know, the arms sales with Taiwan needs to be dealt with the utmost caution. And if that is mishandled, China says, it could push relations to dangerous territory. We also heard some positive headlines as well in the last couple of hours. There was news that China has renewed the licenses for these beef plants in the U.S. China had allowed those licenses last year to lapse, and that really tanked the beef trade after that bruising trade war. So the new renewal of the license is a very positive signal, even though the actual import volume, that still remains to be seen, because it's coming at a time when these beef producers in China are already struggling with overcapacity and sluggish demand. Another key positive has been from NVIDIA's Jensen Huang, right, the last-minute addition to the business delegation here, and we're hearing from Reuters that he appeared to have gotten clearance to sell those H200 chips to at least 10 Chinese firms, and we did see the market reaction with some of these NVIDIA suppliers in China seeing their stocks rallying today as well.
Yeah, and Min Min, of course, as you were saying, President Xi telling the U.S. chief executives accompanying President Trump that actually China will open up more. What more can we expect? Is it business deals? Are we confident that actually the two leaders will get along better from now on?
So we understand now that Premier Li Qiang is meeting with the business delegation that accompanied Trump, and we have the Vice Finance Minister Liao Min, the Commerce Minister Wang Wentao. They are all present. So all the big heavyweights in charge of China's trade and investment, they are all meeting with the U.S. businessmen. So after that is over, we'll be waiting for headlines. Potentially there could be deals on the table, right? Because we know Boeing CEO is there, and he has been lobbying for this mega 500 jet deal. Cargill is there as well, so potentially some sort of agricultural commodity purchase agreement could be on the table. And of course, you have the tech CEOs, Apple, Micron, as well as Qualcomm, and Elon Musk also there as well, likely to be lobbying for approval for the full self-driving and his autonomous taxis in China. So certainly want to wait for those headlines in terms of the transactions that could come out of this. So those are the transactions. But if you look at the broader relationship, right, President Trump has said the two sides agreed on strategic stability and will provide that guidance for the next 3 years. But it's likely to perhaps buy time for the two sides to maybe plug the gaps in their economy. For the U.S., it will be rare earths. For China, it would be to close the gap in technology. Whether or not the two sides are really, going to reset relations, I think expectations for that is very low. I think this trip is not about getting a grand bargain, but really to strike that equilibrium in their relationship.
Min Min, thank you so much. Terrific briefing there from Min Min Lo, and of course we'll have plenty more throughout the day. So the U.S.-China détente may be back. The backdrop has been shaped by war in the Middle East, tensions over rare earths, and of course this accelerating AI race that Washington appears determined to win, if necessary, through measures like restricting Beijing's access to advanced semiconductors. Now, all of this is weighing on markets. Political instability in the UK is also something we're watching out for. Then we had the appointment of Kevin Warsh to talk investments and finance. We're joined exclusively by Jenny Johnson, Chief Executive of Franklin Templeton. Jenny, as always, thank you so much for giving us a little bit of your time and your busy schedule. There's just a lot, right? It feels like trade routes are being rerouted. I don't know whether these cordial exchanges between President Trump and President Xi makes you optimistic for investments.
Look, the U.S. needs China and China needs the U.S., right? And so there's always going to be this opportunity to coordinate. You want them talking. I mean, as Trump said, we're now having conversations. President Xi said we need to be able to be more cordial and work together. We need each other. The good news is I think there's a recognition of that. And so when you look at who the delegation is, both parties have brought to the table kind of what each other needs. I think that the other side of this is there will always be a distrust around technology. But the fact that you have, Elon there, Jensen there, Dina from Meta there, right? That's a sign that the U.S. is coming in to have conversations. We need them. We need them for rare earths. I think that's just the reality.
What do you see? The market are very optimistic, right, in general, even despite, and that's partly driven by technology, despite everything that we're seeing in the Middle East with no real resolution in sight. Is there too much euphoria when you speak to clients? What are they telling you?
Well, if you look at it, just in this first quarter earnings, 85% of the companies beat their projections, right? I mean, and it's a broad base. This is not just a technology AI driven. That's the reality. The U.S. market is very, very, and the economy is still very healthy. And so I actually think that the market, there's reasons for the euphoria around it. And I get it, that there's partly the U.S. is a little bit as a energy independent. We're a little bit more isolated from some of the problems in the Middle East, which it means that it's having less of an impact on it.
Is there anything you worry about? So you're here in London for an IPO from Uzbekistan, which I'll get to in a second. But do you worry about inflation? Do you worry about private markets? Is there something underlying that you could see some dislocation or something that makes you uneasy?
Yeah. So here's what I'd say. Look, I think inflation. I think the market has underestimated the realities around inflation. I know that there's this lot of concern that's raised around Kevin Warsh and will he be independent? The reality is, remember, it takes 12 governors to vote for whatever the changes are in rates. And Kevin Warsh's term, it's going to be 2 years under President Trump and then 2 years after that. So he's got to look at his legacy, too. I think he's going to be very practical. So I I think inflation, the reality of inflation is it's sticky, and it's probably, going to be more difficult than even the market. I think the market's probably underestimating it a little bit.
So you're here in London because there's, a company from Uzbekistan that listed, which so far 24 hours has been doing very well. I mean, are you expecting more companies to list?
Well, so let me give a little bit of background on that, because it's actually very unique. So this is the Uzbekistan government has been very progressive with the reforms. Actually have one of the top performing economies. I think this current quarter they're at 9% GDP growth. Last year they were almost 8%. And so what they've done is they've hired Franklin Templeton to help them privatize state-owned enterprises. So they contribute into a fund, 13 companies. They cover transportation, utilities, financial services. And in that fund, we actually have the ability to change management, control the corporate governance. So what they're trying to do is bring FDI and foreign direct investment into Uzbekistan to help them do the reforms. This is a great way to do it. And so we actually did this in Romania, the leader.
Jenny, I mean, if we look at the amount of private equity firms, I guess that could exit from deal. I mean, there's just a lot of IPOs that could come to market in the next 16 to 18 months. Can the markets cope with that amount, or does it have to move to secondary markets?
I mean, obviously you're talking about the big IPOs, the SpaceX, the Anthropics, and it seems that they can, and you can always reduce the amount you float, right, if you're concerned about it. But I think as long as the market is strong, and actually a healthy market, we need to see more private equity companies have liquidity exits, because that's been one of the issues in private equity is that they've really held out too long. And so it's frustrated a lot of the investors. So, yes,
At some point, could you see the secondary market actually exceeds the
meaning private markets?
Yeah.
Look, I hope that never happens. I mean, at Franklin Templeton, look, today, the average investor is better served in a liquid public market. Now, there are excess returns in the private markets, particularly as you see the differential in like private credit versus traditional fixed income. Those returns matter when you're saving for retirement. So both markets need to be healthy. But I think it would be really unfortunate. And I think that one of the things that the SEC leadership is trying to do is make being a public company more attractive. That needs to happen. It's not just about, quarterly earnings. There needs to be kind of some other reforms that go into place. But I think that it's a really good sign that we're seeing. And really, it's a global IPO market. So it's not just the U.S., but you see it in Hong Kong, you see it in India. Those are good things, and I think a sign of a healthy economy.
I mean, if we call them like the mega IPOs, right? And you're right, it's the Tesla, the Anthropics, or the SpaceX, not the Tesla. I mean, should they be allowed once IPO to enter the index earlier than they currently can?
So, I think there's some question on, because you have people locked up in there, and what does that do? Does that distort? Because now suddenly you have buyers that have to buy the stock. I'm sort of the view that it would be better to wait and give it a little bit of time until those original actually have exited. Otherwise, they sort of get this benefit of the. But, the other side of it is, how does the individual investor who's in a passive fund get access to those if they're not in the index? But this is one of the challenges, I think, with the index, because if you're a company that doesn't get in the index and you have 50% of the investors just investing in index, then it's really hard to compete.
Do you think that these will change? I mean, even a lot of, there's been a data center boom. Does it change the nature of markets? I don't know if there's like investor fatigue with data centers.
I'll tell you my one worry on data centers. I just think anytime you are planning for 20 years based on today's technology, with the pace in which we see innovation happening, that can be risky. And so, you have things like photonic computing that doesn't need nearly as much energy. And I know it's complicated and it's probably a hybrid, but like you're making assumptions based on today's technology needs and energy needs. So I personally net trade as those investments go. Now, it's really good for the economy. There's a lot of CapEx that's being spent that has been put into the economy that's helping, keep it going.
So where do you see the biggest disruption? Because you mentioned, technology, but also energy needs. And you're right, that could significantly change how we use everything.
For sure. I mean, look at the breakthroughs that we're seeing happening. And so, again, we're basing these assumptions on today's computing approach and today's innovation around energy. And we know that these things are both very, very quickly evolving.
What are you spending most of your time thinking about, given all of that? I mean, we could go in any number of directions. We touched on inflation, geopolitics. But is there something fundamentally that you think will change in how the markets operate?
Look, I think the fundamental change is around bringing private markets so you have true democratization to the average investor, right? Now, here's why it matters. Just take investment grade fixed income. So if you invest in investment grade fixed income in the private markets, you're getting a 1 to 1.5% excess return on that. Problem is, you can't get your money for 10 years, so you really need to be able to withstand that illiquidity. On the other hand, a 1% additional return can mean 20% more just over a 20-year period in your retirement. Like, that can make the difference between whether you have enough money or not. So to me, it's all about matching the right vehicles with the needs, because these are illiquid. It drives me nuts when I hear people acting like, oh, no, private credit's more liquid than you think. It's not. But it can be put in vehicles as a percentage of a vehicle that keeps the vehicle very liquid. And so I think that that's very important. And honestly, I think the best place for this is in retirement accounts, like in the U.S., but in the challenge because people, put money in their retirement thinking that they're not going to get it until they don't need the liquidity.
And it's opening up a bit.
It is, but the reality is it's probably the highest, most litigious space in investments. And so, it's all focused on fees, and these aren't cheap products.
Jenny, thank you so much, as ever, for joining us. Jenny Johnson, the Chief Executive of Franklin Templeton. Now, coming up, Labour Party showdown is brewing in the UK. We'll get more on British politics and the market reaction with Subita Subramaniam of Sarazen & Partners. That's next, and this is Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Well,
Well, the UK's Labour Party is heading towards a divisive battle over the country's top political office. But a leadership contest could drag on for months at a time when the country's economy is facing a soft jobs market and rising inflation. Well, joining us now, Subita Subramaniam, head of investment strategy at Saracen and Partners. Subita, thank you so much for joining us. Look, we heard also Rachel Reeves saying, first of all, there's a fight for survival for Keir Starmer, but she worries now this is, they worry about a trigger in gilt selling, basically, in a market that seems already quite illiquid. Do you worry about chaos?
Yes, I mean, I think this is incredibly unhelpful, just in terms of just the broader geopolitical environment we're in. I mean, I think earlier, just before the Middle East war started, we were expecting rate cuts in the UK. Gilt yields were well below 4.5%. And actually, if you think about sort of bond markets globally, gilts have actually repriced the most aggressively. And then I think if this chaos continues, there's going to be a point at which the risk premium in the bond market is going to limit the options for the politicians.
But if the Chancellor is warning of a leadership contest, right, that would plunge the UK into chaos, would it really, or would, depending on who comes into power, do bond vigilantes or just bond investors give them a little bit of time to sort their house out?
I actually worry because there is sort of a relationship between the bond vigilantes and Rachel Reeves in the sense that the thing they have in common is that they both like taxes. And ultimately, I think bond vigilantes would be fine if taxes go up and sort of fiscal sort of prudence comes in. But the reality is that in this world, in the state of the UK economy right now, raising taxes might eventually be counterproductive. So I'm not so sure that, even the bond vigilantes actually get us to where we need, what the UK needs.
And so you'd see it in gilts, but you also sterling?
Yes.
Is there one, is there a buying opportunity at some point, or just have to wait and see how this plays out?
There is a point where, if we have disorderly bond markets like we had during Liz Truss, I think that it does become an opportunity because we do know that there will be a political reaction and a policy reaction to it. So I think, what is the actual risk premium? Is it 50 basis points in UK gilts? Is it higher? I mean, if it gets higher than 50 basis points, it does become a bit more attractive to actually, take on gilts.
So the other big story is, of course, President Xi and President Trump meeting in Beijing. I mean, they had pleasantries, actually. They seemed on friendlier terms than in the past. Does it change the dynamic for investment if the two superpowers get along better?
I'm not so sure it changes the long-term trajectory for either. I mean, they say in a partnership, or they'd like to be in a partnership. I think they are really in a rivalry. Okay. We might get, and I'm sure we'll get really good headlines after the visit. Yeah. We'll have a great trade sort of headlines. We don't know if that'll actually come to pass. I do think, she has strategic ambitions to basically, achieve certain goals, some of which may be Taiwan, security-related, technology-related. President Trump has one singular goal, which is to get a good trade deal and have really good headlines. So it's quite, transactional versus a more strategic sort of debate and dialogue.
But Subita, is this about, deals, and is this about deals with the chief executives that are there, or can they also get China to quieten things down in the Middle East?
Yeah, so will China step in and actually reduce sort of the strains in the Middle East? It's unclear. They have been unwilling so far. They have been unwilling in Russia as well. They have really stepped back. Because if you take a strategic view on these conflicts, it plays to China's strengths, right? Yeah. It comes across as the most stable trading partner. So, I mean, yeah.
I mean, there's been so much euphoria on technology. I don't know how, and this is on the back of earnings. There are also chip makers today really kind of on a tear. Are you expecting the talent on chip makers, this possible talent chip makers, the U.S. and China to make a difference?
Yes, so I think, I think Jensen Huang and NVIDIA has said this very well, which is that actually putting these export controls on chips has actually accelerated China's technology and has actually pushed it closer to the frontier and closer to the U.S. So I think there's now a tacit recognition that it's actually slightly counterproductive. Yeah. That doesn't mean that, some of the sort of capex that's currently taking place in the U.S. is going to stop anytime soon. Actually, it possibly, picks up even further because it now becomes a competition between the U.S. and China. They go from slightly, having sanctions and controls to more open rivalry in technology.
How much do you worry about inflation?
A lot. A lot.
As everyone.
Yeah, I think everyone does. But, the fact that the market is not really pricing it actually means that maybe we are not collectively worried as much as we should be. I think we're right now seeing sort of the primary impacts of inflation, into, first order effects from crude oil and gasoline. We're looking at it in refined products. But actually, I think it'll start to seep into food prices the longer this goes on. And so, I think, it's here to stay.
Subita, thank you so much for joining us. Subita Subramanian there, Head of Investment Strategy at Saracen and Partners. Coming up, we'll talk a lot more about oil and the Strait of Hormuz. We'll also go back to the UK story with Keir Starmer's efforts to hold back a potential leadership challenge, showing new cracks. We're live from Downing Street next, and this is Bloomberg. Thank you so much.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a little ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is the 1 to 6.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. The Chinese president tells U.S. business leaders his country will open up more as Presidents Trump and Xi say they hope for a more stable relationship. The UK Prime Minister Keir Starmer's rivals get ready to challenge his leadership as the Chancellor warns of chaos. Plus, Burberry sales beat, but shares fall as strong demand for scarves and trench coats fails to satisfy investors. So the UK's Labour Party looks set to be heading towards a divisive battle over the country's top political office. Several ministers are said to prepare to run in a leadership ballot, while Chancellor Rachel Reeves has warned a contest could plunge the country into chaos. Now, for more, let's bring in Bloomberg's Lizzie Burden, who's at Downing Street. Lizzie, so talk us through exactly the expectation of who could formally challenge Keir Starmer, starting with West Streeting.
Yeah, well, I mean, the gloves are off, the knives aren't quite yet out yet, but allies of the Health Secretary, Wes Streeting, say that he could resign from Cabinet as soon as today and launch his leadership bid. There is a bit of a question about whether he's got the numbers to do that. He'd need 81 Labour MPs to back him to do that. And then, conveniently, given that that's what we're expecting from Streeting, the former number 2 to Keir Starmer, Angela Rayner, has said that she's been cleared of a tax probe. So we're also expecting her to be gearing up for a leadership bid. Now, the other figure in all this, of course, is the Greater Manchester Mayor, Andy Burnham. He hasn't got a seat in Parliament at the moment. He'd need to find one and win one, and that could take weeks or even months. But we're waiting for him to announce which seat that will be. It's hard to imagine that Labour MPs will have the patience for a long wait for Burnham. Interestingly, Rayner saying that she isn't in a pact with Burnham to challenge Starmer, and notably Polymarket odds overnight doubling for Angela Rayner, that it'll be her who takes over from Starmer. So she's now neck and neck with Andy Burnham, Francine.
So how much market uncertainty might a leadership challenge actually create?
Well, you mentioned the Chancellor was out this morning talking about how it would plunge the country into chaos. The last time Labour had a leadership battle, it took 3 months. It's hard to imagine that that wouldn't put pressure on gilt, add to the cost of living for ordinary Britons, and at the same time, by the way, remind ordinary Brits that of the psychodrama that we saw under the Conservatives, that Keir Starmer promised to end, but it looks like it's inevitable at this point. Latest polling from Ipsos, for example, showing that 2 out of 3 Britons don't think Keir Starmer is the man to lead Labour to the next general election. And yes, we had better economic figures from the UK this morning. GDP growing actually in the first quarter compared to the stagnation of the second half of last year. But once those energy prices start creeping in from the war, that picture could turn around as well. So for investors, it seems like this is going to be a time to treat the UK with a lot of caution.
Lindsay, thanks so much. Bloomberg Lucy Burden there at Downing Street. Now joining us now is Lindsay Newman, a visiting research fellow at King's College London, and also Brendan Murray, who leads Bloomberg's global trade coverage. So we have a lot to cover. We need to talk about Trump and Xi, but actually if you start in the UK, Lindsay, and you're also going back to Chatham House, so congratulations on that. But when you look at the UK and the political uncertainty, like what will you be looking for?
Yeah, absolutely. You know, it's an interesting moment, Francine, that we're seeing. As Leslie referred to, the economic forecasts have actually come out today quite surprising. But and even still, the political landscape is sort of a story best already foretold. And it's hard to imagine. Polymarket voting has Starmer surviving this month. But as it looks further down the line, by the end of the year, it seems overwhelmingly it's going to be a very difficult moment for him to survive this challenge. It's coming from all sides, as Lizzie highlighted for us. It's coming from within his own MPs, but also the broader Labour Party. And so the sort of ability to stabilize his leadership that he saw last fall, especially when Donald Trump came and offered all those investments and deals, that sort of shine has come off. And the realities are that people are feeling it in their wallets, their pocketbooks, and they are just no longer satisfied with the current leadership.
Do you worry? I mean, again, it's, you know, without going too much into markets, that actually this uncertainty will cause the UK quite a lot of harm.
Yeah, absolutely. We know that when there's political uncertainty, it will be deeply tied to how the market reaction is. There are, of course, some factors that are very much beyond Starmer's control, the geopolitical landscape, I'm sure, that we will also talk about, but and that he doesn't have control over. But there is no doubt that the markets will be watching the fact that the already fairly recent prime minister is now facing challenges from within.
Brendan, so, you know, President Trump is in Beijing speaking to President Xi. I mean, it was fairly actually friendly until then President Xi also warned of possible clashes if the Taiwan issue is mishandled. Like, how would you describe the relationship between the two presidents?
Yeah, I think the choreography so far is playing out pretty much as expected. Both sides are portraying a friendly tone, and the President Trump calling President Xi his friend and a great leader. And so the optics are kind of playing out in a way that most of us would have expected. We saw an announcement that China was going to lift a hold on U.S. Beef imports, and so that was you know, kind of low-hanging fruit, but we're seeing the deliverables sort of roll out at this stage. The big questions are still, you know, how are they going to resolve the main issues between semiconductors and American high tech and Chinese critical minerals. Can they find some sort of delicate balance to allow those critical items to flow between the world's two largest economies?
And we know, I mean, you know, President Trump loves a deal. He brought chief executives, but actually, does he just really need China's help with the Middle East right now?
Yeah, I mean, what's interesting, what we've already seen today is that Trump really wants to keep this mostly on the economic trade and investment track. He doesn't want to get into sticky political dynamics. She, on the other hand, has already said today, yes, the economic ties are very important between the two sides, but the most important issue here is the Taiwan question. That will not be good news for Trump. That is not what he wants to hear. If anything, he wants to stick in this economic lane. But as you say, he would like some help on the Iran front. And, you know, the conflict has proven more difficult. He had hoped he was going to arrive in China with this behind him. That's obviously not the case. And he's looking to Xi to apply any pressure that they may have, pull any levers that they may have to help him get the U.S. out of this conflict.
But I mean, again, what's the relationship in terms of, for example, chip makers and semiconductors? Because we also heard that as soon as the U.S. blocks China from accessing chip makers, NVIDIA chips, that's when they get much more creative and therefore better.
Yeah, absolutely. And we know that one of the big takeaways from these meetings this week will be, can they extend the trade truce that was agreed to last October, where Trump decided, you know, agreed to reduce some of the tariffs on China, and in exchange, China agreed not to block those rare earths. And this is really the heart of the relationship, is that there's this mutually beneficial, mutually interconnected supply chains, yet both sides are strategic rivals in the AI space. How do you untie those knots? And I don't think we're going to see that over the coming days, but there will be lots of conversations dancing around exactly that issue.
Brendan, I mean, I don't know if it's a change of heart from President Trump or whether he just understands he needs China maybe more than he needed them 18 months ago.
Yeah, exactly. A lot of different factors are playing a role in that. The Iran war and the energy shock are obviously playing into that as well. One place where we might see the geopolitics of the Mideast and the economics of that are domestically important to President Trump right now are in the energy space, where China put tariffs on U.S. crude oil and natural gas, and so lifting those tariffs might be a way for China to kind of throw a bone to the Trump administration, while also kind of easing the energy shock and restoring some confidence in that area.
But Brendan, I mean, you're in charge of global trade for Bloomberg. This is no small job. So I know we're looking at the Strait of Hormuz on a daily, if not hourly basis. I mean, it doesn't seem like we're getting anywhere.
On the Strait of Hormuz?
Yeah.
Yeah, I mean, it looks like a situation that isn't going to end in the next 3 to 6 months. We've heard from companies that do business in the region that say, yeah, we're planning for this to last all year, and so it looks like Iran has a lot of leverage now, and they are poised to use it. In the meantime, we've gotten some inflation numbers in the U.S. this week that really step up the pressure. The producer price number yesterday means consumers are going to feel those higher prices in 3 to 4 months, and that leads you right into the U.S. Midterm election. And so the pressure on President Trump to resolve that is growing every day, and every time we get a number like that shows consumers are really bearing the brunt of the situation in the Middle East.
And Lindsay, I mean, we saw a bit of optimism, right, on the one-page memorandum, and then there was cold water over it. Is this the kind of pattern we're going to see? Because as Brendan says, as we get closer to the midterms, I mean, President Trump needs something.
Yeah, I mean, the issue is we are stuck in a stalemate right now, and neither side is really willing to pay the cost that will be required to unlock that stalemate. The U.S. administration very clearly does not want to pursue further military action. They obviously can. They obviously have quite a range of sort of facilities at their disposal to do so, but they know that it's deeply unpopular at home. And still, the popularity at home has only ever reached 1/3 of the American population have approved of this conflict in Iran. And so in order to sort of unlock that, the question is, how do you apply pressure that's sort of outside of the box, it's not militaristic, and that's where the China question comes in. Interestingly, this week we know that Iran not only expanded the zone of the Strait of Hormuz, but it said it's going to charge it's going to charge increasing costs for those traversing the strait, which means that that oil exports may not be that same source of leverage that it had been in the past.
Do we understand, or at least does the Trump administration understand how weak or strong this new Iranian regime is?
I think that is the big question, right? That there's sort of optics that this regime has managed to survive this overwhelming threshold of attacks conducted by the U.S. and by Israel. But we know it's been degraded both militaristically, personnel-wise, Navy, its missile capabilities, and yet it managed to export the conflict to the rest of the region and the rest of the world. So it's sort of a bit of a whiplash, and trying to calibrate has been very difficult for the U.S.
Okay, thank you both for joining us. We have unpacked a lot. Lindsay Newman, a visiting research fellow at King's College London, Brendan Murray, who leads Bloomberg's global trade coverage. Coming up, losing its shine while Burberry disappoints investors despite delivering a sales beat. So we'll discuss the company's ongoing turnaround plans next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
This week, leaders from the world's two largest economies will come together in Beijing, with geopolitical stability and the future of global trade on the line. Trust Bloomberg to go beyond the headlines with on-the-ground reporting, expert analysis, and real-time market reaction. The Trump-Xi Summit. Special coverage all week right here on Bloomberg. Context changes everything.
Conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacroix here in London. Now, Burberry disappointed investors after the British luxury brand issued a cautious outlook for this fiscal year and warned geopolitical and economic uncertainty may hurt shopper confidence. While Burberry's conservative tone stood in contrast to results showing Chief Executive Joshua Schulman's turnaround is starting to pay off. Well, Andrea Felsted, Bloomberg opinion columnist, joins us now. Andrea, I'm always so happy to speak to you because we always have fun talking about fashion. Not so fun for Burberry because of their cautious outlook.
No, I mean, you can understand why they don't want to be too optimistic at this stage, particularly, with the uncertainties over luxury demand. But the results were pretty good. You can't argue with that. But they probably prefer to underpromise and overdeliver.
So, what can you tell us about the key Asian market?
Well, China sales were up 10% in the final quarter, which is pretty positive. We have seen some signs that China is indeed back, so that will be positive for the luxury brands. America's still doing well, which is also a key market until until China fully recovers. So the two markets that really matter were going in the right direction.
Have we seen any impact from the conflict in the Middle East?
They're saying that in Europe, they obviously in the region itself, but they're saying in Europe it has had some impact on travel and a bit of confidence. But they said it's very localised into Europe. And Joshua Schulman, the CEO, said we're at the start of the tourist season, so we'll have to see how that develops.
Andrea, just taking a step back, what are people buying and what are they not? So there was a clear repositioning in Burberry, compared to like outerwear and scarves. Yeah. Do people want that, or have they gone to other brands?
They do seem to want that. I mean, that is driving demand, and particularly the scarves, Burberry said, has helped them build credibility with younger consumers, which, every luxury brand is chasing. I think the share price fall today is really a sense of, OK, so where do we go from here? I personally think the strategy of going up market and becoming a proper British luxury upmarket brand was the right strategy, but it takes time, and it was against the backdrop of a very difficult market. But there is a question mark: how far can you really go with outerwear and scarves? You need handbags, which they have sort of retrenched. I said handbags are doing well, but they have retrenched on that big push into handbags. The outerwear market's also pretty crowded. You've got Moncler, you've got Ralph Lauren developing in outerwear, and the affordable luxury market is getting quite crowded. You've got obviously Ralph Lauren doing great, Coach doing great. You've got a whole new brand of more accessible brands, Cézanne, Polène. Got lots of competition. That white space is shrinking a little bit. So that there are definitely, where does it go from here?
Okay, let's also talk a little bit about watchmaking, because there's this new collab between, Audemars Piguet and Swatch. I mean, almost broke the internet, let's face it. And then we got the pictures, but it was like a marketing launch if I've ever seen one. What are you expecting from them?
Well, I think it's going to be very interesting. Everybody was very excited about the tie-up with Swatch and the Royal Oak, which is Audemars, iconic model. The disappointment is that it's this pocket watch that can be developed as you can have it on your bag, you can wear it around your neck, have it as a desk clock. Now, how many people will really want that? I think some collectors will, but I think most people want a wristwatch. That might have tested what Audemars was prepared to kind of give to Swatch. Perhaps the pocket watch protected its core business a bit, but I think that is definitely going to be a big question mark unless somebody, probably not Swatch or Audemars, can come up with a strap that cleverly, adapts it to a wristwatch. Then that might make it a people bit more demand for it. But I think that pocket watch is a real key question mark.
I mean, the algorithm on my Instagram has gone mental. I only have Swatch things, and you do see some companies, unknown companies, I've never heard about them, already pitching that kind of stuff. Andrea, thank you so much for joining us. I'm also excited because we're speaking exclusively to the Audemars Piguet Chief Executive, Ilaria Resta, and that will be Monday at 9:45 a.m. UK time. Andrea Felstedt from Bloomberg Opinion. Now, the UK Navy says a commercial ship has been taken by unauthorized personnel off the coast of the UAE and is now bound for Iranian waters. Let's get more from Bloomberg's Anthony Di Paola. Anthony, thank you so much for being with us. So just bring us up to speed of what we know so far.
Good morning, Francine. Yeah, pretty much what you just said, that vessel has reportedly been being taken to Iranian waters. This would be the second one in as many weeks, because there was a vessel that the Iranians seized also last week, which appeared to be a vessel potentially with their oil that had previously worked with shipping Iranian crude. We're still trying to figure out the details of this vessel. And see what the situation is and where that might have come from. What I can tell you is that we are seeing a little bit of an uptick in traffic through the Strait of Hormuz. Of course, that's been closed since the war started at the end of February. And now not only is Iran blocking any other vessels from coming out through Hormuz, the U.S. is blocking any Iranian or Iranian-linked vessels from passing really through the Gulf of Oman into the Arabian Sea. So the U.S. is also blockading those Iranian vessels, and that's cutting off that flow of Iranian oil that had been coming out up until about mid-April. But we are seeing some vessels, turning off their satellites, sneaking through, coming through under the cover of the night. We've reported that those are vessels from ADNOC carrying Abu Dhabi crude, some Aramco hired vessels by their traders. We saw 2 LPG tankers, that's cooking fuel going to India. That's very important for the Indian market there. Saw those coming through today. So we're seeing kind of an uptick of those tankers coming through. So perhaps this is a little bit more positioning on Iran to try to assert themselves again, particularly when President Trump is in China, and this situation is probably coming up because the Chinese, of course, very dependent on oil coming out of the Gulf. So probably some positioning around this and around Hormuz, Francine.
Anthony, thank you so much. Anthony Di Paola there in Dubai. Now, the growth of AI data centers has been driving up demand for energy. The Iran war could lead to a rethink in global energy strategy, so say analysts at Goldman Sachs. Joining us now is Alberto Gandolfi, Goldman's head of European Utilities Research. Alberto, thank you for joining us. I mean, there's obviously a very big political desire to drive electrification in Europe. Are there signs on the ground that this is accelerated because of what is happening in the Middle East?
Hi, Francine. Good morning. Yes, there are signs. There's actually a very explicit paper by the European Commission that points out very important elements. First of all, I need to remind everybody this is the second large-scale energy crisis that Europe is facing in less than 5 years. And this European paper very clearly says we might be spending something around 400 billion euros this year to import hydrocarbons, which makes Europe very exposed to price shocks. Electrification would go a long way to solve this. And there's quite a lot of money unallocated from the Next Gen EU, some of the COVID funds, some of the previous crisis funds that were never allocated, that could be put at use. In our view, electrification is accelerating. It's already under acceleration. Nearly 20% of new car sales are electric already. And these policy changes at the EU are likely to accelerate further the process.
Alberto, how do you compare the situation with AI power demand, in Europe compared to the US, where it's obviously much bigger and much faster?
We are probably 3 to 5 years behind. I want to hope eventually we're going to catch up. We're 2 to 3 years behind. Typically, our view, and we expressed that in early 2024, is that Europe cannot miss the artificial intelligence train. It's too important on productivity of the economy. It's too important on national security. And we find unlikely to outsource the artificial intelligence infrastructure to another country. So we have seen ever since the build-up of quite a lot of data center projects across Europe. We calculate a data center pipeline. We've been the only ones to do it out there. Essentially, we are tracking how many data centers ask to be connected to the European power grids. That number today exceeds 300 gigawatt, which is essentially the total power consumption of Europe. Of course, some of these projects will never come to light. Some are speculative, but we forecast roughly a quadrupling of the data center capacity between 2025 and 2035. And in light of what is going on with AI agents and the faster than expected adoption rates in enterprise, we may be underestimating this.
Alberto, what does the rise in power demand actually mean for renewable energy?
It means the world, essentially, Francine. What we think is happening is that, Europe has gone from 10% production from renewables in the early 2000s, which was really hydro, to around 50-55% right now, and this was merely decarbonization policy. This happened essentially without power demand growth. If you start to put through 2, 3, 4, 5% power demand growth, which is what we anticipate by the end of the decade, more in the mid-single digits, renewable additions have to probably accelerate 60 to 70% in Europe. But we have seen historically that demand tends to outpace supply for 3 to 5 years. Supply responds a bit slowly, which means not only that we need to build more renewables, but it means cyclically we are about to see rising returns in renewables, which is exactly what is already happening in the United States right now.
Alberto, in the very little time we have left, solar has been winning in Europe. Can wind catch up?
Yes, I mean, solar has been winning because of economics. Solar is very, very cheap. It has worked. Look at Spain. Between 22 and 27, Spain had a substantial acceleration of solar, which means that power prices in Spain, since the Hormuz crisis, have barely moved. So solar has been extremely successful at that. But there's a physical limitation to how much solar you can build. Half of the time it does not produce. You need to integrate solar with batteries. You need to integrate with wind. And as soon as possible, you may have to reopen a discussion about nuclear.
Alberto, thank you so much for joining us. Alberto Gandolfi, their head of European Utilities Research at Goldman Sachs. Coming up, Bloomberg's Katie Greifeld has an exclusive conversation with Andrew Schlossberg, Chief Executive Officer of Invesco. That's at 3 p.m. London time. Up next, it's Bloomberg Brief with Anna Edwards, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
It's 5 a.m. in New York City and 10 a.m. in London. Good morning. I'm Anna Edwards in for Vonnie Crin with your Bloomberg Brief. Let's get set up for the day ahead. Summit Day 1 underway. Presidents Trump and Xi discuss enhanced economic cooperation while CEOs meet with Premier Lee. Tech marching higher after the Nasdaq 100 set fresh record highs. Cisco results giving a boost to futures this morning. And the Senate confirms Kevin Warsh as the next Fed chair in the narrowest vote ever for the post. Let us get a check around the world on global markets. Let's see what's moving things around. Here's Winnie Su with a look at the latest from Asia. Winnie.
Good morning, Anna. We're seeing that Asian stocks fluctuating today, especially with investors watching for the Trump-Xi meeting going on in Beijing. Now you are looking at the Kospi index hitting a fresh record on the AI optimism, while the onshore Chinese stocks actually underperforming, down 1.7%, as investors take some profit after such a strong run-up into the meeting. We're still looking at the gauge headed for 6 weeks of gains. Now you flip the board and see how that overall positive sentiment from the meeting is actually supporting both the onshore and offshore yuan, both hovering around its strongest level since 2023. While in Japan, we're looking at 30-year bond yield hitting its highest level since 1999, despite a pretty strong bond auction earlier today. And that goes to show how inflationary concerns are still weighing on sentiment.
Yeah, a lot of focus on those bond markets then. Winnie, thank you very much. Justina Lee is here in London for a look at how Europe is performing. Justina.
Good morning, Anna. Now, just as Winnie was saying, it's another positive day, kind of as tech optimism continues to support these markets. We're seeing, the SOX Europe 600 up about 0.5%. Now, in terms of the bond market, we're continuing to see a bit of easing in terms of short-end bond yields as traders continue to reprice the chances of an ECB rate hike in June a little bit lower, kind of with oil prices slipping a little bit. Now, of course, the focus here is still on the UK. Now, we got some positive UK GDP numbers today, but it seems like investors are looking through that and still focused on the political picture here, with the pound kind of slipping a little bit. Now, if we kind of flip the board here, of course, the focus is all on the long end gilt yields. And we see here, for the 30-year yield, which reached the highest in nearly 3 decades just a few days ago. Now, it's continuing to slip a little bit, but I think what everyone's focused on is whether Keir Starmer is going to stay on as Prime Minister, as we kind of see a few more challengers that I think investors are worried might not be as focused on the fiscal sustainability of the country, Anna.
Yeah, all about who comes next if we move closer to a new battle for leadership. Then, Justina, thank you very much. Let's have a quick look at some other markets. Then check in on your US futures, and this is the picture that we have stateside. Up by 0.3% on S&P futures, Nasdaq futures up 0.4%. That tech optimism that has been going around the globe. Yes, it was in the US yesterday, but it seemed to continue after hours in the US with numbers out of Cisco, the IPO that we had announced from the sector as well. So lots of tech positive vibes coming through. On the oil markets, let's look at where we are there. 106.15 is where we are on Brent, 101. So still over 100 on both Brent and WTI. We've seen a drip feed of some more vessels, coming through the Strait of Hormuz, but still closed, essentially, still not open. And some tensions around one Indian vessel that we are tracking very closely. The US 10-year yield pushed higher by the PPI number of yesterday, and that 30-year yield looking pretty comfortable above the 5% level. For some stocks that we're watching, here's Chloe Nelly.
Good morning, Anna. Nvidia was strong yesterday and continues to be strong this morning as its CEO Jensen Huang joined Trump on his visit to China, with Huang saying that the meetings had been excellent. And so we're seeing that enthusiasm reflected in those shares this morning, up about 2.3% in pre-market trading. It's also a good day for Cisco, which is also up in pre-market trading this morning after boosting its guidance and announcing major job cuts as it focuses on its strategy of really refocusing on AI, with analysts saying that the company is very well positioned for the AI build out, and there's really strong growth prospects going into 2027 as well. And finally, Doximity, the online networking service for medical professionals, is down with a weaker than expected forecast. There, the problem was that AI investments have been really pressuring earnings, and there's actually also quite a lot of low visibility on the amount that pharmaceutical clients are willing to spend on advertising. And so we're down very significantly this morning for Doximity, more than 20%.
Thanks, Chloe. Chloe Melly with those stocks in focus. And coming up on the programme, we'll get a closer look at US-China relations. Lizzie Galbraith will be with us from Aberdeen in just a moment. And later this hour, BlackRock's Wei Li will be with us to talk about the implications of a Walsh-led Fed. Much more to come on that subject. But back to our top story. Let's go straight to Beijing, where Presidents Trump and Xi lay out their visions for US-China relations.
When there were difficulties, we worked it out. I would call you and you would call me, and whenever we had a problem, people don't know, whenever we had a problem, we worked that out very quickly. We're going to have a fantastic future together.
A stable bilateral relationship is good for the world.
China and the United States both stand to gain from cooperation and lose from confrontation. We should be partners, not rivals.
We'll add to that the White House has been saying in the past hour that the leaders discussed increased trade in agriculture and in oil. Bloomberg's Anne-Marie Hordern is live on the ground for us in Beijing and joins us now. Anne-Marie, good morning to you. So a lot of the set-piece events, the big meeting having taken place, we've seen headlines on oil and agriculture. What stood out to you?
Yeah, certainly that's going to be the big win for this White House, being able to get some of these massive purchasing agreements from China when it comes to agriculture, things like beef and soybeans. And I would say as well, in terms of the White House readout, they also talked about Iran and how both of these countries agreed that the Strait of Hormuz should be open. But what's very telling to me, Anna, is that the White House readout does not mention Taiwan. And while this meeting was taking place at the Great Hall of the People, after really a very warm welcome with a lot of pomp and circumstance between President Xi Jinping and President Trump, what you had is President Xi Jinping or China state media releasing a readout while the meeting was still taking place, talking about Taiwan and how if this relationship, this delicate relationship, is not managed well, it could mean conflict or danger between the bilateral relationship between Washington and Beijing. And this is really one of the sharpest we've heard from Xi Jinping when it comes to Taiwan, and a warning really to the United States. And I think it's very telling that while the meeting was still taking place, this is the narrative, especially to a domestic audience, the Chinese wanted to push. Meanwhile, the White House readout didn't mention Taiwan at all.
Yes, indeed. The White House not mentioning that. I mean, we had President Xi talking about the Thucydides trap, which, not to dive too much into the Greek, Anne-Marie, seems to be a reference to him not believing, and he said this for some time, him not believing that it is inevitable that these two nations come to clash with each other. That was the tone, I suppose, that he was trying to set at the beginning. There is not an inevitability about that.
That's the first question he brought up when the two sat down for that bilateral meeting. And really this idea when it comes to the Thucydides trap is about the risk, the brewing conflict that can emerge when you have a rising power at the same time already dealing with an established power. And he posed it as a question really to President Donald Trump. Can these two massive economies avoid that trap and avoid conflict? And I think that sets the tone for this entire relationship. It is about managing that competition, which clearly the United States wants to do. A big part of this trip is to really extend the détente that the two had reached. That goes until October. Key focus for the United States for that is getting their hands, of course, on rare earths. And for China, it's getting their hands on more advanced semiconductors.
Yeah, absolutely. We heard some analysis earlier talking about how this was all about rare earths and all about oil. Anne-Marie, thank you very much. Anne-Marie Hordern joining us there from Beijing. And for more coverage of that visit, of that state visit of President Trump to China, you can go to the TLive blog, TLIV Go, on your Bloomberg terminal, and you'll be able to follow along with the day's developments. Joining us now with some analysis, Lizzie Galbraith, senior political economist over at Aberdeen. Lizzie, good to have you on the programme. Thank you very much for joining us. What's your first response to the headlines we've had out so far? A little bit of movement perhaps on oil, on the amount of oil that China will buy, although China hasn't said so yet, but the White House has been saying so, and maybe on agricultural products. That sounds quite usual for these kinds of meetings. What stood out to you?
Yeah, I think you're right. It has largely, I think, so far been in line with our expectations in that we've seen some progress in announcing deals or reverting back to previous deals in areas that are outside the areas of strategic competition that the US and China continue to try and manage. Some obviously positive signs when it comes to those purchase agreements. The proof is always going to be in the pudding with these sorts of things. It's whether or not both sides can actually meet these commitments that they make, but it is obviously a positive that we're in this position that we're kind of seeing at the moment, where both sides do seem to have been able to stabilize that relationship and be able to return to a sort of a steadier footing after the turbulence that we saw last year.
Yes. And what about the mention or lack of mention of Taiwan? The Chinese have mentioned it, and they've said that there's the risk in the relationship that if that relationship around Taiwan is mishandled, that there could be clashes between China and the US is the implication. And yet the US has not mentioned Taiwan in its readout. What do we make of the latest lines there?
I think this is, again, an illustration of that continued strategic competition between the two that really isn't going anywhere. This trip is largely around sort of resetting, recalibrating some of those guardrails, trying to restore some of the baseline trade levels that the US and China tend to enjoy when relations are good. But it's never going to be about being about kind of settling those big structural challenges that relationship faces, particularly on foreign policy, where US and Chinese interests are likely to remain kind of mutually incompatible for the next years, decades longer. It was never really going to be a summit where I think there are high expectations of a major shift in policy in either direction on that front. It's possible that we're not done yet. It's possible that maybe some statements to the camera are made before we see President Trump depart. But I think it is largely telling of that ongoing strategic competition that we'll continue to see the two sides take forward, even as their baseline relationship appears to be in a more stable position at the moment.
So we shouldn't necessarily then, Lizzie, you think, expect some sort of grand bargain or reset of the relationship. Some have pointed to moves in the Middle East and suggested that the US has now, combined with what's been going on in Central America as well, more control over global oil flows, and that allows them to take the battle to China around rare earths. Should we expect the sort of industrial politics to come to the fore?
I think in a way, we're already seeing that. We are still seeing, both sides try to shape their supply chains, try to shape their economic development policies in ways that will bring them long-term strategic benefits as this competition kind of continues to develop over time. So I think that's still there in the background. That's not going anywhere. What we saw last year was that neither side really liked the consequences of that competition really coming to the forefront of their relationship. They're more than happy to take a step back and to cool things down. But we are going to still see, critical mineral supply chains be a really key aspect going forward for both sides. And of course, technology competition, particularly in advanced AI, is going to be a factor as well. So that's going nowhere. We're still expecting that to be a major feature of policy development going forwards, and that with it brings new strategic opportunities as well as countries like the US look to diversify their supply chains and look for alternative sources for some of these materials that the Chinese are currently so dominant in.
Lizzie, thanks very much. Lizzie Galbraith of Aberdeen with the analysis of the Trump-Xi meeting so far. Now to other top stories trending on the Bloomberg terminal this morning. Kevin Warsh was confirmed as Fed chair in the slimmest margin in the position's history. The 54-45 vote reflects polarized politics in Congress as Democrats fear Warsh will bend to President Trump's demands to rapidly lower interest rates. A UK naval group says a commercial vessel was taken by unauthorized personnel at the entrance to the Strait of Hormuz and is now headed for Iranian waters. This comes days after Iran laid out an updated process for ships seeking to cross the vital waterway. Burberry disappoints investors. Shares are down after it issued a cautious outlook for this fiscal year, warning geopolitical and economic uncertainty may hurt shopper confidence. Burberry did say it expects momentum to continue after like-for-like sales beat estimates in the fourth quarter. Tech rally, it's showing no sign of slowing down as Cisco surges with blockbuster results. More on that next.
know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Welcome back. This is Bloomberg Brief. I'm Anna Edwards, live in London. Let's move on to tech themes. Cisco extending its double-digit gains in the pre-market trading. That's after the network equipment firm boosted its full-year forecast and announced job cuts to focus more on AI. For more, let's bring in to the conversation Bloomberg's Henry Wren, who is with us on set this morning here in London. Henry, good morning to you. Let's start with the Cisco story then. A really strong rally in these stocks, in this stock after hours. What's so convincing about the story? Is it the way they are managing to pivot into the future of tech rather than the past?
Yeah, because Cisco, as we know, as a company, is a company that makes servers, switches, those old school, legacy networking equipment. But what we are seeing these days, it's more and more of those equipment are going to AI data centers, right? So what really excited the market in the post-hour trading, as we can see, it's up nearly 20%, is because it has raised its guidance for those AI-related orders. Those sales goes to AI hyperscalers. So the company is now saying that it's expecting $9 billion of orders, up from a previous guidance of $5 billion for fiscal 26. So that's why the market is getting more excited about the stock.
Right. OK. And I mean, I say this slightly flippantly, but if anyone is getting carried away with comparisons back to the dot-com bubble, then maybe this won't help, Henry. Let me ask you about the chip maker Cerebras raising $5.5 billion in, what is this year's biggest IPO for now, at least, from the tech space.
Yeah, indeed. It's an incredible story because when you think about it, we have this final IPO pricing at around 185, but initially it was around 120, and it got raised for one time and raised again. So we are talking about a 50% increase from the initial pricing range. So that fact alone just shows you how much demand this market currently have for those new AI chip companies coming to the public market. And not to mention that its IPO books is more than 20 times covered as well. The sentiment is very high. We see the Philadelphia Semiconductor Index already gaining 80% year to date. But obviously, we'll see how it trades on Thursday. But yeah, sentiment is very high.
Sentiment is high. And I know that ARM and SoftBank, according to our Bloomberg News colleagues, were trying to buy that business at one point, according to our reporting. Let me ask you about what we're seeing reported by other outlets. Reuters suggesting that the US has approved various Chinese names to buy the H200, the NVIDIA chip. This seems to be adding to positive sentiment, even though I thought we knew that the US was OK with the export of H200 to China. It was the Chinese that weren't necessarily OK with the import. So what's new here?
That's indeed the situation, yes. It's still very complicated, but the incremental information we're getting is there are about 10 companies from China that has gotten approval for the U.S. to buy those H200 chips. And those companies include the cloud providers. So we're talking about Alibaba, ByteDance, Tencent, but also some distributors, including Lenovo. So that's the new piece of information. But as you mentioned, the situation is still very complicated. For China, there are still cybersecurity concerns. There are also some concerns about whether those kind of purchase will be weakening the country's push for its own AI chip ambitions. So that's why we're not seeing so much in terms terms of buying orders coming through just yet.
Henry, thank you so much. Thanks for joining us. Bloomberg's Henry Wren on the technology beat. Gilt markets are focused on UK politics, of course. Coming up, UK Prime Minister Keir Starmer faces growing challenges as he attempts to stay on in the job. We will look at what could unfold later today. That's next. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome back. Let's check on some front pages for you then. First up, the Washington Post. Confidential U.S. intelligence analysis found that China is exploiting the war in Iran to maximize its advantage over the U.S. The assessment is said to have been produced for the chairman of the Joint Chiefs of Staff. Next up on the Wall Street Journal, AI wins for hedge funds. Firms such as Point72 and Whale Rock Capital posted strong returns in April, thanks in part to rallies in semiconductor and related equipment stocks. The Journal says these wins helped make April the best month for stock picking funds since December 1999. And finally, here in the UK, the BBC, former UK Deputy Prime Minister Angela Rayner telling The Guardian she has been cleared by the HMRC over her tax affairs. The legal development setting the stage for Rayner to potentially enter the leadership challenge to boss Keir Starmer. For more on the challenges to Starmer, the Prime Minister in the UK, of course, let's bring in Lizzie Burden, who is down at Downing Street for us. Lizzie.
Well, we're on tenterhooks here, Anna, waiting for a formal challenge. There hasn't been one yet, but the Health Secretary, Wes Streeting, was in here yesterday for less than 20 minutes with the Prime Minister. His allies say that he's expected to resign the Cabinet today and launch a leadership bid. Conveniently, as you say, the former number 2 to Keir Starmer, Angela Rayner, today announcing that she's been cleared of a tax probe. So laying the groundwork for her own leadership bid. And then there's the Mayor of Greater Manchester, Andy Burnham. He doesn't have a seat in Parliament yet. He'd need to pick one and win one. That could take weeks or months. I wonder if Labour MPs have the patience for that. But interestingly, Polymarket odds now giving Angela Rayner double the chance overnight, and she's neck and neck with Burnham now to take over from Starmer.
Lizzie, thank you. Lizzie Burden in Westminster. More analysis of markets coming up next.
A cidade estava sitiada.
Nisso, ao começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho tanya ki kon akhna ta chuara panga ko akhna lepa manjang le ngai kon mananya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City and 10:30 a.m. in London. Good morning, I'm Anna Edwards in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day ahead. Summit Day 1 underway. Presidents Trump and Xi discussing enhanced economic cooperation while CEOs meet with Premier Lee. Tech marching higher after the Nasdaq 100 set fresh record highs. Cisco results giving a boost to futures this morning. And the Senate confirms Kevin Warsh as the next Fed chair in the narrowest vote ever for the post. Let's get to the markets then, and the futures picture looks pretty buoyant, looks positive, not as positive as it did an hour or so ago though. Nasdaq futures have paired early again, so up by just 0.2% right now. There is still a lot of excitement around tech themes, Nvidia in focus with that visit to China, IPOs in the sector, the pivot from Cisco toward AI, very positive, and so all of that lifts sentiment a little bit towards the US Open into technology. Let's have a look at where we are on the oil story though. Oil prices are trending a little higher this morning, up 0.9% on the global benchmark, the Brent price, with a 106 handle. We're getting a slow trickle of vessels coming through the strait, but really nothing markedly has changed there. And so whilst we watch what's going on in China, that is still on our radar. Now, for more of the stocks that we're watching this morning, here's Chloe Melly.
Good morning, Anna. NVIDIA is in the green as its CEO Jensen Huang joined Trump on his visit to China, pointing to how important AI is going to be in this high-stakes summit. We've already heard from Huang as saying that the meetings were excellent, and so we're up about 2% for NVIDIA this morning. Moving on to Cisco, which has boosted its guidance on the back of strong AI-related orders and also announced some major job cuts as it focuses on being a really AI-driven, AI-first company. And so it's up very strongly on the back of those strong growth prospects. And finally, Doximity, the online networking service for medical professionals, is down after weaker than expected forecasts. And there, the problem is partly because it's made some really big AI investments, and that is pressuring those earnings. And so we're down more than 21% for Doximity this morning.
Chloe, thank you. Chloe Melly with a look at those stocks. Now, back to our top story. The leaders of the world's biggest economies meet in Beijing.
When there were difficulties, we worked it out. I would call you and you would call me, and whenever we had a problem, people don't know, whenever we had a problem, we worked that out very quickly. We're going to have a fantastic future together.
A stable bilateral relationship is good for the world. China and the United States both stand to gain from cooperation and lose from confrontation. We should be partners, not rivals.
The meeting between the two reportedly lasted more than 2 hours. Next on the agenda for the presidents will be a state banquet scheduled to begin in less than an hour. Back with us is Bloomberg's Anne-Marie Hordern in Beijing. And Anne-Marie, you were reminding us that we've had mixed readouts from this meeting. It lasted a long time. Maybe the two sides couldn't have identical views of what was important, but one very clearly mentioned Taiwan and the risks associated with that relationship, and the other did not.
That's right. The White House readout doesn't mention Taiwan at all. This administration clearly wants to focus on the deals potentially they can ink when it comes to this bilateral relationship. If you look through the White House readout, really what they want to talk about is how the two discussed and enhance economic cooperation, potentially how to get more American access to Chinese capital markets, as well as Chinese investment in U.S. industries. Also, Xi expressing increased interest in U.S. agricultural products, as well as U.S. oil and energy products. And then notably, when it comes to the geopolitical realm, the White House focuses on Iran and how Xi expressed that he doesn't want to see the militarization of the Strait of Hormuz, that he doesn't want to see a toll when it comes to the Strait of Hormuz, and the two agreed that Iran can never have a nuclear weapon. Not mentioned at all from the United States is Taiwan, which is interesting because Taiwan was really thrust in the middle of this bilateral meeting, because during the more than 2-hour meeting at the Great Hall of the People, after a ton of pageantry between these two officials, what we had was Chinese media putting out a readout of what Xi explained to the United States when it comes to Taiwan, and how this relationship really needs to be managed carefully, or it could lead to conflict and a dangerous relationship between Washington and Beijing.
And Anne-Marie, oil and agriculture, they seem to be the things that on the trade front have been mentioned so far. But markets get pretty excited about technology every now and again when they remember that Jensen Huang is present.
And he was present for sure. You know, we should note, and I was there when the president arrived and Xi Jinping greeted him outside Tiananmen Square in front of the Great Hall of the People, and standing behind the Treasury Secretary and the Secretary of State, Marco Rubio, was no other than Elon Musk and Jensen Huang, two individuals that actually traveled over to Beijing with the president on Air Force One. One was a late edition, picked up at the refuel stop in Alaska. No mention yet of technology, but remember, Anna, there's a state banquet tonight, and they're also going to be spending the day together tomorrow.
Anne-Marie, thank you very much. Bloomberg's Anne-Marie Hordern joining us there in Beijing. And the updates, or you can get plenty of updates on the Trump-Xi summit. It continues, of course, and you can go to the TLIV blog on the Bloomberg terminal to get more details of all that is passing between these two men and what it means for global politics and global markets. Over in Washington, Kevin Warsh is confirmed as the new Fed chair.
The ayes are 54, the nays are 45. The nomination is confirmed.
That vote was the slimmest confirmation margin ever for the top position at the Fed. Kate Ackley of Bloomberg Government joins us now from Washington. And Kate, what do we read into the fact that he was, yes, approved, but only just?
Well, it certainly speaks to our polarized times here in Washington and on Capitol Hill. There was only one Democrat that sort of crossed the aisle on this vote. That was John Fetterman, a senator from Pennsylvania, a Democrat, but who has been more independent-minded, if you might say, in recent months. So it was certainly what we had heard during his confirmation hearings was that Democrats, including Senator Elizabeth Warren of Massachusetts, just did not buy Warsh's pledge of independence, that he would be keep the Fed politically independent from President Donald Trump and other political pressures. And of course, you know, the reason that we have a new Fed chair is that President Trump was growing tired of Jerome Powell, the current Fed chair, the past Fed chair, for not lowering interest rates fast enough, as fast as what Trump wanted.
Kate, thank you very much. Kate Ackley with an update there from Bloomberg Government. Let's bring into the conversation Wei Li, Global Chief Investment Strategist at BlackRock. Wei Li, good morning to you. A couple of things for us to digest there. Let's start with the meeting that we're seeing taking place in China, and then we'll move on to the Fed. So the meeting in China, I mean, what's at stake for your portfolio, for the money that you're looking at, for the investment decisions that BlackRock is making or recommending? What is at stake in this China-US meeting right now?
Well, the meeting is taking place at the intersection of two of the mega forces that BlackRock identified. One is geopolitical fragmentation, and the other one is AI transformation. I would note that day one largely met expectation in terms of the very warm optics that we just looked at as well. But I would also observe that the $30 billion trade framework may be modest in size, but if President Xi's visit to the U.S. later this year could be confirmed, that could anchor near-term stability. And the big picture, of course, is day two, if we're going to see development on some of the tougher topics like Iran, like language on Taiwan, like AI in particular. But what is really clear is that both sides are incentivized to really kind of focus on and protect near-term stability because of the very interdependent supply chain. So that actually supports our current risk-on view.
So that geopolitical fragmentation being one of the themes that you invest around, or you're talking about investing around, Wei Li, does that express itself as higher inflation? Are we looking at a world of higher inflation as a result of that geopolitical fragmentation?
Higher inflation and higher rates likely going forward. And I would say geopolitical fragmentation is one driver of that. But if you look at AI transformation, before it can be disinflationary, it will likely be inflationary because of the greater demand than what supply can meet. And if you look at some of the other forces as well, the energy transition requiring more build out. So geopolitical fragmentation is just one driver amid a host of drivers representing inflationary pressure. This week we saw CPI, PPI surprising to the upside. And so far this year we have seen markets pricing out Fed cuts to now even looking at potentially Fed hikes. We think that it's fair that markets are basically looking at Fed staying put for an extended period of time. And that represents, I would say, a very tough trade-off facing the Fed.
OK, so that takes us to the Fed and Kevin Warsh getting that nod, getting that approval. Do you think that the market is having to rethink what we thought we knew about the Fed with Kevin Warsh taking over? Is this a new Fed with a new reaction function? Or do we conclude that actually this is, OK, yes, he'll be the chair, but he'll just be one voice and it's a group activity to set policy?
Well, he is just one vote. So that is point number one. Point number two is a lot of the dynamics that represents the tougher trade-offs facing the Fed predates him and also predates maybe even the Trump administration, because mega forces, structural supply constraints that has been really many quarters and years in the making, right? So right now we have an environment characterized by aging population and persistent wage pressure, and at the same time, if you think about the nature of supply disruption coming from the Middle East, that could weigh on growth on the one hand and pushing up inflation on the other hand. And I think that just makes it so much harder to make policy decision in this environment, which is why we see potentially more disagreements on the committee as well.
Yeah, we've certainly seen some of that, haven't we? More than we've previously been used to in the US context, so a bit more dissent. So what about the role of AI and what that does to the inflation narrative? Because Kevin Walsh has talked about that. Now, you say that AI means inflation goes up before it comes down, but this is such a new area of study, I suppose, for those trying to work out what it does to inflation. So how much conviction can we have around the effect that AI, the macro effect that AI will have on the US economy?
Well, I would say that if you look at the level of underemployment in the U.S. and also unemployment rate in the U.S., it has loosened a little bit, but still representing a very tight labor market, especially if you look at the participation rate in U.S. population as well. So all of that still points to aging population and immigration curves, making the labor market really quite tight. So for AI to actually have a disinflationary effect on the economy, it first needs to show up in the labor market. And we haven't seen that in a very meaningful way. And on the other hand, if you look at wage for some of the more AI build-out sensitive sectors, that is even more persistent than the broader wage dynamics would suggest. So the demand-supply picture in the near term pushes inflation higher, especially against the backdrop of energy constraint too. But over time, if the productivity windfall from AI integration does come through, it could bring that lower. But if past transformation is anything to go by, that takes time.
Takes time. Whaley, thank you very much. Whaley joining us there from BlackRock. Now to other top stories that are trending on the Bloomberg terminal this morning. A UK naval group says a commercial vessel was taken by unauthorised personnel at the entrance to the Strait of Hormuz and is now headed for Iranian waters. This comes days after Iran laid out an updated process for ships seeking to cross the vital waterway. Watchers of Switzerland revenues surged to a record last year. Profits will also come in higher than expected due to strong sales in the United States. The update marks a contrast to February when it said margins would be slightly lower as brands raised prices due to higher raw material costs and President Trump's tariffs. And Cisco soars in pre-market after third-quarter results beat expectations and boosted its forecast. It also announced job cuts as it focuses more on AI. Coming up, a major IPO in the works. Cerebras set to join chip-making giants on the Nasdaq Global Select Market, potentially challenging NVIDIA. That's next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Anna Edwards here in London. Let's talk about technology. AI chipmaker Cerebras raising more than $5 billion in what could be this year's biggest IPO. At least it is so far. Perhaps not likely to stay that way. Bloomberg's Neil Campling joins us now with more details. Tell us about Cerebras and what you took away from the scale and size and the oversubscription level of this particular IPO then, Neil. Oh, it looks as if we don't have Neil. We did have Neil, and no doubt we'll be trying to re-establish that connection. But that Cerebras story is certainly something to watch. Appetite for technology and anything that competes with NVIDIA in such a hot space, of course, is no doubt going to be watched very carefully by markets. And we're working our way towards a number of other big IPOs within the tech space, so we'll see if those do, in fact, come to pass. Let's check broader markets for you. We've got US equity market futures to the upside. E-minis up by 0.2%. NASDAQ futures up by 0.1%. And actually, we've seen some of these gains pairing as we've been going through this programme. I wonder if that's a lack of actual detail on any agreement that's to be done between the US and China over chips. I wonder if there was a lot more expectation that perhaps something would come through there, and we haven't seen that. We'll take a short break here on Bloomberg Brief. We'll be back shortly.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This week, leaders from the world's two largest economies will come together in Beijing, with geopolitical stability and the future of global trade on the line. Trust Bloomberg to go beyond the headlines with on-the-ground reporting, expert analysis, and real-time market reaction. The Trump-Xi Summit. Special coverage all week right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Anna Edwards in London. Now a look at what is ahead today. We have some data hitting the docket. So US retail sales and initial jobless claims out at 8:30 a.m. in New York. Lots of Fed speak today, including Stephen Myron's last interview as Fed governor on Bloomberg Surveillance. That's from 8 a.m. New York time. Plus, President Trump and Chinese President Xi Jinping continue their summit in China. They are gradually working their way towards a banquet, we understand. Let's check on the markets once again. Those US futures fading just a little, but they are still positive, up by 0.2% on E-minis and NASDAQ futures. The Bloomberg US dollar is pretty flat, watching things develop over in China, but nothing to move on, nothing to see here yet, perhaps. And the US 10-year yield, after a busy couple of weeks when it comes to inflation data out of the States, 4.45 is where we find ourselves on the 10-year yield. The 30-year looking comfortable above 5%. Let's turn to tech. AI chipmaker Cerebras, as we were just discussing, or trying to discuss with Neil, raising more than $5 billion in what could be this year's biggest IPO. Not sure it'll stay that way. Henry Wren joins us now with more. And Henry, of course, we're working our way towards some potentially big IPOs, the likes of SpaceX, Anthropic, who knows which will, what we'll get and when. But talk to us about Cerebras. This is a business that wants to go up against NVIDIA, or goes up against NVIDIA, in a specific part of the chip space.
Yes, we know that it's a company that specializes in AI inference chips. It's the one that makes chips that has compute, has memory, bonding with it as well. So as you said, it's competing with NVIDIA on the inference side of the business. And we see there are a lot of interest in these names as it goes into public market. It's priced at $185, and the price, the IPO price, has been raised by about 50% from the initial price. We will see how it trades, but for now, the interest is very high.
Yeah, I was noting that US futures seem to be fading their enthusiasm just a little bit the closer we get to the start of the US day. I wonder if this is to do with the flow of news, or lack of it, that we've had coming out of the China summit. I know Reuters have been reporting that the US administration is okay with H200 chips going to a handful of companies, but we'd heard some of that before, hadn't we? So what's new on the chip front as it relates to this big summit?
Yes, the latest report coming out says that we're now knowing that some of the identities of the companies that are trying to procure those NVIDIA chips. And we know that about 10 companies are in this process. That includes some cloud providers, including the likes of Tencent, Alibaba, ByteDance, but also some distributors like Lenovo. But the barrier is still on the China side, because the Chinese government still have cybersecurity concerns. They still have concerns about whether this move will weaken their positioning in terms of advancing their local AI chip ambitions.
And how's the rollout of infrastructure spend going for the big hyperscalers? Because we've had Alphabet having to go around the world to raise enough money in the bond markets to fund its build-out. Does that tell us something, Henry?
Yes, obviously, the build-out is still going on, as we talked about Cerebras as well, right? So the demand for those AI chips is still very high. The hyperscalers are still going on in terms of spending. So that's it.
OK, Henry, thank you very much. Bloomberg's Henry Wren. We have movement over in Beijing. Let's head back there now. They're setting up for the state banquet. Anne-Marie Hordern is on the ground. Anne-Marie, what can you tell us?
Well, and a lot of pomp and circumstance today. First, at the Great Hall of the People, Xi Jinping had a warm welcome for President Trump. And then this evening, they're going to be dining together. So this is a state banquet. And I believe the president has arrived at the state banquet. Alongside him, he is, of course, being flanked by some of the biggest American companies and their CEOs. We know that he traveled over here with the likes of Elon Musk and Jensen Huang, who are there as well at the state banquet. You can see on the video there, we're also seeing the Secretary of Defense, Pete Hegseth. Very rare and almost unprecedented that we would see a defense secretary have this meeting and travel over the president of the United States to Beijing. Some other individuals that are slated to attend the banquet this evening when it comes to Wall Street titans like the Citigroup CEO Jane Fraser. She was also on the steps this morning when Xi Jinping greeted President Trump, and also David Solomon of Goldman Sachs. Lloyd Blankfein, then the executive of Goldman Sachs of 2017, was also part of this trip when Trump made that visit nearly 9 years ago.
Okay, and some of these execs clearly a little starstruck, it seems. Elon Musk saying it was awesome to meet Xi. Anne-Marie, thank you very much. Anne-Marie Horden on the road with President Trump. More coverage of that continues on surveillance, which is ahead. This is Bloomberg.
We've reached the quarterfinals in Rome. It's been a tough year for Iga Swiatek, but Wednesday, the former world #1, reached her first semi-final of the season with a commanding win over Jessica Pegula. The Polish star wrapping things up 6-2 in the second set to secure her first top 10 win in 2026. And don't forget, you can watch all the action live daily and head on over to tennischannel.com to download the app.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Stocks are going to continue to go higher.
Do you want to be in this market? Do you want to be riding this? Yes.
This is still a market with a lot of cash on the sideline.
We're doing our best to enjoy this sort of nirvana that markets are benefiting.
There is a lot of optimism built into the market, which does create vulnerability.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Thursday, looking for a boost from Beijing. The US reportedly clearing some NVIDIA chip sales to 10 firms in China as AI chip maker Cerebras is gearing up for the biggest IPO of the year. Cisco is knocking it out of the park, delivering a better-than-expected forecast. Cisco surging in the pre-market.
I feel like right now AI is the equivalent of blockchain. A number of years ago when Overstock came out and said that they were going to be really now a blockchain company, not a furniture company, and their stocks just absolutely surged. Cisco came out, and yes, they did deliver solid earnings, but they said that they booked $9 billion of orders versus the previous $5 billion expected for the full year, coming from AI hyperscalers. This idea that they are providing the systems, the networks, for some of the hyperscalers, that alone is giving a massive boost to a name that is reminiscent and has the history in the dot-com boom.
You want to talk about the vibes? All the vibes in 99, Cisco crushing it.
Correct.
Big IPO coming up a little bit later. Had a marketed range, blasted through that marketed range and looking for a big move later this morning.
Yes, Cerebras initially was being marketed around $140 to $150 a share, came out at $185 a share. The market capitalization is something closer to $40 to $49 billion, depending on how you account for this. I keep going back to the idea of a unicorn being $1 billion. If something comes in as $1 billion, that's a discount. It's a joke. It's essentially a penny stock. This just gives you a sense of how much our benchmark has changed.
Let's talk about NVIDIA, a multi-trillion-dollar company in the pre-market, up by a few percentage points. This from Reuters this morning, reporting that the US has cleared NVIDIA to sell the H200 chips to 10 Chinese firms. What we don't know is whether China will let them in. So this is only one half of the story. And given they're in China right now, let's see if we get the other 50% of the story a little bit later this week.
There is this issue of what has actually changed, because supposedly these chips were for sale, then China wasn't buying, then maybe they weren't for sale and were blocked. The idea that every time the story comes back, NVIDIA notches another 2-3% gain gives you a sense of people's sentiment right now. Nonetheless, there is an expectation that something will come out of this, that tech will come to the forefront, that potentially there is an easing in tensions around the oil picture, at least rhetorically. The big question mark is still Taiwan, and that actually really is people's concern.
NVIDIA up in a pre-market by 2%. Anne-Marie on the ground in Beijing. We'll catch up with Anne-Marie a little bit later. For President Xi, this stood out for me. The doors to China for the outside world will only open wider. That felt to me like the issue of 10 years ago, 15 years ago. The issue of today is whether others will open the door to China. That's how things have changed in the last few years, the pushback from everybody else.
Because they've been cannibalizing the industries from Europe, from the United States, and people are saying that your policy of oversupply just isn't going to work for us based on lowering prices and putting people out of jobs domestically. What's interesting this time around is that the Chinese renminbi is on the longest winning streak versus the dollar going back to 2017.
Strength.
We've seen a real strengthening. When you take a look at the strongest versus the dollar since 2023, this isn't just lip service. This seems to be on a financial level as well. That is sending a signal that they want to be a world leader, that they want to be more of a reserve currency. That's sending bigger signals than some of the rhetoric ones.
Should we talk about the bond market?
I would love to.
And a signal from fixed income, 2s, 10s, 30s. Let's look at the long end of the curve, 30s. This morning, 5%. And something interesting happened at a 30-year auction yesterday that hasn't happened for almost 20 years. If you bought into that auction, you got a 5 handle, a 5% coupon.
Which is the first time you've seen that level being sold on a 30-year bond going back to 2007. This highlights the fact that people are looking at a new regime. It also highlights the fact that it isn't enough to really bring people in a rip-roaring way, because it wasn't a rip-roaring auction. It was tepid. Sort of the envy. I'm sure the U.S. government has a lot of envy for the likes of Alphabet that seems to be selling debt anywhere and anyhow with very low rates. Torsten Slok put out a note this morning. I thought it was interesting. Higher for longer continues. He said the parallels with the energy shocks of the 1970s are worrying. The last mile of fighting inflation is a marathon rather than a sprint, saying that given this and ongoing fiscal challenges, it seems like yields are going to be higher for longer.
Best of luck, Kevin Walsh. More on the incoming Fed chair a little bit later in the programme. Yields this morning on 30s just about unchanged at 5.03%. Coming up this hour, we'll catch up with Julian Emanuel of Evercore as big tech looks to extend a record rally. Pierre Ferragu of New Street Research as top US CEOs chase deals in China. And Eric Nelson of Wells Fargo as markets brace for a wash-led Fed. We begin this hour with stocks adding to all-time highs. Julian Emanuel of Evercore writing, it is very clear that the investing public's love affair with tech stocks is in full bloom, driven by exceptional earnings and reasonable valuations. Julian joins us now for more. Julian, good morning.
Good morning.
Let's talk about the 99 vibes. The 99 vibes are one thing, but when you write that last line there about valuations and earnings, how different is this moment to then?
Well, that's the biggest contrast, okay? Because back then, everything was a much more speculative in terms of the valuations. And look, if we go back to the benchmark of the last 3 years, stocks are higher valuation-wise. But the thing about the last number of months, particularly in the NASDAQ, is the earnings strength has been so intense that valuations have actually started catching up to earnings. And so for us, what's really happened, and also in consideration of the fact at the end of last year, there was a decided dislike of technology, which really pivoted at the March 30th low. But in a lot of ways, tech has become value.
There was the itch to rotate, and now the big complaint is the breadth is bad. The breadth is terrible. Can you see a picture ahead of you where this resolves bullishly?
Well, look, so, and the contra to that was, if you go back to the beginning of the year, there was a belief that the halo trade would be enough to take the indices higher without tech participating. That was debunked. The math tells you that at 55%, tech and NAI exposure in the index, you need that. And so there certainly is a case for medium-term bullishness. But again, like everything else, this too shall pass. We just don't think you're anywhere near that time yet.
To build on what John is talking about, do you need to start seeing the return on investment in a material way in the non-tech names in order to keep this going? You have to see some sort of revenue prospect from this in order for people to keep buying at these levels, no?
You do, but again, going back to even if you separate the issue of AI from the rest of corporate America, margin management continues to be incredibly robust. Sales volume is incredibly robust. And it's not just inflation. It's real, true demand. And yes, you can sort of tie it all back to AI, but we've had other periods in time where technology has been a driver of the economy. And again, it doesn't always end badly.
Margin management, nice way of saying they're still raking in the cash. They're still able to pass along those price increases to consumers, which is a huge problem. We see what PPI did yesterday and what CPI did the day before. At what point do you have to start getting really concerned about inflation remaining in kind of 1970s-like patterns, which is what Torsten Slok was pointing to this morning?
Right. Well, I think we have to acknowledge something here, okay, is that we do still have an inflation problem. And from our point of view, whether it's the price of hamburger or $4.50 or $5 a gallon, or the fact is that when you think about the degree of the price spike in energy that we've had and the time of this spike, we find that there's a danger zone to where, if we're talking about triple-digit oil on the 4th of July, instead of looking at the fireworks display, we are likely going to run into headwinds.
I was surprised yesterday. PPI came in much hotter than expected, following a much hotter than expected, or rather marginally hotter than expected CPI reading earlier this week, and yet yields dropped at the front end of the curve by a single basis point, not a big deal. The resistance you are seeing at certain levels in the bond market, I think, is somewhat notable, given the data we saw just yesterday.
People are looking for silver linings, and they found one in that the components going into core PCE actually brought that level down because of some of the portfolio management costs and a couple other metrics that do feed into that key inflation reading. Nonetheless, we do have an inflation problem. Even Susan Collins is talking about that. Fool me once, shame on you. Fool me twice, shame on me. That is what they're saying. So why are we not pricing in a greater chance of a hike?
Because this Fed doesn't want to hike. I think that's it right now, that ultimately this Fed really, really doesn't want to hike interest rates.
Not happening. Fed is not hiking this
So that's
year.
the 2-year dealt with. If you really believe that, What about further out along the curve, where maybe there's a bit more flexibility to price in some action?
Well, but again, that supports the idea of a yield curve steepening, and we have to face it, and it's certainly has not been a bad thing these past 6 years, except for short bursts of time. But we have started a new multi-year regime where yields on the long end are going higher, and they're going to continue.
Does
to
that
go
present
higher.
a challenge to equities or not?
In the long term, it by definition it has to. But again, the earning strength has been so profound that in our mind, we think that you're going to be okay until the 10-year yield starts nudging towards 5.
Could you ever see Magnificent Seven or just the tech sector in general with spreads trading inside of government spreads as they borrow so much money to fuel some of their spending plans?
Well, I think back to a number of years ago when I believe it was Austria issued the 100-year bond at 1%. You can't disbelieve that anything could happen in this environment.
The reason why I ask this is because we say that eventually it will be a constraint. If you get to maybe 5.5% on the 10-year yield. At the same time, we're at pretty elevated levels, and you still see different companies issuing record amounts of debt and going around the world to do so. At what point does this stymie capex plans in a more material way?
Well, what's fascinating about that, Lisa, is, again, remember, think of it as some of these hyperscalers issuing in Europe to insatiable demand, because you've got the exposure to the hyperscalers that you want, and you have it in your home currency. And frankly, part of the narrative of the last year plus has been that, in our view, you made a long-term top in the dollar, and if you don't have to worry about FX exposure, that's a bigger plus.
It's the crowding out that starts to get interesting. Just going through the numbers, there's a fantastic write-up on the Bloomberg terminal about the sheer scale of the numbers that are being issued from some of these hyperscalers. On Alphabet specifically, close to $60 billion. And the team here at Bloomberg writes that's quadruple the amount of bonds Alphabet had sold in its first 26 years of business. This is a very, very different phase for these companies.
Yeah, and they're going around the world because they're trying to diversify away from the United States before the United States starts pushing back. Nobody wants a sale to go badly, so they're going around the world, picking the coins out of the couch cushions, as some people have said, and they're trying to figure out how to create a robust market in some of these places that really...
Guys, क्रूड ऑयल में ध्यान रखना, ट्रेल भी करते हुए चलना, ठीक है, टारगेट पे पहुंचने वाले हैं। कल परसों सेल किया था, फिर कल भी रेजिस्टेंस पे आया था नीचे, एक पॉइंट ऑफ इंटरेस्ट था, मैंने कल ही बताया था आप लोगों को। ये रोकेगा प्राइस को जब तक इसके नीचे मार्केट क्लोज नहीं देता है। कल भी रोका, फिर दूसरी बार रोका, क्लोजिंग वहीं पर हुई, ओपनिंग आज वहीं पर हुई थी, थोड़ा बहुत ऊपर किया, एक ब्रेक डाउन कर दिया इस पॉइंट ऑफ इंटरेस्ट का, उसी का एक रिटेस्ट जोन है, ये रिटेस्ट कंटिन्यू चल रहा है। अब ये पॉइंट ऑफ इंटरेस्ट को एज अ वैल्यू के तौर पर मत लेना, ये अब सपोर्ट नहीं है, ठीक है। फाइनल टारगेट नीचे है आपका 9200 से 300 के बीच में, इसके नीचे जाता हुआ भी नहीं लग रहा है मुझे प्राइस आज। मोस्ट प्रॉब्ली यहीं से रिकवर आएगा अनटिल अनलेस कोई मेजर न्यूज़ नहीं आ जाती। $300 के आसपास, 300 टू 70 एंड 200, ये सारे बाइंग जोन रहेंगे मोस्टली 9300 टू 270 के बीच में। बाकी देखो, नेचुरल गैस में मेरे साइड से कोई ट्रेड नहीं बन रहा है कुछ। कल एक किसी ने लिया होगा तो थोड़ा बहुत मोमेंटम आया, वही कंटिन्यू है। एज अ मॉर्निंग पे मैंने आप लोगों को बताया था। लेट मी नो इन द कमेंट बॉक्स, अगर चाह रहे हो तो कोई और चार्ट लगा दूं। नेचुरल गैस मुझे कुछ खास लग नहीं रहा है ट्रेड करने के लिए। बाकी याद रखना, आप आज एक्सपायरी भी है क्रूड ऑयल ऑप्शन की, तो MCX में ध्यान रखिए उस चीज़ का। नेचुरल गैस की इन्वेंट्री आएगी, 5:30 न्यूयॉर्क सेशन ओपन होगा, विल सी द मोमेंटम। बाकी बुलिश था इंडियन मार्केट तो कम्प्लीटली। निफ्टी ने भी रेजिस्टेंस, मॉर्निंग पर रेजिस्टेंस पे ओपन हुआ था, सेलिंग आई कल का जो मैंने फ्यूचर का रेजिस्टेंस बताया था, फिर ब्रेकआउट हुआ थोड़ा नीचे आने के बाद फर्स्ट हाफ के एंड पे, एंड देन ऊपर ही जाता चला गया रिटेस्ट करने। अभी क्लोजिंग होते होते आया है, कल देखते हैं ओपनिंग कहाँ पर होती है। इट विल डिसाइड एक्चुअली वेयर द प्राइस विल गो इवेंचुअली। सो नेचुरल गैस के बदले गोल्ड का चार्ट लगा दें क्या, बिकॉज क्रिप्टो तो नहीं लगा सकते, मैं खुद ट्रेड नहीं करता हूँ फिलहाल के लिए, तो आई कांट डू इट। natural gas, if you compare, with the natural gas, gold, silver most probably is far better move. और कोई commodity है नहीं, जिंक, copper, aluminium. They don't move that much in intraday as well. Barely move in the intraday actually. Dollar index at 98, 98.217. बिटकॉइन वाला जो मैंने बताया था 15 मिनट का ऊपर रेजिस्टेंस बन सकता है, वो बना नहीं है, ठीक है, 1 आवर टाइम फ्रेम का ही है वो। तो 15 मिनट में वो रेजिस्टेंस बनने वाला था, नहीं बना है वो। स्टिल 1 आवर टाइम फ्रेम चार्ट इज मोर फार बेटर देन द 15 मिनट। एक छोटा सा सपोर्ट था 15 मिनट में, वहाँ से एक सपोर्ट लेके चला गया, फिर से आएगा, हो सकता है ले, हो सकता है ना ले, नहीं तो मोस्ट प्रॉब्ली 1 आवर टाइम फ्रेम के सपोर्ट को हिट करने चला जाएगा फाइनली। पहले एक बार सेलिंग आई थी, मार्केट ने हाफ ही टारगेट दिया था, एंड फाइनली इट गोज टुवर्ड्स दैट टुडे। तो क्रूड ऑयल के ऑप्शन में ट्रेड करते हैं, थोड़ा ध्यान रखना, स्पेशली अगर आप ऑप्शन सेल करते हो, वॉलेटिलिटी इज़ वेरी हाई, प्रीमियम बहुत ज़्यादा स्पाइक कर रहे हैं, और अभी शाम को 9 बजे के बाद तो और ज़्यादा स्पाइक करेंगे लास्ट 1 to 2 आवर्स में। It's a kind of a support, it might act like as a support sometimes not, ठीक है। ये कल का है, याद रखना, ये कल सपोर्ट की तरह काम कर रहा था, इसका ब्रेकडाउन हो चुका है, तो अब ये काम का नहीं है, इसको आप कंसिडर मत करियो। अब नाउ मेजर रेजिस्टेंस सपोर्ट यही है, येलो कलर की लाइन, 2000 द मेजर सपोर्ट जोन, 2000 द मेजर रेजिस्टेंस एरिया। Point of interest is a support yesterday, now it broken, so act like as a retest, market did the retest. कंसिडर मत करना कुछ, इसको चाहो तो रिमूव भी कर सकते हो, नॉट रिक्वायर्ड नाउ। रिटेस्ट तो कर ही दिया, अब और कितना रिटेस्ट करेगा, यहाँ से हटा देते हैं इसको, ठीक है, इसकी ज़रूरत नहीं है अब। लेट्स होप थोड़ा जल्दी आए प्राइस नीचे अगर आना है। एक तो यहाँ पर चिपक जैसा गया है प्राइस, पता नहीं पिछले 3-4 दिनों से मोमेंटम ही नहीं हो रहा है इस रेंज के बाहर। मोस्ट प्रोबेबली मुझे लग रहा है शायद ट्रम्प वापस आएंगे, उसके बाद हो सकती है ईरान वॉर वापस स्टार्ट हो जाए, तब चांसेस हैं क्रूड ऑयल फिर से और ऊपर चला जाए। फिलहाल के लिए मुझे लग रहा है नीचे आना ज़रूरी है एक बार, 9200-300 की रेंज में विल डिसाइड दैट लेवल, प्राइस विल गो अपवर्ड और डाउन साइड। 9200 के नीचे अगर सिग्निफिकेंटली 15 मिनट में सस्टेन हुआ तो फिर डाउन ट्रेंड थोड़ा हो सकता है, स्मॉलर टाइम फ्रेम, अदरवाइज ओवरऑल तो बुलिस ही है। बाकी अब और बुलिस होना है तो 9860-870 के ऊपर सिग्निफिकेंटली 15 मिनट टाइम फ्रेम पे सस्टेन होगा, तभी हम कहेंगे कि प्राइस कैन गो टुवर्ड्स ऑल टाइम हाई अगेन। Anybody know about the margin shortfall? जो लोग अगर ऑप्शन सेल करते हैं या फ्यूचर ट्रेड करते हैं, आप लोगों को पता होगा मार्जिन शॉर्टफॉल के बारे में। नॉर्मली क्या होता है, फॉर एग्जांपल अगर आप ओवरनाइट कोई पोजीशन लेके गए हैं और अगले दिन मार्केट बहुत बड़ा गैप अप या गैप डाउन हो जाए, या फिर ओवरनाइट बहुत एक्सचेंज मार्जिन इंक्रीज कर दे और आपने पूरा कैपिटल यूज़ कर रखा है अगर फॉर एग्जांपल, तो आपका जो ट्रेडिंग ब्रोकर में अकाउंट होगा वो नेगेटिव शो होने लगता है, इवन दो देयर इज अ मनी एंड यू आर इन प्रॉफिट, बट स्टिल दे आस्किंग फॉर मोर मनी टू प्रोटेक्ट दैट पोजीशन, भले ही आपने उसमें हैज ही क्यों ना कर रखा हो। तो उसमें ब्रोकर चार्जेस जो भी मार्जिन शॉर्टफॉल है उसमें ब्रोकर चार्ज करता है 0.05% पर डे के अकॉर्डिंग. बट आई रीड इन एक्सचेंज वहाँ पर लिखा था दैट exchange also leave a penalty which is approximately I think 0.5% if margin shortfall is less than 1 lakh. 1 lakh से अगर ऊपर है 5 lakh तक है तो 1% और 5 lakh से ऊपर है तो 5%. Now when I ask with the broker they said ऐसा कुछ भी नहीं है because मैंने कुछ कल ऑप्शन सेल करके गया था मैं कल ओवरनाइट पोजीशन एंड उसमें मॉर्निंग पे सेंसेक्स में करके गया था तो फ्लैट ओपन हुआ था 200-300 पॉइंट ओपन हुआ था बट स्टिल उसमें प्रॉफिट आया था 15-20 पॉइंट का स्टिल प्रॉफिट दिखा रहा था वो फिर भी क्योंकि आज एक्सपायरी थी तो पॉइंट होते थे बट आई मिस्टेकनली यूज एंटायर अमाउंट सो मार्जिन शॉर्टफॉल की कॉल आई थी दैट योर मार्जिन शॉर्टफॉल. So if anybody know because these two things are completely different, either broker charge 0.05% on margin shortfall or exchange leave the penalty of percent or 5%. If anybody know, let me know in the comment box. के साथ हुआ है ऐसा कभी? ठीक है, इवन दो मार्जिन शॉर्टफॉल इंट्राडे में कोई फ़र्क नहीं पड़ता. अगर आपका इंट्राडे में मार्जिन शॉर्टफॉल है, अगर आपने मार्केट क्लोज होने से पहले अपनी पोजीशन क्लोज कर दी है तो उसमें कुछ इशू नहीं आएगा. बट अगर आप उसको ओवरनाइट ले गए, मान लो आज आप ले गए, कल मार्जिन शॉर्टफॉल हो गया मॉर्निंग पे, इवन तो आपकी पोजीशन प्रॉफिट में है, आप उस दिन भी होल्ड करके चले गए तो एक दिन निकल गया आपका माइनस में ट्रेडिंग बैलेंस. सो उस केस में ब्रोकर तो चार्ज करता ही है 0.05% मार्जिन शॉर्टफॉल पे इंटरेस्ट. इस एक्सचेंज ऑल्सो लीव द पेनल्टी बिकॉज ब्रोकर से कॉल किया तो वो कह रहा था नहीं होता, धन वाले तो कह रहे थे नहीं होता, बट एक्सचेंज में लिखा हुआ है वहाँ पर कि करते हैं वो लोग. पता है तो बताना भाई मेरे को भी. ठीक है, और नॉर्मली ऑप्शन सेलिंग में होता है या फ्यूचर में अगर आप ट्रेड करते हो फ्यूचर बाई फ्यूचर सेल, या फिर अगर आपने एम टी एम यूज़ कर रखा है मार्जिन ट्रेडिंग फैसिलिटी, एम टी एफ अगर आप यूज़ कर रहे हो और ज़्यादा ही मार्जिन ले लिया एक्चुअली में तो आ सकता है ऐसा सिनेरियो कभी कभी, नॉट ऑलवेज. अगर ऑप्शन बाई करते हो वहाँ पर तो खैर कुछ फ़र्क नहीं पड़ता बिकॉज यू पे अप फ्रंट अमाउंट. किसी के साथ नहीं हुआ आज तक ऐसा? आप लोग ऑप्शन सेल नहीं करते हो क्या कोई? Pick plus to raise production quotes, continue gradual person output increase. लोग ऑप्शन बायर वाली हैं क्या यहाँ पे? का ध्यान रखना, अगर किसी के साथ अभी कभी ऐसा हो कि आपने सारा मार्जिन ही यूज़ कर दिया ऑप्शन सेलिंग में, इवन हैज करके भी गए हो, लॉस फिक्स्ड भी है अगर, तब भी अगर ओवरनाइट मार्जिन इंक्रीज कर दिया। कल भी मैं आप लोगों को बता रहा था सेंसेक्स के बारे में कि सेंसेक्स ने एक्सपायरी के दिन 10% मार्जिन इंक्रीज कर दिया अगर आप ऑप्शन सेल करते हो, स्पेशली फॉर एक्सपायरी डे सेंसेक्स में, बिकॉज ऑफ द हाई वॉलेटिलिटी। विक्स कंटिन्यूसली हाई बना हुआ है, कंटिन्यूसली 1820 के आसपास इंडिया विक्स। एंड एट द मनी के अगर आप कॉल पुट का आजकल स्ट्राइक प्राइस पे चाहे निफ्टी ट्रेड करो, बैंक निफ्टी, सेंसेक्स कुछ भी ट्रेड करो, वहाँ पर भी आईवी चेकआउट करोगे तो इट इज़ रिमेन वेल हाई, लाइक नॉर्मली 12 to 14 के बीच में नॉर्मल होता है, बट अगर आप चेकआउट करोगे एवरी डे विक्स 18 to 20 के बीच में चल रहा है इंडिया विक्स। एंड जो आईवी है एट द मनी की कभी भी एट एनी टाइम ATM's IV is approximately 18 to 22 न्यू नॉर्मल। 18 के नीचे तो जाता हुआ दिखता ही नहीं है बिल्कुल भी, चाहे आप पहले दिन ट्रेड करो या फिर आप चाहो तो डायरेक्टली एक्सपायरी वाले डे ट्रेड करो। नॉर्मली एक्सपायरी वाले दिन तो आईवी हाई होती है, दैट इज़ नॉर्मल फिनोमिना, बट फर्स्ट डे भी अगर आप ट्रेड करोगे, कल की एक्सपायरी में भी ट्रेड करोगे लाइक सेंसेक्स में, तो वहाँ पर भी आईवी वही 18 to 20 के बीच में ही रहती है। 18 के नीचे आ ही नहीं रही है बिल्कुल भी आईवी, तो फेयर काफ़ी ज़्यादा है, क्लियर साइन। वो ऑप्शन सेलर को बेनिफिट भी करता है, बिकॉज जितना ज़्यादा हाई आईवी होगा उतना ज़्यादा प्रीमियम पे आप सेल कर सकते हो उस ऑप्शन को, चाहे वो कॉल हो या पुट हो। और अगर गामा जीरो हुआ तो गामा एक्सप्लोड होने के चांसेस कम है, बहुत बड़ा स्पाइक सडनली आएगा, चांसेस आर वेरी लेस। नेचुरल गैस के बदले कुछ और चार्ट लगाते हैं, मज़ा नहीं आ रहा नेचुरल गैस में ट्रेड करने में, उतना मूव भी नहीं आ रहा है, कुछ सडनली मूव कर जा रहा है, नॉट वर्थ टू टेक रिस्क इन नेचुरल गैस। फिर इसका टाइम फ्रेम कम कर देते हैं, कैसा रहेगा।
Negotiating a nuclear deal with Iran is a waste of oxygen. These people long ago made a strategic decision to get nuclear weapons. There is not a single piece of evidence in 47 years that they've given that strategic objective up. They have pursued it in a variety of ways. They've lied, they've cheated, they've violated every agreement they've signed. They've demonstrated their willingness to do thinking outside the box to get nuclear weapons, including building a replica of the North Korean reactor at Yongbyon in the Syrian desert, fortunately discovered and bombed by the Israelis in September of 2007. And everybody has talked for years about their uranium enrichment capability, ignoring the fact that the spent fuel at the Bushehr reactor, built by the Russians on a Siemens base, has now accumulated by Russia's own statements spent fuel equal to, using calculations from the International Atomic Energy Agency, the ability to manufacture 200 plutonium nuclear weapons. So you can talk about uranium enrichment till the cows come home. It doesn't solve the problem of the plutonium in the spent fuel.
गैस में ना टाइम फ्रेम कम कर देते हैं, 5 मिनट में चलते हैं, 15 मिनट में कुछ खास बन नहीं रहा है, या फिर 30 मिनट टाइम फ्रेम करना पड़ेगा. 15 मिनट नॉट वर्थ, देयर इज नो सपोर्ट रेजिस्टेंस visible in 15 minute वो heavily. अब 5 मिनट में या 30 मिनट में ही ट्रेड करेंगे अब नेचुरल गैस में. 15 मिनट इज नॉट वर्थ इट. फाइव मिनट में तो कंटिन्यूसली गिर रहा है नेचुरल गैस. नो, नॉट लुक्स एनी रिकवरी ओवर हियर. बाकी ये कुछ एक्सपेक्टेड सपोर्ट स्मॉलर टाइम फ्रेम पर ही है, ये कोई हायर टाइम फ्रेम नहीं है, ध्यान रखना। कि क्रूड ऑयल फिर से ओपन इक्वल टू लो कैंडल तो नहीं है, एक बार चेक करेंगे। नहीं, ओपन इक्वल टू लो नहीं है, नॉर्मली कैंडल है। अब यहाँ पर नया बेस तो नहीं बना रहा, चेक करना पड़ेगा। ट्रेल करना, दोबारा मत सेल करना ऊपर से सेम रेजिस्टेंस एरिया पे। अगर आप फिर से कल के रेजिस्टेंस पे आ गया तो फिर चांसेस हैं कि एक बार फिर से 9860 को टच करने चला जाए, हाई लेवल पे चला जाए वापस टुवर्ड्स दिस एरिया। लगता है इस रेंज के अंदर कुछ ज़्यादा ही वो आ गया।
In multiple directions, software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Record highs in yesterday's session, record highs this morning, and it's some weighted rally up by 0.2% on the S&P. Likewise on the Nasdaq, some decent news out there. For the tech stock trade, Cisco absolutely crushing it. We've got an IPO coming to market later, Cerebras, way above the marketed range. They're the 99 type vibes, but as many guests have already pointed out this morning, that's where they end. Valuations, earnings, pretty powerful stuff.
The earnings are actually outpacing the valuation gains, and that's the reason why people say, yes, Cisco might be the poster child of 2000, but it is not the poster child of 2026, at least not in a bad way, in a good way, because now they're booking revenue from hyperscalers, and this shows that they're able to recreate themselves in the guise of a modern company, and that is what people are pointing to. Not a lot of fear out there, frankly.
That's the stock market. Let's turn to fixed income, where maybe a bit of fear is brewing. just a little bit. 5% on 30s at the front end of the curve, around 4%. Hot CPI, hot PPI. Under surveillance this morning, shifting leadership at the Federal Reserve.
The chair of the Federal Reserve has a lot of influence. The chair sets the agenda, what are the topics we're going to talk about. But when it comes down to a vote, the chair is one of 12 voters. And so a new chair coming in, whoever the chair is, whatever the environment is, will have to persuade his or her colleagues that this is the best course of action.
So here's the latest this morning. The Senate confirming Kevin Walsh as Federal Reserve Chair in the slimmest vote ever for a head of the central bank. Eric Nelson of Wells Fargo writing he will clearly face opposition from much of the committee on...
Right, it's become a little more fashionable to talk about that. It's key to keep in mind, though, that for the vast majority of this Federal Reserve, just doing nothing is tightening, right? Rates are above neutral for most of this committee. So the market may be a little bit ahead of itself in pricing rate hikes.
Well, let's talk about that. So right now, 397 on twos. So you're trading just above the upper end of the policy rate at the Federal Reserve. Just above it. I wouldn't say it's the base case of a lot of people right now, that at least I speak to, that they expect rate hikes. How high is the bar to hikes?
I think it's quite high. I think if the Fed is going to hike, it's going to take them a very long time, and it's going to take a couple more things. One being inflation expectations, and that's out the curve, not just at the front end of the curve, right? Those really need to perk up. And, I think also you need to see very clear improvement in the labor market, not just relative stabilization. But again, I think, this is a Fed that if they're going to hike, they're going to be way behind the curve, and it's going to take many months, and rather than something that's going to be proactive tightening.
So then why wouldn't you just sell the long end if you're seeing all of this capital markets activity? You're saying that this is a somewhat restrictive Fed funds rate. A lot of people in the market would beg to disagree when they're getting IPOs and different mergers getting done. You see the incredible animal spirits coming back, the consumer performing better than many people expected. Where is this restrictiveness of which you speak?
That's a great question, and I think if you look at the market reaction to the last two inflation reports, let's zero in on the yield curve. The yield curve actually steepened a little bit on some of these very hot inflation prints. That's unusual. It's not supposed to happen, and that I think is a function of the front end being relatively pinned with hikes being unlikely. Let's go back to October 2023. Think about the bear steepening we had in the yield curve back then. The Fed basically said, the market's doing the work for us. We don't have to raise rates because the long end of the curve is actually increasing. We could see something similar this time around if that's what the market does.
Is this something that you think is feasible for this Fed, given the focus on the 10-year Treasury yield from one Scott Bessent over at the Treasury? I mean, there's this question of, are they going to allow this kind of tightening, given that it disproportionately affects the areas of the economy that haven't gotten off the back foot, which is housing and a lot of mortgage payments?
Well, they may not have a choice, right? I mean, if they're not going to, if inflation is going to stay perky and unemployment is going to be stable and the back end of the curve moves higher, they can't do much of anything unless they're going to say, oh, we actually need to raise rates, right? So that's going to be the release valve until otherwise proven otherwise.
This from BNP Paribas yesterday. 5% not a ceiling. Went on to say, for yields to stop pushing higher, we think the Treasury will need to deliver something clear in the form of guidance that suggests coupon supply in the long end will be either explicitly or implicitly decreased. Someone will have to step in. This move in yields that we're seeing, I agree with you, it was notable. Curve steepened. Yields at the front end of the curve actually dropped a single basis point. That's the market convinced of a dovish reaction function, an asymmetrically dovish reaction function at the Federal Reserve, that they're willing to ignore hot inflation. I don't think it's the market that welcomes it, hence the sell-off further out along the curve.
Yeah, is this essentially the market begging from some intervention from the Treasury? This is the speculation that they're going to issue significantly more of the debt on the front end of the yield curve. We haven't seen that yet. Is this sort of the invitation? Now is your time. Show us what you got.
This is what people are talking about. You bring down the balance sheet, because apparently this is what Kevin Walsh wants to do. It all gets issued at the front end of the curve. Rates have to be pinned to the floor, more than they otherwise would be, and the channel where this really plays out is the FX channel, and the dollar gets hammered. Now, that's just a theory. Do you subscribe to it?
Not hammered, but can it weaken a little bit? Yeah. And I think as long as inflation is rising, growth is stable, and the Fed is doing nothing, the dollar is going to stay under pressure, especially against some of the high yielders, high carry currencies. Now, at some point here, again, certainly if the Fed were to actually raise rates, that would completely change the game. But also, there still are some left tail risks or some downside risks that are out there. Some of the credit tightening that we're seeing behind the scenes in private markets. I think this is a market that's increasingly pricing in rate hikes, positioned for higher rates across the curve, especially at the front end.
Yep.
So let's not forget that there are still some of those risks on the other side of the spectrum.
Eric, it's good to see you. Thanks for dropping by. Appreciate it. Eric Nelson there of Wells Fargo. Up next, we'll catch up with Paul Quincy of JP Morgan Asset Management, the former senior White House trade advisor Kellyanne Shaw, Eric Najarian of UBS, and Mona Mahajan of Edward Jones. The second hour of Bloomberg Surveillance just around the corner.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The economy is really strong.
What we're seeing is a narrow foundation to growth.
We're in the early innings of what could be a really problematic path for inflation.
That longevity of the inflation myths probably starts to affect the psychology of consumers.
The brunt of the pain has not yet been felt.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your price action of scores look like this. All-time highs on the S&P, added some weight to the rally, up by 0.25% on the S&P and on the Nasdaq. The tech trade bouncing back, in this bond market isn't stopping it. 2s, 10s, 30s. 2s around 4%, 30s around 5%. The first fixed rate we've seen at a 30-year auction, going back almost 20 years. Things are changing in the bond market, not just stateside, but worldwide. More economic data later this morning, 8:30 Eastern Time. We will get jobless claims. You will also get retail sales. An important read on the consumer and just how much spending that consumer has been doing.
Are they absorbing the price increases that we're seeing in CPI and PPI reports? Can they continue to absorb this inflationary backdrop that we continue to talk about and that you see priced into bond yields? Ultimately, the answer has been yes for most of the readings. And so is there some sort of contradiction with the idea of this roaring bull market and an inflationary backdrop and nothing on the horizon that potentially could stop it? How much does that tension become something recognized as a risk versus something that can persist for the foreseeable future?
Two-speed economy. Chris Ferrano-Strategas put it well on this program. This is not a consumption-led rally in the equity market. It's a tech investment-driven rally in the equity market. And if you based your equity market thesis right now on consumption trends and lower income groups in the US, you'd be aggressively short equities. The problem is right now that the equity market is made up of some massive tech firms that contribute to a massive weighting in the S&P 500, and those companies are doing tremendously well. You base it on that, you'll be aggressively long, and that's what the market's been doing.
And they've been right, and they've been seeing semiconductors lead, and you talked about bad breath. I know, insert your bad breath joke here, but that is what you're seeing right now in this rally, that only 46% of the S&P 500's members reached above their 50-day moving averages. That is the fewest in a month, even as we reach new high after new high. It is a handful of stocks that have been the beneficiaries of this incredible groundswell of infrastructure spending and the profitability stemming from AI.
Should we talk about the vibes?
I would love to.
The 99.5 Cerebras AI chip maker. What was the range over there for that IPO?
It was supposed to be 140 to 150.
Came in at 185, right? That's some pretty powerful stuff. Cisco. People remember Cisco back in the good old days, or rather the bad old days in the early 2000s where things went the wrong way. Cisco crushing it. Really strong forecast. Stock is surging in the pre-market.
It's funny, when we talk about the 2000s, I remember when it used to be a cautionary tale. Now people are saying, well, some of the winners back then actually ended up being the winners today. It just took, 2 decades of doing nothing. So, people can look at this on either level. Cisco coming back, it's still alive and kicking and actually benefiting from the latest tech trend, the AI boom. Nonetheless, people are concerned about how much capacity there is to absorb the IPOs coming down the pike. Cerebras really highlighted how much demand there is, how oversubscribed it was, pricing at $185 a share, as you mentioned, for a valuation of $40 to $49 billion, depending on how you calculate it. Does this pave the path for SpaceX, for OpenAI, for Anthropic as they continue to raise money in the private market?
Yeah, that's the biggest IPO of the year so far.
Correct.
Because later this year you might see some even bigger IPOs, not once, not twice, but maybe 3 times. Equity futures right now in the S&P, positive by 1/3 of 1%. Coming up this hour, Paul Quincy of JP Morgan Asset Management, with stocks adding to record highs. The former senior White House trade advisor, Kellyanne Shaw, on President Trump's meeting with Xi Jinping, and Mona Mahajan of Edward Jones after the Senate confirmed Kevin Warsh as the next Fed chair. We begin this hour with stocks edging higher as tech continues to fuel the record rally. Paul Quincy of JP Morgan Asset Management writing, earnings are booming with AI and semiconductors driving profit expansion, not just in the US, but across regions through the broader supply chain. This is a good time to diversify. Paul joins us now for more. Paul, good morning.
Good morning.
Diversify the what or diversify the where? Because it is different.
Both. I think diversification in terms of style. So think about value as well as growth, and diversification in terms of region as well. Think about the rest of the world as well as the US.
Because region right now, I'd get excited about South Korea. I'd be diversified the where, but not the what. What are you interested in beyond just the AI tech trade?
Well, South Korea is a couple of stocks, not a region. So look, I think, first of all, the tech trade itself, you can't ignore it, obviously, and you can't just dismiss it. And yes, we see these warning signs. One of my portfolio managers told me she was called by her college-age son and asked about last week, is it a good time to start buying memory stocks? You see incredible interest in these ETFs booming. Those are things that worry. Those of us that have been around for a long time, but when you look at the fundamentals, they're incredibly strong. And history tells us that these kind of moves go on until, first of all, things get expensive. Secondly, volatility starts to pick up. That's a real warning sign. And thirdly, the earnings revisions peak. That's when you've got to really watch out. And that's not yet what we're seeing when it comes to semiconductors. So on the valuations, sure, on things like price to book, price to sales, multiples are getting up there. But the earnings multiples are still, for many of these stocks, still single digit. And that's true in the US, it's true in the rest of the world as well. So a mixed picture there. Volatility absolutely going up. You're getting enormous moves every day in both directions. That's a warning sign. Earnings momentum doesn't seem like it's peaking. You just mentioned Cisco. Every data point we've seen in the last few weeks just fuels the fire. Things are getting better, driven, of course, by, at the root cause of it, the frontier models inflecting, hyperscaler investment going up every time you look at the numbers. That trend hasn't yet changed.
Just to add to your fear, my 17-year-old son came to me on Tuesday after the 0.7% drop and said, "I bought the dip." And I said, "Oh, dear Lord." But to that point, how do you diversify from something that is profoundly existential and rooted through every valuation of every company? It's rooted in the bond market. It's rooted on growth expectations and productivity. What does it mean to move away from that when that seems to be increasingly embedded in people's economic and financial expectations?
Sure. Well, I'll give you an example. So we've seen investors looking a lot at international value strategies in the last couple of years. So international value is diversifying about as far away from technology and Magnificent Seven as you can get, right? So it's geographic diversification and it's style diversification. And you can look at you can put together a portfolio of international value stocks, pay around 11 times earnings. They're decent companies. They're not growing that fast. Tech is it's something like 3 or 4% of that type of portfolio, and you haven't had to sacrifice returns. So you've made 40% in the last 12 months from international value, 25% type compound return over the last 3 years. It's actually significantly better than the S&P. Now, I don't think that's a realistic expectation looking forward because the starting point is higher now. But the point is there are other ways to make money in world stock markets. Our research team covers 2,500 companies, and not every one of them, their entire fate rests on AI.
How much is it a corporate story and how much is it an FX story at a time when a lot of people are expecting the dollar to weaken?
The dollar weakening, we tend to sort of look at the world bottom-up, company by company, so I always prefer to get excited about the corporate story rather than relying on the currencies. But yeah, currencies played into that a little bit. But no, it's been much more a corporate story. So, for example, the European banks went from uninvestable to solid companies. You made 5 or 6 times your money in a few years. Energy stocks, written off a year ago, now their earnings are booming. So there are just other ways to make money in global stock markets. And I think it's at a time like this when all the attention is in one place, it's really worth remembering that.
Can I throw another asset class at you? Started with FX. I want to throw bonds at you as well. Fixed income feels a little bit untethered right now. Looking at Japan, yield levels we haven't seen since some maturities started in the late 1990s. In Germany, at any given time, yield levels we haven't seen since 2011. You've seen the stats coming out of the gilt market in the UK, highs of the year stateside. What do you think is developing in there? And is that a challenge to your asset class in the equity market?
Well, we have enough challenge keeping up the 2,500 companies that we're looking at without worrying too much about what's going on in the bond markets too. But we have to be aware of it. I'm old enough to remember the crash of '87 when no one cared about bond yields until they did. That was 6 months into my career as a portfolio manager. So that was a learning lesson right there. Look, we're a long way from that kind of extreme, right? So, but what we do, our observation about the economy is when we look at earnings and corporate profitability, it's incredibly strong, but it's very concentrated. So we're going to see earnings in the US this year up mid-20s now, our analyst estimates. That's up 4 or 5 points from where it was just a few weeks ago. And yes, it's broadening beyond the Magnificent Seven.
Yeah.
So the 493 are going to be up close to 20% this year. But it's still tech. So if you take tech out, and also energy, which is obviously something different as well, you've got around 8% earnings growth. That's okay, but that's not a boom. The boom is AI. So from a bottom-up point of view, the economy looks okay, reasonably strong, but all the excitement, all the inflationary pressure, it's in the AI space.
Your asset class, though, is in a competition for flows. If I can sort of boil it down to that, you've identified a problem, concentration. I'm identifying an asset class that's offering some real income now in a way that it hasn't for a number of years, in any given place, in any given time. And I'm trying to understand whether you would see that as a reflection of a better profile for growth looking out, yields higher, curve steeper, or whether you see that as competition for flows that would otherwise go into your asset class because of the concentration risk.
Yeah, sure. There is a little more competition, right? It wasn't hard to choose between stocks and bonds when bonds were yielding 2%. We went through this long period after GFC in which bond yields were just incredibly low by any kind of historic standard, and it was kind of hard to get too excited about bonds back then. We've gone from extremely low to what our fixed income team think are more sort of normal, typical levels, so it's fine. It's not yet in the competition stage.
We've seen incredible returns, double-digit returns for a number of years now, and people are wondering whether we're entering a time of more tempered returns. Are you expecting to prepare your clients for more 8 to 10% returns on a forward-looking basis versus, the 20-some-odd% that we've seen recently?
Yes, I think that's very reasonable. So why such great returns? Obviously, fantastic earnings growth. We think that's going to continue, but at a slightly slower pace. So as we think about the next 5 years, our analysts get to around 10, 11% earnings growth a year for the S&P 500 companies. That's pretty good, but it's not 25% we're getting this year. So, and then on top of that, multiples, they've been going up at a modest rate. They're at the kind of high end of the range. That doesn't terrify us, but it's hard to imagine multiples going up a lot and building that in as part of your returns. S&P is trading around 21 times. We would think something like 18, 19 times. So it's a little bit high. It's not crazy, but I wouldn't build in from here multiple expansion. So it's all about earnings. It sort of always is, but even more so than ever when you're starting at, paying a pretty high price.
I was trying to attempt to get Paul to give Bob Michael some love on the fixed income side.
Well, I mean, not really. Although he didn't say that it was true competition. At the same time, he seemed to signify exactly what Bob's been saying, which is he doesn't see runaway bond yields because of the underlying weakness in certain parts of the economy.
Paul, it's good to see you. Thanks for being here.
Thank you very much.
Thank you, sir. Paul Quincy there of JP Morgan Asset Management. Stocks near session highs, up 1/3% on the S&P, with an update on stories worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. President Trump and Xi Jinping wrapping up comments at a state banquet in Beijing. Trump praising the extremely positive and productive conversations, emphasizing his long-standing personal relationship with the Chinese leader. Trump extending an invite for Xi to visit the White House in September. Nvidia shares rising in the pre-market. The U.S. reportedly clearing several Chinese firms to buy the company's H200 chips. Reuters reporting companies including Alibaba and ByteDance are approved, but deliveries are stalled. And Cisco shares rising in the pre-market. The company reporting fourth quarter guidance, topping estimates by nearly $1 billion. Cisco also announcing plans to cut almost 4,000 jobs as part of a restructuring to focus on AI. And that is your Bloomberg brief. John.
Chuck Robbins just absolutely crushing it. What a report. An earnings season for Cisco. The stock is up by 16%. Up next on the program, optimism in Beijing.
I want to thank President Xi. It is my honor to extend an invitation to you and Madam Peng to visit us at the White House this September 24th.
Anne-Marie on the ground in Beijing joins us next. Plus, we'll catch up with the former senior White House trade advisor Kellyanne Shaw, live from New York City this morning. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Live from New York City this morning. Good morning to you all. Equity futures right now in the S&P 500 firmer by 1/3%. On the Nasdaq up by 0.28, adding some weight to a record-breaking rally. Thank you to two names this morning. Cisco in the pre-market surging 16%. Fantastic numbers. Great guidance coming from Chuck Robbins. Some job cuts, a shift to AI, all the stuff that investors want to hear right now is helping that name this morning. Nvidia also higher by 1.5%. I think we need some more clarity on what is going on here. A Reuters report earlier on this morning suggesting that the US has basically given Nvidia clearance to sell H200 chips to 10 Chinese firms. So they are export licenses. We also need to figure out whether China will allow those companies to import said chips into China. And that's where I think we lack some clarity still today.
Yeah, what's different? Because we heard about the H200 chips licenses for NVIDIA being sold. Also curious to understand exactly what some of the people back in Washington, D.C. will say. We were talking with Eddie Fishman yesterday, who said that the people in Washington who had to deal with national security were very concerned about Judson Wong joining President Trump on this trip. And now I just wonder if there's going to be sort of a pushback on both sides as well.
Nvidia in the pre-market higher by 1.5%. Under surveillance this morning, some optimism in Beijing.
I want to thank President Xi, my friend, for this magnificent welcome. And it really was a magnificent welcome. We had extremely positive and productive conversations. It is my honor to extend an invitation to you and Madam Peng to visit us at the White House this September 24th, and we look forward to it.
So here's the latest this morning. President Donald Trump extending an invitation to the Chinese President Xi Jinping, the two leaders participating in a state banquet following discussing trade and Iran last night. Anne-Marie has the latest in Beijing. Hey, Anne-Marie.
Hey, John, good morning. What you're seeing right now is just absolutely warm ties, optimistic praise Xi Jinping has regarded in terms of President Trump and this toast this evening, as well as from President Trump and extending a state visit to President Xi Jinping. The last time he was in the United States was in 2023. That was on the sidelines of the APEC summit. He met with President Biden, of course, after the whole debacle with the Chinese spy balloon. But he hasn't had a state visit since 2015. Of course, this would come as well ahead of the midterm elections. So potentially a delicate matter for this White House. But I will say it's almost shocking to see the showering of praise and the warm relationship between these two leaders. Would you have guessed that more than a year ago, we were in this tit-for-tat trade war, export controls, what to do with highly sensitive AI technological chips, what was happening in terms of Chinese purchases of energy and agriculture, the sky-high tariffs? All of that seems to be unwinding during this summit, during this trip. Of course, there's a lot of still questions to be answered. They're going to have another day tomorrow. I think top of mind for most observers is going to be what the president says about Taiwan. While the bilateral meeting was happening today, we had a readout that this was the biggest issue that Xi Jinping brought up in the meeting and said if it's mishandled, it can mean a dangerous conflict between the United States and China. When you look at the White House reading, there was no mention of Taiwan.
AMH on the ground in Beijing. Anne-Marie, thank you. To build on this conversation, the former senior White House trade advisor Kellyanne Shaw writes the following. We have a long way to go in terms of navigating the future of US-China relations. Many of these conversations will continue well past September when the two leaders meet again on US soil. Kellyanne joins us now for more. Kellyanne, welcome to the programme. Anne-Marie has alluded to this a few times, that this leader in China has taken a more assertive stance on Taiwan at this meeting. With that in mind, how sustainable is this more stable phase of relations between the two countries?
Yeah, good morning. I think this is the most highly anticipated leader-to-leader conversation of the year. Now, certainly there have been a number of mentions of Taiwan, predominantly on the Chinese side as part of the readout. And this was some of the fear on the U.S. side going into this meeting, that we might see President Xi lean on President Trump to get some sort of concession when it comes to Taiwan. But what I'll say about Xi's comments is this is not unusual. And I think back to the last phone call that the two leaders had, the Chinese readout was almost entirely focused on Taiwan and weapons sales. It is not unusual for the Chinese to emphasize this. The U.S. on the other side is basically not saying anything at all as part of the formal readout. And then you had Secretary Rubio just a few moments ago talking about the fact that the policy on the U.S. side has not changed. So while this will continue to be a pressure point, and it's one that we're watching very closely, I don't think anything has shifted, at least not yet.
Well, let's talk about things that might be shifting right now. The Chinese leader talked about China opening more to trade. We've been talking about that for ages. The more intriguing part of this is everyone else shutting the door to them. We heard from the Treasury Secretary speaking to the press earlier on this morning, who talked about Chinese investment and saying this: what we want to do is make sure that some of these investments don't get referred to CFIUS. Kellyanne, are things changing on that front?
Yeah, and this is one of the points that I was watching the most carefully in terms of what would come out of this summit. There have been a lot of talk about the Board of Trade and trying to manage the flow of goods going back and forth between the two economies. But there was really not a lot of clarity about what the investment commitments would look like. And frankly, a lot of concern by U.S. lawmakers, by stakeholders, that the president might allow more Chinese investment into the United States. And so I found this comment really curious as well. Now, to the extent they are talking about investment, and to the extent they're talking about the fact that there may be some transactions where there's really no national security nexus, they want to make sure that CFIUS is being used and calibrated appropriately. Maybe that's less concerning, but if what we're talking about is allowing large Chinese investments into strategic sectors in the United States, that's going to be very concerning for the president if he gets back home to that kind of outcome.
We've also heard that there is some sort of, or at least speculation from the likes of Julian Emanuel earlier in the show, that there could be some sort of trade tech for oil, technology investments both into China in the form of selling chips and possibly China in the U.S. in favor of some sort of help with the Strait of Hormuz. Are you expecting anything on that front?
So my expectations overall for this summit were relatively low in terms of outcomes. I think the administration has forecasted for weeks, not much to see here. We're enforcing the Busan deal. And the fact that Jensen Huang was not included on the initial delegation list made it seem more likely than not that export controls would not be part of any sort of outcome. But of course, it wouldn't be a G2 summit, a Trump-Xi summit, without a little bit of drama and some surprising deliverables at the end of this. So we could see some sort of broker deal around these things, but it wasn't part of the formal negotiating agenda going in. So I'll also be curious to see what comes out of a potential transaction that way.
Right now, how much do you expect China to reciprocate and come to the United States on September 24th, as the president has requested or invited?
Yeah, I think this has been on the calendar for a while. These two leaders will likely meet face-to-face 4 times this year. So I have every expectation that President Xi will come to the United States this fall. The two leaders will meet again later in the year as well. This is a very robust year in terms of potential developments. But what I will say is this is about managing the relationship. It's about keeping an otherwise rocky situation as stable as possible. These two economies are still going in very different directions, particularly in strategic sectors. And so having that leader-to-leader touch point keeps the connectivity, keeps the stability without this whole thing falling off a cliff. And I think that's in the interest of both sides, and that's where both leaders are thinking.
Kellyanne, I'd go one step further. It's in the interest of the world to make sure there is never a direct conflict militarily between these two superpowers. But we have to face the reality. The reality is this has been an adversary that supports adversaries of the United States, including Iran. How do we tackle that issue this year?
Yeah, I mean, Iran, I'm not really expecting any sort of joint announcement by President Trump and President Xi on Iran, other than the fact that they are both seeking some sort of de-escalation and opening of the Strait of Hormuz and something to try to address the energy costs as well as the ongoing conflict and to prevent it from spreading. Now, that said, both sides do have an interest in de-escalation. And so I think that behind the scenes and in non-public ways, we are going to see some cooperation come on the back of this. I completely agree with you that it is in the interest of the world to not have any of this break out into broader direct conflict. And I think that's what both sides are trying to do in their own way, while continuing to compete on economic and national security areas where it matters as well.
Kellyanne, always good to see you. Thanks for catching up with us. The former senior White House trade advisor, Kellyanne Shaw. As we've been having this discussion, Marco Rubio, Secretary of State, speaking to NBC moments ago, saying we're not asking for China's help on Hormuz, and that the President, Trump, and the leader Xi Jinping have found common ground on Iran.
Yeah, the common ground being that they would prefer there not to be any kind of blockade in the Strait of Hormuz, which is lovely. Whether that actually results in action, again, remains to be seen.
Also, as Kellyanne said, indicating policies on Taiwan have not changed. Secretary Rubio going on to say arms sales to Taiwan were not prominent in talks with China. Coming up next on the programme, we'll catch up with Erica Najarian of UBS as financials continue to underperform.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Record highs on the S&P 500 and the Nasdaq as well. Adding some weight to that rally, up by 0.2% on the S&P. On the Nasdaq, up by 0.15. The Russell up by a muted 0.1% in the bond market. The drama the last 24 hours. CPI was hot. PPI was much hotter than expected. And yet, we moved a basis point in the other direction on twos, which is interesting. Very, very briefly breaching 4%, then dropping back down again this morning by a few basis points, 395.84. A market that looks at that data, acknowledges that not all of it will get passed through to PCE, but ultimately the bar to hiking is still very high for the Federal Reserve. So where have I got flexibility? Further out along the curve, 30s pushed higher, north of 5% still, the curve a lot steeper, or fairly steeper. And now you've got auctions, a 30-year bond auction where we see a fixed rate of 5% for the first time since 2007. It's been a long time.
Yeah, so there are a couple of responses potentially to this. On one hand, a Fed that could hike, which a lot of people have written off as an improbable outcome based on what you just said and, frankly, market expectations. The second thing, the relief valve in the long end. And then the last thing is, if 30-year bonds are going to sell at such a low price, high yield, just don't sell them. And that might be what the Treasury ends up doing. I will just note, Susan Collins, the Boston Fed president, came out yesterday and said, more than 5 years of above target inflation has reduced my patience for looking through another supply shock. And she said it is not in her most likely outlook, but she could consider a rate hike if this does persist.
I was going through some of the numbers from the teams on the 30-year bond auction, the lowest one we've seen, the lowest fixed rate, 125 back in May 2020. And of course, that particular bond now trades much, much lower because of how much higher yields are at the moment. The note from BNP really got my attention. I want to go over this quote again. 5% is not a ceiling. There's a belief that 5% is somehow a ceiling for the 30-year. They don't think it is. They think for yields to stop pushing higher, we think the Treasury needs to deliver something clear in the form of guidance that suggests coupon supply in the long end will either be explicitly or implicitly decreased. That's a bit of pressure on the Treasury, not on the Fed chair.
A lot of people are talking about the Fed Treasury Accord, right? The idea that the Treasury is going to issue more in T-bills is going to cast away the 30-year bond, because why should you sell bonds at such a high coupon that you've got to pay out that could potentially supersede some of the spending plans that the U.S. has? So just bring that down to the front end, have the Fed deal with its situation in certain ways, keep rates where they are so you lower your borrowing costs, and call it a day. The relief valve, as you pointed out, is the dollar. And do you get a much weaker dollar as a result? Some people say, as we were just talking to Eric Nelson, not much weaker. Depending on what you're comparing it to, maybe it's a different story.
If they're explicit about that accord and people latch on to that, you'd have to believe the dollar would get hammered.
Yeah, petrol.
My language hammered. Eric Nelson of Wells Fargo didn't like that language, but that would be the theory.
Yeah, and versus what? And I think that is a key question. Who is the next power to kind of take on some more reserve status? China trying to take that away from Europe, which evidently is having a bit of issues.
Things are somewhat calmer this morning, at least. DXY at about 98, yields a little bit lower at the long end of the curve. As we count you down to the opening bound, nothing calm about these moves. Some major moves in the pre-market. Yahara has more. Hey, Yahara.
Hi, John. And with this move, Cisco is set for its biggest post-earnings jump since 2011. The networking giant delivering a beat and a raise and announcing that it is cutting thousands of jobs as it shifts resources toward AI. This is a company that trailed many of its peers out of the gate when it came to the AI boom, though it is now catching up, and it is raising its forecast when it comes to AI orders from the hyperscalers from $5 billion to $9 billion next fiscal year. Turning to NVIDIA, it is bucking the rest of the chip makers, which are mostly lower today. It is up 1.6% on a flurry of headlines out of Beijing. First, you have President Xi telling business leaders, including Jensen Huang, that China will open its door wider to foreign companies, though they have heard that before and the barriers remain. And then you have this Reuters report saying that the U.S. has approved the H200 AI chip so that Chinese firms can now buy it. But as we know, the U.S. was never the problem. It was China, and we don't know whether it has signed off on that. And we end on shares of Wolfspeed. They are surging 3 3/4% this morning after a 16% surge yesterday, now headed toward 8 days of gains. And the catalyst coming after the research firm Citrini named this chip maker as a major beneficiary of the AI boom as it comes out of bankruptcy. John?
Yahara, thank you. Remember Citrini? All the worries about that?
Yeah.
I love the research coming out of that firm.
Well, I still think about that idea that we're all going to be without a job and the potential doom that we all
Still
are
haunted by that, yeah.
I mean, it still is a conversation, frequent conversation.
At Casabramo, around the dinner table.
All right, we don't have to go back.
Think how many crises we've had so far this year.
Okay, every night
overwhelming. We're about to talk about the banks, and I was reading through Eric and Najarian's research, and I was just thinking, remember when we were worried about capping interest rates on credit cards? Remember that? That was earlier this year.
Oh, God. Was that really?
Yeah, people were saying don't buy the banks because these things are on the table now for the year ahead.
Yeah, that wasn't this year. That was 2001.
Feels like 25 years ago.
I mean, like, honestly, I don't understand time right now.
On our radar this morning, Xi Jinping warning President Trump that mishandling the Taiwan situation could trigger a, quote, collision or even clashes. The blunt remarks injecting some tension into an otherwise cordial Beijing summit. Elsewhere, according to Reuters, the US reportedly clearing several Chinese firms to buy NVIDIA's H200 chip. The CEO, Jensen Huang, telling us here at Bloomberg the US-China summit has been an incredible opportunity to build a better partnership between the two countries. And finally, AI chip maker Cerebras will officially hit the public market today in the largest IPO of the year so far. The company pricing shares well above expectations at $185, giving it a market value close to $40 billion.
Yeah, raising about $5.5 billion in this IPO. So there are a couple of takeaways. Number one, if you're a chip maker, well, it is your time to shine. And if you want to raise money, now is your moment. So who else is going to come to the table to raise money? Is this setting the tone for SpaceX, for OpenAI, for Anthropic to come later this year? Even as there is some skepticism about levels, valuations, how far some of them have gone. I'm thinking about OpenAI losing some of its clout to Anthropic. Nonetheless, the fact that this was seriously oversubscribed put to bed all the worriers out there saying that this couldn't get done and really opened the door to what could get done later this year.
Some banks very excited about the year ahead. Let's talk about the year ahead for the financials. Erica Najarian of UBS writing the following. We think big banks could swing firmly back into favour versus regionals as investors contemplate the bargain bin following the sector's historic level of recent underperformance. Erica joins us now for more. Erica, good morning. Good to see you.
Morning.
Things have changed.
Yeah.
So last time we spoke, we were talking about those kind of issues. We were talking about the opportunity in the regionals, maybe not the major players. What's changed?
Iran and inflation, right? The two big eyes. So obviously higher gas prices is really, putting like a kink in terms of the consumer spending that was supposed to be fueled by these tax returns and tax refunds. And so that's clearly an issue. Additionally, the secondary effects are going to be significant. If you want something delivered, the transportation costs, all of a sudden the shipping is $13.95, maybe not free, or $9.95. And, I don't know if I want to add to cart if the shipping's not free. But regardless, I think that that's going to be an issue. And obviously, there are no cuts in the curve. There's a greater probability priced in of a hike rather than a cut this year. And so what investors are saying, wait a minute, for us to have invested in regional banks, we needed a steep curve as well. And so again, I think the G-SIBs become the hiding place, especially since, you just talked about, a large IPO, especially since the capital markets construct is still super robust, even taking into account a very slow April.
Within the major players then, does that make a Goldman and Morgan Stanley a little bit more compelling on the margin now?
Well, absolutely, right? Because they're pretty much, just to oversimplify it, they're in the moving business, not the storage business. And if the concern is, okay, the consumer strength might be weakening, additionally, deposits might be more expensive, then you'd rather be in a transaction-based business rather than a balance sheet-based business. And that's why even in the ugly days, Goldman and Morgan Stanley, Goldman more so, they've been like Teflon. They've just been up there on the screen green, where every other bank has been red, even JP Morgan.
Well, do you see this as actually the likely bifurcation, that you want to be in the moving business rather than the storage business? Or do you see some of the concerns about consumer weakness as being overblown? I remember the private credit issues that happened about, 4 years ago that have seemed to have evaporated, or the idea that potentially people aren't spending, which will be put to bed in about an hour when we see the retail sales. What's your sense of that?
I think that's a great question. I think the answer is yes, but it's hard to disprove the negative right now until you see sort of firmer numbers. Because while we'll get the retail sales number in a little bit, you've also seen some monthly credit card data that have implied that May was sort of a weak month for spend. Now, the banks and the card companies would argue that this is just sort of a reallocation of spend, so spending more in gas rather than everything else. But at some point, something will break. Right? But also, I think some of the concerns over higher rates and deposits, again, it's an opportunity for the other G-SIBs, like a JP Morgan, like a Wells, like a Bank of America, where they've been sort of really underperforming Goldman and Morgan. And I think the concerns on the deposit side and the consumer side, at least for them, are overblown.
Do you think that we can consider some of these banks tech stocks increasingly as they invest billions and billions of dollars in different technologies? Potentially, they could start to cut staff. We've already seen the financial sector contract in terms of the total overhead. How much is that a tailwind that people haven't fully priced in?
I mean, that would be awesome because I get paid in bank stock, but I think the answer is unlikely, right? Here's the thing. You always have credit risk as an overhang, right? So that's always going to cap your multiple. Secondarily, like Jamie Dimon always says, and he cops this from Jeff Bezos, your margin is my opportunity. And even if they have improving, cost to income ratios in one part of the business because of AI and technology, the best managers will invest that somewhere else. So this notion that you get to keep all of the savings and then get a higher, I would love to believe that, but I don't think that's going to be the case.
Can we put some numbers on it, rough estimates? Look at staff levels now. Where do you think they'll be a year from now, 2 years, 5 years from now? How do you think about that trajectory at these big institutions?
So remember, we're a regulated industry. So let's say you can get rid of, 10%, 15% of your call centers. All of a sudden, utilizing AI in retail requires you to have more supervisory, more compliance. And all of a sudden, maybe you're not replacing headcount one for one at all, but you're replacing, call center headcount with something that's more expensive, somebody with a license, somebody that can oversee. So I'm not sure that this is necessarily going to be this, in 5 years, there's going to be 30% less headcount. Now, there could be 10% less headcount, but I'm not sure the cost per employee necessarily comes down.
We've been seeing those headlines come out of some tech firms. I stress some tech firms. I've always been wondering when we would see them cross the Bloomberg with regards to a large financial, and then the next would follow, the next would follow. But having this conversation, it doesn't sound like that moment's very close.
My guess is that it might happen, but it might not be advertised as such, right? I mean, you already are seeing attrition, and you're starting to see the numbers of total financial employees tick down, I believe, about 100,000 over the past year or so, if you take a look at the BLS numbers. So clearly there has been attrition. Whether this comes as some sort of wholesale advertised cuts, that becomes political, and so you probably don't want to do that. But who isn't being replaced? Which new entrant isn't going to be trained or isn't going to be hired full time? These are some of the questions that people have been asking.
Erica, it's good to see you. It always is. Thanks for being here. Appreciate it. Erica Najarian there of UBS on the financials and a future of these institutions. Let's give you an update on stories worldwide this morning with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. President Trump and China's Xi Jinping wrapping up comments at a state banquet in Beijing. Trump praising their, quote, extremely positive and productive conversations, emphasizing his long-standing personal relationship with the Chinese leader. Trump extending an invite for Xi to visit the White House.
I want to thank President Xi. It is my honor to extend an invitation to you and Madam Peng to visit us at the White House this September 24th.
The leader is also set to meet in November and in December. StubHub shares surging in the pre-market. The ticketing company reporting first quarter revenue that beat Wall Street estimates. StubHub also saying it's on track to achieve its full year guidance as it, quote, grows globally and increases profitability through greater scale. GameStop CEO Ryan Cohen is planning to take his takeover offer directly to eBay's shareholders. The Financial Times reporting Cohen plans to put the offer to shareholders soon. The report coming after his request to meet eBay's board of directors was rejected. And that's your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time in the next hour. Up next on the programme, awaiting the Warsh Fed.
It'll be a pretty high bar for Warsh when he comes in to build consensus around the idea of rate cuts anytime soon.
There's only so much, of course, that Kevin Warsh can do as chair. He's only one vote.
Up next, we'll catch up with Mona Mahajan of Edward Jones, live from New York City. You're watching Bloomberg TV.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
We are allflation and no stack. CPI, PPI coming in hotter than expected. GDP growth numbers right now, pretty good. We'll get retail sales in about 40 minutes time. Equity futures on the S&P 500, all-time highs coming into Thursday morning, higher again by 1/3 on the S&P, on the Nasdaq up by 1/4%. In the bond market, things get more and more interesting. Twos around 4%, 395 this morning, down by 2 basis points. Kevin Warsh stepping up to the plate. Under surveillance this morning, awaiting the Warsh Fed.
Kevin Warsh was going to inherit an already difficult position.
He's going to want to be cutting interest rates, and the focus on trimming inflation may not necessarily convince everybody.
It'll be a pretty high bar for Warsh when he comes in to build consensus around the idea of rate cuts anytime soon.
There's only so much, of course, that Kevin Warsh can do as chair. He's only one vote.
Here's the latest this morning. The Senate confirming Kevin Warsh as the next chair of the Federal Reserve with a 54-45 vote, the slimmest confirmation margin for a head of the U.S. Central Bank. Mona Mahajan of Edward Jones writing divisions will make it hard for incoming chair Warsh to build consensus for rate cuts in the near term. Mona joins us now for more. Mona, good morning. Good to see you.
Good morning.
Assuming he's going to push for those rate cuts, do you get the sense he will?
You know, look, I think with inflation coming in as hot as it is, as the labor market and GDP growth coming in above expectations, as earnings have been flying, I think the case for a rate cut here gets tougher and tougher, even for Kevin Warsh Fed. Now, all that being said, could you make the case that we are still somewhat restrictive and above neutral, and over time, Fed funds rate probably is 3.5% or so? Perhaps, but I think he's going to have to wait, be patient, and look for those signals.
Is that a problem? Is this a rate cut dependent bull market? Doesn't feel like one.
Yeah, I would agree with that. I don't think it is. In fact, I think we are doing quite well at 3.75% here. No problem with earnings or margins, certainly no problem with a consumer that is out there spending, corporations that are out there borrowing as well.
Which raises the question, if this is truly a restrictive policy, where are we seeing the restrictiveness?
Yeah. And look, I think last year there were some doubts around the labor market. We saw some softening. There's been a reversal in that labor market this year, surprisingly so to some. In fact, with new jobs created, with unemployment rate hovering around 4.3%, that labor market story is remaining intact. If there was a case for a rate cut, I would say the Fed wants to make sure they don't see a meaningful deterioration in that labor market. If there are any signs of that, that's when we start to see some movement, I think.
What were you doing at 1 p.m. yesterday? Were you buying some 30-year bonds?
I was watching the auction, which was great.
Well, good, I'm glad. But were you actually buying, or are you a buyer of them at 5% yields?
Look, I think right here, our range for a 10-year Treasury for this year has been 4 to 4.5%, and we're very happy that this 10-year has stayed right in that range. As soon as we hit that 4.5% mark, we see those buyers come in, we see yields start to move down. And as soon as we hit that 4%, we think there's some caution there as well. So we think that range remains intact. We will say if we get meaningfully above 4.5% for whatever reason, that extension of duration makes sense to us.
Did you notice that she didn't mention 30 years? She just went straight to 10. Yes. Sort of this one denomination she doesn't want to touch.
Not alone, by the way. There are a lot of people who share that view.
Correct. We saw that yesterday in terms of the data.
Does 450 become a challenge to this equity market?
You know, we think we have to get closer to 5% to really see that pressure on not only valuations, but that softening in margins and earnings compression as well. So we're not there yet.
The one complaint we hear about this equity market is concentration risk and negative breadth. The question we often ask, is that a feature or a bug? Do you really want to be outside of the big winners right now? Do you really want to shift away from those big names that are driving massive returns?
Yeah, you know, look, those big names have been the drivers of this earnings growth. The 27% we've gotten this quarter, areas like tech and comm services have been 40 to 50% plus earnings growth for Q1. Phenomenal numbers. So those are underpinning the equity market for sure. We always say, you know, one of the key features of the U.S. equity market is its ability to innovate and to house those innovators. So all the Mag 7 are housed in the U.S. We're not seeing that innovation really play out in other parts of the world. So certainly right now we're hearing more from China and emerging markets. That's another area that we like if you want an alternative to U.S. technology. But all that being said, we remain overweight U.S. large cap, mid cap, and we like parts of EM.
Is that an alternative region or an alternative style? We asked this question in the last hour. I think it's a really important one. Financial news right now is dominated by people telling our audience to maybe look outside the US, in other regions, but maybe also other styles. Because in other regions right now, I can buy Asia, but Asian tech. What am I buying outside of technology?
You know, it's a great question. Look, we also like parts of international small and mid cap. And part of the reason is, one, we do think over time some of the productivity gains from AI will spread to other sectors. So whether it's healthcare, financial services, industrials, and a large part of Europe is exactly those sectors. And so over time, we want to make sure we have exposure to not only the winners of AI, but the sectors that'll gain from productivity.
Hold on a second. Are you saying you're overweight Europe?
International small and mid. We're underweight large because of the relative and probably the innovation story, to be honest.
So the person who we were talking about that with was Paul Quincy of JP Morgan, and he had really a lot of optimism about the global story and about diversification in that way. But he also said that he didn't expect returns to be as good as they have been over the past few years. He expected more of like a 10 to 11% return rather than last year's 17% return, or the year before the 24%, and again, the year before that, the similar kind of move. Do you agree? Do we have to lower expectations for the types of returns from equities?
Yeah, you know, look, broadly, in the U.S., we've seen 3 years of double-digit gains. And in Europe and international, the last year and a half or so have been outperforming the U.S., those returns. And so it has been a really nice story. Now, do we expect the pace of gains to continue to that extent? Probably not. We are seeing, however, the same earnings story and earnings rebound we're seeing in the U.S. We are seeing it in the rest of the globe, and we're seeing it in Asia, in Europe. We're also seeing it in small and mid-cap stocks. So there is an earnings re-acceleration that is a tailwind for equities, we think, in the next 12 to 18 months. Beyond that, we think there could be a bit of cooling.
Paul was talking about European banks. European banks have been on quite a run. 2023, up 20%, 24, up 26%. Last year, European banks were up by 67%. They have had a massive move over the past few years.
Yeah, they've gone from instability to very much stability, and now a question of consolidation, as there is more of an effort to create a greater buffer against any kind of crisis. The idea of bottom-up and looking at different companies to understand what can succeed. But what Mona's talking about, which is that you're seeing profits inflect higher around the world, kind of goes counter to the narrative that we hear from some places, which is that the global growth picture is deteriorating. So which is it, right? Can you have this kind of recovery story if you don't have the participation of economic data that seems to be surprising to the downside?
I think Samsung and TSMC have offered a helping hand to global profits.
Well, I would agree with that. And how much, again, can you get away from the AI story? How much is this AI in another way or told through another side of the balance sheet?
Manu, it's good to see you. It's always
Thanks,
good
guys.
to catch up. Thanks for being here. Manu Mahajan of Edward Jones. Coming up on this programme, this is the lineup for the next hour. We'll catch up with the Fed Governor Stephen Myron, Jonathan Krinsky of BTIG. He's got some things to say about the chip rally, why he thinks this chip rally could reverse, and we could see a 20% decline in the semiconductor index. We'll talk about that in a moment. Nita Richardson of ADP joins us to break down the economic data, retail sales, jobless claims. Looking forward to that. We'll hear from Judy Beale as well. Governor Myron, it's like the exit interview, his last broadcast conversation as a governor of the Federal Reserve. Looking forward to this.
Very much so, especially considering discussions around needs to change the Federal Reserve and the way that it operates. Someone who is inside, who has been critical of this institution, giving his sense of what needs to change and what he newly appreciates.
Looking forward to catching up with him in just a moment. Equity futures right now in the S&P, firmer by 1/3%, higher by 0.2 on the Nasdaq, up by 0.2 also on the Russell. From New York City this morning, good morning. The third hour of Bloomberg Surveillance is up next.
Very famous dogs. You have they look like balloon kind of figures to some extent. How do you make those?
In the case of the balloon dog, I blew up a balloon dog. So I had this balloon, which is kind of like a latex type of piece, molded it, cast it, and then blew that up in scale and put it into a clay, and eventually had that transformed into stainless steel.
So when you have a balloon dog, let's say, a regular size one or then a big one, did people say, Jeff, you're crazy? Were you shocked that people were willing to pay very high prices for this?
When I was making my first balloon dog, one of the purchasers was Eli Bro. And originally I thought I could make a balloon dog for around $300,000 that I could manufacture. It's a large piece, over 10 feet long, or 12 feet long, 10 feet high. But it turned out that the fabricator came back to me and said, you know, Jeff, I can't do it for $300,000. It's going to be $650,000. But eventually, then they raised the price again. And they finally brought it up to $1.6 million. And I told Eli that this is the reality of it. I showed him everything, and he ended up paying for the production costs.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Stocks are going to continue to go higher.
Do you want to be in this market? Do you want to be riding this? Yes.
This is still a market with a lot of cash on the sideline.
We're doing our best to enjoy this sort of nirvana that markets are benefiting.
There is a lot of optimism built into the market, which does create vulnerability.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. Your scores look like this. Equity futures adding to recent gains, up by 1/3 on the S&P, record highs on the Nasdaq 100. All-time highs again this morning on the cards, up by 0.2%. In the bond market, new levels for you. 5% on 30s. We're holding on to them, rejecting 4% on 2s. Intriguing. We're down 2 basis points, even with that hotter CPI and PPI data through this week. 395.63 on a 2-year. Heading into more economic data later this morning, 8:30 Eastern time. We will get jobless claims and retail sales.
Yeah, how much is the consumer strong enough to maintain the inflationary pressure that we've seen in CPI and PPI? One of the reasons why maybe we're seeing the bond market take a breather at the front end of the yield curve is because even hawkish Fed members have come out recently and said their base case is just to remain on hold for a longer period of time, not to hike rates. So even Susan Collins, who comes out and says, essentially, don't fool me again with another supply shock, says this is a reason why I'm not going to cut rates anytime soon. So people seem to be taking the chance of a rate hike a little bit off the table.
The bar is a lot higher than people think for that rate hike, and I think that's been reinforced by some of the communication we've had from Federal Reserve officials so far. As for the data at 8:30 Eastern time, I said allflation, no stag. We talked about the worries of stagflation. We've had deflation. What about the stag? These consumers, based on the credit card data we've seen from Bank of America, they're still spending.
Yeah, and particularly at the upper level of the income sphere. This is a reason why some people would have said if we hadn't had the oil price shock, this would have been a boom economy. You would have seen real growth. You've started to see the employment market pick up. There is one little fly in the ointment, which is that the May credit card data has shown a softening. Consumer sentiment has softened. There are signs that maybe around the margins you are seeing a bit of the stag. Just it's overwhelmed by the AI-flation and the AI growth that seems to kind of knock that out of the picture.
That data moments away, 8:30 Eastern time. Coming up this hour, we'll catch up with Fed Governor Stephen Miron with an uncertain path ahead for interest rates. Jonathan Krinsky of BTIG on the risk of a massive pullback in tech stocks, and Nita Richardson of ADP reacting to the latest read on the US consumer. We begin this hour with stocks adding to record highs at a pivotal moment for the Federal Reserve. Rising inflation complicating the rate outlook as a new regime takes hold at the top of the central bank tomorrow. Joining us now in his final broadcast interview as a member of the Federal Reserve Board of Governors, Stephen Miron. Governor Miron, good to see you, sir.
Good to see you. Thanks for having me back.
We've got a moment to step back and sort of reflect on your experience at this institution. We've talked lots about how you've been received externally. Can we just start with how you've been received internally over the last few months?
Sure. This has actually been one of the biggest surprises, given all the drama at the beginning. I've been received internally, I think, very, very politely, very cordially, and very kindly. And I think folks have largely enjoyed some of the intellectual conversations, some of the challenges that I've leveled against some of the ways that they had been thinking beforehand. And I think that the overall response has been, very welcoming and very kind. And that's one of the things that I'm most grateful for.
What are the kind of ideas that have been received well, that are shaping debates right now that will linger and continue beyond your departure?
Yeah, sure. So an example of one of those things is the importance of regulations for determining the supply side of the economy. I mean, we spend a lot of time, out in the financial world, out in policy, discussing the effects of a 33 versus 35% marginal tax rate. But the truth is that regulations are often infinite taxes. And being told you're not allowed to do something versus you are allowed to do something is a very, very strong difference. And this had played a very small role in a lot of the modeling discussions happening at the Fed, in a lot of the outlooks that I heard people present. And I came in and really hammered that idea, and I think sort of moved it forward. And now a lot of people talk about it very often, internally and externally. And, sort of talk a lot about supply shocks. This is a positive supply shock that is unfolding and continues to unfold and will, I hope, mitigate some of the negative supply shocks we also get hit by.
Well, let's talk about another supply shock, and I think it's been central to some of the arguments you've made on the committee, and that's population growth. The negative population growth that we've seen, which has lowered the break-even rate for the labour market and contributed to arguments in some places for hotter, stickier inflation. You've taken the other side of that. Can you just explain that for us?
Yeah, so I think this is a really subtle issue with a lot of moving parts. Now, at a very high level, what I would say historically is that we've seen a lot of countries in different places have declines in population growth rates and stagnant populations or shrinking populations. And I think the cross-country and historical evidence is that it's unambiguously disinflationary or even eventually deflationary. Now, there's a few ways that works. One is by reducing, there's a few consequences of lower population growth. One is it does reduce the break-even payroll growth rate. So the number of jobs you need to create every month to hold the unemployment rate constant, that does come down. That's a mildly hawkish implication because it means you shouldn't get so concerned about very, very low job creation rates. However, there's also dovish implications as well, which are that it lowers the neutral rate. It brings interest rates down over time, and we've sort of seen that across countries and historically to be the case. And it's also disinflationary through long-lived capital and consumer goods. And if you think about something like housing, right, the supply of houses is relatively fixed in the short run. And if you throw millions of new people into an economy, you're going to drive up the price of rents because they need places to live. Right, you're going to create inflation, and that inflation is very, very persistent because of the way that housing inflation is calculated. It's very, very sticky. If you have declining population growth, you don't need as much home price growth, and that very inflationary tailwind gets taken away and ceases to be a major driver of inflation. And I think you've been seeing that start to play out in the data. Market rents in this country have been growing at a 1% rate for the last few years. This is one of the biggest components of the inflation indices. And I think you're going to continue seeing measured PCE and CPI rents and measured PCE and CPI shelter inflation continue to converge down to those very low levels. So I think there's one hawkish implication, which is the lower break-even payroll rate, but there's also some very dovish implications because it reduces the neutral rate and it brings down inflation through some of these long-lived capital and investment goods.
This is a longer-term structure for how to think about inflation and the benchmark rate of the Federal Reserve and how it sort of it works with the sort of long-term inflation rate. Near term, though, one thing that you've been known for, a hallmark of your time on the Fed, was that you voted to cut rates at least once at every single meeting. Do you think that still holds, even though in the short term, it does seem like the inflationary shock is overwhelming potential structural changes that could lead to disinflation? I do, and I think this is maybe one of the biggest differences between me and a lot of other folks is that I take very seriously the idea of monetary policy lags. Very, very seriously. Monetary policy doesn't hit the economy right now. If we changed interest rates today, it wouldn't flow through into the economy until 12 to 18 months from now. Right now, there's some disagreement over exactly how long those lags are, but I think 12 to 18 is the consensus view. And therefore, for any shock that's hitting the economy today, you can't think about what the effect in the next few months is. You need to think about what the effect in the next 12 to 18 months is. And the effect 12 to 18 months out. So if oil goes higher, it's a supply shock. Straits of Hormuz are closed, right? That's going to boost the oil price today, and with it a bunch of other stuff that's very tightly tied to energy prices, like airfares, right? That's going to go higher very quickly within the course of a few months, and we've been living through that, and that is very real, right? There's no way that is very real inflation, but it is not inflation that monetary policy can affect. Monetary policy can affect 12 to 18 months from now. So there's got to be a reason that you think airfares and oil prices are going to be moving higher in the summer of 2027. In the fall of 2027, not the summer and fall of 2026. And so it's those lags that really should be driving where you think about forward-looking monetary policy should be. And that's a lot of what I've tried to hone into when thinking about population growth and deregulation and saying that the traditional view that we should look through in oil shock should prevail. This is very, vanilla, basic, traditional monetary policy. Part of the problem is that the market doesn't agree. At least not in terms of where longer dated bonds are trading and where yields are shifting, where you see them shifting higher even as the front end stays where it is. Do you think that in this type of environment, it's imperative to have some sort of Fed Treasury accord akin to what people have been talking about, where the Treasury steps in to sort of influence the long end while the Fed cuts rates on the short end? So let me address those separately. So the market not agreeing is in part a Hall of Mirrors issue, because if the Fed says we're very backward looking and inflation over the last 12 months is going to determine policy that affects 12 to 18 months from now, meaning the economy in 2027 is affected by data in 2025 in that world, right? So very, very backward looking. If that's how the Fed communicates that it's setting policy, then the market is going to start to reflect that. And so the market reflecting a lack of interest rate cuts, right, is in part because the Fed is telling them we're backward looking, right?
And so that's going to create a self-reinforcement problem. Now, on the Fed Treasury Accord, so first of all, I won't be involved in that if it happens, but, I have done some work on the balance sheet, and I do think it is important that one of the problems with having a very large balance sheet and lots of securities, lots of Treasury securities on the Federal Reserve's balance sheet, is it does start to get the Fed involved in questions that have some fiscal implications, right? If we own a huge chunk of debt, then that means that we're impinging on decisions that traditionally are the realm of the fiscal authority. What is the distribution of public debt that it issues that's held by the public? And so I do think it is important that if you have a large balance sheet, there needs to be sort of some clear delineation about who's doing what. And to me, these questions are really murky, and they implicate independence to an extent, and therefore it's one of the reasons among many that I would favor having a smaller balance sheet.
How close do you think the Fed should work with the Treasury to achieve that? How closely should the Fed work with the administration?
Yeah, so my view is that the Fed having a big balance sheet starts to implicate a lot of those lines and becomes problematic. So the Fed should strive to have as small a balance sheet as it can, right, to achieve its goals and implementation framework. And if we can sort of improve that implementation framework and make it smarter to reduce the minimum size of the balance sheet that we need, then that's a great thing. And that was a major thrust of the paper that I wrote in the spring with Alessandro Barbarino and Anthony Dirks and Alyssa Anderson, and so that was a major thrust of that work. That was really important. Now, in terms of coordinating, right, the Fed should do what it should do for monetary policy, and the Treasury should do what it should do in terms of fiscal policy. And the level of coordination should, I think, be sort of separate, right? They should be doing what they want to do for each of their own priorities. However, there are times when there is going to have to be that type of coordination. So, for example, right now we're doing these reserve management purchases where we're expanding our balance sheet to sort of provide a minimum level of reserves into the economy to meet reserve demand. We're buying Treasury bills. We're letting mortgages continue to mature off of our balance sheet and replace them with Treasury bills, right? Like, in theory, if we did enough, sort of conversion of our balance sheet, of our existing balance sheet into Treasury bills, we might be absorbing all of the supply, right? And then some. So this is an example of a time where there would have to be very tight coordination.
We've got an administration right now very interested in financial markets. The president often looks at where the index level is in the equity market. We've got a Treasury secretary that used to trade this stuff. Did you speak to them in your time at the Federal Reserve? Did the president ever pick up the phone and say, hey, Steve, what's happening? Tell me what you're seeing in the market and the economy?
Yeah, so I spoke to the president when I went to go resign from the Council of Economic Advisors. I went to bring my resignation letter. But, he doesn't tell me anything. He doesn't tell the whole world, right? This president is very forthright with his views, and he tells journalists all the time, including Bloomberg journalists, exactly what's on his mind about policy and where it should be. So, no, I'm not in receipt of any information that's not public.
Because we've started this conversation by talking about how you were received internally, externally. I thought unfairly at times, basically everything you said about interest rates and on the economy was always described as just doing the president's bidding at the institution, at the Federal Reserve. Did people see it that way internally? When you put your hand up and said, I want a rate cut, 25 basis points, I'm dissenting, was there a roll of the eyes, here we go, this is the president's guy doing the president's bidding?
Well, thank you for those words. I do think it's clear that I've disagreed with lots of people on policy on lots of times. There have been times when there have been signals out of the White House that they wanted policy rates lower than I had my dots, and there have been times when there's been signals out of the White House where they thought that I was too dovish, right? So, for example, the NEC director after my first vote said that he would have preferred a 25 basis point cut, right? So I clearly do my own thing and have my views, and they're all, I think, grounded in very traditional economics. And we were talking about population growth before. Like, this is not new, right? Like, 6 years ago, we all would have been talking about, is everybody becoming Japan? That would have come up several times a week, right? Like, none of this is new. None of this is heterodox economics. None of this sort of says we need to discard with the entire framework. It's all within the traditional framework. And this is part of why I think the reception internally has been generally pretty good, is because I'm engaging with folks on their ground, right? Like, I'm within the world of normal economics, when we're talking about what drives the interest rate and the neutral interest rate, and does population growth drive it, and is it inflationary or disinflationary? This is all well within sort of normal.
We're trying to figure out what kind of an institution Kevin Walsh is walking into, how he'll be treated, how difficult it will be to get people on his side as he starts to think about changing this institution, particularly when the former Fed chair will be sitting there as a governor on the board of governors. Can you help us understand that from a man inside the building, what that might look like in the next few months?
Yeah, so I think one thing that's important to understand is that people at the Fed are responsive to arguments. And as I said before, you know, I've been hammering deregulation, among other things, since the day I got there. And, you know, they start to respond, but it takes time, right? You know, it's a bit of a slow-moving process.
Does Powell being there make it harder?
You know, I don't know about that. You know, certainly Chairman Powell built a lot of the institutions and processes that exist there, and so you know, so that dynamic may may play into it. I don't know. But that'll be an issue for Chairman-designate Walsh to deal with when he gets there.
When you heard the chairman in the news conference present to the press and to the world that he was staying on as a governor, was that the first time you heard of it, or did he tell the board of governors ahead of time that that was his plan?
No, he didn't tell me ahead of time that was his plan, but he'd always said that you know, publicly and privately, there's something that it's something he might do, and so it wasn't entirely a surprise.
What was your reaction to it?
You know, look, my reaction to that is that when I was the incoming chairman of the Council of Economic Advisors last year, I was very grateful to the previous chairman, Jared Bernstein, for spending time with me on the phone, being very generous with his time, several hours over days and weeks, giving me advice for how to be a good CEA chairman, and I really appreciated that. And sort of how does the place run, and what are your responsibilities, and how do you do a good job? And I thought that was really generous of him, and I was really appreciative of that. And then I went out of my way to make sure that they very quickly put his portrait on the wall of former CEA chairman in the offices in the Eisenhower building. You know, it's to make sure that happened quickly without delay. And I was really grateful. So look, transitions are important, and I think that, you know, it is maybe helpful to have someone there to give advice. Here's how to be an effective chairman. Here's how to lead the committee. Here's how the building works. It may be a little bit different than it was 20 years ago, right? I think that can be helpful, but I still think it's important that it be a transition, because you want to have people's loyalties undivided. You want to have there be very clearly one chairman. You want to have a place where there's no question about who's in charge, and there's no talk of rival factions and things being split. I think you want to have a sense of unanimity and clarity. And so transitions are important, and I think it can be helpful to have help in transition. But I still think it's important that it is a transition.
Stephen, it's good to see you. Thanks for being here. You know, I just wanted to finish on this. I think a lot of people might describe your tenure at the Federal Reserve as somewhat controversial. I see it completely differently. I've seen this play out now over a number of months, and I've said this repeatedly. You've had energised debate at the FOMC that spilled out publicly in a way that we haven't seen in a long, long time, if ever, at the Federal Reserve, where people are being much more opinionated about where we are in this moment. And the one complaint, the consistent complaint I've had about the Federal Reserve is one that you've had too, which is the groupthink. And it's very, very difficult right now to describe this committee and anyone working at the Federal Reserve as part of groupthink right now, because everyone's expressing themselves in a much newer, fresher, more welcoming way.
Yeah, it seems like right now no one could accuse this committee of groupthink, given how fractured it is and, frankly, all of the commentary coming out. So over to you, Kevin Walsh, to come in and have that debate.
Best of luck. Steve, good to see you.
Thanks
Thank you, sir. Appreciate it. Stephen Myron there, Fed Governor Stephen Myron. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. President Trump and Chinese Premier Xi Jinping delivering remarks at their state banquet in Beijing. Trump praising their, quote, extremely positive and productive conversations, emphasizing his long-standing personal relationship with the Chinese leader. Trump extending an invite for Xi to visit the White House in September. United Airlines expanding its service to Japan, launching non-stop flights from the U.S. to the northern Japanese city of Sapporo, as well as new non-stop flights between Chicago and Tokyo. The flights are expected to operate on Boeing's 787 Dreamliner. UK Health Secretary Wes Streeting stepping down in the last few minutes from his post, paving the way now for him to launch a bid to replace Prime Minister Keir Starmer. Starmer's former number 2, Angela Raymer, also indicating she's preparing a bid to leave the party. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. Up next, we'll get you some morning calls, plus Jonathan Krinsky of BTIG on how tech could see a major reversal. That conversation up next.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Session highs, equities up 1/3% on the S&P. That is the price action. Here is your morning calls. First up, Wells Fargo raising its price target on Cisco, expecting more upside in 27. Citi raising its price target on Dell, highlighting the AI build-out as boosting server demand. And finally, Evercore raising its price target on Apple, predicting earnings and free cash flow to grow. A stock up in the pre-market. Let's talk about tech and tech optimism driving stocks to fresh record highs. Jonathan Krinsky of BTIG writing, we will see an equal and opposite reaction to the parabolic advance we've seen in tech over the last few weeks, which would mean another 20% lower. Jonathan joins us now for more. Jonathan, welcome to the program. 20% lower, and as you've pointed out in your research, that's all it would take just to get back to the 50-day moving average, Jonathan.
Hey, Jonathan. Yeah, I think it's just goes to show how far we've come, specifically in the tech AI semi-trade. And as you mentioned, yeah, a pullback to the 50-day is pretty normal in even strong uptrends. And that just shows, again, how extreme the move has been. So I think there is pretty significant unwind.
Okay, guys, natural gas को देखोगे took the support. ये लेवल वैसे मल्टीपल टाइम टेस्ट हो गया. यहाँ पर देखोगे तो इस लेवल को तो वन टाइम एक हाई बनाया था, दूसरी बार एक लोअर हाई बनाया था. ये थर्ड टाइम आई है यहाँ पर बाइंग. अपना ऐसा थोड़ा सा स्ट्रिक्ट रखना. अगर ये नीचे कहीं प्रॉपरली ब्रेक डाउन करने चला गया 270 के नीचे तो थोड़ा सा प्रॉब्लम क्रिएट कर सकता है. याद रखना ये लेवल 15 मिनट के नहीं है, सिर्फ 5 मिनट के मैंने लेवल लगा रखे हैं. चार्ट 15 मिनट का है बट लेवल 5 मिनट के हैं. नेचुरल गैस में सपोर्ट रेजिस्टेंस दोनों ही. ऊपर जाता है तो यही टारगेट है, जाएगा तो यहाँ कहीं हाई लेवल से सेलिंग का प्लान करेंगे यहाँ. बट ज़्यादा रिस्क मत लेना इस लेवल पे. मल्टीपल टाइम टेस्ट हो गया, थर्ड टाइम आ रहा है. दोनों बार, पहली बार आया था एक हाई बनाया था, दूसरी बार लोअर हाई बनाया. दिस इज थर्ड टाइम. एक और लोअर हाई बना, अब नीचे आया तो ब्रेकडाउन कंफर्म ही है इसका. उस केस में फिलहाल रेंज है 270 टू 280 की 10 पॉइंट की रेंज बनी हुई है. नथिंग एल्स. मोस्ट प्रॉब्ली तो मुझे लग रहा है शायद अगर ये थर्ड टाइम नीचे आया तो ब्रेक होना चाहिए। एक बार यहाँ भी टेस्ट करना पेंडिंग है अभी अपर लेवल पे। नीचे कोई और सपोर्ट भी नहीं दिख रहा 15 इवन 5 मिनट टाइम फ्रेम पर। डेटा आने वाला है पीपीआई का। रिटेल सेल्स, को रिटेल सेल्स अनएम्प्लॉयमेंट के लिए इंपॉर्टेंट है। विल सी। क्रूड ऑयल में भी ट्रेल करना अब काफ़ी स्लो आ रहा है, ज़्यादा ही स्लो आ रहा है अब तो। दोबारा आएगा तो सेम इस लेवल से सेल नहीं करेंगे, अब ध्यान रखना। फिर से ऊपर आया तो फिर थोड़ा हाई लेवल पे जैसे कल सेल किया था वही सिमिलरली स्ट्रेटजी रहेगी। नीचे सपोर्ट है, लेट्स सी कितना जल्दी पहुंचता है वहां तक। नेचुरल गैस में सपोर्ट ब्रेक करके थोड़ा नीचे आ जाए तो वो थोड़ा मुझे लग रहा है ज़्यादा स्ट्रांग रहेगा 258 के अप्रॉक्सीमेटली। क्योंकि ये इतने बार टेस्ट हो गया यहाँ पर, अब थोड़ा सा रिस्की है। ध्यान रखना किसी ने लिया है एसएल कॉस्ट पे रखे रहना नेचुरल गैस में। दोबारा मेरे अकॉर्डिंग तो मत ही करियो एंट्री, बहुत रिस्की है। अगर लेनी होगी तो मैं लगा दूंगा लेवल, अदरवाइज मेरे अकॉर्डिंग अवॉइड करना फ्रेश डायरेक्टली। किसने लिया है एसएल कॉस्ट पे, डोंट टेक टू मच रिस्क नाउ। अगर अभी और टाइम लगेगा क्रूड ऑयल को नीचे आने में, बहुत स्लो है। लग रहा है आज एक्सपायरी में इसी रेंज में क्लोजिंग देगा प्राइस 9,900 टू 9,200 के बीच में। लेट्स सी। आप द यूएस मार्केट ऑलरेडी लंदन सेशन ओपन है।
He did, and it was important because the Chinese side said they are not in favor of militarizing the Straits of Hormuz, and they're not in favor of a tolling system, and that's our position. He did, and it was important because the Chinese side said they are not in favor of militarizing the Straits of Hormuz, and they're not in favor of a tolling system, and that's our position. He did, and it was important because the Chinese side said they are not in favor of militarizing the Straits of Hormuz, and they're not in favor of a tolling system, and that's our position. He did, and it was important because the Chinese side said they are not in favor of militarizing the Straits of Hormuz, and they're not in favor of a tolling system, and that's our position. He did, and it was important because the Chinese side said they are not in favor of militarizing the Straits of Hormuz, and they're not in favor of a tolling system, and that's our position.
Latest on that summit between the two leaders of the two largest economies on the planet, President Xi Jinping and President Donald Trump. Equity futures positive here by a third of 1% on the S&P from New York. This is Bloomberg Surveillance.
The problem we've got as an industry is when the government overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of your net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
Transitions are important, and I think that, it is maybe helpful to have someone there to give advice. Here's how to be an effective chairman. Here's how to lead the committee. I still think it's important that it be a transition because you want to have people's loyalties undivided. You want to have there be very clearly one chairman. You want to have a place where there's no question about who's in charge.
That was Federal Reserve Governor Stephen Myron in his last broadcast interview as a Federal Reserve Governor on the situation with Chairman Powell staying on as a governor, alongside incoming Fed Chair Kevin Walsh. Kevin Walsh, of course, just confirmed his first day at the Federal Reserve, likely in the next 24 hours. Equity futures right now, the S&P 500 firmer by 1/3%. On the Nasdaq, up by 1/10. We're adding to all-time highs. There are some really bullish tech stories out there this morning. Let's get you a few of them with your morning movers. Yahara has more. Hey, Yahara.
Hi, John. We start with Cisco. Shares are surging at nearly 15% in the pre-market. With this jump, it will be Cisco's biggest post-earnings jump since 2011. The company delivering a beat and a raise and saying that it is cutting thousands of jobs in order to shift resources to AI. And in another bullish forecast, it is raising its outlook for AI orders from hyperscalers from $5 billion to $9 billion in the next fiscal quarter, in the next fiscal year. Meanwhile, we saw clothing sales fall 1.5% in the latest retail report, but Canada Goose is bucking that trend. Shares are up 3.8% after the maker of those pricey parkas delivered a big revenue beat, topping even the most bullish forecast on the street. And we end on shares of Klarna. They are soaring 12.4% in the pre-market after the buy now, pay later firm swung to a surprise profit last quarter, a major turnaround from the nearly $100 million loss it posted a year ago. The results pointing to a consumer that's still spending, but maybe leaning more on those installment payments in order to do so. John?
Yahara, thank you. Appreciate the update. Some of the challenges in retail right now. Have you seen some of these names? Nike's down by 33% year to date. Lulu's down by more than 40% year to date. You want signs of a challenge right now in retail. Brutal stuff. Brutal for those names.
Yeah, it seems like right now it's a sort of shakedown, or shakeout, I should say, of the winners and the losers, right? Because you've seen some do very well. You've seen, for example, Walmart or Amazon, which have other types of venues. But Nike, get back to running. Lululemon with a new boss and a question of how you're going to resurrect a brand that's come under competition from a looser trend, not necessarily the skin-tight pants, and also a lot of competition. I mean, these are some specific challenges in addition to the broader, more stressed consumer.
Be aggressive, don't apologize. That seems to be where success is found in retail right now. Thinking American Eagle, aggressive, didn't apologise. Well, great success off the back of that. Lulu, too apologetic, too nervous about doing certain things. Nike, the same thing.
Well, American Eagle and Gap have both been very sort of edgy and embracing that in different kinds of ways. I think that Lulu has been beset by a host of different issues, see-through issues, as well as, just trend issues. And Nike, of course, a real question about its strategy, sell to consumers, sell through some of these other brands. So there clearly are questions. I do think, though, you're seeing a bifurcation between the haves and the have-nots within retail as well.
Going into the World Cup, notably not seeing anything from Nike at all. Saw a great Adidas commercial with Timothy Chalamet. Fantastic commercial.
I did see
nothing
it
from Nike. See
Yeah,
if the next few weeks changes things.
Yeah, maybe they can come up with a rival or bring Timothy Chalamet on and have sort of the next segment of that soap opera.
That would be very cool. Let's see if they make that happen. I doubt they will. As we count down to the opening bell, Julie Beale, Kate Anderson-Rudnick writing, investors need to be able to compartmentalise some of the news, some of the gloom from the main event, which is earnings growth. Julie joins us now for more. Julie, welcome. Earnings growth has been just so powerful. Do you just want to stick with it, stick with this bull market?
Yeah, I mean, I think you can stick with the themes where you have a lot of confidence that there's long-term durability to the growth. It's hard to get super enthusiastic about some of these semiconductor names at these valuations, or some of these industrial companies, especially in small cap, that have some exposure to what we see in the tech build-out and the data center build-out, but that generally are kind of commodity businesses. Those are the ones that I think we want to skip out on. But broadly speaking, this level of earnings growth, up and down market cap across industries, it's really broad, it's really robust, and it's thanks to no one in the government, let's be clear.
Within tech, and I'm not going to take the bait on that one, within tech, are you starting to see a rotation from just the chip players to others? We've been talking about just how much Oracle, Meta, Microsoft have lagged. What needs to happen there for those names to work?
I think that people need to feel a little bit more confident that there is going to be a return on investment of all of this CapEx. I think they're going to stay in the doghouse. And part of what's really difficult is you have to separate some of the names where they are generating a real return and they've expanded and broadened their business. That's Google. But Meta, I think people are not satisfied by the idea that they eat their own cooking, that the AI is what makes their ad business stronger. I think that's not good enough right now for investors. People want to feel like we're building real logical businesses on top of this, because right now, at the level of spend that we're at, Anthropic isn't making any money. They're bleeding money. So is OpenAI. So we know that the way these large language models are structured, they're not profitable right now. And I think people need to feel confident that they're going to be at some point.
Do you think that any potential IPOs later this year could pose some sort of headwind to the rally in other tech stocks that we've seen so far?
Yeah, absolutely. I think that, for the moment, a lot of the excitement that we've seen in the private markets for OpenAI and Anthropic is really a function of the dominance that they have as these, preeminent models and the excitement of the growth that they're able to deliver. The problem is that when those S1s hit and they come to market, people like me, grubby little profit-seeking people like me, are going to be upset at the level of spend that they have without any kind of real return. So I think that's a real challenge for these businesses. And the concern that I have is I really hope that they don't come to market with these kind of made-up terms for, you remember when WeWork was community-based or community-adjusted EBITDA? We can't have that. It has to really be kind of clean financials, that people have a clear path that we're going to be able to raise rates on these tokens and earn a real return. It can't just be endless negative earnings for the foreseeable future.
I wouldn't describe you as grubby, Julie. I'd never do that. Julie Beale of Kate Anderson-Rudnick. Would you describe Julie as grubby?
Oh, of course not.
Absolutely not.
I think that was wonderfully said.
Come on.
Wonderfully put, perfectly put together.
Programming note a little bit later on this evening. Look out for this. Ambassador Greer, Jameson Greer of USTR, on the situation over in Beijing, China. Conducting that interview, none other than Anne-Marie Hordern on the ground in Beijing. AMH, welcome back to the programme. What are you looking forward to a little bit later this evening?
I think we want to get some clarity from Ambassador Greer on exactly what was discussed between President Trump and Xi Jinping, especially when it comes to his portfolio, when it comes to trade. Already, in maybe a sign of goodwill, we've already seen Beijing have a number of licenses now lifted and granted to have more beef imported into China. That is definitely a sign of goodwill. But what else when it comes to U.S. energy and potentially that Boeing jet order? What else was discussed in terms of these purchasing agreements agreements? And what's the future more broadly of this relationship? There's been a lot of talk leading up to the summit about a board of trade potentially lessening the tariffs on both sides when it comes to a lot of consumer goods worth $30 billion. So these are a lot of questions for him. And then, of course, I think what on top of everyone's mind is what happened in terms of the readouts. They are so different when you look at what the Chinese express as their main concerns when it's Taiwan. While the meeting was still happening, the readout came from the China side, how they said if this issue is mishandled, it could mean a dangerous situation for the bilateral relationship between Washington and Beijing. Yet Taiwan wasn't even a mere mention in terms of the White House readout.
Anne-Marie, appreciate your time and looking forward to your coverage a little bit later. Get some rest. Anne-Marie Haudin over in Beijing, China, on the summit between the two leaders of the world's two largest economies, President Trump and President Xi. Whenever we get these readouts, there's always differences. That's not new. What's interesting about this to me, and Anne-Marie's talked about it throughout this morning, was just the timing of the Chinese release, that they just got ahead of things. Whilst the summit was still ongoing and made Taiwan a big feature of the media coverage around this event.
Yeah, and they've talked before about Taiwan being a priority for them. Nonetheless, they came out with notably strong language saying that this is the red line. I just want to make a programming note. Yesterday, Eddie Fishman came out with the 5 Bs. I got this right this time. Beef, beans, Boeing, Blackwell, and Board of Trade, because I'm doing better, John. And today, Erica Najarian came out with the I's. Yes, 100%. Iran and inflation. So tomorrow, I'm excited. You know, it's sort of the Sesame Streetification of surveillance. We can sort of have another letter tomorrow that can try forward the narrative.
In a serious way, did I?
No, absolutely
Surely not. Come on.
No, not at all. He was like,
feel
hopefully,
so bad now.
No, please don't. No, that was hilarious. It was very well put.
Stage is set for another rally. How are things looking? Only up by about 1/4%, but plenty of bullish news around tech once again.
The idea that Cerebras could come out with such strong pricing, the idea that we saw such incredible results from Cisco, regardless of some of the naysayers, the profits continue to be there. And as a result, people are looking at this as a haven trade amid myriad concerns, whether it's inflation in Iran or whether it's beef, beans, and Boeing.
Nice. And Blackwell.
And Blackwell.
And Board of. There we go. All right.
Do
better.
Thanks.
Coming up tomorrow, Matt Miskin of John Hancock, Savannah Rajappa of SocGen, Erin McLaughlin of the Conference Board, and Scott Cronin at Citi from New York City this morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
A cidade estava sitiada.
Nisso eu começo não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever in the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions: software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Another new record high yesterday, and futures are up this morning. 30 minutes until the start of the cash trade. I'm Matt Miller. Danny Berger is on assignment. Bloomberg open interest starts right now. Coming up, Xi presses Trump on Taiwan, warning of potential clashes if the issue is mismanaged. The issue of Taiwan, very key here. Also, tech key in this summit. The rally continues as Cisco soars on a strong forecast and AI-focused restructuring plan. They're doing better, so they're going to fire 5% of their workers. Plus, the biggest IPO of the year, AI chipmaker Cerebras raises $5.5 billion in its offering, but the market cap is still less than 1% of NVIDIA. In terms of the stocks that we're watching this morning, Cisco ripping on that earnings report, up 16% in the pre-market. It boosted its full-year forecast. It announced job cuts to focus more on AI. Reuters is reporting that the U.S. has cleared around 10 Chinese companies to buy NVIDIA's H200 AI chips. Remember, President Trump made an exception for the H200 chips, but the Chinese companies weren't buying. Maybe they will after this meeting. And Morgan Stanley issued a bullish call on Ford, saying the automaker's energy storage business could make a deal with hyperscalers soon. You don't see that reflected in today's shares, but yesterday they rallied 13% in their biggest gain since March of 2020. Now, Presidents Trump and Xi wrapping up the first day of their summit in Beijing with trade, Iran, and Taiwan all in focus. Xi said the talks laid out a vision for stable ties with the U.S., while Trump said relations would be better than ever.
The relationship between China and the USA is going to be better than ever before. Tonight, it is my honor to extend an invitation to you and Madam Peng to visit us at the White House this September 24th.
China and the United States both stand to gain from cooperation and lose from confrontation. We should be partners, not rivals. We should help each other succeed and prosper together.
After those kind words from President Trump, President Xi warned the U.S. the Taiwan issue must be handled with extreme caution and could lead to conflict if mishandled. Joining us now from Beijing is Anne-Marie Jourdain, Bloomberg's chief political correspondent and co-host of Bloomberg Surveillance. So, President Trump very happy to be there. It's a great honor for him. But President Xi was pretty harsh out of the gate.
Yeah, well, out of the gate, when it comes to the bilateral meeting, after they had this very warm welcome, and I was there for that outside the Great Hall of the People, out of the gate, President Xi Jinping asked this question about really the competition between the world's two biggest economies, likening this to the Sidious trap, which basically means could an emerging power continue to emerge without conflict of an already existing great power? That was the question he started out in terms of the bilateral meeting. And as the meeting took place, and it went for about 2.5 hours, why Taiwan is really the big subject matter is because while the meeting took place, China media pushed out a readout from Xi Jinping saying that he brought up the issue of Taiwan, saying it was the most important issue in China-U.S. relationships, and if mishandled, it can bring this relationship to a dangerous place. Now, it's not unusual that a Chinese president would bring up the issue of Taiwan, but it is interesting that it was brought up in a readout while the two were still in the bilateral meeting, and then hours later, when we received the White House readout, Taiwan was not mentioned at all.
It is fascinating. What about Iran, Anne-Marie? Because there had been some communication that the U.S. wouldn't be asking China's help on Iran, and then I saw comments from Marco Rubio on the plane that indeed that would be part of this discussion.
Well, Iran was definitely part of the discussion, according to the White House readout of how the bilateral meeting went. In terms of how the United States saw it, is that Xi Jinping expressed his displeasure with the militarization of the Strait of Hormuz, as well as he doesn't want to see a toll when it comes to ships passing through the Strait of Hormuz or attempting to pass through the Strait of Hormuz, and that the two agreed that Iran cannot have a nuclear weapon. Clearly, China, though, is the biggest revenue driver for this regime. They buy the lion's share of Iranian oil. They recently told a number of firms that they can ignore the sanctions when it comes to buying Iranian crude. So clearly they have at least some indirect power here, or direct power in terms of money, in terms of their influence on Iran. So that was telling that this was in the White House readout as well. Really, the national security geopolitical concerns is what is making a lot of headlines. But one thing that was also very clear to me from the White House readout is that this administration wanted to really focus on the deals. And already, I think, in a sign of goodwill, you have seen China have new licenses, import licenses, renew them to buy U.S. agricultural products like beef. They have another day of meetings tomorrow. Potentially, we're going to get more clarity on a number of issues, like when it comes to chips. Individuals like Elon Musk and Jensen Huang are here. I know there's a lot of anticipation, potentially. Reuters had a report about NVIDIA chips that the United States is saying that they can sell into China. Well, that already was an issue that was resolved in January on the U.S. side. The big question is China going to allow firms to actually buy them?
All right, Anne-Marie, great to get you on the program. Looking forward to your interview with Bloomberg Trade, with U.S. Trade Rep Jamison Greer later on tonight. Anne-Marie Horton there in Beijing. Now, speaking of trade, NVIDIA CEO Jensen Huang says the meetings in China went excellent. He spoke with Bloomberg's Colin Murphy in Beijing.
One of the most important summits in human history. And the two presidents, President Xi and President Trump, have such a wonderful relationship. This is an incredible opportunity for us to rely on the relationships to build a much, much better partnership.
Did you get any specific customers for your chips for the H200?
We didn't really talk about. I'm here to support the president and to represent the United States.
Those comments coming as Reuters reports that the U.S. has cleared around 10 Chinese companies to buy NVIDIA's H200 chips. Treasury Secretary Scott Bessent saying he is not aware of any new approvals for NVIDIA. Let's get more at Bloomberg Tech's Ed Ludlow. So, Ed, this is a pretty murky situation, right? And I know that the U.S. has already given NVIDIA clearance to sell some chips as long as it kicks back a certain percentage of that revenue to the government. Are there buyers for these chips?
Murky on the China side, right? So throughout this whole period of time where the United States has granted licenses allowing NVIDIA to export, technically, those generation of chips, Jensen Huang's always been consistent in saying when we negotiate these, we don't negotiate them with the Chinese government. We don't negotiate them even with any government agency. If China permits that group of companies to buy the H200, then the companies will place orders. And back at GTC, which is NVIDIA's own annual developers conference in March, Jensen Huang said on stage that orders have been placed. So this is mostly just an issue of chronology, because whatever comes out of the summit in Beijing, NVIDIA reports its fiscal first quarter 27 earnings next Wednesday. And either those orders are material and they'll show up and be disclosed, or they won't.
All right, so we'll see when those earnings are reported. In terms of what we know today, Cisco absolutely knocking the cover off the ball with its revenue forecast, more than $1 billion, stronger than the street had anticipated, and yet they're firing 5% of their workforce. So they're saying, we're doing so well that we're going to eliminate thousands of jobs.
I love that expression. I think you mean baseball, right? But I would interpret cricket. Basically, Cisco
There's no cover on a cricket ball.
there is a leather cover on a cricket ball, technically. Let's get to the Cisco print, which is orders of $9 billion just from the hyperscalers. $4 billion of that will convert into revenue that will show up in the income statement this year. And Cisco is proving that it is a part of the AI story. But the reason, not just the 15% gain in pre-market is important, but the sort of feel good across equity markets this morning, which our markets group, right, in the wrap credits to the Cisco print is important, is that Cisco's role in a data center is real. If the orders are placed, it means the data centers are actually being built. It does networking, which in layman's terms is all the cabling, all of the switches, and all of the routers that connect all the rows of servers inside a data center. If Cisco's really ramping up its outlook and saying that we're going to book real revenues from the hyperscalers on this, then all of that capital expenditure that we've been focused on for so long is translating now into projects in the real world. And that's something to certainly pay close attention to through Cisco's lens.
We're paying very close attention to Cerebras today, an IPO. I mean, it is incredible that they had more than 20 times the demand for the shares out. They were going to price them at 150 to 160. Now they're pricing them at 185, right? $5.5 billion, more than that, they're raising. So it just sounds amazing. But then you compare it to the leader in the space, NVIDIA, and they have less than 1/4 of the revenue of NVIDIA.
Yeah, I mean, on a fully diluted basis, you know, a market cap based on where the IPO priced of about $50 billion on a fully diluted basis. They have a big order backlog, around $24 billion. And what you need to know about Cerebras is that it doesn't just do what NVIDIA does. It doesn't just provide the sort of compute in the context of the silicon. It does full stack, fully integrated a supercomputer. It takes on the capital burden of the hardware. So how NVIDIA works is NVIDIA brings the GPU and the other core compute components in the tray. But someone like a Dell would assemble that server for them. Dell has margins in the low teens. Cerebras has margins 40, 41%. But it's never going to have margins at the 70% that NVIDIA does. What it does have is a system, a completely fully built system that has 21 times performance in terms of dollar per token for inference. That's running the AI model. And so that's the story they've got to convince the market, that they are outperforming NVIDIA just on the computer performance basis, and that they can scale and meet the backlog that's there. But you're absolutely right to frame this more of them chipping away at what is an NVIDIA monopoly still.
Ed, great roundup there. I look forward to your program. Bloomberg Tech kicks off at 11 o'clock. Ed Ludlow and Caroline Hyde co-hosting. Catch Ed's interview, by the way, with the CEO of Cerebras, Andrew Feldman. That's at 11:30 a.m. New York time. Now, retail sales advanced for a third month in April, pointing to some signs of consumer resilience despite higher gas prices. Let's break it down with Michael McKee, Bloomberg's international economics and policy correspondent. So, Mike, what do we know about, I mean, obviously gas sales are going to be great, so the dollar number on the headline will be big, but what do we know about the consumer's ability to spend otherwise?
The key point, that retail sales are denominated in dollar sales, and so it made a big difference this past month. The consumers are still here, although we're getting more and more categories that saw declines, which is even harder to do when you have dollar inflation. Retail headline in about 0.5% higher, but you take out gasoline, which was up 2.8%, and you get a 0.3 rise. Import prices, which I don't have on here, were up 0.7 without gasoline and petroleum in it. And I just point that out because imported gasoline up by 19%. So gasoline having a big impact on all of this. The retail core, which is what goes into the GDP numbers, up by 0.5%. That's still relatively strong. Jobless claims, no change really, still showing a stability in the labor market. Now, the biggest movers in terms of retail sales, gasoline, as I mentioned, electronics and appliances were up 1.4%. I don't know exactly why. It's not like there was a new iPhone or anything out at this point. But clothing sales down 1.5%, and car sales down 0.4%. That's because Matt always just leases his cars.
That is not true. I've never leased a car. I always buy them. Well, I finance them usually. Yeah.
Well, anyway, this all leaves the markets wondering what's going to happen. Obviously, we're seeing the consumer slow down, but jobless claims not up. So what does Kevin Warsh face when he gets in? Markets are still saying he faces interest rate increases. You look at what Fed funds futures are forecasting, and they see nothing but rate increases in the months ahead. Now, those don't mean a lot of different increases, but they are different percentages in terms of things going up. And we want to remind you that Kevin Warsh, when he takes office, kind of still on the clock. Scott Bessent was on CNBC this morning, and he was asked about the president and his patience, and Bessent said, we might get a series, one or two more hot inflation numbers, but then I think we're going to see a substantial disinflation, and then I think he's going to be in a very good position to cut rates. So the administration still has its finger on the rate cut button.
Right. Well, they're pushing for that outcome. The question is whether the economy or the markets will allow it. Mike McKee is our chief policy and economics correspondent. Coming up next, Maria Waitman of State Street says tech is the only story in the equity market. Tech is Tina. She joins us next. And later this hour, Danny Berger moderates a panel on the AI-powered workforce with the CEO of Bridgewater, Nir Bardea, as well as Cisco's chief people officer, we're still using that term, and Authentic Brand CEO Jamie Salter. They join Danny live from the Global Citizen Now event in New York. This is Bloomberg Open Interest.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
The NASDAQ 100 set for a third record high since Monday. Maria Waitman, State Street Global Markets head of equity research, says tech is Tina. Writing, for us, there is only one story in the equity market at the moment. Tech, it is the only sector with strong and predictable earnings growth and margins resilience. Maria joins us now, I'm happy to say. It's a little bit concerning, right? If there's only one sector, if there's only one industry in this market that's reliable, can you still be bullish on stocks through the end of the year?
Yeah, I mean, I have to say we are very bullish. We have been bullish on stocks for a while, exactly for the tech story. It is the largest sector. It is the sector with the strongest earnings, and it's pushing prices higher. And I think it's kind of interesting to understand that there is still plenty of liquidity in the market, and it's just going through a very narrow funnel into the tech sector. No other sector is being bought. No other sector is showing strong kind of earnings growth. No other sector is performing. So it is all the money going into tech sector, and there's still plenty of money, so that's kind of very big support for equity.
Are the other sectors, though, looking particularly weak, the rest of the market? I mean, with the closure of the Strait of Hormuz, with the doubling of oil prices, with the China-Taiwan situation, are we looking through all of that, or is it actually affecting the rest of the companies in the S&P 500?
I mean, I have to say, I drew this chart yesterday, and it really surprised me. If you look at performance by sector, by country, by region since the start of the war, U.S. is up, Korea and Taiwan is up, tech is up, and everything else is barely positive, right? So we have this kind of all stocks making all-time high, MSCI World, NASDAQ, S&P, everything. But actually, under the surface, it just tech that is rallying. Nothing else does. So I think market is not really looking through Strait of Hormuz problem and kind of worsening economic outlook. It just tech strengths masks everything else. So I think performance is not that irrational.
At what point, though, do oil prices, does inflation, do higher rates start to come through, or will they have no effect on the tech bull market?
I mean, I think tech is probably more resilient than any other sector. So I think you see a lot more underperformance everywhere else before we start seeing tech cracking. But I mean, yes, it's not kind of tech is not kind of unbreakable. So there is a set of circumstances when we start worrying. But I think there are lots of other kind of dominoes to fall before we will start worrying about tech in a serious way.
You know, the point has been made, Maria, many times that the U.S. is energy independent to some extent. Obviously, oil is a fungible commodity, so it trades at the same price around the world. But natural gas, for example, that feeds and powers our data centers, we pay less for it than we did before the war. And in Europe, you have a serious problem when it comes to energy. Is that going to affect, you know, the bull market run that Europe showed last year?
No, absolutely. And I mean, we were kind of the opinion that European rally was a little bit of a like hope trade. So European stocks, of course, they are they're cheap, they're trading at a big discount, and of course, like profitability was weak. And there was this hope at the end of last year that overall economic growth is improving, and there are fiscal spending coming from European governments that can affect those earnings in Europe, and kind of market tried to kind of move away from expensive and wonderful U.S. to cheaper European stocks. And but like what we're seeing now, and particularly with the Strait of Hormuz issue and rising gas and fuel price, very kind of energy-hungry European companies, they are struggling. So profitability in Europe is, I mean, Europe seeing the biggest downgrades of all regions in MSCI World right now. We see very strong institutional investors selling. So it kind of makes sense that this kind of the rotation out of Europe and actually the rest of the world into US, that's really what we're observing in our data set.
All right, Maria, great to get some time with you. Really appreciate it. Maria Waitman there of State Street saying tech is Tina right now, but that doesn't dissuade her from continuing bullish sentiment on the broader market. Next hour, we get an interview with the CEO of Invesco, Andrew Schlossberg. We'll get his take when he sits down with our own Katie Greifeld at the firm's New York headquarters on what comes next for the asset manager as we look at futures higher again after yet another record high for the S&P 500, for the NASDAQ 100 The bullish sentiment continues as President Trump meets with President Xi in China. You can see S&P futures up 0.2%. NASDAQ futures just barely up, but the small caps gaining as well. And we're not looking at such strong rates either. 441 on the 10-year right now as we see the price of oil, Brent crude, holding at $105 a barrel, NYMEX just over 100. We are going to bring you the opening bell in just 6 minutes' time. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Take a look at some of the movers this morning. StubHub reported better than expected first quarter results, reiterated its annual forecast, and the shares are soaring. Viking also delivered revenue that beat and announced a C-suite shakeup, and those shares are up 9%. Klarna posted a small profit as it looks to diversify its funding sources. Also a big gainer, the opening bell on the other side of this break.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
After an all-new record close yesterday, we're looking at higher futures this morning. The trade is just about to start. This is Bloomberg Interest. I'm Open Interest. I'm Matt Miller. You can see S&P futures up. NASDAQ futures not really moving so much higher right now, even though the story today is tech. It's Cerebras. It's Cisco. It's Ford, which is an AI story as well. It's Blackstone Digital Infrastructure Trust. They're ringing the opening bell at the New York Stock Exchange. That is a big dude, and it's a big day for them as they IPO that. Down at the NASDAQ market site, you've got the AI darling of the hour, Cerebras, ringing the opening bell. 20 times oversubscribed in their IPO. They were looking to price shares at 150 to 160. They went to 185. They're raising $5.5 billion. So it's all about tech today. Cisco is another big story after coming out with earnings that beat and a revenue forecast for the quarter that was $1 billion more than the street was expecting. They're also going to fire thousands of people, reduce their workforce by about 5% because they're doing so well. As a result, the shares are up 13%. NVIDIA shares up 2.33%. Reuters reporting on NVIDIA that the U.S. has cleared around 10 Chinese companies to buy NVIDIA's H200 AI chips, but the U.S. has already made an exception for H200 sales to China, as long as they kick back a certain portion of that revenue to the U.S. government. Let's talk about all this tech madness with Stephanie Aliaga, J.P. Morgan Asset Management global market strategist. She joins me here at the desk. Stephanie, great to have you on a day when there's like nothing else but AI, and I think it's really representative of this market. It doesn't matter that oil is twice as much as it was a couple of months ago. It doesn't matter that rates are higher. It doesn't matter what the Fed does, as Kevin Warsh is confirmed chairman. All that matters is this AI CapEx story.
And it's true that the economy is a lot soggier this year for a variety of those reasons. There are still these headwinds, but we just have this AI rocket ship strapped to our back that is getting us through all of that, at least when it comes to what matters for earnings. And if we think about what has changed this year around AI, 2026 is going to go into the history books as the year of agentic AI, the year that the compute math was just completely rewritten. And we are in the midst of a market where the demand for AI is just accelerating. It's hitting this wall, and the supply of it cannot nearly catch up quite as fast. But I think what is really fascinating, particularly this year relative to like 2023, when we were first talking about chip makers like NVIDIA, is that the market for picks and shovels does continue to evolve. And standard economics, what happens when you have high prices and hot demand? You invite newcomers. You invite different parts of the ecosystem to come in. So we've had these legacy chip makers getting a second life, right? You've had all this demand extend overseas. Korea, Taiwan just continue to be in the focus point. So I think this AI wave, like, it still remains concentrated in the broad sense of it all, but it has broadened out. And the reality is, even if the charts of some of these stocks almost look like meme stocks, The exceptionalism is in earnings, not just in runaway multiples, and that is just something that we really do not see quite often.
You don't actually see runaway multiples, right? We were marveling over the fact yesterday that Micron was only trading at 8 times forecast earnings. I mean, that's just nuts, considering the chart is absolutely hyperbolic. Are we moving past kind of the boom-bust cycle? Are we moving out of, is this more than just a demand shock and maybe a change in the long-term run rate of growth?
Yeah, I think the reality is these chip companies have always been very cyclical in nature, right? Very tied to overall growth. But we're seeing that break down a bit now that you have structural demand growth around AI. And I think the reality is, beyond just some of the U.S. chip makers, if you look at Korea, okay, that is an index that has gone vertical this year, and yet their forward valuation is hovering around 6-7 times. And that's also mind-boggling, right, given what you've seen the performance. But I think the reality is, you know, investor positioning, particularly globally, but even for some of these other parts of the supply chain, hasn't been as heavy as it's been on companies like the hyperscalers for the last few years. And that repositioning may have a lot more room to run if we're going to learn that some of the parts of this value chain that are most exposed to very attractive economics, because, look, we're going to be supply constrained around AI for the foreseeable future, for at least the next few years, those companies can come in and really participate more in this market.
Does the participation really broaden out? As you point out, the market for picks and shovels is just getting bigger and bigger. I mean, who would have thought Ford as an AI play? Yeah. And honestly, the stock rallied 13% yesterday on the idea that its batteries could be used in data centers. And it's not a laughable idea, right? I mean, it makes a lot of sense. So does that success broaden out? Do we see second and third derivative effects?
I think, broadly speaking, in different sectors like industrials, materials, we see a lot more runway. But I think at the end of the day, this is like a stock-by-stock kind of decision. You know, what are the moats that they have? What is their capacity to ramp up supply in the face of demand? And, you know, what is their competitive, you know, moat in delivering that? If you think about something like advanced chip fabrication, like what, you know, Taiwan has been doing for so long, that requires expertise that has taken decades to develop. And so I think there's a real question of, like, some of the competitors that are entering the scene here is, what are their core operations and how profitable can they be in this new AI business venture? Because, yeah, there's a lot of demand to go around, but what really matters is, you know, how you can, you know, produce that supply, your sensitivities to supply chain risks, input costs, and so forth. So all of that still matters.
Is there anything you want to steer clear of? I mean, this year, we've learned a lesson about software, for example, as it relates to the private credit, maybe over-investment, because the concern is that AI eats their lunch. Now, that hasn't been decided one way or the other, right? But is there anything that you want to just be careful about right now?
Look, I think we're still quite bullish around AI over the medium to long term, but we do think investors should be buckled up. And when it comes to disruption, or what I like to say, AI is going to create this environment of heightened creative destruction. Creative destruction is nothing new, but it is something that's going to be happening a lot faster this time around. Some companies, some industries are more exposed to that. Now, in its wake, we're going to be left with more productive, profitable, AI-ready firms, but that process can be difficult, and investors today may not have all that visibility today to estimate who those winners are going to be. So when it comes to an industry like software, a lot of the legacy business models, they need to be rewritten and redone. Where I have some caution, though, is just saying that it's going to be the demise to the whole sector, because we simply don't know yet.
Right.
And I think, you know, some of the recent positioning changes that these companies have made and reinventing the SaaS business model, like if you're catering towards agents, that could be a much wider demand pool than humans who are limited in nature, only have so many hours in the day, and are only going to use your tool tens of times a day at best. You have an agent that could be hitting your Salesforce systems or whatever it is, like thousands of times a day. You know, that is that's a significant shift, but can you monetize that? And I think that's going to be a big question. So I will say, when it comes to the software woes, like, some of that is definitely justified. Investors don't like uncertainty. We have a lot more uncertainty, but I think medium to long term, you know, there could actually be a lot of good news from this.
It's not boring, is it?
Yeah, no.
Stephanie, great having you on the program today. Thanks so much for joining us. Stephanie Aliaga there of JP Morgan Asset Management. Let's get a check on what's going on in the markets. About 7 minutes into the session here, we see the S&P 500 up 25 points. That's good for about 1/3 of 1%. This is the move screen. I think it's the most dynamic way to look at any index on the Bloomberg Bloomberg Terminal. We have good breadth today. More than 310 stocks are gaining for 186 that are losing. You can see NVIDIA adding the most points. Obviously, a $5.5 trillion company. When it moves, it tends to bring markets with it. It's adding 15 points on a 2.5% move. Broadcom is up. Cisco is up. Applied Materials is a gainer. Lam Research is up. So you see these big tech movers here. Among them, J.P. Morgan, Caterpillar, I guess, could be now an AI company, and ExxonMobil. The gas price, the oil price, and also the power story is one that we've been following closely this year. On the downside, Apple and Microsoft, as well as Intel and Google, are losers. Not big losers. You do see Intel shares down 3%, but they've had a monster run of late. You also see Eli Lilly and AMD and Qualcomm down today. So that's interesting to see a couple of those chip makers, and Micron a loser, only 0.7%. Obviously, Micron has been ripping face year to date. When we come, well, let's take a look at the industry groups here, I should say. IT, obviously the biggest gainer, financials and energy on the upside, healthcare, communication services, and materials on the downside. When we come back, I'm so excited to get to this story because Ford, obviously an iconic car maker, right? A big industrial, maybe an AI play as well, after Morgan Stanley says it's possible they could do a deal with a hyperscaler for their batteries. That's next with Keith Naughton. This is Bloomberg Open Interest.
Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving something.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Quick check on what's going on in the markets. We just showed you the S&P with the gain now almost 0.5%. It's 74.77 after another high yesterday, another high for the NASDAQ as well, and it is also up 0.5%, 29,510. Brent crude coming down a little bit, and it's at $105, while NYMEX is at 100. So that's bullish for markets. Time now for your top calls. Some of the analysts' action and focus this morning. First up, TD Cowen is upgrading Starbucks to a buy, saying its North America comeback is starting to work and should drive higher sales and earnings. The firm points to strong coffee demand, multiple sales drivers, and improving margins. Starbucks shares up 2%. Yeti's stronger profit outlook is drawing upbeat reactions from Wall Street. William Blair says investors have little to complain about as sales growth looks strong. Citi points to better than expected sales, but flags tariff pressure and weaker U.S. consumer as a risk, but the consumer doesn't seem that weak, and investors like the stock. It's up 9% in this morning is early trading. And finally, Morgan Stanley says Ford will likely land a big deal soon to supply battery storage systems to hyperscalers. The firm sees this new energy business as a major growth driver that could be worth $10 billion as Ford builds more capacity and wins customers, supporting its shift into a higher profit business. Let's talk about that right now with Bloomberg Autos reporter Keith Naughton. He joins us out of the Motor City. And Keith, what an incredible story, right? Ford fights currents for years to build this battery factory with a Chinese supplier, and now they could be selling container-sized battery storage solutions to hyperscalers for billions of dollars. Tell us about it.
Yeah, as my colleague Lee Denning wrote this morning, Ford now appears to be an AI stock. This potential for doing deals with hyperscalers has given the market a completely different view of this sort of old economy, 100-year-old warhorse. They now see it as being part of the AI boom. And why not? They're going to build these very large, batteries for data centers and for utilities and for hyperscalers that they'll put on sale next year. And demand for that is off the charts, right? It's expected to double by the end of the decade.
Yeah, one of these, I was reading about one of these DC blocks that provide like 5.5 megawatt hours of energy. If that were cars, it would be like 50 or 60 car batteries, right? And if you do a deal with one big hyperscaler, like a gigawatt campus, that would be like selling 200,000 or 300,000 EV car batteries in one fell swoop. So that just shows you how big this market could be.
Exactly. So that would be a full factory production worth of cars, right, Matt? So that's why people are so excited. Also, it's a very high margin business, over 20%. The car industry is a single-digit margin business. So Ford is still plugging away at electric vehicles. They have plans to launch an affordable one next year. But this really shows how they can pivot away from the weak demand EV market to the very, very high demand energy storage market.
It's interesting because I don't know if Ford was planning this or it just lucked into it because of a shift away from the full BEV market.
Yeah, luck has a lot to do with it, Matt. The plant where they're going to build these big batteries originally was planned as an electric vehicle battery plant. And of course, electric vehicle demand went south. So they are converting it to an energy storage plant. They also are fortunate that they already had the licensing agreement with CATL, the Chinese battery giant, and they'll be making their LFP batteries. So they've just shifted that licensing agreement to the Kentucky plant where these big batteries will be built. They're also going to build smaller energy storage batteries for consumers at a plant in Michigan that will open this year that will also make EV batteries. So the CATL deal really gives Ford a leg up among all automakers who are trying to make this pivot to energy storage.
Yeah, in fact, I always pull up the comp function on the Bloomberg to look at shares of one car maker versus another or a company versus an index. It defaults to 5 years. Over the past 5 years, total return on Ford stock, 60%. It has now outpaced General Motors to be the biggest winner in a 5-year period, beating Stellantis, beating out BMW, Volkswagen, Mercedes. It's the strongest stock in 5 years of all the car makers that I looked at, not including Tesla, of course. Do you think we're going to see others follow suit here, Keith?
Yeah, I mean, General Motors, Stellantis have both said they are going to get into the energy storage business. They have to do something with this battery infrastructure that they devoted billions of dollars to. So they're trying to make this change over to energy storage because it's such a great growth business. You can get into it more quickly. The overhead is lower. You know, Ford will have this up and running by next year. They're investing $2 billion to get it going, and the returns could be very high. The analysts are saying it's a $600 million a year EBIT business.
All right, fascinating stuff, Keith, and really appreciate your reporting. Bloomberg Autos reporter, he covers Ford for us, Keith Naughton out in Detroit. Definitely check out his work on the terminal. There's a great story that Keith and Colin Murphy wrote about the deal that Ford did with Cattle as well, or CATL, in Marshall, Michigan. Also, check out my podcast with Hannah Elliott. It's called Hot Pursuit. You can search Bloomberg Hot Pursuit on any of the platforms where you find podcasts, and just relax and enjoy an hour of car talk. Coming up next, AI chipmaker Cerebras gears up for the biggest IPO of the year so far. This is Bloomberg Open Interest.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what stocks are doing just about 21 minutes into the session. We're at all new record highs. It doesn't matter what happens with oil. It doesn't matter what happens with rates. It doesn't matter what happens with the Fed. All that matters is AI CapEx driving us to 74, 75 on the S&P, driving us to 29,500 on the NASDAQ. Check out, okay, we do have oil down a little bit. Brent crude off about 0.5%, and it's only $105 a barrel now. NYMEX is only 100. But you have huge gains on, it's really earnings driven by tech, right? Klarna up 10%, Viking up 10%, NVIDIA gaining 2.5% on hopes that some Chinese companies will order some of its lower-level chips. Alibaba doing poorly. By the way, if you look at the summit and try and determine winners versus losers, U.S. companies, U.S. tech companies are really soaring today, and some of these Chinese companies are doing poorly. So maybe the U.S. is getting the upper hand in those trade discussions. Ford up 5%. Now the maker of my beloved Raptor and the Mustang GTD is a tech company making batteries, hopefully for hyperscalers. Morgan Stanley says they could get a big deal soon. And Cisco knocking the cover off the ball with its revenue outlook up 15% in the early trade. So these markets continue to soar as we get a new entrant, AI chip maker Cerebras, raising $5.5 billion. It's the biggest IPO of the year so far. Let's bring in our IPO, meme stock, and SPAC reporter, Bailey Lipschultz. So it's, on the one hand, it's an amazing story of oversubscription, right? I mean, so many, everybody wanted to get their hands on these shares. They were going to sell them for $150 or $160, and they finally got out of the gate for $185. What do we know about Cerebras?
Yeah, big rally, big expectations. As you mentioned, $150 to $160 was actually well above what they initially were targeting when they launched. Some of our colleagues broke news that ARM and SoftBank were actually trying to acquire the company just in the weeks leading up to the IPO. But there are lofty expectations, as you can see. Market value about $40 billion. We have had subscription levels north of 20 times. Talking to buy-siders, there was more than $10 billion of demand for this IPO before it even launched. We haven't seen that in quite some time, and I want to call out the obvious and say semiconductors are absolutely en fuego. So if the SOX is up 50% in 2 months, it makes the bankers' jobs quite a bit easier.
Of course. Now, on the other hand, we say biggest IPO of the year, right? But they raised $5 billion, and SpaceX is going to raise like 75, right?
It's still big. So this would
I know, but it's a 50 all in, $50 billion market cap. Nvidia is still worth $5.5 trillion,
exactly.
right? I mean, their sales are less than 1/4% of what Nvidia does in sales.
It's crazy, though, that in 2026, we're calling a $5.5 billion IPO small because SpaceX wants to raise $75 billion at a potential $2 trillion valuation. That is not normal. That's not normal. But this is.
We're getting older, Bailey. We're getting older.
As we mature, our relationships mature. But yeah, no, I mean, this is right in kind of in vogue with everything that's been working. We've been seeing alternative energy rallying, anything around AI. If you're a chip maker with the kind of thought that you could compete with Nvidia, to your point, if we're talking about a $5 trillion company, $50 billion, $100 billion is a small fraction of that.
I mean, the fact is we've already seen companies like Nvidia and the other hyperscalers, we've already seen valuations on non-public companies like AI, like OpenAI and Anthropic soar. Yeah. And investors are just looking for anything else, right? So even if it's a company that only makes 1/4% of the revenue in Nvidia, they're all in.
Well, and this is a company that tried to go public a few years ago at a small fraction of this. They raised money privately not too long ago at a fraction of the $40 billion, potentially much larger than that, depending on how it trades. So we've just been seeing quantums of capital being plowed into anything around this. And again, it's one of those conversations that, are we going to look back 5 or 10 years from now and say that was kind of interesting back in May of 2026? Or is it the start of a seminal event? And that's kind of the beauty of markets, as the bankers tell me.
All right, Bailey Lipschultz, great to have you on the program. Are you hosting Bloomberg this weekend?
No, not yet. That's August.
Oh. Okay, I heard
so far
Christina Ruffini said, you know, Bailey's going to be on with me, and I was like, I'm going to tune in for that. By the way, you can also tune in for the CEO of Cerebras, Andrew Feldman. He's going to join Ed Ludlow on Bloomberg Tech at 11:30 a.m. Man of the hour. In the next hour, the man of the next hour, Invesco CEO Andrew Schlossberg joins us on this program on what comes next for the asset manager. He's going to be interviewed by our own Katie Greifeld and Resilient Health CEO Dr. Dinesh Nagda on cloud clinics and affordable healthcare, making deals with maybe your employer or your insurer. Plus, Danny Berger moderates a panel on the AI-powered workforce with the CEO of Bridgewater, Nir Bardea, and others. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
From ABC News, I'm Chuck Severson. Slowing down a bit last month, American shoppers, because some of the money that would have gone into buying other stuff instead bought gasoline at higher prices. The Commerce Department says retail sales in April rose 0.5%. The month before, retail sales were up 1.6%. The number of people making first-time applications for unemployment insurance went up by 12,000 last week to 211,000, more than double what analysts were anticipating. It would be a terrible mistake, says Secretary of State Marco Rubio, if China tried to take Taiwan by force and the U.S. position on the island is unchanged. Rubio is at the Beijing summit with Presidents Trump and Xi. ABC's Mary Bruce in China's capital.
In their over 2-hour meeting, Xi delivering a stark warning to Trump about Taiwan, which Beijing claims is its own territory. According to China's state media, Xi telling Trump if the issue is handled poorly, the two countries will collide or even clash.
Concerns in the Middle East, with British officials saying a ship that was anchored south of the Strait of Hormuz has been seized and is sailing toward Iran. No claim of responsibility. There are also reports that another ship has been attacked. The one American who tested positive for the hantavirus has been cleared to move out of isolation in Omaha, Nebraska, after testing negative. Here's what is bringing both sides together. ABC's Jay O'Brien on Capitol Hill.
This is a rare bipartisan partnership between the top Republican and Democrat in the House, Speaker Mike Johnson and Minority Leader Hakeem Jeffries, aimed at combating sexual misconduct on Capitol Hill. It will be led by two female members of the House, Democrat Teresa Legger Fernandez and Republican Kat Kemick, with the goal of identifying reforms and solutions to make Congress safer for staff.
Poland's capital, Warsaw, registering its first same-sex marriage today, implementing court rulings. You're listening to ABC News. Search and rescue operations continue at the site of a building collapse in Ukraine's capital, Kyiv, with nearly a dozen people reported missing, says President Zelensky on a post on X. This after possibly the largest Russian drones and missiles attack overnight. Several deaths. ABC's Ian Pannell.
Putin's military striking energy, water and transport infrastructure, but also hitting residential buildings. The capital, Kyiv, repeatedly hit.
Polls show the Russian leader's approval rating falling. Facing growing pressure to quit his job, more than 80 lawmakers in his own Labour Party urging him to do so, British Prime Minister Keir Starmer. This over the party suffering historic losses in local and regional elections. In London, ABC's Patrick Reevell.
It now does look like Prime Minister Keir Starmer could well face a leadership challenge, perhaps today. The Health Secretary, Wes Streeting, who is widely seen as a key challenger to Starmer, announced his resignation, saying that he has lost confidence in Starmer and that Starmer will not lead the party into the next general election.
Our Patrick Reevell. Honda says it racked up a full year loss for the first time ever, losing $2.7 billion in the last fiscal year due to a costly electric vehicle strategy. Japanese automaker abandoned many of its plans for EV models, including those in the works, in a joint venture with Sony. Chuck Sievertson, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube. We're streaming live on Bloomberg.com/video. That's where you can find us here. Scarlett Fu out today. John, I'm learning something, John Tucker, that there's something called a travel day. I wasn't aware of such a thing.
Who comes back from San Francisco and goes to work that morning?
Dude, back in the day, we would red-eye back and put in a 14-hour day. That's how we rolled back then. That's how I was trained as a kid.
Smallest violin.
Exactly. So there we go. Scarlett Fu out today. But we got Stacey Vanek Smith at Bloomberg News. She joins us here. She's got a podcast. What's your podcast that you and your
Max have? Everybody's Business.
Everybody's
from Bloomberg Business Week.
Yeah, there you go. So we got that. So Stacey joining us here for the next couple hours, which is a good thing. Coming up, we're going to check in with Michelle Jamrisko, Bloomberg News White House and National Security Editor. Get the latest on the Trump-Xi summit happening in Beijing. They just finished up. It's about 10 p.m. over there in Beijing. Sylvia Jablonski, CEO and CIO of Defiance ETFs, will get us her thoughts on the markets here. Michael McKee, Bloomberg International Economics and Policy Correspondent. He'll talk to us about Kevin Warsh. Got confirmed as Fed chair. I think that starts tomorrow for him as well. Dan Ives, the dude's in Poland. I have no idea why he's in Poland. I mean, are there tech investors in Poland? Dan Ives, from Global Head of Technology at Wedbush Securities, can join us. We'll talk technology there. So we got a lot coming up in the next couple hours. Let's kick it off with John Tucker and a Bloomberg Business Watch.
All right, guys. Adding to the records for the S&P 500 and the NASDAQ, this Bloomberg Business Flash brought to you by IBKR. Will the Fed raise rates by 25 basis points in June 2026? Trade your predictions alongside your stocks and options at ibkr.com/predictions. Last trading day, June 17th. So what's in the driver's seat? Take your pick. Retail sales advancing for a third month in April. So some signs of consumer resilience despite all the inflation that we're seeing. Best performing stock in the S&P 500 right now, Cisco, after their earnings came across, they're up 13%. Overall, the S&P 500, 31 points higher. That's up 0.4%, 74.75 on the index. The Dow up 292 points. That's up 0.6% right now. And the NASDAQ Composite Index, 98 points higher. That is up 0.4%. And Brent Crude, the active contract, down 0.3% right now at 105.35 a barrel. NVIDIA climbing for a seventh straight day. And remember, they report after the close of regular trading. That's next week, Wednesday. Who knows if they're going to sell more chips to China or not. 8 of the 11 major industry groups in the S&P 500 higher right now. Information technology is leading the way. Just talking to Bailey Lipschultz. He was going on TV. I'm like, is it Cerebrus or Cerebrus? He said, say it both ways. That way they can't accuse you of being wrong.
Okay, I go Cerberus, but I don't know.
They did file the registration work with the SEC, aiming for this, IPO. So who knows?
So it priced last night, and it's going to start trading today at some point.
At some point,
yes,
this afternoon, we think.
Yep.
So anyway, we'll keep an eye on that. As soon as the first trade comes across, we'll tell you about that. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tracy. Hi, Tracy. Stacy.
Yes.
I go by both. It's okay.
Stacy Bannock-Smith.
Yep, absolutely. She's sitting in for Scarlet Fu because Scarlet's traveling today. So that's what the TV folks they do. They travel.
Well, she's the smart one.
She's the star. I'm the numb nut that rushed back. But anyway, we got Stacy Bannock-Smith, Bloomberg News, joining us here, sitting in for Scarlet. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As John Tucker's just reporting, we got some green on the screen. We'll take it. Let's see where some stocks on the move today. We do that with Bloomberg's Matthew Griffin. Matthew, what are you looking at today?
Well, Paul, I have not been traveling this week, so I've just been here watching the market. And we've got a few names that I think are worth hitting on. One is, of course, Cisco, worth diving a little bit deeper into what's going on there. That stock, ticker CSCO, up as much as 17% today in their best day since 2011. And it is the latest big stock move in the wake of AI-related layoffs. Cisco says that they are cutting no more than 4,000 jobs, about 5% of their workforce, to give them the focus and urgency that they need to win in the AI era. They are going to, at the same time, be making investments in things like silicon chips. The networking equipment company is seeing orders grow from these hyperscaler customers, the companies that run the largest data centers. So I would compare this maybe to something like Meta, cutting jobs as it invests even more in AI and being rewarded by investors for it.
Is the job cutting just to free up money to invest more in AI?
This is what it seems like. This is not something like, for example, a Block, which says we are going to actually have each worker be more productive because of AI. It seems like they potentially they want to direct their cash flow elsewhere. That seems like the implication as you read the blog post announcing this.
All right, what's the next one?
I've also been looking at another AI-linked name, Legence. This has been one of the sort of high-flying AI-related industrial names, but it seems like the rally might be stalling out there. That stock, ticker LGN, down about 5%, even after the engineering company raised guidance for revenue and profit this year. This company does installation and maintenance for things like HVAC systems they sell to data centers. That stock, though, it was up more than 250% from its September IPO, and it seems like, I was going through analyst notes, a lot of positivity there, but it seems like investors don't see a reason to bid the stock even higher from here.
All right, last one, Bullish.
Bullish, the latest crypto company to have a disappointing reaction to its earnings. The cryptocurrency exchange reported a widening loss per share, $3.85 compared to $3.05 in the quarter. Digital asset sales falling, and they attributed it, like a lot of companies, to falling Bitcoin prices. That's ticker BLSH, down 11% today.
All right, good stuff. Matthew Griffin, Bloomberg News, giving us some of the movers there. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. The news of the day and overnight was coming out of Beijing. President Trump meeting with President Xi in Beijing. They had a full day of meetings, capped off by a dinner. And we saw President Trump and the various CEOs leaving the Great Hall of China just maybe about an hour ago. It's about 10 p.m. Local time in Beijing. Let's get the latest reporting from day one and what we can look forward to day two. Michelle Jamrisco joins us, White House and national security reporter for Bloomberg News. She's down in D.C. Michelle, what are the takeaways from day one of this meeting between the U.S. and China?
Yeah, well, a lot of rhetoric on both sides. And of course, as you always is the case with U.S. and China, different statements were released based on what they wanted to project out of that meeting, the 2.5 hours of the two leaders sitting down together. So we did get some good news first. It seems like there were some agreements in terms of Chinese purchases of oil and a willingness to kind of move forward on some of the rumored deals that they think that they'll will purchase more U.S. agriculture, soybeans, and the like, but we haven't heard details on that front. What really took over a lot of attention, though, was the issue of Taiwan, where we knew that Chinese President Xi Jinping would bring up the self-governing island that they claim as their own, kind of pushing for a change in U.S. policy, which they probably won't get, at least the U.S. side has said they won't get, and also putting pressure on Trump to not move forward with a $14 billion arms sales package that many in Washington have actually kind of supported and pushed the president to make clear he supports as well. So that offered a little bit of a thorn in the day's events. We haven't yet heard, Trump himself has been uncharacteristically quiet, at least on the first day of the two-day summit. So we haven't heard directly on this issue, but we did hear from Secretary of State Marco Rubio, who tried to downplay the issue of Taiwan, saying it didn't come up prominently in the talks, and also saying U.S. policy toward that island is unchanged. So that still remains to be seen. So we're expecting to hear a little bit more about maybe deals that they have put together. Also on the tariff issue, I mean, the whole point of this was as a follow-on to the October meeting in Busan, South Korea, and so we haven't yet heard exactly how they'll move forward on trying to de-escalate the tariffs that they currently have. There have been some rumors, and Treasury Secretary Bessent addressed this morning, that they may kind of follow through on a sort of billions of dollars and removing tariffs on goods on each side that don't threaten national security. So there's a lot in the offing still as we look ahead to day 2 of the summit.
It seems like there are a lot of different issues at play of all kinds. What would a victory look like for the Trump administration right now? What are kind of some of the key wins that they might be looking for?
Well, I think you have to look at it from Trump's perspective. In his eyes, it's always, projection of strength and sort of getting the headline deals in there. So I think, we did expect to have the Boeing order move through. That was one I forgot to mention just now, but we will expect to have a little bit more detail on exactly how many planes China is intended to purchase. So he's got a number of CEOs on this trip. That's been a key facet of Trump's trip over there is, Tim Cook. I almost made the president's mistake there. Tim Cook of Apple and Jensen Huang and others that have Elon Musk and others that have been all along for the ride to kind of project this willingness on the U.S. side to do more business in China, and from China's side to open up for more business. So that's at least where some positive factors could come in and positive factors and positive headlines could come in on either side. I think what U.S. wants to project also is that Iran is not a problem, Taiwan is not a problem, Ukraine is not a problem. And so to the extent that they can have some sort of agreement or some statements from Xi that show a willingness not just to look the other way, but also to kind of engage on some of these issues and perhaps offer some solutions or some support for what the U.S. wants to do to resolve the conflict in Iran, that would be helpful from the U.S. side.
Michelle, about 30 seconds left. What's on the agenda for tomorrow?
Yeah, well, I mean, a lot of things that I just mentioned. Mainly, a lot of this has been about the sort of pomp and circumstance, the projection of strength on both sides, showing the elegance and the stature of these two largest economies. So I think just a few events to kind of show that they haven't derailed talks and that they're on track for a somewhat successful, even amid low expectations, summit of the two leaders.
Michelle, thank you so much. Really appreciate it. Michelle Jamrisko, White House and national security editor for Bloomberg News down there in D.C. I guess we're going to see, Stacey, some deals like Michelle was suggesting. Maybe a deal for jets from Boeing. Maybe a deal for some of the tech companies, and that might be some, I guess, tangible takeaways.
Yeah, well, it definitely seems like a lot of businesses and different industries have a lot at stake right now, for everything from agriculture to, like you say, aerospace. So it will be interesting to see what emerges.
Yeah, I'm thinking about this, the U.S. farmers. I think they'd like to see some big soybean purchases, those types of things, which you sometimes get from the Chinese, but it's hard to determine whether they actually go through with it. S&P up 35 points, the Dow up 300, the NASDAQ up 125. So equity markets are moving here. Oil, global oil, absolutely unchanged on the day, steady. So that's probably a good thing. We'll have more coming up. This is Bloomberg Report.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. Well, right now we are pushing higher for the major averages, adding to the record close for the S&P 500 up 39 points. 0.5% higher, 74.84 the index. The NASDAQ Composite Index up 155 points, and that is a rise of 0.6%. Dow also higher, up 294 points. That's a rise of about 0.6%. 49,987 on the index. Well, Cerberus making its public debut at the NASDAQ. The ticker symbol CBRS. Now, right now, shares indicated to open at 350 buckaroonies.
Nice job, underwriters.
Yeah, this is priced at $1.80. Now let me $185. When you have a mispricing like that, is that like?
It happens on
Is that a
Sunday's
good thing
crazy.
or a bad thing?
It's great for investors that bought the deal. It's not good for the company who's leaving money on the table, maybe.
Okay. Well, Cerberus Systems raising $5.55 billion in the initial public offering. They drew orders for more than 20 times the number of shares available. Thus, you get that discrepancy there. Right now, 8 of the 11 major industry groups in the S&P 500 are higher, led by information technology, and that, of course, is where the semiconductors live. The SOX, the Philadelphia Semiconductor Index, up about 0.6% today. And I always love to say, the company that was founded on love. Yes. Cisco Systems, jumping by the most in 14 years. They had a better than expected sales forecast. Also announcing plans, unfortunately, to cut thousands of jobs. Best performing individual stock in the S&P 500, largest maker of networking equipment, and they're at this point trying to show they're successfully pivoting to the AI economy. Yeah, the founders, Lenny Bosak and Sandy Lerner, husband and wife team at Stanford, founded the company. They founded it because they wanted to find a way to communicate on their computers with each other because they were at different ends of the campus. They wanted to send their little love letters. Yeah, no, they physically got down into the sewers to run cables, the two of them at Stanford. And that's
the beginning of Cisco.
And now they're divorced. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Stacy and Paul.
Very good. John Tucker, thank you so much. We appreciate that. Stacy Vanek-Smith sitting in for Scarlet Food today. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Stocks ripping here. That Cerberus deal, I mean, that just brings you back to some times of yore when these stocks would just open up huge on the IPO, and you bring a AI stock to market for a market that's starving for AI pure plays. Boom, there you go. So perfect timing. We'll see how this thing trades here. Sylvia Jablonski joins us here, Chief Executive Officer and Chief Investment Officer for Defiance ETFs. So Sylvia, let's start there. What is kind of the AI play, do you think, in the marketplace today? Because, I mean, when this thing first started 3 years ago, it was just like, buy the chips, I guess, the NVIDIAs of the world, and that's all we needed to know. Now it seems like the market's trying to discern some winners and losers. How do you guys think about it?
Yes. Good morning, Paul. It's hard to beat that last story, by the way, of going into sewers and connecting cables.
I know, he brings it out every once in a while.
For a love story, but we'll try here. Yeah, I think you're exactly right. I think when, you had that ChatGPT moment and all that everybody knew about AI was that, you should buy some chip companies, right? And so the beneficiaries of that were obviously NVIDIA, AMD, maybe Microsoft because of the ChatGPT moment. But AI has just changed and morphed so much. So to your question, what is AI now and why is it interesting and where is it going to go? I mean, it's going to go in so many different directions, right? You have AI infrastructure, you have the picks and shovels, you have connectivity, you have space, you have photonics, you have memory. I think the opportunities to invest in AI are now endless. And to your point, this is why, you see this new pure play API coming to market and you see the excitement around it, right? I can only imagine what's going to happen to SpaceX, by the way, because of what we're seeing here. But It's just, there's just so much demand and appetite for this sector right now.
It seems like the whole economy in certain ways the markets are almost unstoppable despite what happens in the rest of the world, largely because of AI. Is there anything that could slow that down, or are we just on kind of an unstoppable climb right now?
Well, I think it's going to ebb and flow like anything else, right? I think that there's so much excitement right now around AI and around some of these themes. And so you're going to see periods of time where the stocks run up around the momentum in the headlines and the, the belief of or hope for peace around it and stability and geopolitics and things like that. But what could kind of take it off of its path, it is just that, right? I think if we get any kind of news around a pickup or reignition in Iran, or that this is going to last much longer than we suspect it will, that's going to feed into markets. That'll feed into the psychology of markets and investors. That'll feed into inflation. It'll feed into the consumer's, balance sheet and things like this. So I do think geopolitics play a huge role.
What is optical connectivity, and how does one play it?
Yeah, so that's the idea of, in order for AI to work and in order to meet all of the demands, you essentially have to have scale for energy and essentially have ways for data to move. And that's basically like these companies like Coherent and Lumentum that can essentially move data through, the use of lasers and things like this. So it's just another way to actually process data, move data from point A to point B, and to be able to build out these technologies. So it's becoming, almost like a subsector of the AI trade along with memory.
It seems like there are a lot of IPOs that are expected to be just huge this year, most of them related in some way to AI. Is that, how are you expecting that to play into the markets and investing and how the rest of this year plays out?
Well, I think the great thing about this is that it's going to give investors loads of new opportunities to invest in for tech and for the future of tech and disruption and things like that. And they'll have those opportunities in different ways. So for example, I think you'll have a lot of AI names come out and investors can either buy that stock, shortly after it IPOs, if they're lucky enough to get an allocation beforehand, that's great. But and if they kind of like wait a little while, you'll see it picked up in a bunch of the ETFs out there, right? So I think that if you look at like the AI power and infrastructure ETFs, you'll see some of the pure play ETF AI stocks in there. I think if you look at the different connectivity and space and satellite types of ETFs, you might see some of the space names picked up after they IPO. So I think it's just going to open up a huge channel of new investment opportunities for investors. And it's incredibly exciting, right? It's moving technology forward.
Sylvia, thanks so much for joining us. Really appreciate it. Sylvia Jablonski, Chief Executive Officer and Chief Investment Officer at Defiance ETFs based in New York. Red headline crossing the Bloomberg terminal. Ford shares climbed 10%, bringing two-day gain to 25%. I'm like, what's going on here? And I look at the news that Bloomberg has. Morgan Stanley yesterday came out with a report highlighting Ford's energy storage business and the potential tie-ups with hyperscalers. So I guess, Stacey, if you're looking to juice your stock, I guess we've all kind of learned if you can get AI in your story,
I feel
somehow that's the play.
Everybody, even shoemakers, are now turning to AI for money. It's the growth strategy of 2026.
Yeah. So, I mean, but this is Ford Motor Company. We all know what Ford Motor Company is. We all know what the growth trajectory is of that business. We all know what the challenges are. So for a company like that, so well known, so well owned, to have that kind of trading move, again,
you're going to like
in 2 ways.
Use your F-150 to power AI?
I know.
I think it would take a lot of Ford.
Okay guys, inventory आ गई है. Inventory bullish, natural gas sharp candle बनी upside. Natural gas inventory जितना forecast था उससे थोड़ी सी कम आई है. It means it is bullish. यहाँ पर इसने neutral लिया है, but forecast वैसे bullish है. इतना ज़्यादा bullish नहीं है, ध्यान रखना. 86 बुलियन एक्सपेक्टेड था, 85 बुलियन ही आई है, तो फोरकास्ट से थोड़ा सा कम. इट मींस इट इज बुलिश फॉर प्राइस. ऊपर ये रेजिस्टेंस है, मैं यहाँ से एक्सपेक्ट कर रहा हूँ कि अब एक सेलिंग दे मार्केट फ्रॉम दिस एरिया. इन्वेंट्री बुलिश ज़रूर है. लेट्स सी क्रूड तो क्या कहूँ मैं क्रूड का ऐसा हो गया इस लेवल पे मार्केट को पता नहीं क्या करने की सोच रहा है ना ऊपर ब्रेकआउट कर रहा है ना नीचे एक बहुत ही स्मॉल सी रेंज के अंदर फंस गया ये भी टारगेट पे आया नहीं एग्जैक्टली देखते हैं गिरता है या फिर ऊपर वापस चला जाता है वापस ऊपर गया तो सेल मत करना कैंडल ओपन इक्वल टू लो बनी है ध्यान रखना कैंडल फिलहाल के लिए क्रूड ऑयल में भी इन्वेंट्री वैसे नेचुरल गैस की थी ठीक है अब कोई डेटा नहीं आज इन्वेंट्री गॉन फोरकास्ट से कम आई है बुलिस है उतना ज़्यादा बुलिस नहीं है बट बुलिस है ओपन इक्वल टू लो बनी रेजिस्टेंस से ऊपर रेजिस्टेंस है मुझे लग रहा है ये सपोर्ट तो ब्रेक हो चुका है तो यहाँ पर अब बाइंग तो एक्सपेक्ट नहीं करेंगे हाँ न्यूज़ की वजह से जाता है अलग बात है लो भी थोड़ा सा सपोर्ट बन गया अब नेचुरल गैस में तो अगर मार्केट को पूरा फॉल करना है तो डेलो के नीचे भी प्रॉपरली ब्रेक डाउन होना ज़रूरी है थोड़ा डीप लेवल से रेजिस्टेंस ले सकता है इसका भी ध्यान रखना नेचुरल गैस में ज़रूरी नहीं है इतना ही जाए हो सकता है थोड़ा सा और ऊपर की ओर भी निकल जाए एक तो न्यूज़ बेस्ड कैंडल है नीचे स्मॉलर टाइम फ्रेम का सपोर्ट है डेलो नाउ ही कोई न्यूज़ तो नहीं है. मोस्ट प्रॉब्ली मुझे लग रहा है 1 घंटे बाद क्रूड ऑयल भी वॉलेटाइल हो सकता है. ऑप्शन में एक्सपायरी है MCX, ध्यान रखियो. एज एक्सपेक्टेड रेंज बाउंड ही रहा मार्केट. ये एक मेजर रेजिस्टेंस था, मेजर सपोर्ट था. मॉर्निंग पे प्रीमियम ठीक थे यहाँ पे. अब तो ऑलमोस्ट जीरो ही होने वाला है. बट लास्ट 1 to 2 आवर्स में देखना, वो प्रीमियम काफ़ी वॉलेटिलिटी और दे सकते हैं. लग रहा है रेंज के बाहर तभी निकलेगा जब कोई न्यूज़ आएगी. अब पिछले 2-3 दिनों से तो कोई न्यूज़ नहीं है. मोस्ट प्रॉब्ली ट्रम्प व्हेन रिटर्न टू द USA, देन आई थिंक मार्केट विल रिएक्ट. Agencies are aiming to conclude fraud cases against Gautam Adani. According to Bloomberg, the development marks a significant update in the ongoing legal scrutiny surrounding Adani Enterprises. बड़ी न्यूज़ इस रेंज को ब्रेक कर सकती है, अदरवाइज ये 9200 से 9800 की रेंज के अंदर ब्रूटली ट्रैप्ड है क्रूड ऑयल नाउ. लेट्स होप नेक्स्ट मंथ के फ्यूचर में जब कल नया एक्सपायरी स्टार्ट होगा ऑप्शन का तो मोमेंटम आ जाए रेंज के बाहर.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. And let's start off with Cisco helping push the market higher. Up 14% right now. Shares of Cisco 13.9% to be exact after the earnings report. Best performing stock in the S&P 500. The S&P 500 adding to its record close right now 44 points higher, up 0.6%, 74.88 on the index. NASDAQ also adding to its record close from yesterday. NASDAQ Composite Index is up right now 182 points. That's a rise of about 0.7%. The artificial intelligence chip maker, data center operator, Cerebras Systems, shares indicated to open now at $380 a piece. So if my math is right, that's 105% above the initial offering price of $185. As you mentioned before, Ford becoming kind of an AI stock, I guess. Shares of Ford right now, they are up 8.5% with the hype over the pivot to energy storage. So Jim Farley, the CEO, said yesterday that he said this today actually, that the automaker already seeing strong demand for the energy storage batteries that are going to go into production late this.
ये नेचुरल गैस में कैंडल का ध्यान रखना. ओपन इक्वल टू लो कैंडल है डायरेक्टली न्यूज़ बेस इन्वेंट्री की कैंडल. एक बार क्लोज हो जाएगी फिर एंट्री का प्लान करना। नेक्स्ट कैंडल का भी ध्यान रखना, ओपन इक्वल टू लो ना हो। प्राइस हो सकता है एक बार 273 के ऊपर निकलने की पहले कोशिश करे, 274 तक भी चला जाए और फिर गिरे। इट माइट पॉसिबल वेरी हाई, स्पेशली अगर नेक्स्ट कैंडल भी ओपन इक्वल टू लो बनती है। 2 मिनट है कैंडल क्लोज होने में।
So anyway, that's that story. The nation's biggest commuter rail line. I got to add this. If you live in Iowa, you don't care. But the Long Island Railroad could be striking as soon as this weekend.
Thank God it's not New Jersey Transit.
LIRR, yeah, the biggest commuter rail line, and the MTA, they can't seem to agree on a wage package. So
the railroad, as we call it here in New York. All right, John Tucker.
Book your hotels now, kids.
Absolutely, or see about the ferry service. John Tucker, thank you for that. We got Stacey Vanek Smith sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube. All right, you're a technology analyst. You follow technology companies. So where do you go? Poland. Dan Ives, global head of technology research at Wedbush Securities, finds himself in Poland. I'm not even going to ask. Dan, what I want to get to is it's seemingly like half of the leadership of Silicon Valley is with President Trump in Beijing as we speak. What do you make of it?
I mean, look, it's a pivotal moment for AI and tech because it's about being able for NVIDIA to sell their chips into China, but also just more of an opening, in China, which is important for Tesla. It's important for Apple. It's important for chip makers. And look, this is a moment in time where it's important that when they come back from that trip, that it's been a huge step forward. And I think it's going to be another leg up in this market. And you're seeing it from the godfather of AI, NVIDIA, today.
We've been talking this morning about how important AI and tech are to the economy right now. They are hugely fundamental. How important is this summit for tech and AI in the U.S. right now?
I think it's really like a grand opening to what could be a next chapter of AI. Because when you think about it, the one black cloud over the AI trade has really been China. Raw materials, chips into China from NVIDIA. When you start to clear this path and this passes and you get the green light, I think it's another leg up. And what that means is more data center build out, more chips, and again, for the first time in 30 years, US is ahead of China when it comes to tech. And that's very important in terms of the global market. Is more and more you're going to own US tech stocks.
Dan, I guess this trip highlights once again kind of the change in power that we saw at Apple with Tim Cook giving up the CEO post, but retaining the chairman post. And I think, as you've told us before, part of his responsibility is managing the relationship with China. Just give us a summary of kind of how that stands right now.
Look, if Cook has been 10% politician, 90% CEO, he's now probably 90% politician, right? I mean, that's a huge part of his value because he has the ears within DC from Trump to others. And that's so important for Apple as it navigates the political landscape. And China, look, China's hearts and lungs, that 20% iPhones, as well as, where the massive amount of production happens with tariffs and everything else. It's not coincidental that Cook is on Air Force One.
Are there any specific deals or announcements that might come out of this summit, or is it more of a general breaking of bread?
I think it's more than a breaking of bread. I think it's about the official green light for NVIDIA to sell chips into China with no caveats. And I think Jensen, he's the biggest poker chip there because that's really what China wants. I think when you see an opening of China for businesses, I think this is really about robotics because right now China's leading in robotics. It's a big area, obviously, Tesla's getting into in terms of Optimus and humanoid robots. And it's very important that you have an opening of that market for U.S. to compete rather than just China winning in that market.
Dan, it's become, I guess, increasingly clear over the last 4, 5, 6 years that there's a technology Cold War between China and let's call it just the West. Is there any way to change that, make it less difficult for both sides? How do you see that playing out?
Look, I think, Paul, the problem is that it's a two-horse race, right? I mean, Europe where I am today. I mean, they continue to be stuck in regulatory data privacy and really nowhere when it comes to AI. But then you look at Middle East, India, they're trying to be obviously, the number 3 players. But that's also why, like, U.S. needs China, China needs U.S. when it comes to the trade. Now, look, it's an arms race that's going to play out, and you're going to kind of see a splitting of these two powerhouses when they go after other markets. But it's a true fourth industrial revolution that's playing out. And U.S. and China both know no one wants to mess that up relative to, we continue to believe, third inning, top of the third, one out in this 9-inning bull market.
Hey, Dan, you know better than anybody, and plus you're in Europe as we speak. Other than SAP and maybe 1 or 2 other companies, there is almost no technology in Europe. They've missed the last 50 years. Are they going to miss AI as well?
Look, I just spoke at this Impact conference in Poland. You have people from all around the world speaking. I mean, that's a big topic because, in terms of big brother privacy, worries about, what we've seen from a technology perspective, it's taken Europe many years behind where everyone else is. And I think there's a huge battle going on between innovators, entrepreneurs, because otherwise, if they don't loosen privacy and some of the regulatory, Europe's going to miss out on this. And you'll see a lot of entrepreneurs and innovators move to Middle East, U.S., and obviously other markets. But I believe if I'm betting on a country that's going to break out of this, it's probably Poland. I think they're the one that's kind of showing the most kind of, maybe vision when it comes to AI.
Dan, thanks so much for joining us. We appreciate you taking a few minutes out of your travels over there in Europe. When I'm marketed in Europe, I go to Frankfurt, Paris, London, where the money was. Dan goes to Poland, but obviously speaking at a conference over there, and they might have some potential there for AI. So we appreciate getting a few minutes of Dan and I's time there. But it just seems like you think about technology, it's been such the defining part of life for all of us, for the last 40 years. You think about hardware and software, and Europe just did not participate.
Well, I think for a long time they had some older industries like SAS in Germany. I think it was became such a big manufacturing powerhouse. But I mean, there's Mistral, but otherwise AI is, and it's harder and harder to get in. I think it gets more expensive. Yeah,
it just seems like how they can't. It's just amazing how you look at the stock markets over in Europe. There's very little technology in those, and that's why they traded a much lower multiple, and why their performance has historically lagged that of the U.S. stock markets. But you think about AI and how transformative that's going to be, is currently being, and you just don't see a role for Europe at all. And it's just amazing to me. And Dan was, suggesting some of the regulatory frameworks, the concerns about privacy, and that's kind of held them back. But it's be a shame if they don't participate in some of this growth associated with AI. S&P 500 is up 50 points, the Dow's up 250, and the Nasdaq's up 214 points. That's 0.8%. We'll have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Stacey Vanek Smith sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Given the turmoil coming out of the Middle East, a lot of folks or a lot of companies are wondering kind of how that's going to impact their business. One of those industries is generally kind of the travel business. Or people change their travel habits given what's going on out there in the world. And our good friends at Bloomberg Intelligence, they survey folks out there in the marketplace to figure out what they're doing and how that may impact hotels, cruise lines, all that type of stuff, airlines, that type of thing. Joni Lurie, Senior Credit Analyst for Bloomberg Intelligence, joins us here. Jody, what's your latest survey tell you about, maybe as we kind of head into this summer travel season, how people are thinking about how they might travel, where they might travel? How's that looking?
So I don't think you'll be surprised to hear this, Paul, but we are seeing some of the effects of the Iran war, the energy prices, enter our survey data. So, for example, personal safety is a concern among about 2/3 of survey participants, and that's the highest level since we started running this survey in December of 23. So that's not so surprising. What is surprising is how resilient the consumer has been, at least in terms of increasing budgets, in terms of planning to increase budgets, and in terms of still traveling despite the backdrop. That said, we are seeing a little bit of a bias towards domestic over international, which again, I think given the climate, given, the Trump administration's stance on immigration and all the sort of components of that, the geopolitical risk, it's not so surprising to us what we're seeing, but it's very evident in the data.
I mean, obviously, we're coming up on the big travel season in the U.S., summer. How do you expect that to start impacting all of the businesses that rely on the travel industry? I mean, if people are going domestic, that could be positive news, but also gas prices are way up.
Sure, Stacey. So I think we're seeing still that people, despite knowing that inflation is a big factor, they're still planning on increasing their budgets. And so I do wonder at what point we start seeing a shift in terms of how people travel. One of the things that came out of the survey is if costs exceed budgets, they're willing to cut back on accommodations. So going for not as luxury accommodations, but they aren't willing to sacrifice activities and experiences. But what we are seeing, though, even so, is that things like outdoors and national parks are high up on the list in terms of where people are traveling, as well as beach vacations. Now, even marrying that into the conversation, we are seeing that Mexico and the Caribbean have decreased in terms of where people are traveling for the second half of the year versus what we saw in November. So we are, there is sort of a give and take in this scenario. Are people going to the Jersey Shore over the Caribbean? I'm not sure.
You know it. Come on down to the Jersey Shore. No problem at all.
Hey, Atlantic City finally getting the boom.
Exactly. Talk to us about the World Cup, Jody. There's been some reporting that the World Cup is a little underwhelming from the hotel perspective here, maybe Airbnb as well. What are you hearing from the companies you cover about the World Cup?
Yeah, so it depends on the company you're talking about. So some of the companies, from the gaming companies to the hotels, are commenting that they are seeing a little bit of an uptick in some of their markets. And what's so interesting about the way that the World Cup is run is just how North America is, right? You're talking Vancouver, you're talking LA, you're talking New York and Philadelphia, you're talking Mexico. I mean, there's so many areas in which the World Cup is going to be penetrating the North American landscape. But I'm curious to see how much of that is going to equate in terms of travel budgets and people going places for it. You are seeing, just anecdotally, I am starting to see locally some of the promotions happening at restaurants and at different sort of attractions as we lead into the World Cup. I'm not sure what that's going to equate in terms of actual dollars spent by people as they sort of go to the matches and celebrate it. But we do have some survey data that it is mixed. We have some people who are prioritizing sporting events over vacation, but by and large, we aren't necessarily seeing that that's the top priority for how people are going to spend their vacations for the second half of the year.
So you mentioned that people are kind of switching to domestic. Overall, how is international travel looking right now? Are we seeing it decrease a little bit? Is that maybe part of why there's a little bit of softness around the World Cup bookings?
Correct. Yes. So, Stacey, I mean, I think more so than the World Cup bookings per se. I think it's just we're seeing a decline in terms of travel internationally overall. We're seeing fewer people planning on 3 or more vacations or 2 or more vacations internationally than we did in November. So that's a big sort of cutback, right? And then we're also seeing that the key places that were attractive spots going into this year, including Canada, including Italy, including Portugal, Japan, all of them, Dubai, of course, all of them are sort of seeing a little bit of a decline from November in terms of locations that people are planning on traveling to. Now, what is surprising is the UK actually bumped up in terms of priority of where people are planning on traveling next year. I don't know if that has to do anything with, USA 250, so people feel celebratory and want to show our independence for 250 years.
Yep, I don't know. I was around for the bicentennial, kids. That was big when I was 9 years old. Jody Lurie, thanks so much for joining us. Jody Lurie, Senior Credit Analyst for Bloomberg Intelligence. Red headline crossing the Bloomberg terminal. This is from President Trump. Xi offered help on Iran, pledged not to send weapons. So there you go. Social media post from President Trump. So we'll have more on that coming up. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The other hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
All right, Stacey Vanek-Smith sitting in for Scarlett Fu. I'm Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up in this hour, we're going to check in with Mara Shore. She's a senior equity analyst at Columbia Threadneedle. We'll get her thoughts on retail sales. Tyler Kendall, Bloomberg Washington correspondent, get the latest reporting on the Trump-Xi summit. Again, we just had a tweet from President Trump saying that China pledged help on Iran, so we'll get some latest reporting there. Ruben Hovasanian, Managing Director, Generalist Portfolio Manager at Fixed Income Group, will get us his thoughts on the markets. And then at the bottom of the hour, we're going to have a simulcast with Bloomberg Television. Andrew Feldman, he's a Cerebus CEO. Remember, that company priced its IPO last night. Hasn't begun trading, but it's showing that it might open at twice the price it was priced at last night. So the CEO is going to join D-Tech anchor Ed Ludlow, scheduled for 11:30 a.m. Wall Street time, and we will bring that to you. So a lot happening here. All right, let's kick off this 11 o'clock hour with the Charlie Pellet.
I thank you very much, and here's what's going on. We do have U.S. stocks pushing higher. We got a revival of the AI trade. That is fueling momentum in U.S. stocks. Right to the numbers, because the S&P at a record, closing in on 7,500, 74.96 where we stand right now, up 52. That is a gain of 0.7%. In the YTD column, up 9.5% on the S&P. Dow Industrials up 380 right now, above 50,000, 50,075 on the Dow. A gain right now of 0.8%. NASDAQ ripping higher as well, up 0.8%, higher now by 216 points. All of this with the VIX right below 18 right now. The SOX up another 0.6%. That, of course, the Philadelphia Stock Exchange's Semiconductor Stock Index. As I mentioned, the VIX below 18, the 10-year 4.45%, the 2-year 3.98%, and the 30-year 5.00%. Gold down $6 the ounce, just about flat on the day at $46.82, down by about 0.1%. West Texas Intermediate Crude holding above $100, $100.39 on WTI. Right now, crude is down 0.6%. Barrel of Brent, the global benchmark, 104.94, down by 0.6%. Kevin Warsh scheduled to be sworn in tomorrow as the next chair of the Federal Reserve. So, what's the outlook for rate cuts under Warsh? That question this this morning on surveillance for Seema Shah, Chief Global Strategist at Principal Global Investors.
I think it's a really difficult environment for a central bank to be cutting interest rates. So with that in mind, staying on hold and really taking the time to see how this plays out is probably the most likely, which suggests that even with a new head of the Fed, actually the policy impact is going to be quite minimal, at least in the near term.
Principal Seema Shah interviewed this morning on surveillance. You can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Last night we heard from Cisco Systems. Shares ripping higher now by 14.1%. Coming up after the close of trading today, we will be hearing from Applied Materials. Round one of the PGA Championship underway at the Aramitic Golf Club in Pennsylvania. At last check, Stefan Jaeger sits atop the leaderboard at 4 under par. And for our listeners in New York, Boston, and Washington, D.C., we'll bring you live play-by-play coverage of the PGA Championship starting right after the closing bell here on Bloomberg Radio. Recapping S&P 500 index at 74.99, up by 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pella, thank you so much. We appreciate that. Stacey Vanek-Smith sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As Charlie's just reporting, stocks are higher this morning. Let's take a look at some of the stocks that are on the move today. We can do that with Carmen Reinecke, Deputy Team Leader for U.S. Equities for Bloomberg News. Carmen, what are you looking at?
Yeah, let's actually start with NVIDIA. So ticker NVDA. Shares are up about 4% right now. This is on track to close at yet another record high. We've seen really an incredible rally in semiconductor stocks over the last month and a few odd weeks, really since March 30th. NVIDIA is really leading the charge here today. There's some positive news out kind of around the company. One of its major server assembly partners, Han High Precision, reported a really solid earnings report. Jensen Huang is also in China. Alongside, Trump meeting with Xi, there's some hopes that the company could sell into that market again. And then the other thing is we have earnings coming up next week. This is the big and sort of the finale, I guess, that we think of earnings season. So we usually see some positive moves in the stock ahead of that report. So watching NVIDIA now and for the next few days ahead of those earnings.
Obviously, AI has been powering the markets all year, but what is going on particularly this week? Why are we seeing so much excitement and so much money trading hands this week?
I think that people are just getting really into the risk on trade. I mean, we've seen the stocks just continue to rally day after day. So I think it's up also today to close at a record high. This is the Philadelphia Semiconductor Index.
Right.
I mean, Broadcom's up, Marvel's up, AMD is up. I mean, even today we're seeing the Cerebras IPO. There's so much demand for infrastructure.
All right. How about Cisco here?
Yeah, so Cisco obviously also having a huge day. This is ticker CSCO. Shares are up 14% right now, also on track to close at a record high. Its intraday high is the highest or the biggest daily jump since August 2011. Really great results here. And the big thing here is that Cisco's really turned it around. So it's been around since the dot-com bubble. It was a winner there. And now it's been able to embrace AI and do really well and sort of come back into prominence.
Good stuff. All right, last one, Doximity. I have no idea who these guys are.
So, Doximity, for a completely different story. This is ticker DOCS. Shares are down 25% right now intraday. And this is on track to close at a record low. So this is a healthcare software firm, and it had some really disappointing earnings. So it gave a full year forecast that was weaker than expected, and specifically AI investments are pressuring the company's earnings. So AI not working out for this one.
Gotcha. All right. Carmen Reinecke, thank you so much. We appreciate that. Carmen Reinecke, Deputy Team Leader for U.S. Equities there. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We had some retail sales came in today. I think they were pretty good given all the challenges and cross currents out there and all the headlines out there. Retail sales kind of hanging in there. But let's talk to somebody who looks at that stuff for a living. Mari Shore, Senior Equity Analyst at Columbia Threadneedle Investments. Mari, what did you make of the retail sales today?
Yes, thanks for having me. Overall, as you said, it was a very strong report. We actually saw an acceleration in the trends versus last month, looking at retail sales on an adjusted basis. And it was the strongest print we've seen in 2 years on a 2-year basis. So overall, very strong. I think for me, notable was strength in some of the bigger ticket categories like electronics, and that was largely a benefit of the higher tax refunds that we saw and that the consumer benefited from in the first quarter.
Mari, I'm wondering how this is possible, because I feel like for years now, there's just been this expectation that consumer spending is going to take a hit, that all the forces kind of working against the U.S. consumer are going to have some effects. And it seems like the U.S. consumer just keeps spending. What do you think is going on?
Yes, we've talked so much about the K-shaped economy, and the truth is that that higher income consumer is really who drives the majority of aggregate spend. And so that consumer benefiting from higher housing prices and equity market values is in a good place and continues to spend. You know, we have seen more pressure at the lower end, especially now with rising gas prices. But overall, the underlying consumer spend does remain very healthy. I will caveat that with we continue to see pockets of strength and weakness when we look by category and more specifically by brand and retailer.
Mario, I'm going to focus right now on the upper end of that K-shaped economy. How's luxury doing these days? Because for me, one of the big drivers has always kind of been China, both internally within China. Are they buying, and are they traveling around the world buying stuff?
Yeah, we actually have started to see better results coming out of China from companies like Estee Lauder and Tapestry and even Canada Goose who reported this morning. And I have spoken to some management teams that say they are sensing a more constructive tone on the ground in China. But, you know, for a lot of the European luxury companies, I would say consumers are still pushing back in a way against all of the pricing that they have taken over the past few years. So when you talk to companies like Tapestry with their Coach brand, they really think that they're benefiting from the very wide pricing gap that the Coach brand sits at relative to luxury. So again, even I think for that very high income consumer, you're seeing them spend in a more choiceful way, clearly spending on things like travel and not spending as much on things like certain luxury goods.
How are retailers feeling about all of this right now? Because on the one hand, this is really good news. On the other hand, if their earnings are depending on a shrinking group of consumers, that seems potentially a little fragile.
Yeah, I mean, at the end of the day, retail is a low single-digit growth category, and it really is all about share gains driving revenue. And so the best companies are focused on taking share across the income spectrum, across category, across channel. I think Walmart is probably the best and most successful example of this. I would say for some time now, the retailers have taken a cautiously optimistic view. They are planning inventory very carefully. They are not taking a lot of pricing in order to protect volumes in the wake of tariffs. But I think they have been surprised to the upside in terms of how resilient the consumer has been. It's really investors that have been a lot more cautious, especially as we stand here today at the edge of the cliff of tax refunds and now facing much higher gas prices and tougher comparisons as we move through the rest of the year. So I think the retailers have been happily surprised and probably are a little bit more optimistic than investors at this juncture. And there's just, of course, a lot of eyes on what happens in the Middle East in terms of getting resolution there.
Mari, what we're not talking much about these days is tariffs and the impact upon retailers and upon consumers. How is it kind of all shaken out 1 year plus into this tariff?
The good news about tariffs at this point is we are past the maximum point of pain on tariffs as it relates to margins. So at this point, all of the companies have put in place their mitigation strategies. They're now starting to benefit from those. And in fact, we're starting to see certain companies record refunds from the government in the wake of the Supreme Court decision.
Yep.
So overall, I think the worst of it is behind us as it relates to tariffs. And importantly, the companies really have not taken as much pricing as I think they maybe could have taken. And the best companies have really been focused on protecting and driving volume gains and not taking too much pricing. So I would not expect any real changes in pricing moving forward, even as we see the maximum pressure from tariffs subside.
All right, Mari, thank you so much for joining us. We always appreciate getting your opinion. Mari Shore, Senior Equity Analyst for Columbia Threadneedle Investment. She's up there in Boston. She's one of our go-to voices. It seems like, when you think back to tariffs, and again, we don't talk about that much as we used to.
Oh,
it seems
yeah.
like most companies in most industries took the policy of, we're going to take as much of this as we can in our own profit margins and minimize, kind of what we pass along to the consumer.
Oh, yeah. I mean, if someone had told me on Liberation Day, when there was that whole raft of announcements that seemed so shocking at the time, that we wouldn't even be talking about it now, I would not have believed them.
And now, as Mari was just mentioning, we're starting, the U.S. government is starting the refund, which I don't know how that works. I'm not sure who gets the refunds. Is it the import-export person? Is it the wholesaler, the retailer? Is it consumer? I'm not sure how that's
I think
all
it's a big mess right now, from what I understand. I think there's a lot of confusion.
Yeah, so we'll see how that shakes out. But again, for the retailers, they fared, I think, fairly well. I think they did as good a job as you could probably do. And again, you look at the retail sales today, came in at 0.5% gain, kind of right in line with expectations. It was down from the last period, which was 1.7, which really kind of shocked people as people kind of front-loaded a little bit. But the control group up about 0.5%, and consensus was 0.4%, so a little bit better there. So the consumer seems to hang in there. I think what I've learned over many, many years is do not underestimate the strength of the U.S. consumer.
Oh, yeah.
And
I
that's
think
kind of where you go. So the other big news of the day is, of course, President Trump in Beijing, China. We're going to go check in with the news there, and we can do that with Tyler Kendall. She's a Washington correspondent for Bloomberg News. Want to get her thoughts there. It's about 11:15 p.m. local time in Beijing. Tyler, thanks for staying up for us. What's the key takeaway from day one of this summit?
Well, Paul, at this point, it appears very evident that the efforts here on the ground in Beijing are aimed at stabilizing ties instead of overhauling them. So that is considered to be a positive development, that the two sides are keeping this ongoing dialogue going. Though at this point, we did get this comment from Chinese President Xi Jinping earlier today that Taiwan does risk derailing the U.S.-China relationship. And that is threatening, perhaps, that we could see a dimming in the mood here for what has really so far, I think it's fair to say, been a pretty cordial meeting between the two leaders. And his comments actually come after really what's been days of U.S. officials signaling, at least publicly, that they do not have any intention to change their Taiwan policy at the moment. Now, it is fair to say that Xi Jinping's comments do fall in line with what has been longstanding Chinese policy, but these do mark his perhaps toughest, bluntest remarks yet. And it came against this backdrop of the White House readout and the Chinese readout, having perhaps some mismatches when it comes to what happened behind closed doors. For example, the White House readout did not mention Taiwan at all. Instead, there was this huge focus on economic cooperation. We can talk a little bit more about that, but it seemed very evident that both sides wanted to show that there could be some greater cooperation. We heard from the Chinese president signaling that there may be some more greater openness when it comes to the Chinese market, though despite the messaging, we haven't seen tangible steps really announced around this quite yet. But Paul, you had a very optimistic President Trump basically previewing that we could expect these purchase commitments related to U.S. agricultural goods and energy products as well.
Tyler, thank you so much. We really appreciate that, staying up late. Tyler Kendall, Bloomberg Washington correspondent. She is in Beijing with the president. President did come out with a tweet just recently, a couple of minutes ago, saying she offered help on Iran, comma, pledged not to send weapons. So that's the latest communication from President Trump via social media. We'll have more on that coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 11:20 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 index right now at the best level of the day. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. We are awaiting the start of trading for Cerebras Systems, an AI chip company, priced at shares at $185. Shares scheduled to will trade under the ticker CBRS, indicated to open at 350. S&P 500 index right now holding at a record. We do have the S&P at 7506. It is up now by 0.8%. AI enthusiasm helping send stocks higher. Dow Industrials trading above 50,000. 50,096 on the Dow, up 403 right now, up 0.8%. The Nasdaq Composite Index up 260, up now by just about 1%. The VIX below 18 with the 10-year 4.44%, that 30-year 5.00%. Gold little change, down under 0.1%, 46.84 the ounce, while West Texas Intermediate crude still above $100 a barrel, $100.91 right now, down 0.11%. U.S. retail sales advanced for a third month in April, pointing to some signs of consumer resilience despite sharply higher gasoline prices. Mary Shore is senior equity analyst at Columbia Threadneedle Investments. She was interviewed moments ago right here on Bloomberg Intelligence.
I think for me, notable was strength in some of the bigger ticket categories like electronics, and that was largely a benefit of the higher tax refunds that we saw and that the consumer benefited from in the first quarter.
She mentioned electronics. Best Buy right now up by 1.5%. By the way, you can hear more of that conversation on the Bloomberg Intelligence podcast. You can download it wherever you get your podcasts. RegenX Bio shares plunging after 2 patients developed significant complications after receiving its gene therapy for a deadly muscle disorder. Shares right now are down by almost 37%. So again, recapping, we do have the Dow, the S&P, NASDAQ all pushing higher. S&P 500 index up 0.8, trading at a record. Round 1 to the PGA Championship underway at Arenaminick Golf Club in Pennsylvania. At last check, Stefan Jaeger sits atop the leaderboard at 3 under par. And for our listeners in New York, Boston, and Washington, we'll bring you live play-by-play coverage of the PGA Championship starting right after the closing bell here on Bloomberg Radio. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Stacey Vanek Smith sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. Coming up at the bottom of the hour, we're going to have the CEO of Cerberus, as Charlie was just reporting that they went public last night, trying to get that stock open here. Andrew Feldman, Cerberus CEO. He's going to be speaking with BTech anchor Ed Ludlow around 11:30 a.m. Wall Street time, and we'll dip into that for a couple of minutes. But first, let's talk about the bond market here. Ruben Hovhanessian joins us. He's a general portfolio manager at TCW's Fixed Income Group. They're based out there in L.A., some of the smartest folks you'll ever talk to in the investment business, to a person. They're very sharp. Ruben, what are we doing here in your bond market here? A lot of cross currents out there. I think people are probably looking for some reasonable risk-adjusted return opportunities in your world of fixed income. Where are you guys focusing these days?
Good morning. Good to be back on the program. I'd say the key question or the key debate in the bond market, in the rates market, is whether the supply disruption that we're seeing now is going to lead to unanchoring of inflation expectations and runaway inflation similar to 2022 episode, and therefore whether we're going to see hikes in in interest rates. Yields are higher in terms of opportunities. Yields are 50, 60 basis points higher from where they were in February, and the market is pricing in